In terms of coverage from RBC and Barclays, and some upgrades for some of the big names in the defence space, including the likes of Leonardo, Rheinmetall, Thales, BAE. So we're watching the defence space as well on the back of that coverage, and some upgrades from RBC and Barclays, Guy.
Okay, here we go. So let's talk about what we're going to see at the open this morning. I suspect it's going to be a bottom-up kind of a market. You're going to watch some single stocks. You're going to watch some sectors as well. What happens with energy? What happens with some of the commodity trades this morning as we continue to see the Gulf close, I think is going to be one of the narratives. At an index level, I don't think you're going to get very much, though, net. It'll be interesting to see what the volume picture looks like as well today. So let's get these markets open. Let's show you what's happening with the opening trade. The initial reaction is mildly, very mildly negative. We don't have kind of a catalyst right now to move the index story, but I'm surprised that we're not seeing maybe a bigger reaction as a result of the tick higher in oil. Stock 600 doing absolutely nothing. FTSE 100 up by 0.1%. We were expecting something slightly negative, but I think we're well within the kind of plus or minus here. The CAC's absolutely flat. The DAX, if the DAX is open at this point, you know there's nothing happening in the German market this morning. DAX is up by 0.2%, AEX is up by 0.2%, IBEX is up by 0.1%. At an index level, nothing. Actually, if the DAX is open already, I just wonder whether actually at a sector level there's not much happening either, Tom.
Well, we're seeing similar echoes of what we saw in terms of the sector breakdown yesterday. So energy is at the top of the list, of course, unsurprising given the move higher in terms of Brent WTI. So energy is currently up 1% after the gains. It was the best performing sector yesterday, as we mentioned. On the downside, travel and leisure, that was also ended the session yesterday in negative territory. So travel and leisure, again, under pressure, obviously, obvious reasons for that in terms of high energy costs and the geopolitics, of course, around Iran. So that sector is down 0.7%. Tech performed modestly well yesterday in the European session. As a sector right now, it's just up 0.1%. Basic resources, we're watching, of course, things like the copper price, which broke above 14,000. You've got gold in focus with 4,400, but it's now actually down 0.5 gold, taking a modest knock and at 4,366. Basic resources, though, as a sector, is up 0.2%. And then on the downside, the biggest losses, as I mentioned, travel and leisure, also real estate, just down 0.2%, Guy.
Yeah, ASML is the biggest point to add. Shell and Total, BP are in the mix, so that's the upside move in energy. Some of the industrials are softer again today, so Safran, ABB, softer a little bit. Rolls, maybe Airbus, seeing some softness there as well. So the industrial trade is once again giving back a little bit of ground. Defence is kind of a little bit higher, and banks look like they're going to be a little all over the place. I'm going to watch UBS a little bit later on as well to keep an eye on what happens in terms of this government capital requirements, and we may get some clarity there. So maybe watch the banking sector for a little bit more clarity on that front.
Yeah, we mentioned the defence as you touched on as well. So you've got the likes of Kongsberg, you've got likes of Saab, currently up 3.7%. Kongsberg gaining 2.5%. Some upgrades there from RBC and Barclays. Let's get the broader perspective on these markets and bring in Benedict Lowe, European equity derivatives strategist over at BNP Paribas Markets 360. Benedict, good morning. You are positioning for a grind higher in European stocks. Just explain that rationale in the face of higher energy costs and concerns about inflation once again.
Yeah, so it's undeniable that the macro story is picking up in Europe. We've got growth that is surprising to the upside, activity on the rise, and earnings that have been good. Actually, earnings have been exceptionally strong in the US, but also very good in Europe. It's been one of the best earnings seasons over the past few years. And all of this is happening in a context where positioning is low to neutral. So that points to a positive picture for stocks. Now, the counterpoint to that is that a lot of positive news is already in the price, and with seasonality that is not supportive for higher stock price up until the end of September, October, we like to position for what we call a grind higher in stocks, and we like to minimize the premiums that investors are spending on upside positioning.
How do you mitigate the risks around inflation, whether it's soft commodities, whether it's diesel, whether it's gas, oil prices? If this is the status quo right now around Iran, and that is prolonged, how do you hedge around that?
So one of our top pick at the moment is the banking sectors. We think the banking sectors is one of the best sector position for end of year. First of all, PMIs are on the rise, as I mentioned, activity is picking up, earnings that have been good, but also higher inflation mean higher rates. We're expecting the ECB to raise rates come September meeting, and that is positive for the banking sector, a cyclical sector that has, yes, really performed well over the past few years, but we think there's still some upside for that sector.
How do you minimize premiums for investors?
So you want to look basically at not paying the full right tail of the distribution, so looking some types of like call spread or call spread versus put, depending on the sectors that you're looking at or the index that you want to look at, is how we look to mitigate premium spend.
How much volatility are you expecting?
I'm sorry?
Volatility.
So what I think is the most striking parameters in the vol space at the moment is skew. Last week, we've had massive repricing of upside vol in indices such as NASDAQ, but that led repercussion in S&P and on 5E. And this is where most of the dislocation holds at the moment, where skew is actually quite low and offers some opportunity.
How much? The markets were all over the place last week, but it didn't feel like a fundamental story. It just felt like a repositioning options story. Is that what's driving this market at the moment? It's all about kind of how dealers are positioned, what's happening in terms of where the gamma line is. It feels like that is where the narrative is, rather than trying to make some sort of fundamental analysis as to what is happening in terms of is the AI trade on or off or whatever.
Yeah, I would say two things. On the directional basis, it's been a dispersion story. 2026, we've had the outperformers, the bank, the tech stock on one side, and we've had the laggards, consumer discretionary, and then also the autos that have kind of mitigated the move at the index level. But on top of that, you need to put what the dealer's positioning has been. And we've seen a lot of leverage on single stock space in the US, and we've seen also this short dealer gamma positioning on the upside last week that led to a bid in upside vol.
Are investors, are we seeing distortions as a result of the leverage story in the US on tech, the leverage story that we've seen, and there's been some clear out in Korea as a result of a regulatory crackdown? But what is that leverage play doing more broadly to the flow show?
Yeah, so we've seen basically, first of all, the leverage has come down massively on some of those names. What we found out looking at past periods of stresses on semi stocks is that we tend to have the initial bounce back that we saw last week, but then it tends to be followed by around a month where stock kind of trades sideways. Basically, investors look back at their risk management and all of that, and then the stocks tend to rally. So we are also looking for this kind of consolidation period until we see a bounce back in those stocks.
Would hikes from the Fed derail your constructive view on equities? And if so, how many? Would it be 1, 2, or would a Fed that's staying on hold in an environment of higher prices and higher inflation and question marks about Fed credibility be a challenge? So
at the moment, we're expecting a mini rate cycle from the Fed starting in December, then January, then March. Now, the market is pricing around half a hike for September meeting. What we're seeing is this print this week is quite important for the Fed pricing of a rate hike come September. If we do get a print that is more hot than expected, around 0.3 or higher than that, it's likely to get priced in more. And where there's more risk on the equity side is for indices like the Russell. It tends to be low quality, more leverage, and those type of indices that to underperform in a period with where the Fed is raising rates. So those are the index where we're looking at hedging at the moment.
There's a lot of noise out there at the moment. Volatility is quite low. But I'm wondering whether or not, if we got resolution to some of that noise, how the options market would respond to that. Would clarity be a good thing or a bad thing? If we resolved what's happening in the Gulf tomorrow, how would the options market respond to that? Would it respond positively or negatively to that once you start to see some certainty? Optionality is when you've got lots of different things going on, you want optionality. If you start to have clarity, do you need optionality?
Yeah. So I would say, and what we've learned last week is that if we do get the positive news and stocks break higher of the range that they've been, this is going to happen in a spot of volatile type of dynamics. People are going to chase the upside positioning, and this is going to lead to a bid involved on those upside positioning. So we are thinking if stocks move higher, this will happen in a more volatile, with implied vol getting bid.
So ironically, clarity...
higher option prices.
Yeah, higher options prices, which, I don't know, seems counterintuitive to me. Does what is happening now feel logical in terms of the way that we're seeing markets responding? How much of this is liquidity? There's a lot of liquidity out there at the moment, but how much of this is... Does the market feel fundamentally driven, or does it feel that it's being driven by internal financial factors which are unrelated to what's happening in the real world? How much of this is a kind of closed-loop scenario happening within the option space?
So I would say there's been this magnificent story around the tech sectors, and I think options have been trying to catch up and see where to position. We've had massive level of volatility on those stocks, so people are trying to see how they can hedge on the downside without paying too much premium, and now can also position on the upside. But the premiums have been so high that some people stayed on the side, but when things happen, they need to catch up and position, and hence this massive bid in vol. So I would say the very elevated levels of vol on those single stocks, or even on the sectors as a whole on the NASDAQ, has been a struggle from an investor positioning in how much premium you're ready to pay on those sectors or on those singles now.
Is there a level of yield on the 10-year that would fundamentally restructure some of that positioning if we think about risk-free, or at least the risk return analysis for investors? If we're getting to 5% and you can lock in 5% as an investor.
Yeah, the 5% has been discussed a lot around the 30-year maturity in the US. Now, the reality is the economy is good, the earnings have been really good, so if you get a better yield on your equity side, you can get higher bond yield, and the picture can still be attractive for you to invest into equity markets. I think what has been quite surprising is that expectations were high in the earnings season, but companies still managed to beat on the upside. So as long as your earnings part is still increasing by a bigger factor than your yield part, then it's still interesting to invest in equity market. That's still where you're getting the best yield for your money.
Yeah.
Do earnings seem sustainable? Like, analysts are pricing in an awful lot of forward earnings. Does that seem real to you?
I mean, it's been the case for a few earnings, and companies have continued to beat on the upside. So we're saying that there's this whole part of the economy that is getting unlocked. Now there's a lot of expectation. We saw some worries around hyperscaler, CapEx spending. So I think there's going to be those pockets of worries that are going to come back. Are they able to monetize on some of their huge CapEx numbers that they're seeing? Is the bond market able to digest those huge emissions? But at the moment, as long as the earnings part is picking up, then that's the best place to invest.
Okay. Nice to see you. Thanks for coming to see us. Benedict Lowe, European Equity Derivatives Strategist at BNP Paribas Markets 360. Core 6 looks like this. SML, in fact, tech generally having a sort of better time of things. Energy prices are also looking fairly good this morning, so you're seeing some pickup there. It's interesting to see the farmers, actually. You're seeing some money rotating into that space. It was very unloved for a long time. That has now changed, as you can see on the left-hand side of the screen. Okay, Chloe's here with some details on some of the other stocks which are not on these boards. What do you got?
Good morning, guys. We have got PNE, which is a company that manages onshore and offshore wind farms, and we're down quite significantly this morning because it received takeover interest that was below its market share value, and so we're down about 11% on the back of this morning. We are also in the red for IHG Intercontinental Hotels Group, the hotel operator that has actually beat estimates this morning, but there's strength that there was in the US market in particular, with strengthening economy, and the FIFA World Cup was maybe enough to offset this impact from the Middle East, but maybe the beat was just not quite enough to reassure investors that travel demand was really coming back. So we're down about 2% on the back of that this morning. Moving on to the defense sector, because RBC analysts have initiated a few of those companies this morning. Saab, Kongsberg and Rheinmetall all initiated at a buy rating, with the analysts saying that there was going to be really strong growth from European rearmament, and that was going to continue as well beyond 2030, although at a slightly more modest level. So we're in the green across the screen there, except for BAE seeing a little bit of weakness there. Moving on to Lion Finance, which is a small banking group that serves customers in Georgia and Armenia. And there we've got a buyback extension, moving the shares forward. We're up about 4% on the back of this. And finally, Alcon, a Swiss manufacturer of eye care products, is up this morning about 5%, so quite strongly after raising its guidance and beating estimates. So quite strong earnings there reflected in that share price.
Chloe, thank you very much indeed. Some of those stocks on the move this Tuesday. Chloe Melee there. Coming up, Germany's car-making icons are being humbled in China as sales of homegrown EVs race ahead. We have more evidence of that. That story and insights are coming up after the break. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Earnings season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience.
Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
welcome back to the opening trade. We are 17, almost 18 minutes into today's session. Top of the list when it comes to sectors. Energy up 1.2%. Brent is closing in on $90 a barrel. Across the benchmark, Stock 600, you're seeing a modest grind higher, up 0.1%. On the downside, when it comes to your sectors, is travel and leisure, currently down 0.9%. And again, you can tie that to what's happening in terms of the oil price.
Yeah, maybe that is the factor, and that maybe explains why we're seeing IHG under a little bit of pressure. So the numbers looked broadly out of the hotel operator pretty good this morning. It looked like they'd beaten on a lot of the metrics. The forward numbers look pretty good as well. Why is the stock down? There could certainly be a kind of oil price factor here, but the entire sector is looking like it's under pressure. We just indicated. Let's talk about this. Get some sort of sense of analysis on what is happening here. Conrad Gaynor, European travel and leisure analyst at Bloomberg Intelligence, joining us for a kind of take on what is happening here. I'm a little surprised to see IHG down as much as it is this morning. Do the numbers justify a drop, or is this just a stock that's had a decent run recently, maybe showing a little bit of fatigue, and the entire sector's under a little bit of pressure as well?
Yeah, and thanks for having me. It was a decent set of results, right? They beat on RevPAR growth, which is the main metric, 3.5% 2Q RevPAR growth. And I suppose the big story there was the Americas beat. Now we all know about the World Cup. They've attributed 1% of the 5.4% Americas RevPAR growth to the World Cup. I suppose we knew about that already from what the peers has reported, that there would be this uplift. There's a smaller benefit to come through in 3Q. Perhaps we might get a little bit more cautious towards 4Q when we get to the midterm elections. But then, if we look at, say, the Europe, Middle East, Africa and Asia Pacific region, that was maybe a little bit better than expected. It posted some growth. I mean, that includes the Middle East, which was hugely disrupted by the Iran war. If we strip out the Middle East of that, from that, we get about 4% RevPAR growth. The UK, East Asia and Pacific performing particularly well. Group business strong for that part as well. Greater China maybe a little bit weaker than what we would have thought. That was 0.8% growth at 2Q. That was impacted by holiday timings, and you had this sort of polarization of tier 1 cities, Taiwan, Hong Kong, within Greater China doing well, and tier 4 cities doing well because they have resorts, but the tier 2 to 3 cities weaker.
Conroy, that's so interesting regional breakdown there for IHG. What are you watching for, you and the team, in the quarters ahead in terms of the key growth drivers for IHG, whether it's regional or whether it's in the kind of the pipeline that they have right now?
Yeah, I think the big overarching theme across the travel and leisure space really is this premiumization trend. I mean, we expect the lifestyle hotels, the luxury, the sort of premium end of premium hotels to outperform, and we've seen that across airlines too, really, with premium cabins doing well. So we think that this, we maybe are in a little bit of a two-tier economy where the people that the more affluent can travel and afford these things. Maybe we're seeing some more softness in demand across the value end of travel, and really as we look at the geopolitical things that are happening every day, higher oil prices, higher bills in general may just start to pinch the wallets of the lower income population as well.
It's interesting to watch. Yeah, it's quite an interesting macro take on what is going on here. Conrad, thank you very much indeed. Conrad Gaynor, joining us from Bloomberg Intelligence on the IHG story, the CEO of which is going to be joining us a little bit later on. Ellie's going to be on with the surveillance team. I think that's around 11:30 UK time.
Okay, from travel and leisure to the auto sector right now, because after decades, of course, of winning over Chinese buyers, Germany's automaker giants are being humbled by a slump in sales. The struggle in China comes as the German car makers face mounting pressure from domestic manufacturers. Let's get more with Bloomberg Autos and Transport reporter Danny Lee. Danny, just remind us, what is the latest data? What are the latest sales numbers telling us about the woes of German automakers in China?
When you look at Volkswagen, BMW and Mercedes, they are all really struggling. And
when you zero in on the premium segment, so for Volkswagen, it's its premium brand. Audi, there's a couple of figures that really represent this decline for them, and that they are really in a lot of trouble. From 2020 to now at the end of 2025, all three of them, the trio of those brands, have seen their market share gradually erode to a point, roughly, they've lost about half of their market share. And now by the end of 2025, they fell to single-digit market shares. It just goes to show how much of their share has been eroded, particularly by the Chinese EV competition. And also the fact that earlier this year, we've seen their warnings on Mercedes, BMW, and from Volkswagen. In terms of the outlook, the warning that their guidance for 2026 cannot hold because of, in large part, what is going on in China, where they are overseeing quite significant erosion in their share of sales. So it's a really tough picture when you look at how the German vanguard of auto industry is really struggling out there.
Okay, Danny, is there any sign in any of the vehicle lineups, in their cadence in terms of producing new technology, that this is going to turn around anytime soon? Or is China gone for the German automakers?
Well, it is amazing just when you look back at how, for the Germans, China being a huge growth market, the prospects that they had and their standing, and that's really been ebbed away at. The fact now that the Chinese automakers have really raced ahead in terms of performance and technology, and the fact that the Germans and other foreign automakers have to catch up ultimately to match them in terms of that level of range, for example, for EVs, or the kind of tech that they really install in their cars. It really goes to show what happened to Mercedes, the fact that it partnered up last year with McDonald's, of all kind of brands in China, replacing the silver arrows with a cheeseburger figurine to try and drum up sales with China's youth, younger drivers rather. In the first half of this year, they only sold 1,157 units of its all-electric sedan CLA, and that really compares to Xiaomi, for example. Upstart, Chinese brand, sold 80,000 over the period. So they are really being driven in almost into a sense into irrelevancy with the kind of positioning and kind of technology that they've been offering for quite some time.
It's such a remarkable turnaround. I remember when I was based in China, Danny, it would be the complaint from German execs would be we're not getting enough units into the country to meet the demand. And I remember speaking to CEOs, they're saying we have clients who are paying in cash for Porsches, it's suitcases of cash. I mean, these things, this has turned around pretty dramatically. On the Chinese side, are Chinese automakers actually making any money at this point, Danny?
Well, for the Chinese automakers, they've clearly had to dig deep into their finances to fund their kind of innovation, evolution, and growth strategy. And now you do see the tables being turned around when you see the likes of Mercedes having to consider the reality that they are going to have to sell for example, their CLA all-electric sedan at a loss in order to lower the prices and to try and keep up with the Chinese EV makers. The fact that the Chinese EV makers have the tech, they have the cost base, and they have the sales and momentum, it all really leaves them in a decent position. The fact that what we have obviously seen, Tom, abroad is that the Chinese are conquering markets like Europe in a way, particularly with high oil prices, high petrol prices, that you do see the tables very much being turned. And for the European legacy automakers, it is a really tough position for them to be in.
Danny, great stuff. Thank you very much indeed. Danny Lee on what is happening with the auto sector. He mentions gasoline prices. Brent crude is up circa 2% right now. TI is up by circa 2%. Aluminium's up by 1.63%. Next, we're going to talk about commodity prices. Eva Manthi's going to be joining us, commodity strategist at ING. Maybe throw a bit of gold in there as well. That conversation coming up as we watch these metals prices with a great deal of interest at the moment. Commodities prices broadly are higher. We'll talk about it next. This is Bloomberg.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
This is the opening trade. We are 30 minutes into today's session. That is the picture across the benchmark stock 600, currently flat. In terms of the sector breakdown, we'll get into some more details shortly, but you've got energy at the top, you've got travel and leisure at the bottom. The last time I checked, the DAX is currently up just 4 basis points, or 4 points, I should say. The CAC coin is currently a little lower, and you're flat on the FTSE, or at least down 1/10% on the FTSE 100, which is interesting given the higher energy costs that we're seeing. You do have Brent closing in on $90 a barrel. Volumes are telling a story, Guy.
They certainly are. I see your exciting board and I raise you this exciting board. 247 up, 327 down. Nothing to see there. Look at the volume. Actually, it's got a little bit better as the session has picked up a little bit, but we're still there's not a lot going on out there in terms of volume transactions. So we're in the middle of August. I think we can probably conclude from what we are seeing here. Single stock smooth. There's some excitement there. Alcon out with numbers this morning. iCare we're talking here, and the numbers look okay. And as a result of which, that stock has done a little bit better, as you can see. Saab doing well. I think we've got a bunch of upgrades on the defence space this morning, which is certainly moving that sector around a little bit. Have we reached the near-term bottom? We'll be bouncing. And then ISS. What does ISS do? It's not space stations. It's buckets and mops. This is the company which you probably see around your office but don't notice on a fairly regular basis. It provides a lot of janitorial services and goods to up by 2.42%. So there's demand for that side of things at the moment. IHG is not doing quite so well this morning. It's had a good run. The stock's rolled over a little bit over the last few weeks, and that continues this morning down by 2.6. Eddie Malouf's going to be on the surveillance show a little bit later on. M&G, I think, is a downgrade story. Spirax is an industrial company, down by 8.56. In fact, industrials broadly, I think, are showing some signs of weakness today, Tom.
Okay, here's what else you need to know this morning. Another wave of intense heat is set to sweep across an already parched Europe, of course, this week, raising wildfire risks, threatening crops and drying watersheds feeding the region's critically low rivers. Temperatures in northern France are expected to hit 40 degrees Celsius, while southern England may reach the mid-30s. NVIDIA has struck a deal with a series of private market giants to invest $500 billion in AI infrastructure. Meantime, Intel is set to raise $20 billion in its first share sale since it listed in 1971, increasing the amount it was planning to sell after getting more than $100 billion in orders. Oil holding on to gains this morning after President Trump made sweeping new demands of Iran. The president is calling for Tehran to pay compensation for damage and deaths caused in conflicts across the Middle East. The demands come in response to Tehran's requests for reparations over the US-Israeli war on Iran. Guy.
Okay, let's carry on that conversation and talk about what we're seeing. WTI crude up by 2% this morning. Brent crude is up by 2% this morning. Nat gas, which saw a huge lift yesterday, continues to climb as well. We're up by 0.8%, but we saw a 10% move yesterday in Europe as we see concerns growing around what supplies this winter are likely to look like. Let's get an update on all of this and figure out where we go next. Our energy reporter, Anthony DePaola, joining us now for an update. We're seeing some big demands, Anthony, being made by both sides now, Iran and the United States. The market's conclusion appears to be, we're not opening the Strait anytime soon. Is that the correct interpretation?
Good morning, Guy. Yeah, it seems like the view is that we're going to have this kind of protracted reduction in traffic out of Hormuz because it's not fully open. We are still seeing a trickle of vessels going through. We are still seeing some of those oil tankers getting through as some of the countries, particularly the UAE. We've seen some Iraqi tankers going out as well. They're pushing vessels through the strait using that Omani route, but it's really contested. And as we've seen strikes, even as recently as over the weekend, an Abu Dhabi vessel was struck on Saturday, according to the state media agency. Those are enough to keep people from wanting to go through Hormuz. It's difficult to get shipping. Prices have increased. There's a lot of risk in there from sending a vessel in with the possibility that it gets stuck inside the Gulf. So that's a real block to getting energy supplies out of the Gulf, and that is continuing despite the talk that we're discussing a deal, that we're close to a deal. That's not enough for the market. The market wants to see free flow and safe transit of Hormuz before it considers that open. And of course, as you alluded to, the comments from Trump overnight asking for compensation from Iran, these are just really stepping up the demands from either side, and so that's not going to be conducive to reaching a deal. We had also those comments from the president over the weekend saying that they were kind of taking it slowly, low-keying it, I think was his phrase. So does that mean that this is simply going to stretch on for a period and we're not going to get a resolution? The U.S. is banking on Iran going bankrupt first, whereas Iran will be looking at the U.S. resistance to high gasoline prices, and particularly Trump's resistance to high gasoline prices as we go into the midterms there. So it's a waiting game, and that doesn't spell a pretty picture for the oil markets, Guy.
Certainly does not, and that's being priced in this morning. Anthony, thank you very much indeed. Anthony DePaola joining us out of Dubai on what we're seeing in the Gulf right now. What is interesting is it's not just restricted to the energy complex. You're also seeing elsewhere action in the metals market as well. I'm watching aluminium this morning up. That obviously is a metal that does have some concentration in terms of production in the Gulf. Eva Manthi is commodity strategist at ING and joins us now. Eva, good morning. If we continue to see the Gulf remaining closed, if the Strait remains closed, talk me through how that affects the metals markets. I've got aluminium up. Is that related? What else should I be watching?
Yeah, of course. So if you look at the commodity space, apart from oil and gas, aluminium is probably the most affected commodity by the Gulf disruptions. So the market is really focusing now on the physical tightness for aluminium. That's why you see prices rallying once again. We saw some of that geopolitical risk premium come out of the aluminium market as we saw tensions in the Middle East easing in early June. But the important point is that the lost production hasn't simply come back to the market. And you have to remember that restarting aluminium smelters is a long and technically difficult process. So supply remains constrained, and with the market still tight, prices are finding support again.
Okay, we've also got energy prices rising too. If you assume that you need an awful lot of electricity to produce aluminium, energy prices are going to be a factor. Gas prices are climbing rapidly. How much of a factor is that?
Yeah, of course, aluminium is such an energy-intensive metal, so that's also having an effect on aluminium prices. And as you see more of that energy constraint, then you'll see also aluminium output constraint, and that's going to have an effect on aluminium prices as well.
Is there, good morning, Eva, is there additional production we can expect out of China when it comes to aluminium?
Yeah, so China has certainly helped during this Middle Eastern conflict. We saw production already running at very high levels. But also for China, capacity is relatively close to its ceiling. So China can mitigate some of the tightness outside of China, but there's really limited scope for a huge additional supply response from there.
On copper, we're looking at 14,000, closing on 14,200 on copper. It seems like the analysis I've read is that most of this is down to expectations around tariffs from the US. If those don't come through, do we get how rapidly do we unwind? There's a lot of tightness now in this copper market, it seems.
Yeah, so the US tariffs are probably the biggest risk for copper in the near term. If you see refined copper included in the tariffs, then you probably see shipments into the US accelerating further ahead of the possible implementation. But also you have China trying to attract metal at the same time, which could tighten the rest of the market even further. So if refined copper remains exempt from those tariffs, we probably see the US pull on the metal weakening, and some of that metal could become available elsewhere. So I would expect some of the current tightness and probably some of the price to unwind as well.
How much AI is there in the copper price?
So AI is definitely supportive for copper demand, because for copper it isn't just about building more data centers; it's also about the power infrastructure that has to sit around them. So we will need to see significant investment in grids and transmission and generation as we see that electricity demand growing. And copper is particularly exposed to that because of its use in cables and then transformers and electrical equipment as well. But aluminium also benefits from that.
Yeah, there's a substitution effect also into aluminium as well, I guess. If you were to see the AI trade rolling over, say a hyperscaler said we're not going to be spending as much money, and you start to see the whole kind of complex coming down, what's the beta in copper to that aluminium to that AI trade? i.e., if the AI trade falls apart, does copper come down hard with it, or as you say, because of the infrastructure build out that we are seeing, which is probably longer term, that it's reasonably insulated from the volatility that could come?
I think that probably on its own, really AI data center demand is not really big enough just yet to move the copper market. And at the same time, I wouldn't say that AI is suddenly going to create a copper shortage, right? But it adds another source of demand to a market where the supply response is already constrained. So even a small incremental demand adds to the support to the price.
Yeah, but when you look across these commodities, do you think markets are underestimating the inflation input coming through from these higher prices on commodities?
Yeah, perhaps, but as I was saying as well, that you actually have fundamental support for both of these metals that we were discussing. So both for copper, actually supply is tight. And for aluminium, supply is tight. Like we are expecting around 1 million ton deficit of aluminium for this year. So fundamentally, these metals are supported.
Okay. Eva, can we just wrap up on gold? Down today, but we've seen a big rally. What was behind that rally? Does it keep going? I appreciate it's down today. Do you think there's further upside here? Or are you surprised to see the big pickup that we've seen over the last few days?
I think for gold, we're finally seeing several sources of demand coming back at the same time. So we have central banks picking up their buying again. So for example, China has increased their holdings last month again. But I think more importantly, ETF investors are also returning to the market after several months of weaker demand we've seen. And at the same time, we have expectations for US rates becoming more supportive. And I think that has taken some pressure off gold. So I think that overall, this rally perhaps has a somewhat stronger footing because it's just no longer relying on just one source of demand.
Okay, a stronger footing for the rally in gold. Currently down 0.7% at 4,357, but that rally has been there in recent days. Eva Mante, commodity strategist at ING. Thank you for those insights. Coming up, we're going to switch focus to the banking space, specifically UBS, waiting with bated breath as Swiss lawmakers vote on diluting the government's capital reform plans. We'll see if they do indeed do that. We will have the latest next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Tuesday the 11th, welcome back. 47 minutes past the hour. I'm filling here, basically. I'm trying to say exciting things about the time and the day because, to be honest, there's not much actually happening out there when it comes to the equity market story. European equities are flat. There you go. You can see it on the screen. Not much happening at the index level. There's a few single stocks that are certainly moving around today, but at an index level, we are 1/2 either side of the negative line. The AVAT line also tells quite a significant story this morning on your Bloomberg terminal. Check it out. Get one of the drop downs, and you'll see that volume is very light. We are in the dog days of August, Tom McKenzie.
Okay, let's find something of interest
through
the rest of the day. Let's look ahead to what else we're watching. This one is good. We'll get some more details on this in the next minute or so. But the Swiss Parliamentary Committee, a really important parliamentary committee, is going to be pushing through potentially with a recommendation on proposed tougher capital rules for UBS. Maybe they'll adjust that. Again, we'll get some updates out of Zurich momentarily. At 11 a.m. UK time, US NFIB small business optimism data comes through, so we'll be across that for you. At 1:30 p.m. UK time, Hungary's parliament votes to select its new president. Of course, an adjusted relationship with the EU on the back of changes at the top in terms of the politics of Hungary. US primary elections taking place in Connecticut, Minnesota, Vermont and Wisconsin. And on the earnings front, as we think about AI infrastructure, once again, we've got earnings coming through from CoreWeave and Supermicro Computer. That's after market. Let's get more on that big decision for UBS right now, because the Swiss Finance Ministry has proposed making the lender hold the full book value of its foreign units in equity capital at home. It's a measure that the bank has lobbied strongly against since it was first floated back in 2024. We're joined now by our Swiss finance reporter Miriam Balazzo in Zurich. Miriam, just remind us what led up to this debate and the vote today that could potentially prove pretty crucial for UBS.
Yes, absolutely. Well, I'll take you back 3.5 years ago when Credit Suisse collapsed. It completely shook the whole country, and UBS came to the rescue and became this giant financial titan, which is much bigger than Switzerland itself. And obviously this was wonderful. However, if UBS now were to collapse, it's presenting a huge risk for the country, because Switzerland state and taxpayers essentially would struggle to bail the bank out without completely bankrupting the country. So the government came up with this capital rules that would require UBS to back its foreign subsidiary by 100% and purely in equity. At the moment, bear in mind that they only have to do 60% of backing. So it's a huge change. And UBS has been lobbying for almost over a year now to just get this 100% backing requirement reduced. So Parliament are debating as we speak. There'll be another hour or so, or maybe a couple more hours, to debate whether they can dilute that figure. It's not clear whether they go 60%, 80%, we don't know yet. But that's definitely just the government trying to get UBS to build its own safety net, basically.
Has there been a shift in tone? Because if I'm a UBS shareholder and I want to get back to the days when UBS was one of the biggest payout banks that existed in Europe, this is crucial. So what are we expecting from these lawmakers? Any hint that maybe they are going to dilute it?
That's the expectation, but you never know. But there's been people in UBS's corner in Parliament, so the bank is hoping that things will shift, but something that will change for the bank drastically is just getting a bit of clarity, because it's been quarters over quarters of the share price dragging because of this uncertainty, and it prevents UBS from doing bigger potential acquisitions. It also holds the whole global strategy of the bank. So we need clarity. Shareholders have been patient enough, and I think they're waiting also for that bit of clarity. There's an expectation that it'll be diluted. I think the question mark is how low would the Parliament go? That's still up for debate, but the clarity will already change the share price trajectory.
Miriam, great stuff. Thank you very much indeed for the update. We'll watch for the news a little bit later on with keen interest. Miriam Balazzo joining us out of Zurich, Tom.
Let's bring in Adam Linton now from our Markets Live team for another take on these markets. So, Adam, we're seeing yields up. You're seeing a sell-off again in gilts. Brent closing in on $90 a barrel. Essentially flat across the European benchmark. You think European stocks though can grind higher despite the energy price increase that we're seeing, despite higher yields, despite the pressure on bonds?
Yeah, I think we potentially have a bit more further room to run here. We're most of the way through Q2 earnings season, and the results have been pretty stellar. I mean, net profits, they've been up about 17.5% compared to around about 11% consensus, which is the best quarter since 2022. But also the breadth of the rally is relatively healthy. The amount of companies above the 200 DMA, that's most since 2024. And we're also seeing earnings expectations just continue to ratchet higher. And a lot of that is basically confidence that the onset of the Iran war hasn't been as severe as people expect. Yes, that could potentially change, but the macro data is definitely holding up. European surprise indices, they're exceeding the US now. That's for the first time since the onset of the war. And we're kind of seeing a bit of this asymmetry at the moment on an intraday basis, whereby bad news isn't really hurting European equities too much. But when we do get good news, not that there has been that much recently, it does add further juice to the rally. And also as well, is a bit of an offset to some of the wavering we've seen enthusiasm for the AI hyperscalers and the large caps, with Europe benefiting from its value composition.
Where's the demand coming from when it comes to earnings here in Europe? If you look at demand, which component part of it is driving it? Because at the moment, it feels like the European consumer is having a fairly tough time. You've got European industrials having kind of a mixed time. What is it like? Where is the growth coming from? Because if we start to get higher energy prices coming back in, does it take away some of that earnings momentum?
Yeah, I definitely don't want to kind of overplay the resilience to the Iran war. There's clearly a lot of headwinds. But if you look at an index like the DAX, for example, the DAX has been really solid quarter to date. It's the best performing European indice. And part of that is SAP. Looks like it could potentially be turning a bit of a corner. Yep. I think you had Anthony on your show earlier saying about how cheaper AI tokens are helping boost software. You've had turnaround in defense sector. Rheinmetall, that's up about 25% from its lows in, I think it was June. You've got this multi-year European defence cycle. Then you also have some attractive names such as Siemens within the index, which is a solid AI infrastructure name. So definitely are pockets, but yes, obviously there are potential headwinds on the horizon.
I mentioned the sell-off in bonds, and we're seeing that again today. If we get a weaker than expected CPI, or maybe in line, 0.1% month on month is the expected increase for US inflation tomorrow. Does that give some reprieve to European bonds? Will it be short-lived? What was the read across potentially from the inflation story in the US?
I think if you look at the price action yesterday and today, I think potentially short-lived is probably more my bias. I mean, I think that the reaction function of fixed income traders is different to that of equities. We're still very much at the mercy in the fixed income space of what's going on in the Middle East, and the tenor of news flow is increasingly negative. We saw fresh demands from Trump overnight, hardline adjustments to Iranian personnel over the weekend, and no real evidence of any talks between the US and Iran. So yes, we might get a short-term jolt higher in fixed income markets, but ultimately we need progress on US and Iran, and that's against the context of the ECB reaction function. We've seen that growth has held up well. Bloomberg survey data, that's been revised higher. When things did look a little bit better at Sintra last month, the ECB was still pretty resolute. So even if you do get a bit in fixed income off the back of a soft CPI, I still think European bonds need further progress on US and Iran.
Another big move up in bonds this morning. Yeah, a big move.
Yeah, gilts selling off.
Gilts are north of 5, 10.
10-year yield up 5 basis points. So again, pressure for the UK Treasury at the very least. Adam Linton from Bloomberg AM Live. Thank you for walking us through some of the key market events. We've got some interesting earnings coming up. The volume story here in Europe isn't telling us much, but CoreWeave and ST Micro on a day when we're supercomputer, I should say, Supermicro. On a day when we're thinking about $500 billion maybe of additional capital. We don't know how much of that is new, how much that is reworking some commitments already from NVIDIA and team on Wall Street.
More investor money going into the AI trade. The earnings story starts to pick up from now. We've got CPI data coming through as well tomorrow. So quiet start to the week. I think it's going to get a little bit busy. CEO of Uniper is going to be joining the Pulse. That conversation coming up very shortly. Francine Lacroix in charge of the next hour. We'll leave you in her capable hands. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
President Trump hits Iran with sweeping new demands, including a call for compensation from Tehran, dimming hopes for progress on the Strait of Hormuz. Bonds fall, gold rallies above $4,400 ahead of a key U.S. inflation report tomorrow, plus NVIDIA secures $500 billion in funding for AI infrastructure. We'll get the latest on tech. So there is quite a lot going on in the markets. It's usually a quiet August. So actually, in terms of volumes, we're a little bit thinner than usual, but global stocks posting small moves, government bonds edging lower. Again, this rally in oil prices seems to have revived inflation concerns a day before the release of this key U.S. consumer price data. A couple of things that we need to watch out for. Of course, it's the sweeping demands on Iran from President Trump. A U.S. consumer price index probably rose to 0.1% in July, following a 0.4% decline in the previous or in the prior month. So look out for that. And then gold pulling back to about $4,365 an ounce after climbing above $4,400 in the last session. Brent 89.55. If you look at the European markets map, so one of my favorite things to read this morning was actually John Authors looking at earnings and the impact that has on the wider asset classes longer term. So DAX, CAC, and actually the FTSE down 0.2%. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, oil holding on to gains this morning after President Trump made sweeping new demands of Iran. In response to Tehran's request for reparations, he's called on Tehran to pay compensation for deaths and damages stemming from regional conflicts. Now, for more, we're joined by our Abir Abu Omar in Dubai. Abir, look, it's been a couple of days. It's really unclear exactly what the demands are. Is this economically, or is this just broken trust amongst the two sides?
Good morning, Francine. Two very good questions. It's a mixture of both, really. So you did mention that over the past 2 days, we've heard new remarks, namely from President Trump, saying that he will wait for the economic toll to take its weight on Iran, essentially, and that would somehow bring Iran back to the table. Now, from the Iranian side, as a matter of fact, we've had even more maximalist demands over the weekend with the reshuffling of some hardliners within the government. Now, Iran, through those hardliners, is asking for compensation for the war, is asking for the U.S. to lift its naval blockade, is also asking for the lifting of those oil sanctions, unblocking those assets. President Trump, in his latest remarks, as you can now see, says that, well, if Iran asks for this, the U.S. will ask for compensation for all the people that have been killed and gravely wounded throughout the war. And over the past 50 years, he also names the protesters. He also says that Iran is in charge of the casualties and of the tragedies in neighboring countries, including in Yemen, Syria, Lebanon, and even Gaza. Now, he didn't give a lot of clarification on what exactly that means. But what is for sure is that we're seeing this deal that we've been talking about over the past few weeks at this point really drifting further away from coming to reality. We've reported that a discussion between Oman and Iran has been taking place about a mechanism to reopen the Strait of Hormuz. Now, the latest we know about that is that that negotiation is in the final stages. We've reported that over the past week or so. We still have no clarity on just how close it is to that finish line.
So, Abir, actually, sometimes you have a lot of negative press because it's a domestic audience, and then behind the scenes, it's a little bit more optimism, or there's a little bit more progress. Is there any sign that things are getting better behind the scenes?
Not really is the short answer, Francine. What we know is that the only negotiations taking place are, as I mentioned, between Iran and Oman. Iran is adamant that Washington is not part of those negotiations. And what we also understand is that there are no formal discussions taking place between both sides of the table. Since that MOU was signed in Switzerland, our understanding was that the two sides are going to come and start discussing those concessions, namely that nuclear component that was top of the list. That hasn't gone anywhere. As a matter of fact, that deal or that MOU, the interim agreement, all the concessions have really left the window since those escalations restarted in the Middle East. For the time being, front and center is that mechanism to reopen the Strait of Hormuz. President Trump to Bloomberg yesterday in the White House saying that the Strait of Hormuz is open. That is something that obviously Iran refutes adamantly. And then you have the fact that this war is still ongoing, but not just that, the parameters of the conflict have been expanded in the region, with the Yemen-based Houthis now hitting countries, including Saudi Arabia, including the Red Sea, another crucial waterway that Saudi Arabia had resorted to ship its crude exports throughout the course of this war. So now you have Bab el-Mandab, another crucial waterway alongside the Strait of Hormuz, getting exposed to those threats by Iran-backed militia, and so further putting upside pressure on Brent crude prices that are edging very, very close yet again to the $90 on the barrel mark. And so no signs of positivity as of now in the Middle East, but as you have seen over the past 6 months or so, things could happen at any given minute. And so obviously those are things we'll continue to monitor and update with.
Abir, thanks so much. Abir Abu Omar there with the very latest on the Strait of Hormuz. Now, NVIDIA has partnered with some of the biggest firms on Wall Street to unlock up to $500 billion for AI infrastructure. I mean, we say this like this is normal, $500 billion. Meanwhile, Intel is increasing the size of new share sale to about $20 billion. Let's bring in Matt Bloxham from Bloomberg Intelligence. Matt, we do need to check ourselves sometimes, because we used to speak in like hundreds of millions, and now we just throw billions around. So what do these funding plans actually tell us about current AI sentiment?
It tells us that the AI economy is still incredibly hungry for capital wherever it can get it from. I was looking earlier at how big the vendor financing market is. I think it's less than $100 billion. So, this would kind of dwarf the entire vendor finance community. So we need to see lots more details about actually what this is finding, but it does add to this kind of uncomfortable situation that the AI economy is becoming increasingly circular, potentially you kind of create some systemic risk here that, if the whole of the finance community is backing AI and that suddenly demand slows down on this bubble, then suddenly the implications could be much broader than a small group of big technology companies.
I mean, also on AI spending, tell us about Anthropic's deal with Riot Platforms.
Yeah, so Riot Platforms, probably not many people have heard of. It's a Bitcoin company. To mine Bitcoin, you need huge amounts of compute. They've seen the near-term supply constraints on compute capacity for AI. All of these big tech companies are in the market for compute capacity, and they're seen as a better return on their investment by doing a long-term deal. So $9 billion a year that Anthropic's paying them for 20 years to access just short of 200 megawatts of compute capacity. So it helps Anthropic deliver against near-term customer needs whilst they invest for longer-term capacity from other sources. And we've seen a number of these deals happen. XAI, SpaceX has been selling marginal capacity at their Terafab unit just to kind of help with this too.
Matt, as ever, thank you so much for joining us. Matt Bloxham there from Bloomberg Intelligence on everything tech and AI related. Now, bonds edging lower as a rally in oil prices revives inflation concerns a day before the release of some key U.S. consumer price data. So we talk about that. We talk about the Strait of Hormuz. And, of course, we talk about tech with Grace Peters, co-head of global investment strategy at J.P. Morgan Private Bank. Grace, as always, thank you so much for being with us. I mean, I do think these two themes are running and running. But now I don't know whether you find the labor market in the U.S. in equilibrium more or less. I know a lot of people dropped out of the force, but is that why there's so much inflation focus?
No, I don't think it is. I think what we're seeing now is actually an enduring shift in the composition of growth in the economy. The consumer, which traditionally has been the big engine, roughly 70% of US GDP, I think is actually falling back. And in its place, you're seeing this capex surge, in part driven by AI and these colossal numbers that you mentioned, billions moving to trillions probably if we look forward, but also driven by spending needs around issues of national security. Right. But what this means from an inflation perspective is, I think when we think about services versus goods, we're watching the goods side of things. I think we got from the non-farm payrolls last week confirmation that the labour market is ticking along. It's a bit lackluster. It's okay. It's okay. Yeah. But wage growth actually down to around 3%. That is consistent with the Fed's mandate, in our opinion. So actually, services inflation, I think, is more contained. We're watching goods price inflation, not just in this print, but on a go-forward basis because of some of the spending, because of some of the bottlenecks. Things like memory pricing has obviously shot up, and everything going on with the Strait of Hormuz and oil price close to 90, second round impacts there. But, so far inflation expectations feel anchored. I think that the Fed, we describe it as a bit of a coin toss between whether they hike or they don't, but relative to market pricing, we'd take the under. But the big picture to us is that we are in a slightly higher inflationary but higher nominal growth world, which has implications for the investment decisions you're making.
But so that, in terms of what the Fed should do, is it's probably, as you said, towing costs are actually not moving.
Yes.
But then bond markets are giving us a different signal.
Yes, I think within the bond market, when we think about the shape of the curve, the bit that we like to invest in at the moment is really the front end. So if we think about out to about 5 years, because we're playing that notion that we'll take the under versus market pricing on the Fed. I think when you look further out, these forces, these dynamics that I mentioned around higher spending, that obviously has implications for deficits. So I think we do need to think about the potential for the curve to re-steepen. Yeah. And obviously we've got a new Fed chair, and the market's still trying to build trust and build credibility, in chair wash. And so again, that can affect the longer part of the fixed income curve. So fixed income, I think, to us is for income, but when we think about really benefiting from some of those dynamics, the expenditures, the capex, we like other parts of alternatives, infrastructure, we like hedge funds and even gold, which is having a little bit of a revival of late.
It certainly is. Infrastructure, what part of infrastructure?
Yeah, so we like core infrastructure because what we're trying to tap into there is this higher nominal growth world, contracts which have got some inflation protection, and if you're thinking about a high single-digit total return, the vast majority of that comes from the income component. But I think there's another way to invest in infrastructure, which is really in power. We talk a lot about AI bottlenecks, and to us, power also fits the bill there. So you're seeing, big developments, renewables, as well as traditional forms of power. And so that's another way we think infrastructure assets can complement the portfolio, reduce the correlation, we hope, to equities as well, and provide that income component.
Overall, actually, earnings, I was looking at earnings. Sure, they've been dominated exclusively by big tech, but actually it's kind of given a boost by most sectors.
Yes,
which is surprising.
I don't know if it is surprising because it feeds into this broadening theme of, the capex that's coming from various sources and is diffusing across the economy. So you're quite right, Francine. If we look at median earnings growth from the S&P, we're up to 13%, which I think is very encouraging, reflecting this breadth. And just the scope of the upgrades is pretty unprecedented. You don't get double-digit upgrades, really, outside of recovery periods, when you've had a recession and analysts are underestimating the V-shaped recovery thereafter. So, our call beyond the capex super cycle has been an earnings super cycle, and we certainly feel in the second quarter we've got that. We think that will continue to lend support to equities, global equities. We like the US and emerging markets particularly. But, all of these things, the higher nominal growth, higher inflation, does mean it's a higher cost of capital world. So you also need earnings. You really need those earnings to come through.
Grace, emerging markets, do you make a difference between the countries that are very exposed to oil, given there's no end in sight in the standoff between the US and Iran?
Yes, to some extent. I think emerging markets have proven to be less oil dependent than perhaps people would have expected, and the earnings upgrades have actually been some of the largest in emerging markets linked to AI, obviously in regions like Korea and Taiwan. That's obviously tied a lot to the momentum trade, where we've seen it sort of wash out over the last few weeks. But we think the fundamentals there are sound. Even beyond AI, we think that the backdrop, the macro backdrop, the central bank backdrop is a sound investment proposition. And so to us, that's a really good barbell for US equities. Europe, I think, is not to say we're negative. A rising tide should lift all boats, but I would have a preference for the US and EM.
It starts from a lower base in Europe. So you every year we say, well, this is the year for Europe.
There's always hope. And look, to be fair to Europe, quietly behind the surface, its earnings season has been robust, particularly the banks have done pretty well. So there's definitely stuff to like in Europe, and there's definitely hope factor, because I think if we go back a couple of years to the Draghi report around Europe's need to, sort of perhaps reduce regulation, certainly, sort of come up with a more coherent strategy, pro-growth, pro-productivity, there's definite hope there. We're just not seeing the hope just yet turn into reality. So the US and EM for us are preferred regions.
Great. we're 2.5 weeks to the new government in the UK. Is the UK slightly different to the rest of Europe, also because they have these, massive commodity listed companies on the FTSE?
And I think this is a classic example of the economy is not the stock market, and that's particularly stark when it comes to the FTSE 100, where actually, it doesn't have AI exposure. So for investors who are worried about their AI exposure, the UK actually is an underweight AI market, and it does, as you highlight, have exposure to oil, mining, and also defence, to play one of the other capex-oriented themes. So I think there is a place for the UK or the FTSE 100 in portfolios. The UK domestic side of things I'd probably be less constructive on, but the FTSE 100's got some positives.
Grace, for the big AI names, do you worry about a correction, but as Matt was intimating, that could be systemic or something like a systemic if it doesn't go the way we think?
On the glass half empty side, there's no doubt so much of this capex spending and the GDP growth and the earnings growth is linked to AI. But I would say, actually, in the last couple of weeks, AI's really passed a test through this earnings season. And we saw coming into earnings season this huge divergence between semiconductors that were doing very well and the hyperscalers, the companies really spending the money, being flatlining through the course of this year. And that's not healthy. The companies spending the money must be able to generate a healthy return. So the test that I think was passed through this earnings season is really that we got decent evidence that they are monetizing that spend through cloud, through backlog, through some of the management commentary around payback periods. And so I think that's encouraging. So I think that you're going to start to see, we like semiconductors still, but I think some of the hyperscalers will lift. Now, it's one hurdle. We're going to see plenty more of them. But I think, we've been big believers in AI. We continue to be big believers. But it's about investing through the whole value chain, the power, the cooling, the semis, as well as the spenders.
I know it's just one hurdle, but what do you see as the biggest hurdle? Could China, and we're hearing, DeepSeek is actually raising prices, but is it a price pressure point, especially in this fight against China?
I think that there's going to be numerous things that we have to tackle. The big question mark is just whether there is a return on investment for these billions of dollars being spent. And as I say, I think our view is that you're seeing early and you'll see steady signs signs that will happen. Adoption across the US is only 6%. That's probably going to 30 to 40% over the next decade or so. So that's the first hurdle. But along the way, we're definitely going to have, sort of disruptive headlines, as you'd expect from technology, around pricing, around new models, and cyber issues as well, which is another sort of, I'd say cyber is more of a systemic threat when we think about the risks that the black swan events that we could see in markets. So it certainly won't be the last time the thesis is challenged, but as with all technologies, that is to be expected.
Grace, thank you so much, Ezra, for joining us. Grace Peters, co-head of Global Investment Strategy at JP Morgan Private Bank. Now, coming up, an earnings boost and a warning about extreme weather affecting energy markets. We'll discuss the latest results from German utility Uniper. That's coming up next, and this is Bloomberg.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
So we have an earnings rebound this morning from German utility company Uniper. The firm says it's identified about 10 sites across Europe that could be sold or leased for data center development as it looks to capitalize on surging demand for AI infrastructure. Well, I'm delighted to be joined by the Uniper Chief Executive Officer, Michael Lewis. Mr. Lewis, thank you so much for joining us on Bloomberg. So you're looking to sell some of the idle coal plants to data center operators. Are you comfortable at the moment that you will get a good price, or are you starting to compete with other utilities for the same buyers?
Well, I think the most important thing, Francine, is that we've identified sites which are highly suitable for data center development. So this is a part of an ongoing strategy. We actually started way back in 2019 looking at sites. And as you know, we've been rapidly changing our portfolio of power plants as we move to more carbon-friendly technologies, and we've closed a lot of coal-fired plants, and those plants happen to be A, in great locations, near conurbations, B, have large grid connections, and C, have large areas of potential for development. So what we're doing with more than 10 sites across Europe is looking at how we can turn them into data center ready sites, which means clearing the site, having the grid connection infrastructure ready, and we're very confident that we've got some of the best sites in Europe.
And so you're confident that you'll get a good price for them?
Absolutely. And like I said, we have different models depending on the site. It could be a land sale, it could be a lease, it could be a lease plus a PPA, it could even be ultimately providing the energy infrastructure. So it's very much bespoke depending on the site, but we're very confident we have some excellent sites.
So Uniper was nationalized in 2022 during the energy crisis. The German state, we understand, will now launch a privatization of it. And we understand, according to Bloomberg sources, that there are around 10 bidders. Will the sale happen this year?
Well, that's a question actually for the federal government. We as management are responsible, A, for turning the company round since we were nationalised. As you say, after the energy crisis in 2022, we were rescued with a huge bailout from the federal government in Germany because of the gas being cut off by Gazprom. Since then, we've strengthened our balance sheet and we now have a very strong net cash position. And we have a very significant improvement in our credit rating. We have a strong operating result. Our half-year results to date, 711 million EBITDA, which is a significant increase on last year. And we have a clear strategy to invest the cash on our balance sheet. We have a 4.6 billion net cash position, which we will turn into new earnings through building new flexible power plants, new renewables, and rebuilding our gas portfolio, which we lost in the last crisis. And by bringing all of that together, we've solved the problems of the past. We now have a clear strategy and clear investments for the future. And that's our job as management. And it's up to the federal government to decide how they want to drive that privatization. But there are two options on the table. There is a sale to an M&A bidder, so to say, and also an IPO bid. And the government is currently in the process of looking at both of those.
Mr. Lewis, does Germany and will Germany have enough gas for the winter? And because a lot of the storage has been depleted, or are the discussions with the government to help storages fill back up?
Yeah, I mean, you're absolutely right. We have got a low level of gas in storage at the moment compared to normal levels. There are a couple of reasons for that. One, we exited the winter with a low level at 20% because we had some cold spells at the end of last winter. And secondly, clearly the crisis in Hormuz has driven up prices and sent the gas curve into backwardation. That means it's currently more expensive to buy gas in the summer than it is in the winter, which means there's no incentive to put gas into storage. However, we are seeing the forward curve come up a little bit. And of course, we're now starting to see people think about the winter and what we might do. And we have a target for 70% filling by 1st of November. We can still get there, but we do have to see the market prices move to incentivize the filling of the storage. But we're constantly in the market. We're constantly reviewing our position, and we're constantly looking at whether it makes sense to store more gas now. And I think storage is clearly one part of it. The other part is we need to make sure that the LNG flows to Europe this winter. And that's why we need a resolution of the Strait of Hormuz closure as soon as possible. We need a peace deal in the Middle East.
Have you already had to pass on those higher costs, though, from gas to customers, and how much higher can they go?
Yeah, well, at the moment, it depends exactly on what contract we have with customers. Some customers are on fixed price deals for a certain period, and they're all hedged and locked in. Other prices have a more variable component. Other customers have a more variable component. So it's very much dependent on the individual customer. What I can say is we've seen a very significant increase since the war in Iran started. Roughly the TTF gas price has doubled, and it's stayed in the region of 50 to 60 euros a megawatt hour. Like I said, that's why we need a solution to the crisis. We need the Strait of Hormuz to reopen, and we need to get LNG flowing across the world again.
Michael Lewis, thank you so much for joining us. That was, of course, a Uniper chief executive with the very latest on results. Now, coming up, Ukraine and Russia make strategic strikes against economic targets. So we'll discuss the latest from the region next. A look at what we're seeing on the markets. If you look at global stocks, they're actually, churning. Oil gains are stoking inflation concerns. Again, I guess global stocks posting some small moves. Government bonds are edging lower as we've seen this rally in oil prices, really reviving some of the inflation concerns a day before the release of key U.S. consumer price data. Also, we keep an eye on what's happening in the Strait of Hormuz because President Trump says there are new demands on Iran that have clouded the outlook for a deal to reopen Hormuz. So we'll have plenty more on that shortly. And this is Bloomberg.
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump hits Iran with sweeping new demands, including a call for compensation from Tehran, dimming hopes for progress on the Strait of Hormuz. Bonds fall and gold rallies ahead of a key U.S. inflation report tomorrow. Plus, NVIDIA secures $500 billion in funding for AI infrastructure. Now, UBS is set to find out how far a group of Swiss lawmakers will back a dilution of the government's proposals on capital reform. Let's get more with Miriam Belezu, Bloomberg's Swiss finance reporter. Miriam, so good to speak to you. So what exactly is at stake in today's vote?
So we will get a little bit more clarity today. It's not the final outcome, right? It's one step of the deliberation with the parliament, but we will have a little bit of clarity on where, for the trajectory of UBS's future. The core of the debate is the capital requirement, the backing for the foreign subsidiaries. At the moment, UBS only has to back its foreign branches for 60% of capital, and the Swiss government wants to force it to 100, which obviously is huge for UBS, and the bank's been lobbying for over a year, actually, stating that it would completely damage their competitiveness, both nationally and internationally, and arguing that they need it to be much lower. So that's what's being debated currently in Bern today. We're looking at the parliament potentially lowering to 60% or 80%, it's unclear. But today it's not going to be the final outcome, but we'll have a bit of an idea of where, which Swiss lawmakers are backing UBS, basically.
Yeah, so Miriam, I mean, this is huge for UBS. So what kind of impact could the vote actually have on UBS?
And first and foremost, I think, is the share price. It's been struggling, it's been lagging its peers for quarters on end. And I think investors are keen to get a bit more stability, to get back to the level that UBS were before these capital discussions started over a year ago. So today we'll get a bit more of a flavor of whether or not these measures will be diluted, and that will definitely change the trajectory of the bank's share price. So that's good news for investors. And then just for the bank itself, its strategy, obviously it's been put on hold because backing their foreign subsidiary with 100% pure equities, means that it had put a bit of a brake on broader strategy, potential M&A, so that now we'll be able to see UBS and its board and management will be able to map out the strategy of the bank a bit better.
Miriam, thank you so much for the terrific briefing. We'll have plenty more, of course, throughout the day when we have the results of the vote. Miriam Balaizou on, of course, this voting in Switzerland and the impact on UBS. Now, after decades of winning over Chinese buyers with German engineering, Mercedes, BMW, and Volkswagen are facing a sales problem. European automakers are racing to recapture share in China's domestic market, where local electric vehicle brands are winning over customers. So let's get more with our Bloomberg Autos and Transport reporter, Danny Lee. So, Danny, good morning. How bad has it gotten for German brands in China?
Yeah, good morning, Fran. It's a pretty grim reading for Volkswagen, BMW, and Mercedes, particularly when you focus in on the premium lineup, the premium brands overall. It is a real struggle. Here's a data point or two for you. From 2020 to 2025, the fact that Audi, BMW, and Mercedes have seen their market share in China drop or cut by roughly half in some cases. Now they're down to single-digit figures, high single digits, but it shows how far they have fallen and the struggles they are facing. Even in 2026, over the last couple of months, we have heard guidance from these automakers warning of their 2026 expectations not going to meet their reality, purely because, in large part, the fact that their sales in China are struggling. You have seen this competition for over many years now from China come to the fore, and the fact that in the premium segment, they cannot cut it when you look at the EVs of a premium nature that the Chinese are churning out, that are better in tech, better in performance, cheaper, and overall much more robust. And that is why there has been a huge transformational shift. And you have seen the German vanguard of the auto industry now to crossroads, where they have more of the gasoline cars that are struggling against the EVs, and they're all trying to catch up.
So, Danny, what are they doing to fight back, and is it working?
Well, what we have seen so far is at least the models that are being pushed out into the China market are getting close to at least the performance, and in some parts of the tech, clearly, or you've got buyers, Chinese, but who are not quite feeling the same feeling in a Western-made car in terms of the EV performance. They are definitely the Germans coming down closer on price, but it's still not quite there. You do have to look at someone like BMW, their own 11 billion euro investment in new class, this EV shift they're making. That is hotly anticipated because it's expected to even match or beat the Chinese EV makers. So there's a lot at stake for all of these premium brands, and clearly we'll have to watch the likes of BMW, how that reception they get in the China market can translate into higher sales, because it hasn't worked with the likes of Mercedes, and they really are all struggling at this moment in time.
Danny, thanks so much. Danny Lee there with the very latest, of course, on car makers. Now, global hotel chain IHG Intercontinental Hotels has reported pre-tax profit for the first half of the year that beat analyst estimates. Well, joining us now for more is Chloe Melly, our EMEA earnings specialist. So, Chloe, what actually stood out to you?
I think the main thing for me was really the strength in the US market, because growth in that particular region, the Americas region, was growing ahead of all the other geographic segments. And so that was driven by two things in particular. There was a real strength in the US economy, and so that is translating into healthier kind of travel demand. And then at the same time, there is the one-off boost of the World Cup, where, of course, there's demand for hotel rooms in all of the US cities where all of those games were held. And so there's strength in the US, alongside a pretty good growth in China, pretty good growth in Europe as well, that helped to offset the impact of the war in Iran on the Middle East region. So there, it was still very weak, and that will still continue to be weak probably, but it's only about 5% of IAG's business, and so it has really benefited from this US exposure, from this resilient kind of travel demand globally, and the fact that it's not that exposed actually to the Middle East.
Yeah, and Intercontinental is quite a strange company. I mean, not strange, but it's quite well diversified, right? Because it has really fancy Intercontinental hotels, but then it also has a Crown Plaza, which I get is for like midsection business travel, and then the Holiday Inns, and that's like road trips and stuff like that. What are we looking for in the quarters ahead?
Yeah, so for the quarters ahead, obviously, we still have this big question mark over what happens in the Middle East. Those tensions are still there. We don't really know when that recovery will happen. But then, of course, the World Cup boost was, of course, as I mentioned, a one-off, which means that they will not be appearing in the next few quarters. But then in terms of the long-term potential growth drivers, we're actually looking at places like Asia, where there's increasing wealth in places like India, which means a real boost to travel demand. And so that's one area that could be really in focus for IHG going forward as well.
What are peers doing?
Well, peers are not doing as well. So if we take Accor, for example, the French hotel operator, there the second quarter was actually much weaker, but that's because it's the most exposed to the Middle East out of all the European hotel operators. And so it's really been kind of dragged down by that a little bit and doesn't have as much of a US exposure as IHG does. So this is really about which markets those companies have access to, which markets they're present in, and how they can really think about this shifts in travel patterns as well globally.
Chloe, thank you so much, as ever, for joining us. Chloe Melly, our EMEA earnings specialist. Now to some other top stories we're following this morning, and British shoppers pulled back during the July heat wave. Retail sales increased an annual 1.3%, half the pace recorded a year earlier. Now, food sales were boosted by England's World Cup run. It was pretty good, but non-food sales fell for the first time since April as shoppers postponed big-ticket purchases. Now, the U.S. mainland has recorded its warmest month on record. The average temperature in July was just under 25 degrees Celsius, narrowly beating the previous record set in July 1936 during the Dust Bowl. And President Trump has renewed efforts to overhaul the U.S. childhood vaccination schedule, recommending that the combined measles, mumps, and rubella vaccine be split into separate shots. Now, Trump has connected the issue of vaccinations to rising rates of autism amongst U.S. children, despite the fact that scientific evidence has shown no link between the condition and immunizations.
I came in and I said, I want to find what's going on with autism. It's many, many times what it used to be years ago, and it gets progressively worse, and we had progressively more and more vaccines.
Well, reporting by the Washington Post and the New York Times claims President Trump left Turkey on a secret military flight due to an assassination threat from Iran. Well, President Trump was in Ankara last month for a NATO summit, and the White House has said that he left the country on Air Force One. The Times claims Trump hid inside an airport catering container and was taken to a military jet. Ukraine has attacked a major refinery and a petrochemical plant deep inside Russia, adding to the pressure on the country's downstream industry. Well, meanwhile, Russia attacks on Black Sea ports mean Ukraine's agricultural shipments could fall by more than half this season. Well, let's bring in Yaroslava Barbieri, research fellow at Chatham House. Thank you so much for joining us. Yaroslava, give me a sense of actually where is Ukraine right now economically?
I mean, certainly Ukraine faces huge economic constraints because of the total war waged by Russia. And so what's important to stress is that despite the continuation of the war, Ukraine is very actively thinking of its recovery. So it's really not a post-war process exclusively. It's a process that's starting now. And of course, key constraints include labor shortages as well as manpower shortages. And there are a number of ongoing processes to reintegrate veterans and really see the long-term potential that they could play also for Ukraine's recovery. But it's also thinking about implementing a number of programs to attract back people that have left the country, particularly since 2022, in a way, and revitalize Ukraine's struggling labor market. So there are a number of processes that Ukraine is already thinking right now, but certainly, despite the very welcome EU assistance to back up not only Ukraine's military defense, but also its budget, Ukraine is struggling to an extent.
How has the nature actually of the war changed?
I mean, we're certainly seeing a new phase of the war with mass aerial bombardments from Russia with an increased use of ballistic missiles, deliberately targeting critical energy infrastructure and civilian infrastructure. But what's important to stress is also that Ukraine has increased long-range strikes targeting particularly Russian oil refineries, dual-use supply chains, strategic air bases, really in order to cripple these dual-use supply chains, but also effectively the lifeline of Russia's war machine. And as we see an increase in Russia's aerial bombardments, unfortunately, Ukraine currently is facing huge shortages of air defense systems. So Russia is trying to exploit this vulnerability that Ukraine currently is facing.
Yaroslava, I mean, where are we in the war exactly? It seems that, Ukraine is doing quite a lot of progress. I don't know if it has the upper hand. I don't know whether it has the upper hand for a long time or whether Russia could actually see a reversal. Like, how would you describe the next couple of months as we get into the winter?
So Russia is making incremental gains, particularly in the Donbass, but we're not seeing any strategic breakthroughs. And as we heard yesterday, a statement from the Russian deputy foreign minister, Russia's maximalist objectives have not really changed. Russia certainly will not seek to freeze the front line before winter, when it will try to exploit this current shortage of air defense system Ukraine faces to try and really demoralize the population and try to make further gains, particularly on the Eastern Front. Ukraine has managed to gain significant, has made asymmetrical gains, particularly we saw recently with the strike on the Wildberries storage facilities, in a way the Russian Amazon equivalent, that is part of Ukraine's strategy not only to suffocate Russia's war machine, as we saw with the systematic targeting of oil refineries, but really bringing the war home to Russians and ultimately crumble this carefully crafted image created by President Putin as a leader that can protect the Russian population and isolate them from the reality of war. This is no longer the case.
Mm-hmm. How would you describe the relationship today between President Trump and Zelensky?
Well, we've certainly seen a more cordial and transactional dynamic between the two presidents, particularly with President Zelensky's recent visit to Washington. Certainly, it's an improvement compared to the fallout we saw in February 2025. Nonetheless, it has to be said that President Trump has walked back on its initial promise to grant Ukraine license to domestically produce Patriot missile defense systems, particularly now that Ukraine faces these huge defense shortages, and also has refused to provide Ukraine with an emergency package of Patriot missiles because the US itself faces shortages, particularly due to depleted munitions in the context of the Iran war. Nonetheless, we do see a continuation of US provision of intelligence that is a crucial component of Ukraine's ability to continue in conducting these deep strikes inside Russia, but also the US continues to allow European partner countries to purchase US weapons through the Pearl system.
Yaroslava, overall, how decisive? I don't know whether you were surprised by the fact that European countries are still together in this and are supporting Ukraine, giving money. But how much longer can Ukraine fight without U.S. support, or at least without U.S. money? Because at the moment they have U.S. support, but they don't have their money.
They do have European money, though. So the EU has approved a huge 90 billion euro support package that will cover both Ukraine's defense need, but also cover its budget gaps. So for the next 18 months or so, financially, Ukraine can sustain the war. However, what we're seeing is certainly this understanding that the war might continue for much longer than everyone expected. And certainly the expectation is that Russia is not planning to end the war anytime soon. So Ukrainians are bracing for a much longer war. Even when you look at recent survey data, there's a long-term optimism in terms of the country's ability to become a prosperous European countries, but in the short term, the majority of Ukrainians expect the war to last much longer. This certainly has an effect on people's morale, but the country has faced enormous sacrifices. And so what matters the most is really approaching an end to the war that is just, and really make sure that those sacrifices were not in vain.
Yaroslava, thank you so much for joining us. Yaroslava Barbieri, a research fellow at Chatham House with the latest on Ukraine and Russia. Now, coming up, the yen wipes out half of its rally from recent interventions by Japan and the U.S. So we'll get more with Ven Ram from our NLive team. That's coming up shortly, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Responsible and proactive public finances is a policy aimed at strengthening Japan's supply capacity and productivity while attracting greater investment into Japan. As investment in Japan and yen-denominated assets increases, demand for the yen will naturally rise, as I mentioned. I therefore do not see responsible and proactive public finances as a policy that leads to a weaker yen. And on the contrary, I believe it can put upward pressure on the yen.
That was Japan's growth strategy minister speaking exclusively to Bloomberg, weighing in on the outlook for the yen. Now, Japan's currency has now lost half of its rally from recent interventions by the U.S. and Japanese governments, with traders on alert for further support as it nears that 160 per dollar level. Now let's bring in Ven Ram from our MLive team. Ven, good morning. Thank you for joining us. So the yen seems to be slipping back again. Has the intervention failed?
Morning, Francine. Yes, certainly from the looks of it, intervention is not working at all. The minister told Bloomberg that, look, the yen faces natural upward pressure. It's a bit of a pipe dream at this stage because clearly it's not happening. And there's a message from the markets to Japan, which is that, look, you can intervene in the currency markets as often as you wish. And they've intervened to the tune of almost $150 billion over the past couple of years. And clearly that hasn't come to the rescue of the yen. So the latest intervention is going to go the same way. If you look at the 1-month returns of the yen after intervention over the past 5 episodes, the yen has produced little to no gains 1 month afterwards. So I don't think this is working. They can't have a situation where they are compiling supplementary fiscal budgets, and at the same time, the Bank of Japan stays behind the curve and continues with this monetary accommodation when it should really be raising rates. Unless they do that, all this yen intervention is going to be optics and a lot of effort for nothing in return at all.
Ven, we just heard this Japanese growth strategy minister, right, speaking to Bloomberg, and he basically said that the spending plans will provide a long-term boost for the yen. I mean, will it work?
Well, the long-term boost will have to come from, you know, what they do with inflation, what they do with rates. I mean, the Bank of Japan itself thinks that, you know, inflation is going to accelerate, and with more fiscal spending, they need tighter policy. Whereas they are thinking that, you know, they could get away with monetary accommodation. That's not going to work. And until the JGB problem is fixed, the yen won't be fixed, regardless of what the growth minister says.
Ven, I mean, tomorrow's a big day, right? Really, really big day when it comes to inflation. I mean, will tomorrow's inflation out of the U.S. actually, you know, change the Fed's thinking?
Well, I think it's going to take a considerable upside beat to persuade the Fed to move on rates, because what we have seen so far is that 5 years of missing the inflation mandate hasn't forced Kevin Walsh to raise rates, even though it's been a good couple of months since he took the helm. So if they're going to look through that kind of inflation overshoot, you know, what is to cause them to step on the gas and raise rates just now when the jobs market is showing signs of cracks? So I think that, you know, the number will have to be convincingly an upward number for them to show any alacrity here.
Do you think actually treasuries face a difficult year end?
Well, I definitely think that, you know, long duration isn't yet in vogue. And if you look at treasuries today, they're selling off and the 30-year yield is nudging towards some historical highs. So I think that, you know, the markets are saying very clearly that fiscal profligacy is not something that they condone. And that too at a time when inflation has been above target, as we just discussed, for years on end. So there is a price to pay, and the price is being paid by Treasury bond holders.
Ven, very quickly, Bank of England, what are you expecting from now until the end of the year?
Well, the markets are pricing in oodles of rate hikes. I don't think it's happening. What we heard from the Bank of England governor, he told you, Francine, after last month's meeting that, look, I mean, the Bank of England is not in a hurry to raise rates. And if they continue with that path, I think that the sell-off in bonds will correct itself. And I think that bonds have kind of oversold, over-expecting what the Bank of England is going to do. I don't think that the Bank of England is necessarily willing to raise rates as much as the markets expect them to.
Ven, thank you so much. Ven Ram there from our MLive team with some great analysis, of course, on what's happening with the currency markets. Up next, it's a Bloomberg Brief. Of course, a lot of the focus will be on that inflation data out of the U.S. A lot of the focus is also on a lot of the news that we had from some of the tech companies, Intel raising $20 billion for AI plans, and then a couple of other things, for example, NVIDIA tapping Wall Street for $500 billion of funding commitment. So there will be a full breakdown of all those stories next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg this weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
We actually just expanded the set of customers that have access to Mythos. I think it's about an additional 150 organizations around the world in 15 different countries. And really our approach to Mythos has always been, there's a time component to it. So we released it initially to cyber defenders. So some nonprofit groups, some governments, some organizations that are critical infrastructure for protecting against potential cyber attacks. And just like in any kind of security vulnerability situation, you have to give the defenders a head start. The technology, AI models are going to keep advancing. If it's not us, one day releasing a Mythos level model, another AI company will. But it actually matters who you give access to first and how long they have to patch some of the vulnerabilities that Mythos was capable of revealing. And so we're taking this very cautious, very tiered approach, which I know in some ways is frustrating because people really want access to the model. But I think, again, as a company that's founded on these principles of being ethical, being responsible, we felt it was important to give access to the organizations that were capable of really helping us defend against some of these risks, and then slowly widening that circle to more and more critical infrastructure until eventually we feel it's safe to release it more widely.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump adds new demands on Iran, dimming prospects for an immediate deal on the Strait of Hormuz. Crude rising for a fifth day, putting inflation back in focus before key U.S. consumer price data. And the AI boom pulling in more money. NVIDIA taps Wall Street for $500 billion as Intel brings in $20 billion. Let's get a check on markets around the world now. Mixed session in Asia. Let's get to Paul Dobson in Singapore for the latest. Paul.
Good morning, Bonnie. Rising oil prices, really the salient narrative for Asia's markets today. Not good news for a lot of Asia's markets as well. Not good news for government bonds because rising oil prices, of course, are inflationary. Not good news for Asia's currency markets overall either because, it pushes up potentially the US dollar and therefore weakens Asian currencies. And two, for crude oil importing nations like the Philippine peso there, it's an extra negative because it's going to drive up their costs. The dog that didn't bark today was the Japanese yen. Yesterday, it continued to weaken against the dollar. It gave up half of all of the gains that it saw from that intervention in currency markets we saw from the Japanese authorities and the US as well. Today, a little bit frozen in the headlights. People worried about the US CPI data tomorrow. It is a holiday in Japan today, so liquidity is relatively thin. If we flip over the board, something from the equities market I wanted to point out to you that I also found quite interesting in today's session was just the continuing gains for Singapore's STI. Bit of an unloved index relative to broader markets, but as you can see, its performance year to date is now ahead of the broader MSCI Asia Index. It had another update today. Two things going in its favor. One, GDP data, which not only had a beat for the second quarter, but the forecast was revised higher considerably for the rest of the year. Two, we had bank earnings last week, which was also very strong as well, and that's giving it extra impetus too.
Paul, wonderful stuff. I love that. The yen maybe yelping but not barking quite yet. That is Paul Dobson in Singapore. Now let's get to London for a look at the European session with Justina Lee. Justina.
Good morning, Vonnie. Now, today's a reminder that European assets remain very sensitive to moves in oil. So, of course, the Stocks Europe 600 is down a little bit today, dragged down by a lot of those treasure and leisure names. Now, of course, when oil prices rise, bond yields usually follow. But what I find interesting here is that we've seen a lot more sensitivity in UK bonds lately. You know, today the 10-year yield in the UK is up 5 basis points, when the German yield is only up around 2. But on to better news, if we flip the board here, this is the spread between the US and the German 30 bond yield. Now, this is the long end of the yield curve, so it reflects a lot of the inflationary outlook, the fiscal risks. And you can see the spread has been widening, and I think that reflects a lot of the concerns over the Federal Reserve's commitment to containing inflation, whereas maybe investors don't have similar questions in Europe. And at the same time, we're also seeing the euro near a 2-month high, and I think that reflects some of the actually more optimism around Europe lately.
Justina, thank you. That's Justina Lee in London. Oil, the dominant or one of the dominant themes here in the United States as well. Perhaps equity index futures holding up a little better than bond yields, but we definitely are seeing Brent very close to $90 a barrel now, and the SPR at a 40-year low, so it's perhaps more urgent this time around that we're seeing oil prices rise. WTI very close to $85 a barrel. NASDAQ 100 futures just flipped negative, but they were green until a moment ago. As you can see, we're wavering here. Yet we have lower on S&P futures and Russell 2000 futures as well, but very, very fractionally. So a little bit like yesterday, and now yesterday we did end fractionally lower on the S&P 500. And in terms of the NASDAQ 100, we were down 0.3%. The SOX, really the cause of that, down 3% almost at the close. So we'll see what the session brings today after more announcements of this financing from AI companies. But let's switch to the yields board, because that's where the focus will be as oil prices rise. Look at that 10-year yield, very close now to 473, and we're within half a basis point of the July high on the 30-year yield. We're very close to 528. Again, the 2-year yield up several basis points and another basis point higher this morning at 425.55. Volume, by the way, for equities at least, at a 2-week low at the moment. All right, let's get to some individual market movers now. For that, we'll go back over to London and Chloe Melly.
Good morning, Vonnie. Intel has raised $20 billion in an upside share sale, which was more than it was targeting, and that showed a little bit the resilience of that demand for AI-related stocks. But we are seeing a little bit of weakness this morning for Intel. We're down about 1% in pre-market trading. Moving on to Riot Platforms, which is a Bitcoin mining company that has recently started selling AI data center capacity, and it's up very strongly this morning on a report that it has struck a $9 billion deal with Anthropic, which has been really trying to boost that computing capacity. So we're up almost 19% this morning. And finally, another final tech stock, we've got Fermi, which is a data center campus operator, and it signed a lease with TensorWave for a big, massive project in West Texas, which is currently under development. And so that's big relief for the company after some recent trouble. And we're up also about 90% in pre-market trading this morning.
All right, some massive gains and losses there. Chloe, thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we'll discuss more on the inflation woes facing the Fed and how this bond market is coping with Laura Cooper of Nuveen. Oil extending its rally then as President Trump makes sweeping new demands of Iran. Washington seeking compensation now for damage and deaths across the Middle East and in the United States. This coming in response to Tehran's requests for reparations over the war. Let's get straight to Bloomberg's Abir Abu Omar for the latest. More demands from the U.S. in response potentially to demands from Iran, Abir, but Iran already wasn't at the table. So how does this change things?
Good morning, Vonnie. Yeah, well, President Trump seems to be matching what Iran had asked for. Now, over the weekend, we reported that some hardliners that were reshuffled in the Iranian government had started making demands for the end of the war in the Middle East, namely the end of the U.S. naval blockade, the permanent end to the war in the region, unblocking those frozen assets, lifting those oil sanctions, among some many other demands. Now, that is not the formal line that we had reported out of Iran, but in return, President Trump, in his latest remarks, saying that he will likewise be demanding compensation from Iran for all of the people that they have killed and gravely wounded with their roadside bombs in many conflicts. He also had accused Iran of the damages and the tragedies in countries nearby in the region, including Lebanon, Syria, Yemen, and Gaza. Now, he didn't give a lot of clarification on what exactly that means, but he did say that that compensation will be part of all the future negotiations taking place in Iran or with Iran. Meanwhile, of course, we've reported that for the time being, Washington does not seem to be involved in those wider negotiations about the Strait of Hormuz that are taking place with Oman about a mechanism to open up the waterway in some fashion. We still don't have that formalized document, Vani, that we understand will be provided soon. We understand is in the final stages for us to figure out how Iran and Oman will be able to reopen the Strait of Hormuz for a temporary basis, of course, and have that trickle of movement through the strait, the crucial waterway, of course. But that lack of clarity, as you can see, is driving up oil prices, both NY crude and Brent, that is edging very, very close at this point to $90 on the barrel yet again.
Yeah, hard to know what the holdup is. Abir, thank you so much. Abir Abu Omar in Dubai. Treasury's under pressure as that rise in oil prices revives inflation concerns ahead of Wednesday's CPI report. Bloomberg's Ven Ram joins us now. Ven, we're very close to our recent highs, 528 practically on the 30-year, and we're up to 572 now on the 10-year. How concerning is this?
It is deeply concerning for the bond markets, and bond market vigilantes are in action clearly, and they want answers. They want answers on a couple of crucial questions. What is the fiscal direction of the US and the other economies? The second question they desperately want an answer to is, what is the solution to the inflation overshoot that we have been seeing? If you look at the US and the UK and many other economies, indeed, we haven't seen 2% inflation for a long time now, for 5 years now. So what is do the central banks really have a solution to this? If not, then we will penalize them by sending bond rates and yields higher, and that's precisely what they've been doing.
It seems like the market has gone on two different tracks now. So equities are just looking at earnings, and they're quite happy with earnings, and we're hitting records. Bonds have suddenly, and it is pretty suddenly, decided to be concerned about the fiscal situation. Where was that concern the last several years, Vin?
Well, we have been getting here in fits and starts, and what you're talking about is absolutely true, because the market has this tendency to sell off in fits and starts. It's episodic in nature. Financial market stress is always episodic in nature, and that's what we have been seeing. It doesn't happen in one clean swoop where the yields go from 4.5% to say 5.5%. It happens in stages and in steps, and that's the way the trading world works, because the market goes up, the yield goes up a bit, and then shorts take profits, and then we come off a little, and then we go back again. And that's the way the game works. But the trend is what is important, and what the trend shows is that the markets are not in any mood to condone fiscal profligacy, nor are they willing to underwrite an inflation overshoot for too long.
Then, as we get incrementally higher on yields, are we getting into an incrementally more precarious situation where we might see some kind of a tantrum or a shock in the bond market?
Well, it is already a shock. I mean, if you look at the 30-year US yield, we are in some kind of a shock because we haven't seen those rates for a very long time. And I think that, if yields keep pushing higher on the 30-year, then Treasury Secretary Scott Bessent will have a problem in his hands, because he needs to send a clear message that they are doing something, and the Fed, for its part, needs to address the inflation mandate of its mandate.
Japan on holiday today, then, but we're at 159.36 once again on the yen. I'm curious, will there be appetite for the Treasury to get involved a second time, given, the precarity of the domestic situation?
Well, I think that there are limits to how far the Treasury can rescue the yen, because the FX reserves, the US FX reserves, are pretty minuscule in comparison to what a lot of the other economies have. So it's not an endless barrel, and they can't frankly afford to do it anymore. They've already done what they could. They've showed their hand. They've moved on, and I think that it's for Japan to fix their problems. And the way to fix that problem is for the Bank of Japan to come out and say that, look, we are going to be putting up rates pretty at a pretty quick pace and get to neutral. That'll be the first stop. If they did that quickly enough, the markets will correct themselves and the yen will go higher.
All right, Ben, we'll await that. Japan on holiday, of course, today. Bloomberg's Ben Rand. Thank you. Now, to other top stories trending on the terminal this morning. A magnitude 7.4 earthquake struck Colombia Monday morning, causing significant damage and leaving at least 132 dead in the Pacific region and the Central Andes. The earthquake has affected Colombia's Coffee region, with major roads closed due to landslides and operations suspended at 5 airports in the affected region. President Trump has renewed efforts to overhaul the U.S. childhood vaccination schedule, recommending that the combined measles, mumps, and rubella vaccine be split into separate shots. Trump has connected the issue of vaccinations to rising rates of autism among children in the U.S. Scientific evidence has shown no link between the condition and immunizations. And a Florida energy tycoon who long served as a back-channel between Washington and Caracas has agreed to sell his interests in Venezuela's second-largest oil producer. It follows a pressure campaign from the Trump administration that wanted Harry Sargent to divest from the company. Coming up, Intel brings in triple its target in an upsized share sale. More next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
It's the world's second-largest economy, with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in New York. A wave of AI financing deals announced. Apollo, Blackstone, BlackRock, Goldman, KKR, and Brookfield all announcing a partnership with NVIDIA to source $500 billion in financing for AI infrastructure. Joining us now is Bloomberg's Neil Campling. Neil, it's third-party capital, so it's third-party risk. Who's going to be taking on this risk? Is it essentially more public debt coming to the markets?
Yeah, morning, Bonnie. It's an interesting question. It doesn't put to bed any of the kind of the whole circular financing in AI questions that have been raised recently, and it's unclear whether there is an NVIDIA backstop to 25% of this $500 million or not. So it kind of raises more questions it provides answers to. There's clearly a lot of appetite for AI debt, for AI assets of any kind. But this is just yet more questions going to be raised around when the music stops, or will it stop, in terms of the kind of the whole financing questions in AI.
NVIDIA in particular is seeing a little more pressure in its CDSs, at least 20 basis points above CDSs of Amazon, Microsoft, all of the hyperscalers. I mean, at what point does that seem unpalatable to investors? How much more will they want in order to keep digesting NVIDIA?
Yeah, this is it's an interesting point because obviously, NVIDIA has got a good balance sheet. It does generate good free cash flow. It has a low valuation multiple. And yet, as you mentioned, the CDS spreads have blown out above the hyperscalers themselves, which is perhaps somewhat surprising. And that move has happened over the last couple of weeks. So clearly there's going to be questions around the whole financing when we get to their earnings later this month. But it's something to be aware of. And this is quite an unusual move to see NVIDIA's CDS go above some of the other hyperscalers, I think.
Now, Intel raised $20 billion. The stock was obviously lower yesterday and a little bit lower in the pre-market, but there's obviously no end to the appetite for chip makers' stock, right? It got actually a third more than it was looking for.
It did, and apparently, according to the Bloomberg Terminal stories, over $100 billion worth of demand for this particular offering. Stock has performed very well this year. They're taking advantage of that. They need to expand their own capacity. They're using this as a tool to do that as well. And I think this is the first time of bringing the sort of public equity sale to the market since going public more than 50 years ago.
Anthropic story today, because there's always one every day. It's struck a $9 billion cloud deal with Riot Platforms. Riot, obviously, data center capacity is the new Bitcoin reserve, right? But Riot has decided to lease some compute to Anthropic for a long time. It's going to be $9 billion worth. Just how much data center capacity does Anthropic need?
It appears to be as much as it can possibly get. Obviously, the compute power requirements are enormous. And Riot is one of those kind of, I suppose, in a rare situation where it actually has compute power available today. So that's probably partly the reason for this particular deal. But Anthropic's demands, as you say, nearly every day we're getting stories around Riot's sort of about the requirements Anthropic's had, and there's no sign of that stopping anytime soon.
Yeah, apparently infinite. OpenAI buying back about $7 billion of employee shares in a tender offer ahead of the IPO. Periodically, private companies do this, right? But why now? Is there some signal we should read into this? Because we're pretty close to what we're expecting to be the IPO.
Yeah, indeed it is. I think what's interesting about this particular deal is two things, actually. Firstly, that it's kind of a self offering to their employees rather than going to third parties to provide some backstop to this kind of this requirement. And the second thing is the valuation being talked about here is the same valuation as the last raising 5 months ago. So there's no increase to the valuation, which perhaps is a surprise given all the growth that we're talking about in the AI sphere.
Neil, thank you. Covering the gamut of tech stories for us this morning and AI stories. That's Neil Campling there in London. Turning to autos now, General Motors moving further away from electric cars, selling half of its planned $3.5 billion EV battery joint venture in Indiana to its partner Samsung SDI. Bloomberg's Danny Lee joins us now. It's a further retreat for GM. Danny, is it the right strategy? Is GM sure that EVs won't take off again?
Yeah, good morning, Vonnie. And this kind of retreat it does first of all confirm a Bloomberg scoop earlier in the day. But on top of that, the fact that this is GM right-sizing their kind of production, the capacity and demand, the overall reality is that at this point this year, they would have expected to have sold actually 1 million units a year of EVs. By the end of last year, they sold something like 170,000 units. So there's a big mismatch. And all the commitments it has made with partners such as Samsung SDI, previously LG Energy, which it sold it's part of a battery factory back in 2024. This is just GM right-sizing what it believes is the normal course of action for the kind of demand it sees, in particular a key market like the US, which has gone through such a change in the kind of mood music for EVs overall, and particularly as President Trump came in early to his presidency to try and upend that kind of federal support for EVs overall. So this is just GM, matching what it believes is the right thing. But of course, it just sums up just how much it's been costly for GM. The fact that it's had $11 billion of write-downs, and also the investment it has made, $35 billion overall in EVs, and it's really not paid off so far.
No, indeed. Yeah, and a bit of a capitulation to China as well. Danny, thank you so much. Bloomberg's Danny Lee. Coming up, Anthropic shoring up investor confidence ahead of a potential IPO. More on that and a look at what else is making headlines in your front page news. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting Anthropic is trying to shore up investor confidence before its IPO. The Journal is saying Anthropic is targeting a public debut in September or early October and has told investors it plans to push further into healthcare and biology AI uses to mitigate negative sentiment around AI. Next up on the Financial Times, Hong Kong regulators may include trading firms, Jane Street, Citadel Securities and others in a sweeping new tax regime that has already boosted the city's appeal to hedge funds. The FT says governments plan to offer exemptions on taxes paid on performance fees, and that could be expanded to trading firms. It was already being planned for PE firms and hedge funds. And finally, the Washington Post leading with Iranian assassination threat against President Trump, prompting an operation in which he flew secretly from Turkey on an alternate military aircraft while the White House said he was aboard Air Force One. The president boarded an old Air Force One in view of cameras, but then was secretly shuttled to a smaller plane. Coming up, we're going to speak about the bond market with Laura Cooper of Nuveen.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Food, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump adds new demands on Iran, dimming prospects for an immediate deal on the Strait of Hormuz. Crude rising for a fifth day, putting inflation back in focus before key U.S. consumer price data. And the AI boom pulling in more money. Nvidia taps Wall Street for $500 billion as Intel brings in $20 billion. Let's start with oil, because those fresh demands already pushing oil higher. And then just a few minutes ago, we got a report that the UK MTO said it received a report of an incident involving a tanker and military forces in the Gulf of Oman, sending oil even higher. Brent crude very close to $90 a barrel now, WTI almost at 85. And bear in mind, the SPR is at a 40-year low here in the United States, so it is getting to be a little bit more urgent as oil prices rise. European gas futures at 61 and change per megawatt hour. That is hurting Europe, no doubt. Let's take a look at yields, because they're pushing higher too off the back of these oil prices, but also just as concerns run rampant. We're very close to our recent highs on the 30-year yield, within half a basis point at 527.25, and that 10-year yield is all the way up to almost 473. Needless to say, the 2-year yield is at 425.35 before that CPI data tomorrow. Equities holding up a little better, even with these oil price gains. As you can see, we're very, very mixed, though we're actually at our session highs, with S&P futures and NASDAQ 100 futures just crawling into the green after a fractionally down day for the S&P yesterday. The NASDAQ was down 0.3%, mostly thanks to the SOX. It was down nearly 3%, that index. We are seeing a bit of a rotation back into software and services, obviously. That index up 33% from its June closing low. And of course, volume a little bit lighter. We're at about a 2-week low in terms of equity index trading volume. Let's get to some individual market movers now. Back to London and Chloe Melly.
Good morning, Bonnie. We've got the sneaker maker on sinking this morning after lower than expected sales in the second quarter, as well as a watered down outlook for the sales for the year. And it seems that it was really due to the company not discounting older models, which really weighed on performance. And we can see that reflected in their share price this morning. We're down almost 15% in pre-market trading. Moving on to the telehealth company Hims & Hers, which has cut its outlook as well. This company has also said that it was planning on entering the peptides market, but it seems that this upcoming entry into a really booming part of the healthcare industry was not enough to reassure investors given this guidance cut. And so we're down about 6.5% there. And finally, let's move on to a positive mover. We've got Riot Platforms, which is a Bitcoin mining company that has recently started selling AI data center capacity. We are seeing that company rallying this morning in pre-market trading on a report that has struck a $9 billion deal with Anthropic as Anthropic really tries to expand this computing capacity. And so we're up very strongly there for Riot Platforms.
Yes, indeed we are. That is great. Chloe, thank you so much. Chloe Melly there in London. Well, with yields a hair's breadth away from recent highs, let's bring in Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Of course, we have a lot to come. Jackson Hole at the end of August, Laura, and tomorrow's CPI, among a raft of inflation data we're going to get this week. What is sending yields to this level right now?
I think what's been most interesting about the backup that we have seen in yields is the composition of that sell-off. In terms of, we're seeing it predominantly being driven by real yields and less so in terms of inflation expectations, which is perhaps counter to what one would expect when we are navigating potentially higher than inflation regime with an energy shock. And I think that really does feed into a key debate that the Fed is currently having, in that our rates where they currently are in terms of interest rates, are they sufficient enough, sufficiently restrictive enough to not warrant a rate hike from the Fed, but they can stay on pause? Or are we going to see signs of price persistence come through? And that does warrant the Fed maybe having to start to tighten policy in September.
Well, it's a quieter calendar of Fed speak this week than it was last year at the same time. But we did have Beth Hammock speaking yesterday saying some number of rate hikes may be necessary. Well, that's at least one, right? So she can't be too worried about any fragilities in the labor market or otherwise.
And I think it's a really interesting dynamic in terms of the dissents that we did see back in the July meeting. And I think the risk is that if the Fed does tighten policy rates in September, then to Hammock's point, markets will start extrapolating that and pricing in the resumption of a tightening cycle. And it's not clear that the data would warrant that. Yes, we could potentially see some hotter than expected inflation move the needle in terms of that Fed rate pricing. But if we look at the broader inflationary trend, we are seeing unit labor costs ease. That tends to be correlated with inflation. And we're seeing that softness in the labor market, and as well housing inflation as well is also expected to start to slow. So it's not clear that the Fed really needs to take an aggressive stance, as Hammock is potentially alluding to.
If we do see real yields continue to stay around these levels or even potentially go higher though, Laura, how much is there the possibility that we'll see real difficulties in corners of the market? I'm thinking the amount of AI debt that's out there and that's coming to market, for example.
And that's certainly a key risk, and the fact of how much can financial conditions tighten before it starts to weigh on the overall growth outlook. Now, that's not been the case so far, despite the backup that we are seeing in yields, because we are still seeing signs of a very resilient backdrop. Looking at where GDP is tracking in Q3, still to be quite resilient. But I think if we start to really test that 5% handle in the 10-year yield, and that's real yield driven, perhaps then that could be quite concerning. And again, it's one of the reasons why we think the Fed is going to take more of a wait and see stance to see how the data unfolds, because as Warsh has alluded to, this is a Fed that is very data dependent, and they're not going to give the type of guidance, but certainly markets will be watching for all of these indicators coming through for how much they can price in that tightening.
How will the data have to unfold before the Fed actually pulls the trigger on a hike though, Laura? Because, obviously oil is going higher right now. That's going to start playing into the inflation data that we're getting in the next month or so. Will that be enough if we see oil-related inflation?
Well, one could argue that oil price effects are relatively transitory. It's more around the oil price volatility. That does tend to lend itself to higher core inflation over time. But I think something that came out of Chair Warsh's press conference in July was really interesting. And the fact he said that they are looking at a broad range of underlying inflation metrics rather than just kind of hinging their view on one key inflation point or their preferred Fed gauge around core PCE inflation. So that suggests to us that they're not going to look at one or two data points, but really a basket of data points coming through more meaningfully. Certainly, if we see an upside surprise this week in CPI against another upside surprise in August inflation, perhaps that could tilt the scales a little bit more so. But I think really Jackson Hole maybe is kind of that key pivot point for whether we start to see any further guidance in terms of what that September meeting could be.
Laura, take us through the process for you and your team when a whole new batch of hyperscaler or other AI company debt deals come down the line. I mean, we're seeing another $500 billion of NVIDIA, you know, in consort with a consortium of companies, right? That's going to come to market at some point. So what does your team do?
This is it's a fascinating time to be kind of a credit analyst at this juncture. I mean, we've already seen hyperscaler debt as a share of the U.S. investment grade market double to about 4%. If we look at what estimates are for capex in coming years of about $2 trillion from these hyperscalers, well, these hyperscalers could account for anywhere upwards of 1/4 of the U.S. debt market in terms of investment grade. So that's quite notable. I think the way that we look at it is certainly we are seeing this being a dominant technical in the market. And interestingly, despite hyperscalers coming to market with more than $220 billion of issuance this year, that's not actually crowding out the market. We're seeing tight spreads across the space. So we suspect this is going to lend itself to more dispersion at the security level. And so that does warrant a much more selective approach, looking at high quality hyperscalers, and even looking at old economy sectors like industrials, materials, and energy infrastructure that are going to be AI adjacent, let's say, and not directly exposed to AI disruption risks and some of that pure play AI software that is more vulnerable.
Fascinating. We'll continue to keep an eye on the story, Laura. Thank you so much. That is Laura Cooper of Nuveen joining us this morning. Now, two other top stories trending on the terminal. President Trump defends and battles FIFA President Gianni Infantino amid a growing revolt that threatens Infantino's leadership. The president posting on Truth Social, quote, FIFA would be making a terrible mistake if they even considered replacing President Gianni Infantino, unquote. Infantino is facing criticism over his failed plan to spin off FIFA's commercial operations. Google's AI team is encouraging job candidates for its open roles to fill out a special form alongside their application to eliminate the risk it may be automatically screened out by the company's internal AI systems. This according to a document viewed by Bloomberg. Google denied that the company's systems filter out applicants incorrectly. And a state court judge has issued a restraining order against New York City, temporarily blocking the rollout of Mayor Mamdani's new pied-à-terre tax. The suing homeowners said the city had caused mass confusion with its controversial identification of thousands of properties that it says are potentially subject to the tax on second homes. Coming up, President Trump's new demands on Iran put hopes for a deal in doubt. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Sorry.
Back to the subject of Iran, sir. Can you give us any estimate of when you think the Strait of Hormuz will be part of
it's open now. We're taking a lot of shit. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. It's a steel wall. And we let people in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now.
Bloomberg senior White House reporter Josh Wingrove questioning President Trump there in the Oval Office. The president's sweeping new demands on Iran have clouded the outlook for a deal to reopen the Strait of Hormuz. Joining us now is Rachel Schilke of Bloomberg Government. So it seems the president is mirroring previous demands by Iran for the U.S. to pay, right? Iran wasn't at the table, Rachel. So what is the administration thinking? Is this going to bring Iran to the table?
Well, the president has tried to shy away from any sort of physical attacks. He stepped away from reoccurring bombing of the country. And so the administration right now is hoping to put this economic pressure on Iran to try and bring them to the table, and is demanding that they pay reparations for all of the damage done, not only to the Strait, but also to their own people. So it's something that I think that the administration is hoping that the more and more that they put this pressure on, that they will see some sort of deal that comes in their favor. But their time is kind of running out because we are getting close to the midterms where President Trump is hitting term lows. Republicans kind of have a dark cloud somewhat hanging over them with this. And it's already hard for them to get GOP voters out. And with oil prices rising and just energy not where it's supposed to be, Republicans are going to have a hard time if this economic pressure doesn't pan out.
Yeah, I mean, Election Day is literally 12 weeks away. Early voting starting September 18th, which is just more than a month away at this point. So it's getting really crucial. Domestically, President Trump has cited an unproven autism risk because he's trying to separate the MMR vaccine. Now, what happens next? Does that automatically become what happens when you go into a doctor's office now, that they're separated, or does something more need to happen before this becomes reality?
Well, as we've seen with a lot of President Trump's executive orders, there is some pushback. So I think you can expect a lot of different healthcare associations to weigh in, and you're going to see a lot of offices and doctors' organizations trying to make sure that they're putting out their research that these vaccines are necessary. We've heard this from the administration before. They've taken some somewhat peculiar stances on vaccines than maybe we've seen in previous administrations. And again, it's another thing that is just adding, as you mentioned, to these early voting days, these midterms, where all these different things that are piling up that Republicans will have to answer for that are not popular at the ballot box. And so the more that President Trump kind of starts putting these executive orders out for various things, whether it's foreign policy or healthcare, it's just more and more things that congressional Republicans will have to answer for.
More congressional primary elections today. So we have Connecticut, Minnesota, Vermont, and Wisconsin. I guess the Minnesota governor's race is one to watch, but President Trump has in fact endorsed quite the amount of candidates today.
Yeah, we've seen him endorse quite a bit. We've even seen him endorse against some congressional Republicans. He just recently had in the last slow primaries a mostly positive win. He did lose Rep. Andy Ogles from Tennessee, and so that was kind of a hit. But the president has continued to say that his candidates are doing well, that Republicans are going to keep Congress. So these next slate of midterms will be very interesting to watch. Especially we have a South Carolina Senate GOP primary after the death of Lindsey Graham. So there's going to be a lot of different races that we're paying attention to today, and I think a lot of people will be paying attention to see kind of the scope of where Republicans are at heading into some of these difficult general elections that they're going to have to win in order to keep their majorities.
Yeah, we'll have all of the results tomorrow morning. Rachel, thank you so much. Rachel Schilke of Bloomberg Government in Washington. Turning to tech, Wall Street giants looking past AI fears and a whopping $500 billion commitment to fund infrastructure for NVIDIA. CEO Jensen Huang saying, quote, "These financing platforms will help customers access scarce compute at scale and build the AI factories that will power every industry and country in the age of AI." Joining us now is Matt Bloxham of Bloomberg Intelligence. So Jensen Huang is solving the financing problem for all of his peers as well as himself, Matt. The only trouble is the risk is going to get outsourced. Is there enough appetite?
There seems to be enough appetite for AI-related capital right now. You know, we've also got this kind of Intel raise going on, and Google's raising money too. So I think, you know, generally that the AI economy is hungry for capital, and the capital seems to be there. You know, this is kind of a very broad deal, but ultimately, you know, NVIDIA is hoping that it's going to be a catalyst for people to kind of spend more money on their kit, and it just kind of adds to this complex circular economy that we have building around AI, and potentially, I think, raise some questions about the possibility of systemic risk somewhere down the line, you know, given that we're kind of really drawing some huge financing institutions into the funding for AI.
Yeah, that's a great point. I mean, Apollo, Blackstone, BlackRock, KKR, Brookfield, Goldman Sachs, everybody and anybody. I mean, Goldman is the only bank in there, I guess, but everybody else is involved. What will it look like? So it's going to be a $500 billion platform, but will it look like chunks of, you know, structured products coming to the market?
Yeah, I mean, obviously details are quite thin right now, but I think given the size of it, it's going to be a huge spread of things from classic vendor financing through to perhaps stuff that looks a lot more like kind of long-term infrastructure funding. And, you know, Jensen Huang was very clear to kind of describe these companies as the providers of long-term capital. You know, the vendor financing market in itself is probably worth less than $100 billion, so it massively swamps that. But yeah, ultimately, I think we're going to see lots of different deals, some of it going towards funding the underlying infrastructure, so data centers, even the power that's necessary to kind of deliver into those data centers. Some of it's going to be, I think, more traditional vendor financing, where a customer says, okay, I need a certain number of NVIDIA chips to kind of fund my plans, and this helps to kind of facilitate access to that capability.
Yeah. Now, Anthropic has struck a $9 billion cloud deal with Riot Platforms, of all companies. It's fascinating. Anthropic seems to have just a massive appetite for compute. Can it continue with these deals?
Yeah, it doesn't. You know, I don't think Anthropic's alone. You know, that all of these big cloud platforms AI platforms are looking for near-term compute capacity to meet the demand they're seeing from their customers. Obviously, there's a lot going on for the kind of mid to long-term building out additional infrastructure, but they need stuff now. And companies like Riot Platforms, which is a Bitcoin platform that has invested over the last few years in a lot of compute capacity, realizing that actually there's probably a better return for them on the investment they've made by selling it on to these big AI platforms than there is by kind of growing their business organically. You know, we've seen similar deals on the margin with SpaceX. You know, Meta's looking to kind of make some of its capacity available to others. So, yeah, I think this is just kind of a kind of necessary fluid part of the market that, as companies like Anthropic look to honor near-term customer demand, they find the compute capacity wherever they can get it.
Matt, is this something that all Bitcoin and Bitcoin reserve companies have sort of, you know, as a deck of cards, let's say, in their back pocket? Would it be the next wave for all these Bitcoin reserve companies to sort of pivot and lease out their compute? Is it because of Bitcoin that they have all this compute?
Yeah, you know, I think it's certainly a possibility that other companies are going to be looking at the compute capacity they have and thinking about the best way to get a return on it. Yeah, actually, even almost a year ago, I was at a big infrastructure investor event, and even one row down, there were companies that had been buying land banks, so banks of land that could at some point be kind of used for commercial or residential kind of real estate, or possibly data centers, and they're actually finding they could sell that land bank on at a big premium because already back then there was huge demand for all of the bits of the jigsaw that goes into making these big data centers. So I think lots of people in this kind of complex value chain are rethinking the investments they've made and the best way to make a return on them.
Yeah, incredible. Matt, thank you so much. That's Matt Boxham of Bloomberg Intelligence. Coming up, more tech earnings on deck. We'll get you set up for your trading day. This is Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, we get ADP employment data for another read on the labour market. That comes at 8:15 a.m. Eastern Time. Then existing home sales out at 10. And we get earnings from Supermicro and CoreWeave, some interesting ones after the close. Let's take a look at some stocks moving pretty substantially pre-market. So Riot Platforms up 21%. Had a mixed set of earnings, but it did strike a $9 billion multi-year cloud deal with Anthropic. So it's leasing compute essentially, and that's sending those shares more than a fifth higher. Rocket Lab. A little bit of a disappointment here. Weaker than expected outlook, caution around fresh risks to key neutron rocket debuts and so on. That's down 9%. There had been a lot of expectation that some of these space companies would outperform. Well, not Rocket Lab. It had been higher in the previous two sessions. And Hims and Hers as well, a very mixed outlook for Hims and Hers in terms of earnings, down almost 6.5%. It lowered its full year outlook. One Good piece of news potentially for this company. It does plan to allow some allowed peptides by the year end. Let's take a look at your macro picture. Yields really rising as Brent crude approaches $90 a barrel. You have your 10-year yield close to 473 right now. Nasdaq 100 futures, though, pointed higher.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Levering in and going full bore on the bubble is often an imprudent move. I think you want to be careful with leverage here.
We just have these extreme moves in fundamentals, extreme moves in stocks, and that's creating volatility.
There is definitely a question on the sustainability. We think the market ends higher at the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. It finally feels more like the middle of August in markets, with trading volumes falling and stocks struggling for direction. Investors hamstrung between blowout earnings and increasingly ambitious AI spending plans, with Intel selling new shares for the first time going back to 1971, bonds pricing back in all that inflation and Fed rate hikes ahead, with oil prices climbing for a fourth straight day, Emery.
So you have inflationary concerns everywhere, no matter where you look, on the supply side and on the demand side. On the supply side, clearly oil moving higher because there's no deal in sight, not just a peace agreement, but to reopen the Strait of Hormuz. And now we're back once again to a hotter rhetoric, more demands from this White House and Tehran, and we're not seeing any end in sight there. At the same time, as you said, we have blowout earnings And AI company after AI company is still tapping the market and saying, we are going to need more capital expenditures, we are going to need more financing when it comes to this entire trade.
It feels like markets are hamstrung between oil prices on one side, the inflationary pressure that is resurgent once again on a fourth straight day of gains for oil, and on the other side, exactly what you're talking about, all of this issuance, the $500 billion financing plan.
With little details.
With little details, it is a financing plan. Nonetheless, it might be the biggest ever privately financed plan to really emerge in one single type of arrangement.
Huge number, scant on details, but these executives indicating that they're ready to do this when it comes to debt financing. This is a huge amount of money. And once again, fears potentially of circularity when it comes to this space. And then Intel. We had this news out yesterday during the program when it came to Intel. Then by the end of the day, you see how much bigger that offering was. There is just so much demand right now to get in on all of these plays.
With Intel trying to preserve their credit rating, so taking their cues from the stock market instead, Beth Hammack of the Cleveland Fed really setting the tone ahead of the CPI print that we get tomorrow, talking about how she doesn't think that one rate hike is going to be sufficient to tighten monetary conditions. She sees several. She said it would not be appropriate to say exactly how many, but highlighting what markets are baking back in, that even the weak report that we got from the labor market on Friday was not enough to assuage concerns that these inflationary shocks, one after another, are coming too fast, too furious to really be ignored.
In her mind, she explained it like you're driving a car and you have passengers in the back of your seat and you see a stop sign ahead. Do you want to speed up and slam on the brakes as she views inflation and the trajectory of where inflation's going? Or do you want to slowly guide yourself towards that stop sign? That is why she says, I think now is the time to act.
Right now, in markets, you do see a sense of ambivalence about which direction to go in after yesterday closing still about 0.5% away from all-time highs in the S&P 500. This morning, completely flat, unchanged, people being whipsawed in all directions. The NASDAQ has already about 2.5% below all-time highs reached earlier this year, getting a little bit of a bid there. And Russell 2000 actually having a harder time of it as people price back in some of those rate hikes. Again, it really does come back to the bond market, 2s, 10s, and 30s ahead of that three-year note sale at 1 p.m. today of $58 billion sale. You are seeing that ongoing creep higher in benchmark yields, led yesterday by the front end, today by the back end, seeing a 4.255% on the 2-year, 4.73% on the 10-year, and that 30-year yield so close to the highest level since 2007. Both because of oil prices and because of all of the debt sales coming from all of these companies, not just big tech, but the fastest pace of investment grade issuance yesterday going back to January. But when it comes to oil, very much setting the tone, Anne-Marie, and this is something we've been talking about, the idea that ongoing conflicts seem to be unconstrained at this point with the questions about what the Fed's response mechanism is going to be, talking about charging Iran potentially fees for the damage they have incurred. Brent crude, $89.73. Coming up this hour, Marvin Lowe of State Street, as NVIDIA taps Wall Street for $500 billion in AI funding. IHG Hotel CEO Elie Maalouf, as the company's first half revenue gets an assist from the World Cup, and Kelsey Barrow of JP Morgan on the high hurdle for pricing out rate hikes. We begin this hour with stocks kind of looking for direction as the flood of big tech debt keeps upward pressure on treasury yields. Marvin Lowe of State Street writing, while recent data has thrown a bit of cold water on the strength of the economy, the strong demand for capital has created strong need for tighter financial conditions. Marvin joins us now for more. Marvin, great to see you. Thank you so much for being with us. Can you explain that, why all of the tech issuance is actually a requirement for tighter monetary conditions in and of itself?
Yeah, absolutely. I mean, I already mentioned kind of the supply and demand aspect of it. And, there is a supply issue that is arising ultimately with all of this AI build out. Ultimately, we look at inflation through the oil lens, and that makes clear sense. But also, we have to look at inflation through the chip lens, which is the demand for chips and the supply for chips is being affected by this capital raise and all of this data center build out. So it is ultimately interrelated. Ultimately, growth outperformance this year has very much been predicated on the fact that we've got all of this investment within the GDP stack, if you will, and there is no let up in that demand at this point.
So you're saying that regardless of what happens with the underlying economy or core inflation away from some of these key components, that monetary policymakers should be looking at the rapid record pace of issuance in the debt markets and frankly increasing activity in the equity markets as a sign that they are not restrictive enough, that this inflationary impact from AI has legs and is going to last for a longer period of time.
Yeah, absolutely. I mean, I wouldn't say that we can ignore the data, but I think that we have to take the data within the context of, everything that we're saying in terms of the capital demand in this environment. There's economic theories which say that, interest rates are supposed to be set where the amount of capital is equal to the availability of savings. And from that perspective, the demand for capital certainly are at levels that we haven't seen in quite some time.
Obviously, when it comes to the data, it's backwards looking. And for someone like Beth Hammack, and if you listen to her speak, it doesn't really matter what tomorrow's CPI print brings in terms of where she sees the trajectory and what needs to be done to really try to tamper inflation. How are you viewing tomorrow's CPI print?
Yeah, I mean, we're still going to be above targets for the 63rd, 64th month, if you will. There are questions as to whether or not the disinflation is going to get us to that 2%. And in an environment where you've got, again, kind of this economic tailwind from this investment balloon that we have, you've got to look at it holistically and parse the fact that we're still above those targets, and the shape of the curve and how long yields are responding are saying that there are concerns that you're not taking it seriously enough.
Given all of this money flooding into AI, given the fact that it is costing a lot more in terms of having compute, do you think it's going to be much harder for Fed Chair Kevin Warsh to have that argument that ultimately AI is disinflationary?
Certainly in the short term. Jackson Hole's coming up. He's going to talk about the big items that he referenced during the last FOMC meeting. We'll get a sense on kind of when that productivity can actually make its way into policy. But in the short term, it is going to be really, really difficult to calibrate the potential for productivity gains 5 years down the line within the environment that we have right now.
What would raising rates actually do on the front end of the yield curve, Marvin? I mean, ultimately, we've seen that even with rates materially higher, priced in by the market, with the market doing the work, as Kevin Warsh was saying, it hasn't really had a material effect on where equities are.
No, it hasn't, which ultimately is a tailwind for kind of this equity story. This isn't like prior investment cycles around technology where, certainly the technology itself has to be proven, but it's being embarked upon by companies that are incredibly cash flow positive, and that is somewhat sustainable. I think, ironically, showing that you've got this forward inflation fighting mentality is going to help the long end. It's really the fact that the long end, whether it's driven by term premiums, whether it's driven by real yields, are being unhinged by concerns that you're not taking it seriously enough. I'd look at that for the biggest win in raising rates kind of at the short end, if you will.
When do you see the long end of the yield curve reaching a point where it does constrain some of the enthusiasm that we're seeing in equities and, frankly, the ambitious capital expenditures that we're seeing from AI and, frankly, even other companies as well?
Yeah, so, 5% on the 10-year is always kind of that magic number that we're looking at. If it's driven by real yields, certainly getting real yields into this 125, 150 basis point range, we're closer to that, 80, if you will, perspective from a term premium viewpoint. That really starts to, I think, tamper the enthusiasm of how much you can throw at these long duration models.
Marvin Lowe of State Street, thank you so much for being with us this morning.
Thanks, Lisa.
Wonderful insights, as always, especially given the scope of some of the borrowing that we've seen. It isn't just the $500 billion NVIDIA financing plan, which is a financing agreement with 6 big Wall Street firms. Most of them are private asset managers who NVIDIA said they contacted and nobody said no. But yesterday was also the fastest pace of issuance in the investment grade market in the United States going back to January, with 19 separate issuers flooding the market trying to get in before that CPI data.
Right, trying to get in for CPI, trying to get in for PPI. We're going to see components on electronics and things like chip. Axios this morning talking about chipflation. Absolutely, that chart has has gone vertical. This is why you are potentially seeing the yields rise. There's just inflation on all aspects of the economy right now.
And at what point does that yield rise present a real problem to the Fed and even more so to the Treasury Department? Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. At least 130 people are dead in Colombia after the country was hit by a magnitude 7.4 earthquake yesterday. More than 5,000 homes were damaged, 3 hospitals collapsed, and more than 180 people are missing in the Valle de Cauca province alone. NVIDIA is teaming up with some of Wall Street's biggest firms, including BlackRock and Goldman Sachs, in an attempt to unlock up to $500 billion for AI infrastructure. The initiative aims to provide financing for NVIDIA customers building data centers, power projects, and advanced chips. U.S. small business optimism rose in July to the highest level in almost a year as firms ramped up hiring plans and inflation pressures eased. The National Federation of Independent Business Index increased 2.4 points to 99.8. 8 of the 10 components that make up the gauge improved. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, hardening his position on Iran.
Iran is broke, totally broke. They asked for money for the damage that we've done. And I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period.
General Karen Gibson of Academy Securities joins next. This is Bloomberg Surveillance. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Looking for direction after just hovering close to all-time highs. We're really about 0.5% away from that on the S&P 500, a little further away on the NASDAQ this morning. A little soggy around the edges as the market tries to adjust with inflation expectations now picking back up and potentially a slew of issuance only accelerating from AI. In the euro, a little soggy versus the dollar. A question, if rate hiking expectations get baked in, what does that do to the dollar? Does it strengthen it and make even more of a problem for some of the countries that are beset by oil prices, even more so? 10-year yields just up by about 2 basis points to 4.73%. The danger zone, people say, comes around 5%. And crude, Emory, up 2.4%. There is a real question here about what has shifted to take negotiations, not necessarily off the table, but they seem to be further pushed back away from the negotiating table.
I think the market was really starting to bake in that Oman and Iran could come to some sort of agreement, which you would actually see more vessels get through the Strait of Hormuz. And we're still not there yet. We've been talking about this now for weeks. At the same time, the president over the weekend, speaking to Axios, was saying we're low-keying it when it comes to these negotiations, kind of taking a step back. But yesterday he said, well, if Iran's going to have demands and wants things like reparations, then we're also going to have demands. So you could see the two getting further and further apart. At the same time, the Strait of Hormuz continues to remain closed.
And the Houthis are getting more involved. Under surveillance this morning, hardening his position on Iran.
Iran is broke, totally broke. They asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. If there's damages to be paid, I think Iran should pay those damages.
Here's the latest. Oil gaining as President Donald Trump makes new demands for Iran, saying reparations for past attacks will be part of any future negotiations with Tehran. Bloomberg's Tyler Kendall joins us now for more. Tyler, welcome back. Great to see you. Do we have a sense of how much the tone in D.C. has shifted when it comes to Iran?
Well, Lisa, at this point, it's very clear that both sides are digging into their positions, and this White House is opting for that economic pressure campaign as President Trump now puts this new demand on the table, which includes that Iran would be responsible for compensation to Iranian families of protesters who have died over the last 50 years, he said, as well as that Iran would be on the hook to pay for any deaths or damages related to conflicts where its proxies operate, including in Lebanon, Syria, Yemen, and Gaza. Now, he didn't provide further details, but it came after Iran said that it was seeking damages for compensation for damages in exchange for the reopening of the Strait of Hormuz, keeping in mind here that we had heard the idea that funds would be allocated to help Iran rebuild from the war, but that was a precondition for potential curbs on Iran's nuclear program, not for a reopening of the strait. Now, amid this breakdown in the talks, it appears very evident that the U.S. isn't going to be in favor of moving forward here, as President Trump has instead said that he's going to tighten that economic grip. And we know that Iran's economy has been hammered when it comes to the conflict. Data reviewed by Bloomberg News from the central bank showing that year-over-year inflation has reached 77%. But Lisa, there's also, of course, the domestic pressure building here at home, as yesterday Bloomberg News confirmed that President Trump has extended that Jones Act waiver another 90 days in a bid to make it cheaper to transport critical materials like diesel, jet fuel, and gas.
Tyler Kendall, thank you so much for being with us, and it's always great to see you down in D.C. General Karen Gibson of Academy Securities writing, Iran is substantially weaker today than before the war began. However, it has gained considerable coercive leverage. Iran benefits when the dispute is framed as an issue between Iran and the U.S. General Gibson joins us now for more. General Gibson, I want to get your take just of the lay of the land. If you could zoom out and give us a sense of what has actually changed over the past couple of weeks as people reassessed whether talks were on versus now, where it seems like increasingly they're pretty far away.
Yes, so that's a great question, Lisa. I think, one, the talks are proceeding on two axes simultaneously. One is between Oman and Iran, and that's the mechanism by which the strait would be administered, the potential for either voluntary payments or some form of toll to assist with administration. And then the second tack is the more important one, frankly, the one between the U.S. and Iran, which is not about how it will be administered, but when it will open, with Iran insisting that the strait will not actually open until the United States makes some major concessions. And as we've just heard from Taylor and has been widely reported, these are concessions that are simply not acceptable to the United States. Some of them, like, removing U.S. military forces from the region or reparations. And then others, it's just unwise to agree to the entirety of this package when really many elements of it, particularly some of those economic aspects, are leverage that the United States will also need in follow-on negotiations that we hope will occur to look at Iranian nuclear curbs.
Well, what's going to be the response from this White House if they do not go forward with opening up the Strait of Hormuz and inking this deal with Oman?
Yes, well, so as Taylor just highlighted, the Iranian economy, which was already weak before this war began, is really being hammered by this. The blockade doesn't help, the sanctions don't help, additional pressure that could be applied. It's unfortunate it's not a broader multilateral effort, but the economic pressure and sustained military pressure on Iran could eventually compel them perhaps to shift their strategy. The issue is time, and domestically, and I'm not a domestic political analyst, but domestically there are constraints that make it difficult for the United States, whether it's gas or oil pressures or midterms or pledges not to engage in a forever war, that make it more challenging for the U.S. to wait this out, which really, I think, is what it will require.
Amidst all of this, there was really a stunning story last night from the Washington Post about the president and his departure from NATO. I was with him in NATO in Ankara, and after he boarded Air Force One, the Washington Post reports that he was shuttled via an airport catering truck, typically used to load meals, into another aircraft, so as a decoy, so he could secretly leave Turkey. Is there a real threat on the president's life that you would be concerned about at this point?
Well, I think we've seen even domestically at people who have attempted to assassinate the president that there are real threats, and he's been on Iran's FATWA list for some time. I'm not aware, certainly, of whatever classified intelligence information may have been available to lead the Secret Service to believe that there was a potential imminent threat, a very viable threat in Turkey. Obviously, that's not something that should be disclosed if that were the case. But I would say escaping in a food truck that nobody noticed is a pretty successful evasive measure.
Yeah, absolutely. And General, I would just love to understand from you, have you ever seen or heard of anything like this in the past?
Oh, of a president in a food truck? No. Or, you know, it's a very deceptive measure. Creative, certainly, seemed to have been effective, but yes, unprecedented probably.
And something that could get slipped into the next spy movie or movie about Washington, D.C., I'm sure. I am curious about your point that you're making, that it's beneficial for Iran when this conflict is framed as Iran versus the U.S. versus Iran versus the world, which is kind of how a lot of people are seeing it when it comes to closing the Strait of Hormuz. What's your take on why it has been framed so much as Iran versus the U.S. and how that could be changed?
Well, I think it's unfortunate. One of the anomalies of this conflict is that we did not build a broad base of support from allies beyond the Gulf. And even at that point, there's some question as to how much they were in on this plan to begin with. Previous conflicts across the Middle East and elsewhere, there's been more international support for what the United States has been doing. I think it certainly doesn't help the erosion of some of the trust with our allies. But a broader multilateral effort, I mean, as you point out repeatedly, this is very global impacts. In fact, the United States, aside from inflationary pressures, suffers less from the closure of the Strait of Hormuz than the Asian oil consumers or Europe. And so having broader buy-in, broader economic pressures, kind of like we had with JCPOA, a more multilateral effort would certainly speed the timeline, I think, of potentially compelling Iran to change its strategy.
How much more are the Saudi Arabians getting involved, given the fact that the Houthis seem to be repeatedly targeting them in the Red Sea? We saw that again overnight, and seem to be more proactive in terms of a response.
Yeah, so I would say the Saudi threat, the Houthi threat to the Saudis is certainly more proximate to them than Iran. Iran has not been recently attacking Saudi oil infrastructure, although they've certainly threatened to do that previously. I think that's why Operation Freedom, the military escort mission, only lasted one day, was due to Iranian threats against the East-West pipeline. But the Houthi threat is more proximate, and the Houthi threat is long-standing. The Saudis and the Houthis have fought 2 wars previously, and those conflicts predate the Houthis' relationship with Iran as one of their proxies. That's a very thorny, perpetual security issue that the Saudis have faced, which, again, unfortunately, does not seem to have an imminent solution.
General Karen Gibson of Academy Securities, thank you so much, as always, for speaking with us. And a real question for people in markets right now is, how far have some of the oil reserves been depleted? Has the cushion really been used up? And whether that's going to be a more important factor driving oil prices going forward?
Well, we're at 40-year low when it comes to the SPR. You still see gasoline hold above $4 a gallon across the United States. And you bring up a great point. Look at European diesel futures. They are jumping. So it's going on not just the Strait of Hormuz, but also Russia. Maybe this is what is going to be the crux to get other NATO allies involved.
And certainly affecting the bond markets over in Europe even more than in the United States. In the United States, we're seeing continued tourism coming up. IHG CEO Ali Malouf, as strong hotel demand drives first half profits.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We are so close to all-time highs. What the bar is to build on that seems to be getting a bit higher. Even with blowout earnings, we're seeing right now very August moves, low volume, low action, although building throughout the morning. S&P futures up about 0.1%, following their close 0.5% below all-time highs yesterday. Interesting to see what's happening with the Japanese yen. It is Mountain Day in Japan, which means that the stock and bond markets are closed. And Emery, I will say, I think we should celebrate Mountain Mountain Day here because it is a celebration of nature and to go out and explore the mountainous nature of their land, which accounts for about 70 to 80%. And so markets are closed. I think we could do with that.
This sounds like a Jim Zelter kind of holiday. Go out, touch grass, go out, take a hike, you know.
Think about AI and all of the spending that you're going to get and why that is filtering into bond yields, because ultimately that is what's going on. How much of this is tied to the oil story? How much of it is tied to the AI story? Right now on the long end of the yield curve yesterday, with the glut of supply seeming to take back some of the reprieve that we had seen in the long end of the yield curve. 10-year yields 4.73%. At the longer yield, 30-year yields near the highest levels going back to 2007, ahead of that $25 billion bond sale on Thursday. And then, of course, oil prices are really coming out and swinging, fourth potential day of gains as people take a look at the ongoing conflict in Iran. And as you mentioned just moments ago, Anne-Marie, the lowest level of the Strategic Petroleum Reserve going back more than 4 decades.
And you think, how does the Fed just continuously look through this when, according to John Arthur's opinion piece today, he cited Oxford Economics, which did a survey amongst executives, and they assume that Hormuz will be disrupted for the foreseeable future, expect this continue throughout next year, and almost a fifth say it'll drag into at least another year. So you could potentially expect higher oil prices for longer.
Yeah, at the same time, a lot of them are sort of a little bit more sanguine in that survey about exactly what this means for their business. The push-pull definitely causing some churn under the surface 3 hours away from the cash open. Here are your morning movers with Yahira.
Hi, Lisa. We're seeing that churn under the surface with HIM's shares. They are falling 6.2% after the company posted a bigger loss than Wall Street expected. Remember, this is a company that's built its weight loss business, selling those cheaper compounded GLP-1s, but lately regulatory and legal pressures have made that much harder, so it's had to resort to selling brand name drugs on its platform, but those are less profitable for him, so margins came under pressure. The company also had to lower the top end of its full year profit forecast. Meanwhile, also reporting earnings was Rocket Lab, shares also falling down 7.5% in the pre-market after the company warned that its most important new rocket could face another delay. It's called the Neutron, and it's designed to go head-to-head with SpaceX's Falcon 9, but Rocket Lab is no longer committing to a launch this year, and that's overshadowing what was otherwise a strong quarter with record quarterly revenue and a better than expected sales outlook for the space company. And we end on this company, Riot. It is one of those Bitcoin miners that has transformed itself into an AI data center company, and it just landed a huge customer in Anthropic. It has signed on for a $9.1 billion deal to use capacity at one of Riot's campuses in Texas for more than 20 years. And having, of course, a major player like Anthropic sign on gives huge credibility to its data center business. So we are seeing shares up nearly 20% in the pre-market. Lisa.
Thank you so much, Yahira. On our radar this morning, NVIDIA tapping major Wall Street firms for $500 billion to finance its AI ambitions. The chip giant partnering with Apollo, BlackRock, Goldman, and others to structure massive debt packages using compute power as collateral. Intel, meanwhile, raising $20 billion in an upsized share sale. Sources are telling us here at Bloomberg the sale drew more than $100 billion in demand. The deal showing a resilience of investor demand for stocks along the AI supply chain. Those shares just a little lower, 0.7% in pre-market trading. And Apple reportedly on track to deliver its all-glass iPhone next year. Sources telling us here at Bloomberg, Apple will release special new models in 2027, marking the iPhone's 20th anniversary, countering an analyst report from Jefferies that the launch had been canceled. Anne-Marie, so many questions, including if you drop it, does it shatter?
I know, that's what I was thinking. Like, what is the tangible upside to having this phone? Because I constantly break my glass all the time. And I constantly have to get like a new outer box to try to protect this phone. So what is the point besides maybe it's a cool look, but actually, is it going to be useful? I think the crux of the matter is, via Mark Gurman, our own reporter, Apple's really clapping back to this Jefferies note saying, no, we are going to be on track for what sounds like a fancy, aesthetically cool-looking new phone. I'm just interested to know, will it actually be more beneficial? Will it get individuals to want to go actually line up outside the Apple Store?
Maybe they'll be able to use their all-glass iPhone to plan their next vacation, because vacations have been very much in focus. Maybe it's just Japan focused on Mountain Day, but a lot of people are traveling. IHG Hotels and Resorts reporting its first half results this morning with total revenue up by nearly 6%. The World Cup effect lifting the Holiday Inn owner, helping to offset some headwinds from the Iran war. IHG CEO Elie Maalouf saying, quote, "We remain on track to meet full-year consensus profit and earnings expectations." Elie joins us now for more. Elie, thank you so much for being with us this morning. I just want to get started on how much the strength really did come from the World Cup, sort of one-off event or a special event, versus widespread strength in the consumer, both in the United States and globally.
Good morning. It's great to be with you. Look, we did have a strong set of results in the first half. Our reportable segments revenue is up 7%, operating profit up 10%, earnings per share up 13%, and it was widespread. Yes, the World Cup contributed, and we said that in the second quarter in the U.S. it contributed 1% of RevPAR, but RevPAR was up 5.2% in the second quarter, and even when you strip back that 1 point, that was faster than Q1. The fundamentals in the U.S. are very strong. You've got high employment. You've got a consumer that's still spending a lot. You've got the record amount of private sector investment that you were talking about earlier, not just AI and infrastructure, but it's energy, it's manufacturing, it's pharma, it's reshoring. You've got clarity on the tax policy. You've got strong corporate profits. That all leads to money in people's pockets, whether it's corporate or it's leisure, and people are traveling. So the World Cup was a great event. It wasn't the only thing. It wasn't even the most important thing in the first half of the year. And we see the fundamentals continuing into the second half of the year, into 27 too. Then when you go to Europe, you know, it's been a strong summer of people traveling to Europe, especially Americans. There's a projection that Americans will be up 5% traveling to Europe from last year, on top of a record last year. And so I think that's really helped Europe business. In Asia, in China, in Japan that you mentioned earlier, we've had good travel, and all of that really, you know, covered up for, you know, fully and more than offset the impact in the Middle East. So it was really broad-based. It wasn't just the World Cup, which was a great event in itself, but really when you look at the World Cup, it's a continuation of live experiences that people are spending money on. It's live concerts, it's theater, it's art, it's restaurant and bar. And there's always another athletic event and a sports event coming somewhere, another concert tour, and we benefit from all that.
Elie, I'm curious how much came from the upper end of the K, right? You have a number of different types of hotels that offer at different price points. How much were the revenues being driven by the upper end of the income sphere?
Look, you're right. We have 21 brands that range from everyday travel with Holiday Inn and Holiday Inn Express to ultra luxury with Regent and Six Senses. And in the first half of the year, pleasingly, every single brand had positive RevPAR growth, occupancy and rate growth, and it happened in every single region. So we feel good about the breadth of our brands and the breadth of the consumer. That doesn't mean everybody's in great shape, but I think that the acceleration of the economy, and I think the acceleration of people's purchasing power has improved the situation in the middle class. And so we're seeing more travel in that, not just at the higher end. Now, the higher end, of course, has done even better, but I don't know that we can really talk about as much of a K economy as much as we can talk about the top 80% of households are doing better because, you know, they're employed. You're still, in the U.S. alone, 4.1% unemployment is very low. You're still talking about wage growth. You're talking about high financial markets. Earlier, you were saying that we're near a record again, and most Americans own their homes, and so you have high home ownership, and the home values are going up. So there's a sense of prosperity, and within that sense of prosperity, where people want to spend their time and money is on experiences. A little less on goods, more on experiences, and travel is a big part of it. You probably saw the article in the Wall Street Journal yesterday, I think, that said that, you know, Americans now, 55% of them have a passport. In 1990, it was less than 5%. It's just a change in how people want to spend their time and money.
You mentioned Six Senses, so I immediately think of Oman, because I know that's one of the most popular Six Senses in the Middle East. How long do you think this conflict can continue and you're still able to recoup the benefits elsewhere in Europe or Asia?
Well, look, you mentioned Six Senses, Ziggy Bay in Oman, which, by the way, is doing very well. It's still a destination that people are seeking. We have about 26 open in 19 countries. So our distribution of Six Senses is it's very broad and not really impacted by the conflict. I think, look, I've been to the region, to the Middle East twice since the beginning of the conflict. I'm going again before the end of the year, at least once, maybe more. And when you're on the ground, you feel a real sense of normality. People are going to work, going to school, getting on with their lives. There is still a conflict, more in a tension state than it is in a hot war state. I think the general belief is we're past the peak of March, April of the conflict. And I don't know how long the current tension can continue. But the other thing you have to keep in mind that people in that region, the Middle East, they're resilient, they're courageous, they're optimistic, they're not unused to conflict and tensions. And even if this continues for a while, they're getting on with things. They're talking about growth, they're talking about new investments, they're talking about expansion. So I think that even if the current situation continues at the current level, you're going to continue to see a recovery that we started seeing after the end of April.
You've also said you want to look east. What are the expansion plans right now looking like in Asia?
I think we're very optimistic about it. While we'll continue to be very strong in North America and Europe, just the rates of growth are higher east of Europe. So you have, on average, a younger population, faster growing middle class, faster growing GDP, more investment in aviation, whether it's infrastructure like airports or airline networks. And so there's more growth in travel. And strategically, we've positioned ourselves like that. 60% of our pipeline of new hotels under development. So we have about 1 million rooms open, nearly over 7,000 hotels. We then have 35% of that in pipeline under development. So about 2,400 hotels. 60% of that is east of Europe. That's Middle East, India, Southeast Asia, China, Japan that you were talking about earlier, and everything in between. So yes, there is higher growth in that direction, but it's not just, East Asia or South Asia. It's all of that region east of Europe, and we're very well positioned to take advantage of that.
Putting all this together, given all the strength and given the demand, how much pricing power do you feel like you have to offset some of the increase in input prices that we see across the supply chain?
Look, we, as IHG Hotels and Resorts, are a franchisor and manager. We don't own the hotels. We don't set the prices. It's our owners and operators of the hotels that set the prices. And it's very, very different by market, very different by market, by micro market, by neighborhood. So I think that it's a very competitive market, and prices are set really based on demand and supply, taking into account the cost considerations. So the whole cost topic is much more of a theme in Europe and in the US. When you go over to China, for example, it has been actually the opposite. There isn't really much cost pressure, right? It's been more about seeking a little more inflation than not having inflation. So I think that it's much more regional, much more localized, and it's always set by the current supply and demand dynamics. In general, if you look globally, room rates have not increased faster than the rate of inflation. So it's still within, say, the reasonable range of people's affordability.
Elie Maalouf, thank you so much for being with us this morning. IHG Hotels and Resort CEO Elie Maalouf there. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Gwynn. Vonnie.
Lisa, thank you. President Donald Trump laying out new terms for Iran, demanding reparations from Iran over past attacks, as well as compensation to the families of protesters who've been killed over the years. The president says it's a response to Iran's own demand for compensation. General Motors is selling its share of the planned $3.5 billion battery plant in Indiana to Samsung SDI, giving the South Korean company full control as weaker U.S. EV demand pushes General Motors to scale back. The companies will still develop next-generation batteries for future GM vehicles. New details emerging about how President Donald Trump flew out of Turkey last month. The Washington Post reporting Trump boarded Air Force One in Ankara, then moved into a catering container attached to the plane, which ferried him to a smaller aircraft that then flew him to Britain. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. And that is what Anne-Marie is focused on this morning, the entire morning.
Well, I think it's just a stunning development and we're just learning about it now. So for a few hours, the press thought they were traveling with the president and they weren't. And if you think back, the pool that day were told to cover their blinds. why were we left out of the dark on this? And also, how serious is the threat on the president's life?
Yeah, well, it's something a lot of people are talking about. Up next, clearing the inflation hurdle.
This week's inflation number is going to be very important.
This will be the hurdle that probably makes the decision whether or not the Fed moves in September.
It's really that inflation picture that guides us to say this is not a time to be raising rates.
Kelsey Barrow of JP Morgan Asset Management joins next. This is Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Seeing a pretty range-bound market this morning. Still, though, near all-time highs. Bonds really doing the talking right now with yields inflecting higher in the wake of higher oil prices. 10-year yields 4.72%. Crude prices up 1.6% to $83.47 on WTI. Raising questions about CPI tomorrow, PPI on Thursday, and just how much those price pressures continue. Under surveillance this morning, clearing the inflation hurdle.
This week's inflation number is going to be very important.
The CPI print and inflation prints going forward are really going to be the key.
This will be the hurdle that probably makes the decision whether or not the Fed moves in September. If you get a hot CPI number, that's going to create some problems.
It's really that inflation picture that guides us to say this is not a time to be raising rates.
Here's the latest. Cleveland Fed President Beth Hammack doubling down on last month's vote to raise rates, saying some number of rate hikes may be necessary to tame inflation. Investor anxiety rising along with bond yields ahead of fresh CPI data tomorrow. Kelsey Barrow of JP Morgan Asset Management writing, the hurdle to price out rate hikes is high, with softer data more likely to push out the timing of hikes rather than to remove them altogether. Kelsey joins us now for more. Kelsey, can you explain that, this idea that even with disinflationary data, that may not be enough to say the Fed can remain on hold?
It may not be enough in the short term. I mean, so the one thing is just the calendar ahead, right? So we have the CPI report tomorrow, but then we also have Jackson Hole, and then we have another CPI report and another payrolls report. So the Fed has some time essentially to assess the next move. So one data point alone isn't going to be enough. But that being said, if we get the consensus expectations for core CPI, which is a 0.2 month over month, the 3-month, 6-month, and 12-month rates are going to be 1.7, 2.4, and 2.5. Those are, to me, really not particularly concerning numbers as it relates to inflation. The problem has been the translation to core PCE, which is running above 3%, and we can talk about that. But this is a very unique time for the Fed, and the reality is the market is going to continue to price in hikes for now until we get a trend of multiple months of data that either confirm that inflation is maybe not as big of a problem, or, you know, if things come in a little bit hot, the concept has shifted to this idea of insurance hikes. So if the labor market remains stable, there's limited cost to maybe moving rates up a little bit just to confirm that inflation is going to come down.
Fascinating to me that you talk about core CPI versus core PCE, and it sounds like alphabet soup, but core PCE includes some of the increases in component prices that we're seeing that are more directly tied to the AI build-out, and it speaks to what we were hearing from Marvin Lowe earlier this morning, where he said part of the problem is that the market is so robust for these AI borrowers, they're issuing so much debt, that this alone indicates that the Fed should probably tighten monetary policy. What's your response to that?
I do think you have to look more broadly. So the Fed is interested in credit conditions. That is one of the ways in which their monetary policy transmits to the real economy. And clearly, conditions for issuance within the AI data center build-out is wide open, right? You can issue a lot of debt, but it's also coming at incrementally wider spreads. So there's both the availability of capital component and also the cost of capital component. And on the margin, investors actually are demanding a little bit more spread for that investment. When I look at it, you know, and I look beyond AI, for example, we got the NFIB Small Business Survey this morning, and I look at CapEx plans, you know, that ticked up, but if you pull back the series to the last 30 years, CapEx plans are actually still fairly muted. If I look at AI investment outside of AI, that's fairly muted. I also look at the housing market. That is certainly constrained by interest rates. So I think that does tell us something, but I'm not sure that it tells us the full picture of if policy is currently restrictive, which is, I think, the point of that comment, right, is that's the question that we're all trying to answer, which is how restrictive is policy, or is policy completely in the wrong place right now?
Or is policy doing the same thing that it always has done, or is it acting somewhat differently? And I think that increasingly we're talking about the front end of the yield curve as potentially rising to offset or bring down the long end of the yield curve. Actually, it might be oddly good for equities, good for risk assets if the Fed were to be more proactive, because it might get control over the long end of the yield curve that seems to be going to the highest level since 2007. What do you make of that argument?
I think it's an interesting argument. It does connect back to this idea of if the Fed has credibility right now. And I think that there are a couple ways to look at this. Traditionally, when I look at if the Fed has credibility, I'm looking at inflation expectations. And interestingly, inflation expectations are very benign. Even in this most recent move higher in oil prices, you can barely see it on a chart for 2-year inflation swaps. They're near 2-year lows. And if you go out even further to the 10-year and the 30-year inflation expectations, those have remained very contained, even after Chair Warsh's press conference that some have raised as indicating, some type of loss of credibility. So from that perspective, I'm not necessarily sure that the Fed needs to change anything to regain that credibility. I think one way that this could resolve itself is just seeing the data come out that confirms the idea that the labor market is stable and the underlying sources of inflation associated with demand continue to slow, like what we saw on Friday with the jobs report. Now, there was a lot of noise in the jobs report, but the one thing that wasn't noisy about that report was the signal from wages. That continued deceleration in wages is an indication that, this isn't an economy it's a healthy economy, but it is an economy that's overheating to the extent that the Fed needs to be taking aggressive action.
10 seconds. I've got $25 billion of 30-year notes to sell on Thursday. You buying?
I think that these yields are attractive, and despite the fact that we see a lot of supply, we're seeing a lot of record demand to match that record supply. And I think people forget about the demand side of the equation. We're so focused on those supply numbers.
I think we've got a buyer. Kelsey Barrow,
Yes.
JP Morgan Asset Management. It finally came. Somebody who is interested in this particular maturity. Coming up next, Anastasia Amoroso, Partners Group, Libby Cantrell of PIMCO, David Tinsley of Bank of America Institute, and Mark McCormick of BMO. From New York, this is Bloomberg Surveillance. Good morning.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
CPI print and inflation prints going forward are really going to be the key.
It's not just an inflation issue, it's an uncertainty issue.
If you get a hot CPI number that comes out, that's going to create some problems.
I really think in times of high inflation, the Fed has one tool, and that's interest rates.
It's effectively, the Fed is going to, we think, get bailed out by lower inflation data.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the second hour of Bloomberg Surveillance. Stocks looking to eke out gains ahead of key inflation data tomorrow, with earnings from CoreWeave and Supermicro on deck later today. Big Tech continuing its fundraising binge with a $500 billion funding agreement for NVIDIA, and new share sales from Intel, and bonds pricing back in rate hikes as the price of oil continues to rise. Inflationary pressures once again resuming.
Everywhere you look in this market right now, supply side, demand side, you're seeing those inflationary pressures, whether it's coming from AI and some of the circular financing as well. We were seeing with some of these deals, and just the demand you were seeing both the equity and debt side when it comes to artificial intelligence, and then of course oil. There seems to be no end in sight, not just for a peace agreement right now, but just to reopen the Strait of Hormuz. And I think a lot of people last week were really comforted by the fact that the talks continue, not with the United States, but with Iran and Oman, two individuals, two countries that can work together to at least start getting some more vessels through. And right now, that's not happening.
So there are a couple of inflationary fronts. On one hand, you've got oil prices rising. On the other hand, there are real questions about the artificial intelligence build out and just how much capital some of these companies are raising. Yesterday was pretty unprecedented. Not only did you have the reports around a $500 billion ambiguous financing plan agreed to with NVIDIA and 6 Wall Street players, but you also had 19 investment-grade issuers in the U.S. market. You also had Intel's share sale. And of course, you have just a pipeline that continues to grow. There is a sense of endless desire for capital at a time where it's an existential threat not to build out enough to be competitive.
Exactly. And I was really struck by Intel, because we were talking about that early in the morning. And then by the end of the day, they raised $20 billion, a third more than it was actually targeting. So you can see that there is oversubscription when it comes to a host of these stories.
And meanwhile, you also have the consumer. We were speaking with the IHG CEO talking about how much people are traveling. Maybe they'll travel to the mountains of Japan to celebrate Mountain Day where markets are closed, or maybe to Europe. A real question about how much that can remain intact even with these inflationary pressures. And right now, we've seen that pretty much come through, at least in the earnings.
Lisa, you nailed it during the airlines earnings. This was an AI trade because people are inking all this money when it comes to artificial intelligence, what they're seeing in the stock market, and the upper K is really just now releasing all that capital into the real economy. And what I heard from the IHG CEO was the same exact thing. People are spending, and even the lower K. They talked about statistics of more Americans having passports, more people getting out there and travel. There is just more demand for this, and what we're seeing right now, we're seeing across airlines, seeing across hotels.
And there still is demand for equities, with them seeing a bit of a lift in futures throughout the morning, gaining as people take a look at the fundamental earnings, some of the fastest pace of earnings growth going back to 2021. S&P futures up 0.2% now, building throughout the morning. NASDAQ futures up 0.4%. They've got a further way to claw back to those record highs earlier this year. And even Russell 2000 participating up 0.3%. In the bond space, here is the dissonance. On one hand, you've got the rally in stocks. You've got a sell-off, at least at the long end of the yield curve. We're seeing a bit of an inflection for the 2-year yield. We'll take a look at what exactly caused the turnaround, but lower just slightly, 4.24%. On the long end, watch this space. 30-year yields just eking closer to the highest level since 2007, 5.26%. And a lot of this has to do, yes, with some of the big sales of AI-related debt. It also has to do with inflation expectations coming from consecutive shocks, with oil prices inflected higher for a 4th straight day. Coming up this hour, Anastasia Amoroso of Partners Group with Stocks Seeking Direction, Libby Cantrell of PIMCO looking ahead to key primary elections, Mark McCormick of BMO as Yentervention gains fade. I will have to get used to saying that. We begin this hour with Stock Steady as investors await fresh earnings and eco data. Anastasia Amoroso of Partners Group writing, we are constructive on the outlook for markets and the C's of the economy. Corporates, CapEx, consumer are on solid footing. Anastasia joins us now. Anastasia, great to see you. Thank you for being with us.
Good morning. Good to see you.
So let's just start with this expectation of what we're seeing with the issuance of ARI-related debt, and at what point it becomes concerning to you. Everyone has their hand out. Everybody wants money, and there are questions about exactly what they're buying and who's going to be successful.
Sure. Well, first of all, let's size this up a little bit. You know, you have the hyperscalers that are trying to build out CapEx to the tune of $1 trillion. You know, that's not going to take only free cash flow. That's also going to take a whole lot of debt. But here's how I would think about it. If you look at the hyperscalers themselves or the data centers, you have seen some credit spread widening. But when you actually look at the interest coverage ratios for the said hyperscalers, they're still in very good shape. So yes, they've taken on incrementally more debt, but actually the coverage ratios are still something like 4 times what the rest of the investment grade bond index is. So for the time being, I would say the bond markets are open, the bond markets are available, and investors are stepping up to actually buy some of that debt. So for the time being, I think we're okay. But I think the really important point, Lisa, is if you kind of, apply the playbook from prior, excessive build-outs or prior financial crisis, it's all about the leverage, and it's tracking that leverage. So I think as investors, we have to really carefully put pen to paper and start writing those amounts down. Is it through asset-backed finance? Is it through investment grade? Is it through private credit? Is something else? But we have to start tracking those amounts. I would say not a cause for concern today, but this is likely what ultimately will come to hurt us.
A lot of people are looking at this build-out as one of the inflationary pressures that has been rising. Also, it is, of course, oil prices, and we had been talking about a 4th consecutive day of oil prices rising. Now, oil prices lower on these headlines that the Pakistan defense minister says that things are shaping up in favor of peace, that the U.S. and Iran are close to some arrangement, and even though you had seen gains in oil prices earlier, now you're seeing them inflect lower. How much does that shape your narrative about inflation going forward, about just how risk on or risk off some of this is going to be?
I mean, quite honestly, not that much anymore, because the reality that I think investors have come to grips with is that we don't know when the peace deal is going to happen, if it's going to happen, and you have to focus on what fundamentally drives the economy, which is again the corporate profitability, which is really banner and stellar this year. It is the consumer that, Lisa, to your point, the reason why we are able to shake off the oil prices is because wage growth is still running at 3.2%, give or take. If core inflation is running at 2.5%, that still gives you that real spending power. And then it's also the AI CapEx, and clearly it's not been deterred by the price of oil. So that's what fundamentally drives the economy. And I think, the other thing we've kind of got accustomed to as investors is there are workarounds, whether there are different pipelines that you can use to try to get that oil outside of the Strait of Hormuz, whether it's oil production that has been picking up elsewhere. I mean, I was just looking at the U.S. natural gas production and oil production. We're near record highs. And by the way, that's not only the case for the United States, but also supply has surprised in other non-OPEC parts of the world. So I think the really big silver lining of the Iran conflict is that we went into it with a lot of buffers, and we've been working those down, but fortunately we had those in the first place. So I think that's why the markets are able to still maneuver through this.
Can the market, though, at some point shake off this conflict if it continues? Because sure, very sensitive is the top line oil price. We'll have geopolitical premiums on and off. But you are seeing higher prices down the chain when it comes to jet fuel and gasoline and diesel, et cetera.
Yeah. Look, I think by and large, yes, we can shake off and we can work our way through the conflict, but it does slow growth on the margin. So for example, we were modeling this back at the peak of the conflict. We were anticipate probably 50 basis points, move higher in inflation because of that, and something like 30 to 50 basis points move lower in GDP. Again, we're not talking about full percentage points, but we're talking about the increments. And the reason for that is if you think about oil as a percentage of the CPI basket has been declining over the years, and it's fairly small, 5 or 6%. If you think about the oil intensity of the U.S. economy or global economy has also declined by something like 70% since the 1970s. And so that's what's been really surprising, I would say, is just how oil efficient, whether it's the economy in the U.S. or China, has been able to be. So I do think it's an incremental headwind, but one that we can work our way through. And I guess I should extend this to the Fed also. And, if...
you think they can look through it?
or work around it?
I actually do. I think, one of the things, we talked about this last time, but Fed Chair Warsh will be looking at is real-time, real-world inflation data. And if you look at the CPI, and if you look at the core services inflation, first of all, core services excluding shelter has been falling, and the 3-month average has declined now close to 2%. Now, if you look at the shelter component, that's the component that is running above 3% in the official numbers. But if you look at something like Zillow and you kind of, proxy that rent inflation with Zillow numbers, you're actually looking at core inflation running at 1.6%. So I think that's going to be a real debate at the Fed, and what is the right inflation metric to actually look at.
Right now, what's your top bet in terms of positioning? How much are you saying it's time to lean into private equity, private debt, public equity? Are you looking at this being more of a risk-on market or a more nuanced kind of play the balance sheet a different kind of way?
Yeah, look, I do still see opportunities in public markets for the 3 C's reasons that I talked about, but at the same time, it is very much tied to the AI trade. And one thing that I do worry about, as some of the models get commoditized, the leading frontier models get competition from the open weight models. What does that do along the supply chain? What does that do along the food chain? And I do see the risks building, for example, in the semiconductor space. And so if you kind of tally all that up, that's a lot of public markets that are tied to that AI trade. So I do think risks are building there. On the flip side, if I actually look at private equity, first of all, valuations on the index itself are at a 15-year low relative to public markets. So I like that entry point. And I also think it's sort of the interesting counterpoint to the AI trade, because the true opportunity with AI, in my mind, is what do you do with the models? How do you actually create value within your portfolio companies? And if I think about our portfolio and the initiatives, the AI initiatives that we have across 90% of our companies, they're not solving the shiniest of problems, but they're solving the mundane. They're optimizing, they're streamlining, they're pulling together a whole lot of data. But in the process of doing that, they're driving productivity and they're driving profitability. So I think it's an immense opportunity actually in private equity to apply that AI playbook and drive that value creation. So I would certainly look at private equity and private credit. I think the fears of software death have been, for now, greatly exaggerated. I think the health of private credit is actually better than most think that it is. And spreads are wider and rates are higher. So I like that as well.
Anastasia Amoroso, thank you so much for being with us this morning. Anastasia Amoroso of Partners Group. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. Intel increased the amount it's raising in a share sale to about $20 billion, a third more than it was originally targeting. Sources telling us here at Bloomberg, the chipmaker is poised to price the offering at about $95 per share. That would be Intel's first public share sale since it listed in 1971. Riot shares are surging in the pre-market, Anthropic striking a $9.1 billion cloud deal with the Bitcoin miner. Sources telling us here at Bloomberg that Anthropic is buying compute capacity from Riot's Rockdale, Texas campus, adding power as AI demand grows. President Trump defending embattled FIFA President Gianni Infantino amid a growing revolt that threatens Infantino's leadership. In a Truth Social post, Trump writing, quote, FIFA would be making a terrible mistake if for any reason they even considered replacing President Gianni Infantino. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. I'm not sure if President Trump is helping or hurting Infantino and his chances, at least his reputation with the Europeans.
I think some of the damage is done already, regardless of what the President of the United States says.
Well, we'll, of course, be following this, as I'm sure everyone is. Up next, progressive momentum in focus.
These are people that have been not successful. They have nothing going, and they're telling us how to run our country. And I just don't think it's going to happen. Now, I may be wrong.
Libby Cantrell of PIMCO, watching it all, joins us next. This is Bloomberg Surveillance. Good morning. Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Medika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Stocks getting a new boost after those headlines talking about some possibility of peace in the Middle East. A real question here about how much people end up buying into these headlines every time they come out. Pakistan's defense minister was speaking to reporters in Islamabad and said things are shaping up in favor of peace and that the U.S. and Iran are close to some arrangement. As a result, S&P futures getting some life, up 0.2%. You see a bit of a question about crude now actually inflecting lower at 0.4% decline. 10-year yields now unchanged after having been 4.73%, now 4.71%. The dollar versus the Japanese yen, really interesting in light of the yen intervention last week. Yes, I'm going to keep saying that, 159. We'll be talking about that more this morning. But really a question about how all of these factors play into the November midterm elections. Under surveillance this morning, progressive momentum in focus.
When you look at the radicalism and the craziness of the candidates and the stupidity of what they're suggesting, these are people that have been not successful. They're people that have been, in many cases, failures. They have nothing going, and they're telling us how to run our country. And I just don't think it's going to happen. Now, I may be wrong.
Here's the latest primary elections taking place in 6 U.S. states today. The face-off between moderate and progressive Democratic candidates continuing ahead of the closely contested midterms this November. Bloomberg's Tyler Kendall joins us now. Tyler, yes, we have to focus on this, even though some people are saying we still are in August. We can wait. It seems like the battle on the left is as strong as the battle on the right.
Lisa, that's a really good point. And tonight's election results will give us some insights into how both parties are going to connect with voters as we get closer to November. We're watching very closely this Democratic primary for Wisconsin's gubernatorial race and whether or not this shows momentum for Democratic socialists is either stalling or boosted. The candidate there is Francesca Hong, though she has failed to secure the endorsement of prominent progressives in the party like Senator Bernie Sanders amid reported concerns about her viability as a candidate in the general election. We're also seeing progressive versus moderate candidates play out in the Democratic primary for the open U.S. Senate seat in Minnesota, further shedding light on this conversation, because while there are concerns about the viability and electability of a more progressive platform, Republicans are, of course, as you mentioned, facing headwinds of their own. For the first time reportedly since 2010, a Fox News poll finds voters feel Democrats will handle the economy better than Republicans, leading by as much as 9 percentage points in a survey released last month. Lisa, one other race for your radar. I have my eye on the special election to fill the Senate seat left by the late Senator Lindsey Graham. His sister, Senator Darlene Graham, is vying for the spot. She's backed by President Trump, but there's questions about whether she can emerge from what is a very crowded primary.
Tyler Kendall, thank you so much for being with us. Tyler, going over all of the potential elections and election results later today. Libby Cantrell of PIMCO writing, our base case for the November midterm elections continues to be a split Congress. Regardless of the outcome, neither party is likely to have a real governing majority come 2027. Yay, more gridlock. Libby joins us now. It seems like markets like that, so maybe that is a positive.
They do like it.
So what are you expecting in terms of gleaning insight for the fight for the Democratic soul and party's sort of direction going forward?
Yeah, well, we're seeing, I think, a lot of interesting trends almost converging. It's this really sort of anti-incumbent, anti-establishment sentiment that's been played out across both parties, both Republicans and Democrats. And then, of course, within the Democratic Party, this is also being kind of woven into this Democratic socialist, this sort of far left ideology versus the more kind of mainstream establishment Democrats.
It really hasn't actually had major implications for what the midterm election results have been so far, at least before last week, in that many of these fights are being played out in kind of blue, if not very sapphire blue districts, you know, New York City, Denver, Colorado. Whether the Democrat's going to be liberal or very liberal, it doesn't really matter in terms of sort of their electability in those districts because they're sort of overwhelmingly Democratic. However, last week it really changed in terms of the Michigan Senate race, and now you have the Wisconsin gubernatorial race, and also the potential, you know, Minnesota Senate race as well today. So in terms of the primary, so I think that this has been sort of an intra kind of family spat that has really had few implications for the midterms. However, again, last week has changed that. And again, I do think that it probably puts this Michigan Senate seat, maybe Minnesota, depending on how that turns out today. And then, of course, the Wisconsin gubernatorial seat, which is going to be important for the certification of the election in terms of 2028. This is going to have implications for not only the midterms, but potentially for 2028.
This family fight within the Democratic Party that's going to play out now in the midterms, we saw it happen last week. How much is that going to set the tone for 2028 and the candidate that they end up choosing?
Yeah, and I think this is going to be, I mean, obviously what happens, you know, today will be interesting, particularly in Wisconsin and Minnesota. But I think what is going to be more important is obviously what happens in November. And so, these people can, you know, their rhetoric is obviously resonating with a group of the Democratic Party, but can they then pivot and have a more sort of centrist message that then can actually make them electable for a general election come 2026? If these folks lose, if El Said loses in terms of November, if, you know, Francesca Hong wins today and then loses in November in terms of the gubernatorial race in Wisconsin, I do think that's going to sort of take some wind out of the progressive left sails going into the general election and 2028. If, however, they win, then you're going to really see this fight, I think, really play out in terms of the primary.
Big picture, what kind of numbers are you looking at for after the midterms in terms of the composition of Washington?
Yeah, I mean, honestly, even if this is a wave election for Democrats, and there are some inklings of that in terms of the generic ballot, in terms of the enthusiasm gap, Democrats are much more enthusiastic about voting this election. Those are sort of two indicators that we are monitoring that have sort of suggested wave environments before. In terms of the House, there's a much lower ceiling for how many seats Democrats can win because of the redistricting that has happened. So honestly, a great night for them would be a kind of a +10 majority, +15 majority. We're not talking about the sort of +40 majority that we have seen in other sort of midterm elections. And that is just, even if that comes to pass, and I think more likely is that Democrats, you know, have a 5-seat majority in the House. And then maybe Republicans have a 50-50 Senate. I mean, that is like neither party is going to have a governing majority. I mean, I think in maybe sort of this quixotic world, you could say those are the ingredients for actually compromise. If President Trump wanted to do something, say on immigration, for instance, or maybe on healthcare, you know, those sort of narrow majorities or split Congress have given way to some compromise in different political environments. I don't think we should fool ourselves. I think this means more gridlock. It means that, you know, I think we've seen kind of past peak President Trump. I think there's going to be obviously much more oversight and what have you on him. But in terms of stuff that's getting done, it's going to be very, very minor.
Is gridlock still good when people can't even be in the same room together and talk? I mean, it's one thing to have Democrats and Republicans, say 10 or 15 years ago, when people would have, you know, salons together and they would go out together. Now, when you go to Washington, D.C., it's very different. People don't talk to one another. They don't congregate together. Is gridlock still as good for markets as it used to be?
Yeah, I think that's a great question. And I think that sort of when the rubber meets the road for markets is when they really need Congress and they really need the fiscal authorities to do something, right? And we did see, of course, during COVID that a lot of this partisanship fell by the wayside and they were able to spend a lot of money, which is much easier. The harder task, obviously, for Congress is to do the really hard things politically, which, of course, we've talked about in terms of reducing the deficit, something that
wow.
An audible laugh by Emery. But honestly, I think it's warranted. I mean, it's just in terms of actually doing the really hard work, whether it's going to be raising revenues, raising taxes, difficult to do, obviously, reforming Social Security, reforming healthcare. Those things we all know are coming. Honestly, they have to in terms of our fiscal picture. Now, whether it's going to be in the next 3 years, probably not. but that 2031 Social Security Trust Fund inflection point, I do think that's going to be a forcing mechanism, and that will be sort of when the rubber meets the road. And I think the markets will be focusing more on this kind of dysfunction in Congress.
Just 30 seconds. How much do higher interest rates really challenge this that much more, given how much more the interest expense is right now for the U.S.
I think mortgage rates have obviously are much higher than they were. Not their highest, obviously not during what we saw during the Biden administration. Gas, though, I have to say, gas is still the thing. It's gas and groceries, housing, sort of healthcare, sure, but gas, the price of gas really does get into the zeitgeist of voters. And so with that above $4, a gallon, I do think that's going to be a headwind for the president and the president's party.
Libby Cantrell, thank you so much for being with us. Libby Cantrell of PIMCO talking about why we all will be focused on the deficit in the next couple of months. That's not at all what she said, but I do think
next
about
couple of years.
At what point? I mean, yeah, exactly. I mean, you think about it and you take a look at the trajectory of interest expense, and if 10-year yields and 30-year yields stay where they are, suddenly we're looking at 1.6 trillion to 2 trillion. I mean, this starts to get pretty serious.
Yeah, it is pretty serious, and we have passed that moment where we're paying more on our net interest than we are, as you mentioned yesterday, than our defense budget. This is a huge problem, but the bond market, the markets in general, are going to be the driving force on that. They're going to be the ones that force Congress to act in 5 years' time, maybe, hopefully.
Yeah. I'm imagining people rolling their eyes listening to this saying, of course you turn that into a bond market conversation. Coming up, David Tinsley of the Bank of America Institute with a check on the consumer.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary. We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The mood music in the Middle East is more positive, so you're seeing a bit of a gain in equities. They had been flat on the day. Now they're up about 0.2%, although fading a little bit, now up only 0.1% on the day, following reports about potentially some sort of peace agreement coming from the Pakistani foreign minister. The dollar, this to me is the place to watch. Do we get some more intervention? Again, I'm going to say this phrase, given the fact that it is pretty slow right now over in Japan, and given the fact that we've retraced more than half of the yen intervention that we saw last week, 159.18 this morning. 10-year yields now back up 4.71%, and crude prices also just up 0.3%. A real question here about how much these headlines actually move the dial, Emery. I mean, ultimately, we're sort of sick of this whipsaw. At the same time, markets seem to always respond.
I don't want to be too critical, but the Pakistanis are a mediator, but they're not involved at this critical moment between Iran and Oman. And it sounds like this defense minister is just trying to wish cast and manifest some peace agreement. Not even the Oman-Iran Strait of Hormuz opening, but the United States and Iran, which we've been here for months, and the president says we're quote, low-keying it right now. It's just kind of shocking to me how vulnerable still the geopolitical risk premium whipsaw is very quickly on the oil price.
Yeah, well, wish casting might be better than not wish casting. 2 hours away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with the latest earnings we've gotten this morning, and they are from On. Shares are plunging nearly 17% in the pre-market after the company slightly lowered its growth outlook. And part of what's happening here is a tug of war between On and the retailer selling its shoes. The U.S. sneaker market is heavily promotional right now, but On wants to stay premium. So ahead of new product launches, it's been limiting the amount of older versions of its shoes that it ships to retailers. And while that helps avoid discounting, it means fewer shoes going into stores, and that weighed on sales this quarter, and it looks like it's going to affect the company in the near term. Meanwhile, we are seeing Rocket Lab shares under pressure as well, down 5% after the smaller SpaceX rival warned that its most important new rocket will face delays. Neutron is expected to go head-to-head with SpaceX's Falcon 9, but Rocket Lab is no longer committing to a launch this year. And adding to the disappointment, the company did post a wider loss than Wall Street expected. And we end on Riot. This is one of those big Bitcoin miners that has transformed itself into an AI data center company, and it just landed a huge customer in Anthropic. It has signed on for a $9.1 billion deal to use its capacity at one of its campuses in Texas for 20 years. That is a long commitment, and of course, having a major player like Anthropic in the AI space signing on gives major credibility to this company, so shares are soaring more than 16%. Lisa.
Thank you so much, Yahaira. On our radar this morning, a new comment raising hopes for talks between the United States and Iran. The Pakistan defense minister telling reporters the U.S. and Iran are close to some arrangements, and things are shaping up in favor of peace. Stocks higher on the wake of those headlines, as well as oil prices after initially fading. OpenAI buying back roughly $7 billion worth of shares from employees ahead of its potential initial public offering. Sources telling us here at Bloomberg the deal values the ChatGPT maker at $852 billion. And Anthropic meeting with potential investors to address concerns ahead of a possible IPO. The Wall Street Journal reporting investors are pushing executives for details on cheaper alternatives in China, data center backlash, and financial stability, even as they make new deals with potential partners for additional compute.
Right, they want the additional compute, so they're going out and making those deals. At the same time, investors want to know how tangible
is Anthropic going to be in the future when you have the threat of some of these much cheaper Chinese models? And according to the Wall Street Journal, the executives are surprise, surprise, downplaying the Chinese competition in meetings, telling investors Anthropic is hyper-focused on offering cutting-edge AI models. But obviously, this is what the whole debate and concern is in financial markets. You can see those jitters, as well as in the national security sphere, about actually how much potentially can China not just catch up, but create these cheaper models that maybe even at some point surpass the United States.
Yeah, and a concern that the rolling ball of cash is moving now away from some of the LLM, the large language models that are on the frontiers to the hyperscalers. A question also of who's going to pay for it all, which really comes down to the consumer. The Bank of America Institute Consumer Checkpoint report highlighting a resilient consumer, noting a slight slowdown in a pace of total card spending, writing, the consumer is converging and K is closing. For the first time since 2024, lower income wage growth exceeded higher income household wage growth. Also going on to say that really you've seen the fastest pace of wage growth for the lower income cohort going back to March of 2023. David Tinsley of the Bank of America Institute joins us now. David, what do you make of this convergence in particular and the fact that the lower end of the K seems to be catching up?
Yeah, thanks for having me on. Well, I think this is good news. If there was a convergence where the high end was coming down, say, then that would raise questions about the overall pace of consumer spending. But what we see in our data, which covers July today, is that this remarkable, really, convergence in the K. A couple of months ago, I was on your show. We had a big gap. And there seemed no end in sight to it, in all honesty. And now, as of today, in our data, that gap has closed. If anything, seems to be lower income households doing slightly better now than the highest income cohort, both in terms of spending and wage growth.
Where is it coming from? And David, is it a particular type of job mix that's leading to this pickup in wages for certain spheres of professionals, or is it just that the economy truly is broadening out with respect to the momentum?
Well, I think it's a couple of things. One, on the labour market side, notwithstanding the weakness we saw in the latest data, we saw some better figures earlier in the year. And the lower income consumer is more sensitive to those job gains because they spend all they earn, essentially, as opposed to higher income that are more kind of dominated by wealth effects. But there's one other thing, which is more of a technical thing, really, in our data, is that it's an after-tax measure. And we think some lower and middle income households have also been reducing their tax withholdings this year, which in a sense is another manifestation of the stimulus from the One Big Beautiful Bill Act. So relative to pre-tax wages, after-tax wages are strengthening. So it's a kind of bit of both, I think, most likely.
There's also an issue of how much this kind of flies in the face of discussions that consumers were eating into their savings in order to support some of their spending. How much is this sort of a repudiation of that, the idea that maybe it's reversing and people are just spending more because they're earning more?
Well, in our data today, what's quite surprising, really, is that wages and spending are pretty much in balance, particularly for the lower-income consumer. Funnily enough, for the high-income consumer, their spending is outstripping their wage growth, but they do have the kind of benefit of the wealth effects. So we aren't really seeing a consumer that's wildly out of balance. And then when you look at our savings and deposits data, there's been some drawdown from those tax refunds, but it's no different really to that we saw last year or previous years. So we're not seeing anything on the deposit side or even on things like card metrics, like the share of people making only the minimum payment on their balance. That looks fairly benign too. So I think the consumer health picture is pretty benign, really.
I know you did some research as well about the gig economy. Do you see more individuals on the lower end of the spectrum having to work multiple jobs to make ends meet?
Yeah, we do see a bit of that, actually. It's quite interesting, that gig data. So when you look at the share of people who have a regular paycheck coming in but also work gig, we see that share rising up about 0.5% year over year. So not dramatic increases, but some increases. And I think you're right. I mean, that could be for a host of reasons, including, the kind of the ease of doing that with technology. But I think one reason could also be that people at the margin need to supplement their core pay, because some people clearly are feeling under pressure from gas prices, utility bills, etc.
David, that brings me to my next point. I wanted to get some information from you. How much do you see individuals having to put aside more money for everyday costs like gasoline and electricity?
So in our data, interestingly, spending on gasoline actually declined a little bit in July. And that's really because of this, as you were saying earlier in the show, this constant whipsawing in the oil price and the knock-on to gasoline prices is very volatile, so it adds quite a lot of uncertainty for consumers. And where we are now, of course, is that they've been creeping back up again. You have to keep that, I think, in perspective. I mean, the average household spends maybe a couple of $100 at most on gasoline. So they spend far more on other discretionary items. The tax refunds were far more than that. So it's not to say it doesn't matter for some consumers, but I do think gas is an easy thing to focus on. There's a big sticker price on the gas station. Everybody knows when it goes up. But as a percentage of budgets, it's not that great.
David, is this survey typically a leading indicator or a lagging indicator?
Well, I'd like to think of our card data as pretty contemporaneous in that we're looking at the card spending data of upwards of 70 million consumer and small business accounts. So it's kind of like a real-time pulse, really. Now, the financial health metrics, I think they may speak to the future somewhat. So if you do get a shock, you do get a slowdown in the labour market, etc., how are consumers faced? How can they cope with that? And the financial health measures looking sound, I think, is encouraging.
David Tinsley of the Bank of America Institute, thank you so much for being with us. As always, on the survey, some bright spots really standing out to me, the idea that you saw the fastest pace of wage growth at the lower end of the income sphere going back to March of 2023.
And the K is closing. Those are the words David used. I mean, that is a massive bright spot. At the same time, there are individuals that are having to actually pick up extra gig work just to make ends meet. So there's, you know, some positive indicators here, but also some notable issues on the sideline.
Quality of life issues in particular. Yeah. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Mark Zuckerberg published a 6,500-word essay on AI, emphasizing his belief that wider access to models is key to the industry's future. Zuckerberg says he supports open source AI and challenges the notion that concentration of power in a few companies can ensure safety. Apple is still planning to offer an all-glass iPhone for the device's 20th anniversary. Sources telling us here at Bloomberg the report by a Jefferies analyst that the model was cancelled is untrue. Apple expects to launch iPhone Pro models next year. President Donald Trump issuing an executive order recommending the measles, mumps and rubella vaccine be broken into 3 separate shots. Trump connecting the issue of vaccines to rising rates of autism. The American Academy of Pediatrics says the order will likely result in at-risk kids missing or delaying useful vaccinations. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, fading intervention highs.
There's an awful lot going on in Japan. The market needs more reassurances on supply of JGBs, along with a faster pace of interest rate hikes.
Mark McCormick of BMO joins next. This is Bloomberg Surveillance. Good morning.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Still sticking with a positive tone after some constructive headlines coming up from the Middle East, although fading from earlier highs. Right now, in the equity space, you can see the S&P futures still up about 0.2%. The NASDAQ futures gaining about twice that, up 0.3%. And the Russell 2000 even getting in on that, up 0.2%. Really a question of what some of the softening in rhetoric, at least for the past 30 minutes, means for the bond space, for the Federal Reserve. Right now, 2s, 10s, and 30s. You are seeing a bit of a decline at the front of the yield curve, 4.23%. Yields a little bit lower. 10-year yields unchanged after earlier being higher by a basis point, almost 2 basis points, 4.7%. And that 30-year still not catching a break, 5.26% ahead of that $25 billion auction of 30-year notes coming on Thursday. In the oil space, this has been sort of all over the place this morning. At first, it was up for a 4th consecutive day. Now it's essentially unchanged after headlines that Anne-Marie thinks are just noise, given the fact that we hear this all the time. At the same time, it does give you a sense that people are susceptible to what we hear out of the Middle East.
Oh, absolutely. And this is coming from the Pakistanis, which have been key mediators. But at the same time, how many times have we heard this? And also, it isn't something emphatic from the White House or Tehran. It's the Pakistani defense minister basically saying things are shaping up in favor of peace. Okay, that doesn't sound so concrete to me.
Well, and that's the reason why we haven't seen that huge of a move there. At the same time, watch this space with respect to the dollar versus the yen. Last week, we saw the U.S. and Japan get together for the first bilateral intervention in the currency going back decades. Now we're looking at a retracement from some of the strength in the Japanese yen last week, coming back, taking out more than half of that, raising a question about whether there could be further intervention. Under surveillance this morning, fading intervention highs.
There's an awful lot going on in Japan. The market needs more reassurances on supply of JGBs, along with a faster pace of interest rate hikes. There are noises. We have had a number of reassurances from the government about supply of JGBs, but the market isn't hearing that.
Here's the latest. Traders preparing for the possibility of another intervention for the Japanese yen, the currency wiping out nearly half of the gains delivered by joint action from the U.S. and Japan nearly 2 weeks ago. Mark McCormack of BMO writing, while markets see it as a joint effort to stem the Japanese yen rout, it is more likely about U.S. rates and liquidity. A durable recovery still looks some way off. Mark joins us now for more. Happy Mountain Day. Mark, thank you for being with us. I do want to know how much you do expect further intervention by the U.S. with Japan as a result of what's going on in the 30-year yield.
I think this is largely a one-off. I think what they're trying to do is they can't change the market trends. We know the fundamentals are very bearish for Japan, but they're bearish because the Japanese are selling yen. The GPIF, the pension funds, even the corporates. The corporates are building up large profit margins and they're exporting that capital out of Japan, most likely back into the US AI tech cycle. So I think a big part of this is the Japanese want to stem the weakness in the yen, but at the same time, the BOJ is dragging its feet and capital flows and capital allocation set by the GPIF and the pension funds just keep reinforcing the weakness in the yen. So I think on the US side, what they're trying to do is keep yields from going up. They don't want the 10-year yield, the 20-year, 30-year yield going up. So you could see they even nudge the use of FEMA, which is essentially say, let's use treasuries as collateral. We'll give you a repo. Here's your dollars. Go buy your yen. So essentially, these transactions are happening without treasuries or without reserves moving, which clearly indicates we don't want to see yields moving higher.
Which means that it might not necessarily be that much of a difference for them if the yen actually loses some of the strength from last week, because it's actually irrelevant as long as Japan isn't going to be selling treasuries. Why didn't the meeting minutes from the Bank of Japan's last meeting make any difference, even though they indicated they potentially would be ready to hike rates sooner?
It doesn't really matter if they hike rates sooner. They got to go way faster. They also have to point out to the degree that where their neutral rate is, which is probably closer to 2.5% to 3%, they haven't even made these suggestions yet. So the fact that we might nudge it a little bit faster, they're a couple years already behind. So they can't be going twice a year. They probably need to be going 4 times a year. So I think the markets kind of recognize the fact that like the BOJ is kind of using rhetoric, it's using language, it's trying to get ahead of the curve in terms of maybe saying that it's going to do the right things, but it's not doing any of it. So it's like they've got to go hard, they've got to go fast if they really want to change the trajectory in the end.
If they aren't willing to do that, which so far they haven't seemed willing to do that, then what's to stop them from, even though they didn't sell treasuries to support their currency last week, doing that again in the future if there isn't an unlimited pool of money coming from the Fed's facility to help repo some of these purchases in the meantime?
Well, what they could do, again, you could see it, what came in the headlines before this is they're trying to nudge the pension funds. They talk about repatriation, the amount of money that's been pushed abroad. The problem is the GPIF does a coordination. They discuss things every 5 years, and they come up with their policy and their benchmark weights for asset allocation. They just did this in 2025. So they are not going to change their asset allocation model. And we understand, like, the way that pension funds work is it's governance. It's for the people on the other side of the pension fund. It's not there for a political means related to the currency. So at the end of the day, they've already done this review. The next review is in 2030. So maybe they've set, it's a total portfolio type approach. They can change their bands a little bit. They could trade a little bit. That allows more yen to come onshore. But the capital allocations they've set are already bearish for the yen. So there's a lot of, the corporates need to change what they do with their profits. The pension funds need to do what they change with their capital flows. And the BOJ needs to change its policy. And none of those things are moving fast enough in the right direction. So this is...
So basically, we see a yen continuously to be weak until 2030?
I think over the next, at least the next year, I would not be surprised. Again, we pushed back and the 160 was the level. We said we've been targeting 165. We got up to 164. I would argue there's even sentiment in Tokyo. We've met clients there a couple weeks ago when we were in Asia. There's discussions around 170. And I think what was very clear is the market was really nervous that the Fed was going to hike in July. The BOJ was going to do nothing. We're going to burn through 165. Markets like big round numbers. So once we go through 165, everyone's like, oh, 170 is coming. So I think the intervention really kind of cascaded around that because I feel like locally, the sentiment is like, yeah, I think we can get to 170. And I think, yeah, that's where could go.
What's your reaction or take, given the fact that the United States did this by using the euros?
It tells you a lot that this is not about FX. It's not, they don't have a dollar policy. I actually think if you keep reading the tea leaves, the memorandum of understanding with Iran, there was a point in there that it's like, you're going to use dollars. If you think about stable coins, again, it's more introduction of US dollars, FEMA, dollar liquidity. So I think the part of it is, I think the preference is to have a stronger dollar and to have the dollar work within the system because all financial assets are still connected to the dollar. So I think the implicit thing is they want to keep the dollar, they want to keep that store of value, but at the same time, they just want to limit how much treasuries could sell off because mortgage rates are going up, housing is turning over. These things are starting to bite.
We have seen the dollar lose some over the past, say, a year, just based on some of the strength that you're seeing elsewhere and concerns about fiscal policy, among other issues in the United States. To what degree do you expect the dollar to strengthen further in a sort of broad-based way versus sort of stay around here because of some of these other crosswinds?
I think the point is we've got the turning point right. At BMO, we were very bullish the dollar to start the year when everyone else was bearish. I heard the same stories I heard last year, which was pension funds are going to diversify, hedging ratios are going to move. The uncertainty that Trump creates is bad for the dollar. I think markets are missing the context. The regime matters. We're in a high inflation regime, flat yield curves. Global growth is still, there's a lot of dispersion. And the U.S. is still the only game in town. All of our macroeconomic signals are very bullish on the U.S. economy relative to other countries. So in that light, I think the dollar's still got a couple more months. Like what we had anticipated was Q1, Q2, Q3 dollar strength. Euro hitting about 112, 111, dollar yen 165. But a lot on the edges of that, the carry trade. So Latin America does well up until the elections. So yeah, I think the dollar's still got some room to go.
Mark McCormick, great to see you. Thank you so much for being with us. Mark McCormick of BMO, and Emery is very excited that potentially you could get more dollar strength and more euro weakness ahead of any potential vacation plans.
And also maybe a weaker Japanese yen until 2030. Because, then that's years of potentially, going to see the cherry blossoms, et cetera, having sushi and all the likes.
Yeah, well, it is an issue, though, that somehow the fiscal overhang in Japan is that much more of a serious issue than in the United States, and it clearly is because of the debt-to-GDP ratio. But again, it goes to the issue that if they can't solve that, they can't really do window dressing with some of this intervention.
It's not going to work. Even it doesn't matter how many times you tap this intervention. It's not going to work until you fix the crux of the problem. And when you hear from Mark, it doesn't sound like that's going to happen anytime soon. This is going to be years in the making.
And that's why Scott Besson is focused on mitigating any potential treasury sales that come along with that mitigation plan. Coming up in the next hour, Charles Schwab Asset Management CEO Omar Aguilar, Isabel Friedheim of Athena Capital, Sophia Kearney-Letterman of FHN Financial, and Kristen Bitterly of Citigroup. From New York, this is Bloomberg Surveillance. Good morning.
We actually just expanded the set of customers that have access to Mythos. I think it's about an additional 150 organizations around the world in 15 different countries. And really our approach to Mythos has always been, there's a time component to it. So we released it initially to cyber defenders. So some nonprofit groups, some governments, some organizations that are critical infrastructure for protecting against potential cyber attacks. And just like in any kind of security vulnerability situation, you have to give the defenders a head start. The technology, AI models are going to keep advancing. If it's not us, one day releasing a Mythos level model, another AI company will. But it actually matters who you give access to first and how long they have to patch some of the vulnerabilities that Mythos was capable of revealing. And so we're taking this very cautious, very tiered approach, which I know in some ways is frustrating because people really want access to the model. But I think, again, as a company that's founded on these principles of being ethical, being responsible, we felt it was important to give access to the organizations that were capable of really helping us defend against some of these risks, and then slowly widening that circle to more and more critical infrastructure until eventually we feel it's safe to release it more widely.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
News whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Levering in and going full bore on the bubble is often an imprudent move. I think you want to be careful with leverage here.
We just have these extreme moves in fundamentals, extreme moves in stocks, and that's creating volatility.
There is definitely a question on the sustainability. We think the market ends higher at the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Stocks rising as we look ahead to CPI tomorrow and a slew of Treasury and corporate debt sales. The AI financing cycle only accelerating with companies from NVIDIA to Intel finding different ways to lock in new capital. And meanwhile, inflation worry is still regaining steam with oil prices in focus. They had been higher for a fourth straight day, then lower on some news coming from Pakistan about how talks actually do seem to be progressing with the U.S. and Iran.
Pakistan is a key mediator. I guess I just have some concern because we've seen headlines like this tons of times, and then none of them has ever actually stuck. So Pakistan is saying that the defense minister is saying that the signals in the, quote, last 2-3 days are that we are close to some sort of arrangement. And then when asked about an update in the U.S.-Iran deal, he had said that things are shaping up in favor of peace. So my question is, when it comes to some sort of arrangement, is this an arrangement to reopen the Strait of Hormuz, which you know Iran is talking to Oman about, or is this an arrangement of potentially getting the U.S. negotiators back at the table with the Iranians? I just have a ton of questions about this, but you can see how vulnerable oil is to any geopolitical risk premium based off of any of these headlines coming out of the Middle East.
And you have to imagine, and just to be fair, and it's understandable why somebody would want to shrug this off and say, okay, we've heard this before, what else is new? And nonetheless, the stakes are that much higher given the fact that the Strategic Petroleum Reserve levels are at the lowest going back some 40 years, and a time when people are worried about inflationary pressures coming from gas ahead of CPI tomorrow, ahead of PPI on Thursday. This clearly is at the forefront, even if it is exhausting to follow these headlines.
Right. And as we've talked about a lot on this program, it's not just the Strait of Hormuz. It's what's going on in terms of the Houthis going after refineries in Saudi Arabia. It's what's going on in Russia in terms of the war with Ukraine, in the Caspian Sea, in the Black Sea. Also, China has put a lid on all of these prices. What happens if China decides to change course and starts importing more? You know, recently The Economist had a piece that said it is no longer OPEC. China is the new OPEC.
And despite all of this turmoil, you are seeing the capital markets wide open for AI-related sales. We saw the arrangement that was reported yesterday with NVIDIA and 6 Wall Street firms about potentially having a $500 billion financing facility. You had Intel selling shares this morning. IBM and Together AI are signing a multi-year pact. You heard about NVIDIA and Anthropic selling new deals for compute. All of this coming at a time where equities are continuing to rise. S&P futures futures higher by 0.2%. NASDAQ up 0.3%, so still building on gains, potentially climbing back to all-time highs today. You are seeing in the bond space some fluctuations throughout the morning tied to oil prices, 2s, 10s, and 30s. 2s and 10s seeing a bid on the heels of more constructive language coming out of the Middle East. 10-year 4.7%, that 2-year pinned around 4.23%. The 30-year, though, having a harder time finding buyers. 5.25%, possibly more tied to the capital markets side. And in oil, you are seeing earlier today, oil prices had been higher, then they're lower. Now they don't know what to do with Brent and WTI essentially fluctuating between gains and losses. Coming up this hour, Schwab Asset Management CEO Omar Aguilar, as markets face a massive influx of tech funding. Sophia Kearney-Letterman of FHN Financial on the upside risks to inflation, and Kristen Bitterly of Citi on the opportunities unlocked by soaring AI demand. We begin this hour with stocks inflecting higher ahead of fresh tech earnings and economic data. Omar Aguilar of Schwab writing, despite near-term volatility, the outlook for equities remains constructive. We expect some valuation-based recalibration of leadership. Omar joins us now for more. Omar, always wonderful to catch up with you. Thank you for being with us. I want to start on this incredible glut of financing that needs to get done. We see the announcements coming day after day. We're already at a record pace, far outstripping what we saw with respect to 2020 and the pandemic era financing. At what point do you expect to see some more indigestion?
Yes, good morning. It's an interesting, concept of just how this ecosystem continues to evolve within respect to AI. I think the results so far, suggest that this financing and these investment and the CapEx cycle will continue. We have seen, the largest CapEx cycle we have seen in history, especially when it comes down to the AI-related topics. So far in the second quarter, the earnings suggest that a lot of the EPS growth, it is related to AI. So somehow, the investors are starting to see a little bit of their return on their investments. And therefore, for companies, it is natural to continue to expand on that CapEx cycle. Now, to your point, I think, the combination of private credit and just regular public, it's sort of at some point is going to run its course, and at some point is going to have. So far, it hasn't been that big of a problem, but I think at some point we're going to see some big, losers and some winners, and that's where we're going to see a little bit more differentiation. We're still early because we still need to figure out where these will go and how these return on investments will actually play out down the road.
How much are some of the ambitions starting to be constrained by what we're seeing at the long end of the yield curve? And we were just talking about how we're just basis points or less than that away from the highest levels in the 30-year going back to 2007 this morning.
Yeah, well, we've seen the effects of that long term, tend to be driven either by, economic growth, tend to be the volatility surrounded by potential, challenges of what the debt may be, and also inflation. But in this particular case, it sounds that inflation is less of an issue for that long term of the curve, and it's really more, volatility surrounding, how much of the growth will basically come from these either investments or continuation of economic growth. And I think that, uncertainty about how much is economic growth relative to how much is just term premium, it is what is keeping that sort of long end of the curve a little more volatile.
How important then is Thursday going to be for you in terms of looking at the appetite there is for 30-year bonds?
Well, the big part of the CPI reports and the PPI reports and inflation reports is really going to be more about, the postures that we will have related to what the Fed reaction might be. So far, the bond market seems to be helping the Fed with their decisions. We saw the labor market giving them enough breathing room last week so that they can actually take a little more time to make the next decisions. But as we see the changes and as we're going to see the impact on that long term of the curve, we'll probably determine what the potential decisions may be in September and even in December. So far, it's 50-50 for what it may do in September, still towards biased more hawkish towards December. But I think a lot of the results of the CPI and PPI numbers will be just more, trying to tilt, the balance towards whether or not the Fed will make a move, before the end of the year.
So you think potentially this doesn't happen until before the end of the year? But we did hear from the Cleveland Fed president yesterday, Beth Hammack, who, she dissented. She says, I think now is the time to act. She wants to get ahead of it. She compared it to a car coming up on a stop sign, a slow stop instead of slamming on the brakes. Do you see potentially the Fed or Kevin Warsh being forced potentially, because there's going to be more individuals who think like her?
Yeah, I think that obviously the dissent is a new thing for the Fed, and these new Fed, it clearly is going to navigate a lot of the discussions that may happen with the central banks. But still, their mandates are very clear, and I think the data needs to support the decision process. And the Fed has a long track record of being very objective and being clear about how these will go. And I think for us at the moment, we still believe that the data may not support an immediate rate hike, in September. The odds for potentially doing it in December are still, up in the air. But, when you look at the labor market, when you look at even just the trajectory of inflation and the drivers of inflation may not necessarily justify, a rate hike at this moment that could potentially, create more problems than solve them.
Could you foresee, Omar, a broadening out that allows the rest of the economy, aside from some of the AI drivers, to continue gaining and actually to outperform, but the overall index to kind of remain range-bound or kind of not gain all that much from here?
Well, I think this year has been very healthy to see that it's not just the Max 7 and the hyperscalers that are driving the market, but we're starting to just, go back to the earlier part of the conversation that, a lot of the economy and a lot of the companies are starting this AI adoption cycle. And this AI adoption cycle will translate into many things. Productivity gains will potentially translate into expansion of margins. When you see the potential lower costs as they adopt more AI tools for their efficiencies, that could, still at the early innings. And we still potentially see this expansion of their multiples just as a result of just the AI adoption. So we do see, the possibility, going into the rest of the year and into next year, that this market will continue to broaden. If you actually think about it, even just when the periods where the AI related stocks were under pressure, the markets still were doing well, which means, there is a significant level of just contribution from other parts of the market, not just A-related, companies.
Omar, you're a fabulous person to talk to for a lot of reasons. Your deep insight into markets, also the cross-section between investors and individual investors and markets. And I would love your take on just what the sentiment is and how much it's shifted around the broadening out of AI and the use of it. Initially, people were worried about the labor market. Has that changed over time and seeing it more as a positive that's driving efficiency gains throughout the broader economy?
Well, we see it in twofold. On one hand, we see it consumer-wise. I think what we see is the general consumption of AI-related products continues to grow. If you think about just, whether it's school systems, whether it's companies, whether it's, just in general, the general consumption of AI-related activities continues to grow, and it's going to be a big driver of this. It's almost, way back when people started to use internet and, slowly we're building up different things. I think the AI-related consumption, continues to be a driver and will continue to be a driver. On the other hand, we see it on the investment side. Investors, particularly Schwab investors, became incredibly bullish just going from the first quarter into the second quarter. We normally track the level of attractiveness. We ask questions about, what kind of exposure they want to have to equities, and they moved from 28% to over almost 47% from the first quarter to the second quarter. What that means is that investors became incredibly excited about the possibility of these AI-related market to continue going into the second half of the year. There's still obviously reservation. There's concerns about inflation. There's concerns about the war. But, overall, the sentiment continues to be incredibly bullish.
Omar Aguilar, thank you so much for being with us, the Schwab Asset Management Chief Executive Officer. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Oil erasing earlier gains on reports from Pakistan that the U.S. and Iran are, quote, close to some arrangement. The report coming after President Donald Trump laid out new terms for Iran, demanding reparations from Iran over past attacks, as well as compensation to the families of protesters who've been killed over the years. On holding tumbling in the pre-market, the Swiss shoemaker posting disappointing second quarter sales and giving a cautious outlook. The company holding off on discounting older shoe models ahead of product updates. A New York State court judge issuing a restraining order on New York City Mamdani's pied-à-terre tax. The suing homeowners saying the city caused, quote, mass confusion with its controversial identification of thousands of properties that it says are potentially subject to the tax on second homes. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, the morning calls, plus Isabel Friedheim of Athena Capital on big tech's massive capital raises and why the real AI infrastructure play lies still ahead. That's next. This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Conditions for issuance within the AI data center build-out is wide open, but it's also coming at incrementally wider spreads. So there's both the availability of capital component and also the cost of capital component. Investors actually are demanding a little bit more spread for that investment.
That was Kelsey Barrow of JP Morgan Asset Management, ahead of what promises to be an ongoing busy slate of bond and equity offerings. This morning, you are seeing bonds and equities gain, at least on the front of the yield curve. You are seeing a 0.2% gain in the S&P. On the yield space, you are seeing almost a 2 basis point decline for the 10-year yield, 4.69%, with crude higher by 0.2%. Time now for the morning calls. First up, Morgan Stanley maintaining its overweight rating on SpaceX, saying the planned acquisition of Cursor could become a major part of its upside case. Those shares lower by about 0.5% this morning. Next up, Phillips Securities downgrading Airbnb to reduce, saying the company's businesses beyond rentals are unlikely to be material over the next 5 years. Those shares lower by almost 2% in pre-market trading. And finally, Bank of America downgrading AppLovin to neutral, citing growing risks to its revenue growth. Those shares down also by about 2% in pre-market trading. Wall Street is going all in on the AI investment boom. NVIDIA lining up a $500 billion financing coalition as Intel pulls in $20 billion through an upsized equity sale. Bloomberg's Ed Ludlow joins us now. Ed, what do we know about this $500 billion financing plan struck between NVIDIA and 6 Wall Street behemoths?
Yeah, the pitch is that it takes NVIDIA compute and turns it into an investable infrastructure asset class of its own, just like Wall Street would finance the purchase of airplanes or other big capital projects that relate to very large infrastructure. The detail that Bloomberg's reporting and what sources tell us is that it will work like this. SPVs borrow tens of billions of dollars. The NVIDIA compute itself is the collateral, and then it's leased to an NVIDIA customer. But the thing that NVIDIA is really emphasizing, as well as Jensen Huang, the CEO, is that this is third-party capital, right? That the $500 billion comes from the outside, and so there's a degree of separation from NVIDIA directly financing its own customers, which brings us back to the sort of circular financing debate. But you know, the key message that kind of emerged last night was no one said no to this on Wall Street, right? Everyone wanted to participate.
Ed Ludlow of Bloomberg, thank you so much for being with us. And ultimately, that has been the story, that nobody wants to miss out on an opportunity. Isabel Friedheim of Athena Capital, seeing opportunities ahead in the AI build-out. She writes, as infrastructure names come to market over the next few years, they will offer investors cleaner, earlier exposure to AI's growth phase instead of late entry into already priced narratives. Isabel joins us now for more. Isabel, thank you so much for being with us. Let's start there, this idea that some people might be getting into the wrong areas after a lot of the gains have already been had. What are those areas that you think are kind of already fully priced?
Hi, thank you. So it is essentially the model layer. So the model layer has been built and funded and entirely repriced outside the public markets. So what reaches the public tape is essentially at this point a liquidity event, not a capital raise. So the opportunity left isn't so much the models and the quality of the technology, it's the companies that get paid deploying AI, whichever model wins.
At this point, you see, in other words, that public markets might not offer the same kind of advantage. But in private markets, there are questions about how much more risk is being taken on. Where in private markets do you see opportunities still remaining, even with everyone having their hand out?
There's a lot. So what is reaching the public markets is the tip of the iceberg. It's the LLM models. These technologies, again, have been built outside of the private markets, outside of the public markets. And now what is underneath is the entire foundation of the AI infrastructure. So it's power, cooling, electricity, inference, compression. This is where the value is now, to not make AI better, but how to make AI cheaper, accessible, functional, and profitable.
When it comes to this space, everyone questions the circularity of it, Isabel. How concerned are you about that aspect of it?
The circularity of the technology?
No, of the financing, like NVIDIA is investing in their customers.
Yeah, so now the financing is moving away from pure equity financing and into debt financing. So a lot of the financing for the equity was previously funded by companies from their profits, right? So that includes SpaceX. For the first couple of years, they funded AI development from their internal profits. Then Google, Meta, all of this was funded before fundraisers came into the picture. Now, the AI infrastructure is what's currently being funded, and that's being funded by debt, which is really interesting because, of course, it's infrastructure. It's always funded by debt. But what's particularly interesting is that when you look at the big picture, debt is often a tool to tell the truth long term because there's no hope or hype. It's you get repaid or not. And the debt is now really anchored in the pure infrastructure layer. So it's no longer, it's not in the chips, right? Like this is not where you find the big landers. This is not where the opportunity is at this point. And the run rate for chips is actually, the half-life for chips is somewhat short. It's sort of 5 years, whereas the AI infrastructure and electrical grid is 10 plus years.
When it comes to things like data centers, et cetera, how are you viewing the risk factors when it comes to this build out in the United States when we've seen a lot more of a political backlash when it comes to things like AI and data centers and just frankly, Americans not wanting them on their block or in their backyard?
Yeah, well, that's one of many risk factors. But if you think about it, a good analogy would be fiber. So we laid far more fiber than anyone could use. The technology was very real, and the demand did arrive, but it arrived late, and it was financed with debt. So the builders eventually went bankrupt, and someone else bought the network for pennies on the dollar and built the modern internet on it. So the asset wasn't necessarily a mistake, but the timing and the financing were. So that's what I see as one of the biggest risks at this point.
Do you have a top pick right now, Isabel?
Again, we do like the infrastructure layer compression. We just invested in a compression company that shrinks large models by 80 to 90% with very minimal accuracy loss. Same intelligence, it really a fraction of the hardware and the power. So while everyone else is monetizing on the assumption that AI must be expensive, we are backing companies that prove that it doesn't have to be expensive and companies that are profitable.
Isabel Friedheim of Athena Capital, thank you so much for being with us this morning as we prepare for additional capital raises from AI-related companies. Just getting these headlines right now. So talk about the whipsaw that we're seeing in headlines out of the Middle East, that the U.S. has fired on a ship that was breaking the blockade of Iran. This coming from sources, again, this goes to the question of, we had been seeing Pakistani officials saying that there was some good rhetoric coming between the U.S. and Iran. Now, according to an official cited by the Wall Street Journal, that the U.S. fired on a Panama-flagged ship early this morning, Emery.
Yeah, so this this official is saying a U.S. military helicopter fired at the rudder of the ship after its crew ignored the warnings from the American personnel that are enforcing this blockade, and it sounds like that they were appearing to attempt a transfer of its crew to another vessel. What's interesting about all of this, and this is coming right now at this moment in time, is that basically within the last hour, the market has interpreted headlines as a direction towards peace, and now once again a direction towards more conflict in the region.
You could see WTI now up almost 1%. You could see this being being filtered into markets, diminishing some of the gains that we saw earlier as people reassess just how equal the idea of peace could be. Coming up in the next 30 minutes, Sophia Kearney-Liederman of FHN Financial saying inflation risks are to the upside ahead of CPI tomorrow. Some of these oil levels might not help with that. Plus, Yahira Anand with your morning movers. Swiss sneaker maker On falling after delivering a sales disappointment.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging, the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
The whipsaw nature of the headlines this morning is sort of indicative of the whipsaw year we've had when it comes to the Middle East. Earlier this morning, we saw that Pakistani officials were talking about a possible peace agreement between the U.S. and Iran. Then we got a headline talking about the U.S. ships in the region firing on a Panama flag ship that was breaking its blockade of Iran. You flip this through, and the stock gains remain, and they have taken hold. S&P futures still higher by 0.1%. NASDAQ futures higher by 0.3%. In the bond space, though, it has taken some of the heat potentially off, given the fact that people are looking more to the peace side than potentially the firing side, with yields lower across the curve. 2s, 10s, and 30s all lower by about a basis point. In the oil space, though, this is actually really interesting. Who listens to what? You are seeing oil prices essentially do nothing on the heels of conflicting messages, Anne-Marie, that we're getting this morning from both Pakistan and then this latest report from the Wall Street Journal.
What do you do with this? 45 minutes ago, things are shaping up in the favor of peace coming from Pakistan. And now we actually see the Wall Street Journal reporting that there's been more conflict and firing upon a ship because they were trying to go through the blockade and decided to, according to this official speaking to the Wall Street Journal, decided to not heed those warnings from the U.S. military. Well, it remains clear that this is just going to be incredibly messy, which is why when you look at surveys from CEOs, they're preparing for this to last through the year and next year.
And the reason why we've seen oil prices remain at a level that keeps pressure on inflation but isn't so high that it necessarily creates demand destruction. 1 hour away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. Supermicro reports after the bell today, and ahead of that, some optimism. We're seeing shares up 1.7% in the pre-market, and that optimism, of course, coming from the enormous amount of spending by the hyperscalers. In Supermicro, an AI server maker, is on the receiving end of some of that spending. Bloomberg Intelligence expects the company to beat on both the top and bottom lines, and that's because it already gave us an early look at bookings, saying that it booked more than $60 billion in new orders this quarter. Meanwhile, turning to the earnings we've gotten this morning, USA Rare Earths falling 4.3% in the pre-market after its quarterly loss widened. Remember, this is a company that received U.S. government backing up to $1.6 billion worth, so that support means a lot more scrutiny, especially when it does not deliver. And we end on another earnings story with On, the running company, shares plunging nearly 17% in the pre-market after the company slightly lowered its growth outlook. And the problem here is this tug of war between On and the retailers where it sells its shoes. The U.S. sneaker market is heavily promotioned right now, and On wants to maintain its premium reputation. So ahead of new product launches, it hasn't been sending out its new shoes, trying to avoid that discounting, but that just means less shoes in stores, and that weighed on sales this past quarter. Lisa.
Thank you so much, Yahaira. Meanwhile, Cleveland Fed President Beth Hammack
doubling down on last month's dissent, saying some number of rate hikes may be necessary to tame inflation. Bloomberg's Michael McKee has more. Hey, Mike.
Good morning. I think that some people on Wall Street maybe haven't internalized the argument that Hammock and Lori Logan of Dallas, Jeff Schmidt of Kansas City are making, that it's not just a question of looking through oil prices or tariffs. It's a question of underlying inflation that isn't going down. Even if we get a drop tomorrow to 3.4% annual rate in CPI, that's still a problem, which is why Hammock and others will be looking at the old friend, CPI Supercore. As you can see there, it has been coming down, but then it went back up again when the war started, and now, even though the last month it went down, it is still in the threes, and that's too high for them. They feel like there needs to be pressure on the economy, more pressure on the economy, to bring down rates. Now, does it mean we're going to see any kind of change in Fed funds futures tomorrow? I doubt it, because we've got a lot of inflation indicators still to go. On Thursday, we get PPI, then end of the month PCE, and then another PPI and another CPI before the next Fed meeting. So a lot of inflation data, and you won't get this one-off effect. It'll be a trend that they are looking at. Also, we have to point out that even if you're looking through oil and gasoline, prices are having an effect on consumer spending, and they may have an effect when we get to Thursday's, Friday rather, its release on retail sales. You can see the forecast for retail sales is very weak, but then when you take out autos and gas, it's a little bit higher for both June and July, and the control group was significantly higher in June. We'll see if that holds for July as well. Control is the part of retail sales that goes into GDP. So Americans have been spending still, even outside of what they're putting into their gas tank. The question is, does that continue now that during July we saw gas prices go up again?
Michael McKee, thank you so much. Love the chart. CPI, PPI, PCE, CPI, PPI. It's hard to get your mind around all of these acronyms. Sophia Kearney, Letterman, of FHN Financial, looking ahead to CPI data, writing, the big focus will be on whether June's broad-based decline was a one-off or not. There are still more upside risks to inflation than downside risks. This is the big debate. Sophia joins us now for more. Sophia, why do you see more upside risks to inflation than downside ones?
Well, thanks for having me this morning. I love that alphabet soup, CPI, PCE, PPI, PCE. You know, I think the big thing is what we've seen even this morning, right? The volatility on oil prices. We know what we're coming into with the July data, because we know where gas prices were, where oil prices were in July. On average, they were lower than they were in June. Not as much as June was in May, but we know we'll see a pullback. But now we're in August already, right? We've seen a lot of volatility. We've seen down, we've seen up. We're seeing a lot of movement this morning. And I think that that is the lingering risk, right? And the bigger risk is not just oil, but it's the longer we're in this sustained level of volatile higher prices, what's the risk to pass through to the core, right? And that's the big question on that June number. June was surprisingly good, right? Broad-based declines outside of just energy. So good that we're waiting to see, was that a one-month fluke?
At this point, we've seen bond yields move up, particularly on the long end of the yield curve, and yet a lot of people say that that's not exactly going to constrain either the spending coming from a lot of the hyperscalers or other AI-related companies, and it isn't curtailing consumer spending. So what exactly will higher rates do?
Yeah, I think that's a great question, right? And you saw Kevin Warsh even in the press conference suggest that the Fed didn't need to raise rates because of what we've seen on the long end of the yield curve. But you also haven't seen any pullback really in reaction to what that increase that we've seen, right? The 10-year, the 30-year, trending higher in the last couple of weeks. And so the question is, are rates restrictive? And I think that's really what the Fed is grappling with, right? You have some people like Beth Hammock that are really concerned about the inflation piece, and other people that are looking at what we're seeing in growth and going, things aren't that restrictive yet, but we are seeing some sort of moderation, right? You look at sort of lower income spend versus higher income spend. You look at the concentration of where growth is coming from, and it's really all in that AI. But I don't think you're seeing any pullback from what we've seen in the long end of the curve yet.
Well, to Lisa's point, though, you know, you have the likes of Beth Hammock saying that, you know, it might even be, or it's going to be, she doesn't want to give a specific number, but it's going to be more than one hike. But to Lisa's point, if it's not going to curtail the big spenders, isn't this just going to hurt the people that actually desperately need lower interest rates, not higher?
Completely. And I think that that's what's kind of struggle for the Fed, right? This question of, if we raise rates, will it really do what we need to have done? If we raise rates, will that see the short end come up? Yes. Who will that hurt most? To your point, consumers. Consumers are the one that are struggling the most right now, right? You have everyone sort of struggling with the cost of living issue and gas prices. But I think, will it impact what we've seen from the AI build-out? Not necessarily. And I think that's a little bit of what Warsh was kind of getting at, this idea that the market is sort of sorting itself out the way maybe the market should, and should the Fed necessarily interact on the front end of the curve?
What are you expecting this year from the Fed?
I think we see them on hold. I think September is sitting at roughly 50-50. When you look at market pricing right now, I think we have that slew of inflation data coming in. This will be the first piece that we get this week. And so, yes, it will be important, but they'll get another CPI, another PPI, another PCE, another employment report, right? And so all of those things will factor in. I think we're going to see a pretty benign report this week, which will be a good thing. And so we think the Fed is probably going to remain on hold in September. I think the really big question becomes, do we see oil prices go even higher? We've been in this volatile place, but if we can remain sort of where we are in this volatile place, we'll be okay. But the question is, do we see that continue to filter into the core? But our forecast is for the remainder of the year on hold, and a lot of that coming down to, again, this sort of two camps on the Fed, right, where you have some worried about the short-term inflation impacts and some worried or more focused on maybe the long-term impacts of things like AI that are actually going to bring inflation down in the longer term.
We started the show talking to Marvin Lowe about how the Fed should probably take a look at some of the AI spending, particularly on semiconductors and other component parts.
Chipflation.
And talk and consider tightening policy in order to constrain marginal borrowers from flooding the market and really bidding up some of these prices. Do you agree with that?
I do think that the short-term risks are inflationary, without a doubt, from what we're seeing, and the Fed might need to step in, right? I think if we see some of this sort of high level of borrowing impact supply and demand, right, and you're already seeing it again in that chipflation, if you see that again start to creep into the headlines, start to creep into core inflation, that really does become a risk. And again, I think we're seeing this really concentrated growth, really concentrated investment in AI, and there are supply and demand issues, right? We're seeing it right now. You look at, for example, hiring. One of the biggest gains was in construction workers for non-specialty contractors. A lot of that tied to AI build-out, right? So there is that risk that you start to see that imbalance. And so I do think it's good that you have Fed officials that are talking about this risk and that are weary that in the short run, they might have to be reactive. I don't think we're there yet, but I think it's very good that they're paying attention to that.
Sophia, great to see you. Thank you so much for being with us this morning. Sophia Kearney-Letterman of FHN Financial with us here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. Oil rising following a report of rising tensions in the Strait of Hormuz. The Wall Street Journal reporting the U.S. fired on a Panama-flagged ship early this morning. The attack coming shortly after a report from Pakistan that the U.S. and Iran were, quote, close to some arrangement. New details emerging about how President Donald Trump flew out of Turkey last month. The Washington Post reported Trump boarded Air Force One in Ankara, then moved into a catering container attached to the plane, which then ferried him to a smaller aircraft that flew him to Britain. McDonald's stepping up its drinks options. The fast food giant adding a new Red Bull Dragonberry Energizer to the menu starting next week. It will also add an option to add vanilla flavor and cold foam to Coca-Cola drinks at some locations. And that's your Bloomberg Brief. Lisa.
Thank you so much, Giovanni. Up next, setting up for the day ahead, plus Christian Bitterly of Citi, staying bullish on the AI theme. We'll be talking about all of those debt and equity sales coming up. This is Bloomberg Surveillance. Good morning.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There is a supply issue that is arising ultimately with all of this AI build-out. The demand for capital certainly are at levels that we haven't seen in quite some time. This isn't like prior investment cycles around technology. It's being embarked upon by companies that are incredibly cash flow positive, and that is somewhat sustainable.
And that was Marvin Lowe of State Street. Somewhat sustainable is another way of saying that everyone is selling and a lot of people keep on buying. Right now, when you take a look at markets, inflected upward to start the day. We are about 0.5% away from all-time highs in the S&P. Clawing back, some of that getting close to that up to 0.1%. Seeing the 10-year lower now by a basis point in the wake of fluctuating crude prices and expectations for CPI tomorrow, 4.69%. Crude up 0.4%, counting down to the opening bell. Here's a trading diary for the week ahead. After the closing bell, earnings from CoreWeave and Supermicro on Wednesday. We've got CPI, the main data point, plus PPI data on Thursday. Another round of jobless claims and Fed speak from Beth Hammock of the Cleveland Fed, who's made a lot of waves over the past couple of days, as well as Tom Barkin of the Richmond Fed. Friday, retail sales and the University of Michigan sentiment survey. Right now, stocks climbing into the opening bell with AI demand front and center. Kristen Bitterly of Citi writing, strong earnings delivery, accelerating cloud growth, and sustained AI demand reinforce our overweight to U.S. large cap equities and preference for AI-related themes. Kristen joins us now for more. Kristen, great to see you.
Good to see you too. Thank you.
So I want to start on at what point some of the incredible bond and stock issuance starts to get you worried, considering that we're now talking about a $500 billion facility for NVIDIA with 6 different banks.
I know, and I think when you look at like the original source of this investment, it was all being self-funded. It was free cash flow generation, and then we're moving into debt capital markets. I think you do have to ground yourself, though, in the earnings story. And this is why we're very comfortable where we're at, is if you look at the earnings story, particularly within the U.S. market, we have year-over-year earnings growth is 46% currently estimated. We have 9 out of 11 sectors that are delivering double-digit earnings growth right now. And so not only are you seeing it with the AI players, but you're seeing this broadening out that has real legs. So I think we have to stay grounded in what we know to be true. We have to stay grounded in the fundamentals. And even when we look at the interest rate dialogue around maybe rates are higher for longer, you can see that the market can withstand it, and certainly these companies can as well.
You're talking about earnings and the acceleration there. Mike Wilson was pointing out that the Russell 3000 saw the strongest earnings per share growth going back to 2021. You're seeing this pretty much across the board.
Yeah, outside of any recessionary kind of recovery period.
Correct.
Exactly.
Which is sort of unprecedented outside of any kind of recovery period. I just wonder how much of this is peak acceleration, right? I mean, is this, if stocks are a forward-looking mechanism, how much of this can get repeated considering the interest expense going forward, considering that some of the immediate gains from AI have already been had?
So I think the other thing that we have to look at is the fact that when we say we're investing in AI, it's not just the hyperscalers or the semis. You're actually looking at the entire ecosystem. And so if we believe that this is really an 8 to 10 year, maybe even 12-year kind of build out in time horizon, we're only in year 3, really, of this. And so it's very early innings. So obviously from that perspective, there's going to be different pockets in different sectors that are outperforming or underperforming. But if you look at it in the entirety, that you're looking at resources, you're looking at power, you're looking at the infrastructure build out, I think that's where there continue to be opportunities. So you want to be diversified and not concentrated in one pocket of it, but we're still early innings.
We hear that a lot, that we're in early innings. At the same time, last week, there was a big debate about Sell America. Should that come back into that we saw last year? Should that come back into the fore for a lot of investors? You're not buying that, are you?
We are not. So when you look at Sell America, I think was really born out of, obviously, tariffs, very politically motivated. So good reason in terms of diversifying and diversification on a global basis. But I think when you're looking at like, where is the innovation coming from? Where are we seeing this level of earnings growth? It is an exclusive U.S. large cap story right now. And so if we continue to drive the innovation, we continue to drive the earnings growth, you need to be within the U.S. market, which is why we're comfortable with that overweight.
So how do you hedge?
Well, a couple of ways. I would say one, volatility is relatively muted right now. So when we look at the level of the VIX, if you are someone who is worried about some short-term impact, you can certainly go to the options market and use different strategies to just buy some downside protection and get through if there is a big catalyst event that you're concerned about. I would also say within our portfolios, we have 2 kind of key positions. One is gold. We still use gold as a ballast within our portfolios. You saw the central banks coming back and buying. It's not one of those things where we're forecasting out that this is going to be a bull trade. It's more as what is a diversifier in the portfolio. And then the other thing, and you guys have been talking about this all morning in terms of fixed income and looking at, really looking at the different duration, we're around like 5.1 in our duration in our fixed income portfolio. So we are in the camp where because of volatility on inflation and some of that pressure, you don't want to really be out 10 years and beyond.
Well, this is the constraining potential factor for a lot of the ambitions. And at what point do you see the yield up, the move up in yields as being a constraining factor overall for the equity strength and frankly optimism that you feel?
I think on the debt side, you have to look at the interest coverage ratios. And looking right now where rates are today, those interest coverage ratios, there is plenty of liquidity and it's a de minimis amount. And so you have to keep an eye on that as you actually kind of like look as they issue more debt. Does all of a sudden, if rates continue to rise, does that become a more meaningful percentage? But right now, it's actually very, in my mind, it's relatively muted.
The idea of inflation, and Anne-Marie asked a good question, which is how do you hedge? And my immediate question is, what are you hedging against? Is it a downturn in growth or is it an upswing in inflation?
I think it's upswing in inflation is probably the bigger point of risk, hence the
gold.
Hence gold, hence our duration in our fixed income portfolios.
Well, and at the same time, a lot of analysts, and I'm thinking of your own at Citigroup, Andrew Hollenhorst, talking about the potential for the Fed to cut a couple of times and how actually core inflation is moving lower because of a lot of factors. I just wonder where inflation is coming from and whether it matters where it's coming from.
So I think running money and actually putting capital to work in terms of portfolios, you almost have to say, like, what are the risks that I'm hedging against? And so for us, it's kind of entrenched inflation is what we want to be prepared for, hence the positioning in our portfolios. I think, look, like tomorrow, you guys have been talking about this all morning, there's so many data points between now and the next Fed meeting that is tomorrow going to be a big event? If we see a little bit of cooling or continued cooling in inflation, could that be a net, I guess, neutral right? In terms of, I think it would be a very low probability we would get a cut, but is the Fed gonna hold? Actually, your previous guest was saying this, probably it's a hold when we look at the data and some deterioration in the labor market, but if inflation remains relatively muted, I think that puts them on a hold, not a cut trajectory.
Are your clients starting to focus on the midterm elections?
They are. But
wow. Well, I know. Well, I'm wondering. I hear about it more.
I was told not to talk about it.
No,
until
not by
when?
me.
I was told by Jonathan Fair. But,
we can talk about anything, but what I will say, not when it comes to their portfolio decisions. So I think like the one delineating factor is it a topic of conversation? Of course, and you look at some of the activity that we've seen over the past couple of weeks. But I think more than anything else, is it driving any type of rebalancing or portfolio decisions? Absolutely not. So again, it goes back to politics and how you're voting. Like we always say, like vote with your ballot, not with your portfolio. Right. And so I think like all of the themes that we just mentioned still remain very true.
But there is going to be an issue in the midterm elections when it comes to AI. We're seeing it in New York. There's a moratorium in terms of the AI build out. And that is, and we hear it from guests all the time in this program, that's not just a Democratic issue, that's a Republican issue. You're seeing this in red and blue states. Do you think at some point that's going to impact your decisions on the AI trade?
At this moment, no. I think, again, going back to where we see the flows, the investment, obviously you're seeing a lot of the large tech companies starting to actually invest locally in communities as well. So I think it's going to be a headline, but when it comes to actually detracting from the build out and the economic impact of that, I don't see that as a primary risk.
Anyone moving away from pied-à-terres in New York City? You don't have to answer that question.
Geographic diversity of where you hold your capital is a theme that started probably when we were talking about tariffs and kind of the sell US. But what's interesting there is like a lot of that geographic diversity is coming into the US. So in terms of like offshore, so absolutely in terms of where you hold your assets is just as important as how you're invested.
Kristen Bitterly, thank you so much for being with us this morning. Kristen Bitterly of Citigroup here as we chart towards CPI tomorrow, PPI on Thursday, CoreWeave and Supermicro after the bell, and a whole glut of bond and equity sales and deals that have come out tied to the AI build out. It seems to just be accelerating, not decelerating.
Yeah, the week is becoming a lot more interesting. Tomorrow will be anchored by CPI. That'll really set the tone. And also, I'm actually interested in the 30-year bond auction on Thursday. I don't say this a lot, but it actually is really interesting right now, given where the 30-year yields are trading.
Yeah, $25 billion of 30-year notes being sold on Thursday, with the potential that going forward, the Treasury Department might opt to actually shrink the size of that particular denomination's auction. Coming up tomorrow, Ed Yardeni of Yardeni Research, Amanda Lynham of Goldman Sachs, former Philadelphia Fed President Patrick Harker, and David Kelly of JP Morgan as we count you down to the CPI print. Getting a read on inflation, we get a couple of those, CPI, PPI, PCE, CPI, PPI. That's before the next Fed meeting. We can practice that in the break. From New York, this was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Stocks higher on optimism about what's being characterized as some sort of arrangement, potentially, in the Middle East. Of course, we've been here before. 30 minutes until the start of trading. I'm David Gura.
And I'm Bonnie Quinn. Matt Miller and Danny Berger are off. Bloomberg Open Interest starts right now.
Coming up, the AI money machine keeps rolling as Intel, Nvidia, and Anthropic line up billions.
Meanwhile, oil erases earlier gains as Pakistan signals optimism over a US-Iran deal, even as strikes continue.
And an inflation test looms, investors bracing for key data that could shape the Federal Reserve's next move.
All right, let's get some individual movers. Pre-market, we have Intel raising $20 billion, a third more than it was expecting to in that share sale. Demand across the AI supply chain remains strong. In fact, there was $100 billion worth of demand for that $15 billion offering. And as you can see, Intel down another 0.2% after an almost 4% decline yesterday. Nvidia, meanwhile, has some heft still. It's tapping some of the largest players on Wall Street for $500 billion in a funding platform, funding commitments, which CEO Jensen Huang said will underwrite AI infrastructure costs for customers, and Nvidia up 1.7% on that. And do keep an eye on CoreWeave. It's been on a tear lately after a few down months. It reports after the closing bell.
Let's move away from AI, although AI is in everything, including this next stock. Hims and Hers incorporating AI into its production as well here, as they mentioned their earnings yesterday. It raised its full-year revenue outlook yesterday, but shares of the company down this morning after Hims posted a much wider than expected loss for the quarter as weight loss drugs drove costs higher. It also announced plans to sell peptides by the end of the year, pending approval, of course, from the Food and Drug Administration. Bonnie.
Well, David, let's get back to the AI trade now with Bloomberg Tech host Ed Ludlow in San Francisco. Ed, there seems to be no end to the appetite of this market, and certainly the major players in this market for the potential to issue AI products and debt related to them.
Yeah, I mean, Nvidia is pushing back higher today. When that news first broke on the $500 billion initiative with Wall Street, the stock was under pressure, right? In part because of the whole circular financing debate that we can get into. You know, what Nvidia is trying to do with those 6 firms is make the compute an investable infrastructure asset class of its own. So Nvidia works with those 6 firms to be the platform as channels to tap investor interest. SPVs or special purpose vehicles get set up, they borrow tens of billions of dollars, the compute becomes collateral, and it's then leased out to Nvidia customers. And, you know, I think the degree of separation that Nvidia is pushing is that it is third-party capital. Those 6 firms on the screen tap the investor pool. And so that it is separate from Nvidia financing its own customer. It is the idea that it takes the burden away. It's just financing. It makes the whole process moved more smoothly without NVIDIA having to lower prices for extremely expensive compute platforms.
We heard from Jensen Huang yesterday, says he called up these 6 executives and not one of them balked at the prospect of this financing agreement. I'm curious sort of who the audience is for this. Yes, they have these firms, but who are the ideal investors here for this kind of product, Ed?
Yeah, I think what Jensen Huang said is that nobody said no, right? In other words, everybody said yes. Yeah, I mean, it very much, based on Bloomberg's reporting, looks like this is debt, right? Rather than doing some kind of other mechanism. In the past, for example, with XAI, or SpaceX AI, Elon Musk's AI lab, they've talked about setting up SPVs where you basically raise equity as well through the SPV. But again, the whole point is that the SPV owns or holds the compute and leases it out. So through those 6 names, you know, those are some of the giants of US finance and investment. You have a very large pool of people interested in all kinds of credit.
One bank among them, Goldman Sachs, of course. Ed Ludlow, thank you very much. Of course, the host of Bloomberg Tech. Shares of Rocket Lab falling after the company signaled a new potential delay with its Neutron rocket. Bloomberg space reporter Bruce Einhorn joins us now with more. Talk about the details of this earnings report, but let's start there with that rocket and sort of what this portends. I guess the company reasonably confident, Bruce, it could get it to the launch pad here by the end of the year, but there is a distinction to be made here from getting the rocket to the launch pad and launching it into space.
Yeah, the concern there is that previously the company had said that it would launch Neutron by the end of the year. In its announcement yesterday, the company said that it would have Neutron on the launch pad by the end of the year and hedged a bit about when that launch would be. I think the concern that investors might have about this is that this is a rocket that has been in the works for a very long time, and there have been multiple dates given by Rocket Lab for when it's going to launch. So if we're looking at an additional delay, then that might be something that raises concern about just how big of a delay are we looking at here.
Bruce, it's the second most frequent rocket launcher after SpaceX. Can it, though, raise the cash that SpaceX has been able to raise in order to continue its efforts?
Well, I think that gets to why people are focusing on the new rocket, Neutron. So yes, Rocket Lab is the second most prolific launcher in the United States after SpaceX, but that's with this rocket Electron, which is a very small rocket. It doesn't have a lot of capacity to get things to orbit, especially compared to the Falcon 9, SpaceX's rocket. With Neutron, Rocket Lab is looking at a major upgrade in terms of capacity. It still doesn't get them to where the Falcon 9 is, let alone Starship, SpaceX's new rocket under development. But it gets them closer, and they could make certainly a lot more money per launch on Neutron than they can make on Electron. So a lot really does ride on the ability of Rocket Lab to get this Neutron rocket, not just to the launch pad, but get it up into orbit.
Greatly appreciate the update, Bruce. Thank you very much. That's Bloomberg's Bruce Einhorn joining us. And in the next hour, we're going to speak to Rocket Lab founder and CEO Peter Beck. Turning now to the Middle East, Brent is wavering after Pakistan signaled progress in U.S.-Iran talks, but it's wavering after report the U.S. also fired at a Panama-flagged ship that attempted to thwart the Hormuz blockade. President Trump now making reparations for Iran's hostilities a key issue in peace talks.
Iran is broke, totally broke. They asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. If there's damages to be paid, I think Iran should pay those damages.
A lot of news on this morning. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Look, the U.S. has not been a participant in these talks. We know that Iran and Oman have been talking for a while here. Pakistan was an intermediary for a long time. Qatar was as well. Help us make sense of all of this, Tyler, sort of where things stand right now when it comes to some sort of deal, some sort of arrangement, I think is what the Pakistanis said about what could happen here.
Right, David, we got this indication that signaled some optimism from Pakistan's defense minister, going on to say that things are, quote, shaping up in favor of peace. As you mentioned, Pakistan is a key mediator in these talks, but at this point, we've gotten very little indication or detail on what a potential breakthrough would really look like, because instead, publicly over the last few days, we've only seen the sides really dig into their positions, including this new demand from President Trump that, as he outlined, would include Iran being on the hook to pay compensation to families of Iranian protesters who have died over the last 50 years, he said, and that Iran should be held accountable for the death and damages related to conflicts where its proxies operate, including in Lebanon, Syria, Yemen, and Gaza. He didn't provide further details, but that, of course, came on the heels of Iran demanding compensation for war damages in exchange for reopening the Strait of Hormuz, keeping in mind that the issue here is that we do know that there were talks underway in some regard that there would be funds allocated to help Iran rebuild after the conflict, but that was considered to be a precondition for talks about potential curbs on Iran's nuclear program, not for reopening the strait. Now, David and Vani, amid this standstill and Iran still leveraging its grip over the Strait of Hormuz, Bloomberg News was able to get some new satellite imagery that does show that ships are continuing to transit dark with their transponders off in order to complete what's known as a shuttle route, where essentially they are transferring their cargo to ships that are waiting outside of that waterway. New data showing us that at least 12 such switches happened yesterday alone.
Wow, that is one fix, I suppose, but it can't be done en masse, right? And we had Wall Street Journal reporting to suggest that a U.S. had fired on a ship that was trying to break its blockade of Iran, and we saw oil spike this morning, possibly because of that attack. Tyler, it's on a hair's breadth, right, in the Strait of Hormuz. At any point, there could be skirmishes or strikes or anything like that.
That's our understanding at this moment, Vani, amid this Wall Street Journal reporting that this Panama-flagged vessel appeared to try to reroute around the U.S.'s military blockade. Their reporting indicating that the U.S. military gave multiple warnings that this ship ignored, and then they fired on it. But it goes to show that the U.S. is still very much imposing that naval blockade, as this White House has said that it is opting for that economic pressure over potentially restarting any broader military operation. But we do know that the pressure is building here at home as we continue to see stalled traffic in the strait. Just yesterday, Bloomberg News was able to confirm that the president has indeed extended that Jones Act waiver by 90 days in a bid to make it easier and cheaper to transport these critical products like gas, diesel, and jet fuel.
All right, Tyler, thank you so much. That is Bloomberg's Tyler Kendall in Washington, D.C. Let's get a check on these markets now, 20 minutes before the open. And we are seeing futures pointed higher. Don't forget, we were down about 0.3% on the S&P yesterday, having hit a record the day before. So we may, again, approach those record levels. Certainly the VIX at 15 is very complacent, very calm. We had oil spike earlier with Brent very close to $90 a barrel, potentially after that attack in the Middle East. Right now, though, down 0.3% on the prompt month contract, with Brent trading at 87 and change. Yields, though, continue to march higher. We have the 10-year yield at 4.68, off its highs of the session. It was at 4.73 almost earlier on this morning, but still elevated. Let's get a look at some other movers now on our radar with Bloomberg's Nora Melinda.
Hey, Vonnie, some stocks in focus. First up, Upwork sinking double digits, down about 17%. That's after cutting its full-year outlook for both revenue and profit. Now, analysts say that AI may be starting to take a bite out of the business, and this stock was already having a rough year leading up to this point. It's lost more than half of its value so far year to date. Now, from finding a job to finding a new pair of sneakers. On Holding is tumbling after second quarter sales disappointed. The company's trying to keep those sneakers premium, holding prices up rather than discounting some of those older styles to clear them out. And finally, apparently Bitcoin mining isn't the only game in town for Riot Platforms. The company just landed a $9 billion plus deal with Anthropic to provide data center capacity for artificial intelligence. And if Anthropic sticks around, that deal could eventually grow to $16 billion. Shares of Riot Platforms up about 18% in that pre-market trade. Those are your morning movers. David?
Quite a spike there, Nora. Thank you very much. And coming up here, Hims & Hers planning to add another product to their pipeline as weight loss drugs eat into the company's margins. We're going to bring you those details next. This is Bloomberg Open Interest.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Now to high interest, a look at what's making headlines around the world. New details emerging around an Iranian assassination threat against President Trump last month. The Washington Post reporting the president flew secretly from Turkey on an alternative military aircraft, while the White House said he was aboard Air Force One. The president boarded the old Air Force One in view of cameras, then was secretly shuttled to a smaller plane via an airport catering truck. Apple still planning to offer a glass-centric overhaul of the iPhone for the device's 20th anniversary. That is despite an analyst report from Jefferies that the move had been canceled. Sources telling Bloomberg the company expects to launch iPhone Pro models next year that will make use of a new glassy look. And Hims & Hers planning to sell popular peptides before the end of the year. The company awaiting a decision from the U.S. Food and Drug Administration on whether to loosen restrictions on 7 different compounds. This comes after the company cut its full-year profit outlook. Vani.
Well, for more on Hims & Hers, we're joined now by Bloomberg Health editor John Tozzi. John, this company has to deal with a lot of policy changes. Is part of what it's trying to do for investors to tell the future and see what exactly is going to be allowed by this administration and the FDA and associated regulatory agencies before it happens?
Yeah, I mean, Hims was looking at this market even before the recent FDA action. They bought a peptides manufacturing facility in California last year, so they're clearly gearing up for entering this market. We saw recently the FDA Advisory Committee recommending loosening some rules and expanding kind of access to what are right now kind of unregulated injectable substances that a lot of people are using without a lot of oversight.
John, this is a company for which GLP-1s have really been the bread and butter in recent quarters, and certainly still the case here. What did we learn from yesterday's report just about where the company is going directionally? So we talked about peptides here. It had a host of problems with the compounding work it was doing, as you and your colleagues have reported on, reached these agreements, these deals to sell name brand GLP-1s. What do we learn about sort of the future of this company after that, or not including that exclusively?
Yeah, I mean, I think one of the things that is going on, they're shifting from compounded GLP-1s to brand name GLP-1s. We're seeing that happening. We are seeing a greater focus on international markets and then new products, again, like peptides. Recently launched products include things like testosterone, menopause and perimenopause products. So they're trying to widen kind of the addressable, the set of needs that they address.
Can it be sure that peptides are going to be sort of, given the green light? And I know a lot of people are using them already and so on, but at the same time, if you buy a manufacturing facility, you have to be pretty sure at this point.
Yeah, and I think we don't know how much Hims paid for that facility. It seems like a bet, and I think we'll have to wait and see how it pays off. But yeah, I think there is a lot of uncertainty in that market. And as you said, there are policy risks to this kind of approach when you're looking at expanding into markets that may or may not be, fully authorized.
I was talking to our colleague Madison Muller, who covers this company, and I asked her yesterday, what is Hims & Hers? How would you characterize it? And I wanted to put the same question to you here. I mean, this is a company that's gone into so many different types of medicine, has this telehealth component as well. How do you assess kind of the novelty of what it's doing here, and does it have a peer or competitor in the space?
Yeah, I mean, I think at its core, it is a telehealth company, right? And that they are trying to expand access and make it easy for people to get treatments that they want, get the prescriptions and get the medications without, going to a traditional in-person clinic and getting a diagnosis and taking a, paper prescription to the pharmacy, right? Like, I mean, that they are trying to bypass all that and make it much more on-demand, consumer-driven healthcare.
The problem is, does it have a moat? Because it would seem to me that if peptides are suddenly everywhere, and I don't know what the total addressable market for peptides is, but I can only imagine, at least in the beginning, it's going to be a large market. Won't Amazon Health just get into the same business?
Yeah, and I mean, I think they do have competitors from other healthcare companies, other telehealth companies. So yeah, I think that's a reasonable question in terms of the future of this company. Like how can they strategically maintain whatever competitive edge they're trying to build.
All right, well, we'll see how investors react. John, thank you so much. That is Bloomberg's John Tozzi. Coming up, Nancy Tengler discusses stubborn inflation as Wall Street bankrolls NVIDIA's $500 billion funding plans. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The combination of private credit and just regular public, it's sort of at some point is going to run its course, and at some point it's going to have. So far, it hasn't been that big of a problem, but I think at some point we're going to see some big, losers and some winners, and that's when we're going to see a little bit more differentiation.
That was Charles Schwab, CIO Omar Aguilar on surveillance. Let's bring in now Laffer Tengler, CEO and CIO Nancy Tengler. So Nancy, a lot of concerns in this market today, a constant drip, if not a flood, of AI products and structured products and issuance, another $500 billion being underwritten by several of the big companies on Wall Street. But then also we have inflation data tomorrow morning.
Yeah.
But the S&P is at a record.
Yeah.
Are you worried at all?
Well, I'm always worried, Bonnie, about everything, but I do think inflation will come down. That is less of a worry. And remember, these numbers are fraught. They get revised pretty dramatically on a regular basis. If you look at trueflation.com, that's a private sector measure, 1.7% on the way down. A lot of inputs, no government intervention. So I'm not worried about that. I am starting to become concerned about this circular financing. I had not been. This latest deal with NVIDIA and the private equity or the private credit guys is starting to at least raise my awareness.
Yeah, it was a little too on the nose seeing all those CEOs gathered around the table at CNBC with Jensen Huang as well, circular table, I should say. I want to ask you what you make of what Jensen Huang is proposing here, that we could see compute as an investable asset. Does that make any sense to you at this point as we think about the way that the technology is developing so quickly here and, you know, the longevity of this is still very much in dispute?
Yeah, well, I do, David, I read an article or a study by Goldman Sachs, and they're predicting $7.5 trillion in infrastructure spend, compute, data center power, over the next 5 years. That's a lot of spend. And you just had Google renting from SpaceX for $920 million a month for 110,000 NVIDIA GPUs. So I do think there's sustainability. I just think we need to step back a little bit and look at financing. Now, that said, we own NVIDIA. We added it to our value strategy. We've owned it in growth forever. And they have huge amounts of free cash flow and a pristine balance sheet.
Well, that's just it. So NVIDIA is likely to be fine, right?
Yes.
Jensen Huang obviously showing that it still has the heft in AI and cementing that by doing this. But you have Meta leasing out now. You have Riot Platforms this morning leasing out. Probably some other Bitcoin companies will do the same thing because they have so much compute. It's like compute has turned into a utility.
Yes.
So who will be the winners? It's just a commodity at this point.
It's becoming a commodity, 100% right, Vonnie. I think the winners will be the CEOs that pivot. So Palantir has declared that they're the only company on the planet that's taking tokens and creating economic value. I don't know if that's true, but we did see it from Microsoft and Amazon where they're starting to monetize the compute. I think that, you know, Adobe won't be a winner. At least that's, I mean, we exited a while ago. Maybe Salesforce is going to be a little bit challenged, but I do think the hyperscalers are pivoting in the right direction at the right time.
Come back with you in just a moment here. This sort of on the one hand, on the other hand is something we want to get into. So we've talked about AI. Don't we want to talk, Vonnie, about the inflation side of things
Absolutely.
as well?
Lots of data coming up this week. And let's get a check in markets, David, as we head towards the opening bell. And we do have futures pointed higher now. They are clambering ever higher as this market tries to look for more records. Volume low, has to be said. We're at a 2-week low on volume, but crude oil is off its highs now, just trading at 87 and change on Brent after we had a little bit of relief potentially on the Middle East. But you are seeing yields elevated, if again off their highs, with the 10-year yield back down to 468.22. It reached 473 earlier on. Back with the opening bells and Nancy Tengler in a moment on Open Interest.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Moments away from the start of trading. This is Bloomberg Open Interest. I'm David Gurr. Let's take a look at futures here before the opening bell. In New York, we see S&P futures up 15 points, about 0.2%, 77.92. Some wavering in the markets this morning, but again, some optimism on the heels of those reports that maybe we are getting closer to some sort of deal in the Middle East. See NASDAQ futures and Dow futures up as well as we turn our attention to the New York Stock Exchange downtown, where GXO Logistics, Greenwich, Connecticut-based logistics company, ringing the opening bell at the NYSE. This is a company that went public 5 years ago today. We see the CEO of that company ringing the bell there at the New York Stock Exchange. And turning over here to the NASDAQ market site, see Inc. 5000. So, of course, a special issue of Inc., the editor-in-chief of that magazine ringing the bell here. This is a list, a comprehensive list of 5,000 private companies. I think the number one company on that list, I glanced at it this morning, a Palo Alto-based video production company. See if it goes public in the years ahead. A fascinating list to look at there. Bonnie, that's where things stand here as the bells are ringing.
All right. Well, it looks like
across Wall Street.
Portion of those 5,000 are perhaps on the
some
stage
percentage is there.
We'll take a look at that list. Some portion of it anyway, a little bit later on. But for now, let's take a look at some of the stocks that are moving, that were moving pre-market as well. Of course, Intel raising $20 billion, a third more than it originally had intended to raise in that share sale. It was down yesterday by almost 4%, down another 1.25% today. Nevertheless, still above the price at which those shares were offered. They were offered at $95 a share, and there was $100 billion worth of demand for those shares. So pretty endless. NVIDIA cementing itself as the AI captain, if you like. It's up 1.6%, having been down yesterday, but it's regained those 220 and change levels that we hadn't seen for some time. The story today, of course, is that it's gathering a consortium of companies to offer a platform of $500 billion worth of financing for the AI infrastructure build-out for anybody to take advantage of. And then keep an eye on CoreWeave. We're up 5%. This is, of course, a very volatile stock, but it's a neo cloud, and obviously all of those leasing companies are in the news today. It does report earnings after the close and will be a bellwether for some of the other neo clouds, David.
Yes, Bonnie, thanks very much. And outside of AI, we're also watching Hims and Hers, which raised its full-year revenue outlook, but shares of that company down 2.9% after posting a much wider than expected loss for the quarter as weight loss drugs drove costs higher, also announcing plans to sell peptides by the end of this year. I want to bring back Nancy Tangler now of Laffer Tangler. She's the CEO and CIO of that company. And Nancy, you've said here that this is an economy in transition.
Yes.
Here we are on the precipice of some really critical data that we're going to get tomorrow, inflation data. Yeah. I think there was some agita in the market on the heels of that labor report from last week. Put the two of them together. I think we have a Federal Reserve policymakers kind of reevaluating the balance of risks here. What are you expecting when it comes to those inflation numbers tomorrow?
Well, I think they could spike back up because we saw oil go back up. We'd said we thought they would get a negative print last month. I think a couple of things. What Fed Chairman Warsh, I think he's being underestimated, and what I think he understands is productivity-driven growth is disinflationary. He's kind of channeling his inner Chairman Greenspan. I was managing money back then, and you cannot underestimate the power of that kind of growth. That's what I mean by an economy that's in transition. We listen to the companies. The companies are telling us they're much more productive. They are producing more with less. So not necessarily cutting jobs, but producing more.
And this is AI related principally, or do we not know yet?
Most of it, but also just automation. I mean, our investing theme for the last 5 years has been old economy companies pivoting to the new technologies. That was digitization when we started, and it's now robotics and power and infrastructure and AI and cloud computing. So I think there's a lot to love. Earnings growth continues to delight, and I think we will continue to see that for some time.
So why is the bond market so unsettled, Nancy?
I think it's a little taper tantrum in reverse. I think partly because we do have a ginormous deficit. We are now topping $100 billion a month in interest payments. I mean, that alone is problematic for the bond market. But I also think they're testing him. You're hearing a lot of people, Warsh that is, you're hearing a lot of people say that he doesn't have credibility. I don't buy it. I think he's 2 steps ahead, and he's letting the market do the work for him. And that is what we used to do in the old days. We didn't get, spoon-fed guidance. Remember, Greenspan didn't talk, and when he did talk, most of us didn't know what he was talking about. So I do think you want to watch on this. The 10-year at 4.6, 4.7. I mean, we averaged 6 to 6.5% in the 90s, and that coexisted with robust stock returns. So.
You write often and talk about often kind of the resonance that we're seeing with the 1990s, so you bring up Alan Greenspan, and I wonder if you see that in the way that Kevin Warsh is speaking today. I mean, he was very upfront about the fact that he wants to kind of use a similar playbook that Chairman Greenspan did. Is he doing it? Are you among those investors who emerged from that press conference feeling unsatisfied that he's not quite there yet in terms of saying what the reaction function is and how the Fed is kind of seeing the path forward with enough clarity? Do you need more, or are you happy with what he's doing thus far?
No, I'm happy. I think the Fed should do their job. I think he's going to use the balance sheet more than raising rates. That's a much more humane way to solve the problem of fast growth. I think we've seen that the low-income cohort is doing better from an income growth standpoint, even better than the top-income cohort. So I think there's a lot of things that the market is not paying attention to, and they will. And what they're paying attention to right now is he's not giving us enough information. Yeah. And that's a transition also.
A lot of savvy investors were short bonds for a long time because they thought this situation was untenable, right? That long-end yields in particular would have to rise. So what's to suggest, and there are a lot of reports out there that the Fed chair and maybe Scott Bessent are unhappy with rates this high, but what's to suggest that they wouldn't have been expecting that? I mean, they would have been expecting it any time in the last several years, according to their positioning back then. Yeah. So maybe it's okay to have yields this high for some time and then bring them back down. Could that be a possibility?
I think so, Vonnie. I mean, I think they're unhappy because they've got to make debt payments. So Scott's having, Secretary of the Treasury, Mr. Bessent, is having to issue at the short end. So that, that's a little bit. I don't think that's the policy he wants to pursue. But if you look at where we are, credit spreads are still tight. I don't think that we're at risk, even with all this circular financing. It's the right companies. In the 90s, these companies had only debt on their balance sheet and no earnings, or light earnings. We are in a much different situation now. So I think we expected rates to go up. We waited and we're extending duration. That may or may not be the right decision. We don't know yet, but we're going to move ahead with that policy.
Let me bring us back to equities to end here, and I'm curious if you're satisfied with how leadership is broadening. I saw our colleague John Authers talking about the guest list being expanded here. It had been confined to the Magnificent Seven and these big tech companies, these hyperscalers. Now it does seem like it's broadening some. Are you happy with sort of the degree to which that has been happening?
I think that had to happen. I mean, the biggest concern I have is OpenAI, because a number of the companies that we own are dependent on them as a customer, and I just don't see really strong leadership from that company. But yes, I think broadening it out is better indeed, and that you'll see the winners and losers pretty quickly. I mean, you know, we had a lot of pressure on Blue Owl not too very long ago, so we'll see. But NVIDIA leading the charge is a comfort to many. As a shareholder, I'd like them to get behind. I don't want them leading.
All right, Nancy, always a pleasure to get your insights. Indeed,
Thank you.
yeah, that is Nancy Tengler there of Laffer Tengler joining us. But let's get a check on the stock market now. We're just a few minutes into the trading day. Don't forget, we were coming off a record on Monday, a little lower yesterday by about 0.3%. And it looks like there's plenty of optimism back in this market with more than 300 companies trading higher today. Of course, we have had oil wavering, so we can't blame everything on oil. But you're seeing a lot of the chip makers and a lot of the AI stocks on the move, thanks to this $500 billion deal that NVIDIA has managed to create with many of the top Wall Street firms, from KKR to Blackstone to BlackRock and so on. As you can see, the chip makers, Micron Technologies, moving up the leaderboard as we speak, KLA. And then you have the industrials, Caterpillar and GE Vernova. You have the memory chip makers, SanDisk, and some of the financials as well, also doing extraordinarily well. If we look at the other side of the table, we do have some of the hyperscalers not doing so well. Alphabet off for a second day as well. Apple as well. Microsoft, Broadcom, and AMD. And then Berkshire Hathaway just getting dinged a little bit, but you know, nothing huge to speak of. CrowdStrike Holdings as well for some of the software companies on the move. Let's take a look at your individual groupings, right? So we have pretty much the ones that are doing better, doing way better than the ones that are not doing so well. So your industrials, utilities, materials, this perhaps on interest rates coming down just that tiny little bit. Real estate index, though, also suffering there, and consumer staples as well. So we'll see how the day shapes up, David. Coming up, the risks investors are watching as NVIDIA taps Wall Street giants to finance a $500 billion AI build-out. This is Bloomberg Open Interest.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Time now for our top calls. Here's Bloomberg's Nora Melinda with some of the analyst action in focus this morning.
Hey, Vonnie. First up, shares of Boeing climbing after the stock got an upgrade to buy at Argus. Analysts say Boeing is finally in a position to start building more planes after making some progress on some of those production and profitability issues that we know have been a long-term overhang for the company. Shares of Boeing up about 1.4%. Now from planes back down to earth, Airbnb is lower after a downgrade at Phillips Securities. And this one's pretty simple. The stock may have gotten a little too expensive. It's rallied recently, and the firm says it's now trading at a, quote, premium. Shares of Airbnb down by about 2%. And finally, over to solar. First Solar is higher after getting an upgrade from Baird. The firm thinks President Trump's 15% tariffs and price floor on polysilicon imports could actually work in the company's favor, giving First Solar an edge. Shares to the upside, climbing by about 2.9%. Those are your top calls. David?
Nora, thank you very much. Nora Melinda there with those top calls. And NVIDIA partnering with major financial firms to raise over $500 billion for AI infrastructure for its customers, offering few details on how this is actually going to work. Let's discuss what we do know with Bloomberg Tech editor Sarah Fryer, who joins us here on set in New York. Sarah, great to see you. Let's acknowledge what we don't know at this point. Much ballyhooed, a big announcement here. 6 major companies involved in this agreement with NVIDIA, including Goldman Sachs, the lone bank among them there. What do we know? What don't we know about what this is?
Well, we know that this is an incredible show of force by Jensen Huang. He can just convene these top banking execs all together.
They all show up.
They all show up. You got to show up and talk about AI financing. And basically, he said none of these banks rejected him when he asked for this. The question is, how much of this is already announced deals? How much of this is future deals? And how does this feed into this circular financing that has been a top concern in the market? The idea that NVIDIA is financing its own customers to pay for its products, right? Now, it's true that there is a very deep need, a vast need for financing for infrastructure and AI in order to grow, in order to host all of those AI token calls and everything you need to do to develop this technology. You do need to invest a lot in infrastructure. So the money is needed. The question is, where is it all coming from and who is it all going to?
Well, that's the thing. It doesn't sound like NVIDIA is going to be on the hook here. It doesn't sound like any of these firms are going to be on the hook either. So it's essentially other people's money being invested through this platform, but that means the risk is other people's as well. What will they demand, for the risk of $500 billion, $500 billion worth of this stuff?
Well, it sounds like the risk is going to be backed by the chips themselves. But as we know, chips have a short lifespan, less than 5 years in some cases, where chips are useful before they become outdated and you need to replace them. So is that really going to work to securitize this market this way, the same way you would like the housing market? It's a little bit of innovation, but innovation breeds skepticism in financial markets because of what's happened in the past when people have gotten a little bit too creative.
One looks at this story in complement with what we learned yesterday from Intel having this share sale. It was going to be $15 billion, oversubscribed. It's $20 billion now. It wasn't long ago that I was talking to our colleague Ian King just about Intel's recent history, the trouble that it's been through. Then it got the blessing, the imprimatur of the White House, and things seem to have really turned around for this company under a new CEO. What should we take away from Intel doing this and what it says about the role that it's playing in this larger AI infrastructure ecosystem?
Well, first of all, this is stunning because this is Intel's first share sale since its IPO, right? This is the first public thing, exactly. So, I mean, the fact that they can do this now, that their stock is strong enough, not just to do this, but to increase the amount they were planning to raise, it's opportunistic, but it shows confidence still in the fact that this is going to turn into something. What we don't know is
whether Intel is going to have some serious customers online for their future development. They've really cleaned up their finances. They've really done a lot to fund their turnaround. But the proof is really in the, can they build products that people want to sign major deals to purchase?
Yeah, and I mean, there was $100 billion worth of demand, so it's not like this $20 billion came out of nowhere. It probably could have raised more if it wanted to, and at these prices, $95, it's not like it was a massive discount, right? Is no one worried about China competition anymore?
Well, I think that there certainly is worry about China competition, but when it comes to Intel, I think that there is just enough demand for data center infrastructure to go around that it's even exceeded demand for GPUs, and there's now demand for the chips that Intel makes, those sort of basic CPUs, computing chips, because a lot of what we're doing in AI now is not just the model development, but the actual running of those models and the more basic data center work. So certainly there has been demand, but we still need to see Intel, and this was reflected in its recent earnings, we still need to see Intel innovate a bit with its product and its foundry business to attract new customers.
Yeah, deliver on those customers and promises. Sarah, thank you so much. That is Bloomberg's Sarah Fryer. Coming up, Swiss sneaker maker On stumbles after a disappointing sales quarter. That's next. This is Bloomberg Open Interest.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome back to Open Interest on Bloomberg. Quick check of the stocks on this Tuesday morning. Let's start with the major indices. We see the S&P 500 down 0.03%. Very little movement here. That's been the story of these markets over the course of the week. A lot of wavering. We see the NASDAQ down just slightly, about 0.25% here. Look at the Russell 2000. Bit of a lift in those small cap stocks. The Dow up slightly as well. Look, a number of stories here competing for our attention on this morning. Of course, we're waiting for those data on inflation tomorrow. Going to be a crucial data point here for the Federal Reserve and policymakers there as they plan their next moves in September. We've got the Jackson Hole speech to get through before that. Another big story is a macro one having to do with oil. Some word here from the Pakistanis. There could be some sort of progress toward an agreement on the Strait of Hormuz. This has been dogging the administration, dogging markets now since the start of that war. Will there be transit of ships through the Strait of Hormuz? See what happens there. I got to emphasize again, we have been here over and over again. Looking at a few companies in specific here, NVIDIA, of course, this is a huge story over the course of the last 24 hours, this agreement that Jensen Huang of NVIDIA brokered with 6 major financial firms, including Goldman Sachs and KKR and Blackstone. all of them rallying around the company, providing $500 billion worth of financing. We were talking about Intel just a moment ago. That chip maker announcing a deal in its own right, of a kind, offering a share sale, $20 billion raised at $95 a share as it looks to kind of compete in the AI infrastructure sector once again. Talking about ride platforms, Hims and Hers has been a story over the course of the morning as well. Continues to be that company reporting earnings yesterday, planned to enter the peptides market. Of course, this has been a company that has made so much money off of GLP-1s, initially compounding those drugs, now brokering deals with the name brand makers of those weight loss medications. We see its shares down this morning again as it's poised to make another transition here into peptides. Lastly, want to end with Nike and On Holding, the Swiss company, reporting disappointing earnings here when it comes to its outlook for the future. This is that Swiss sneaker company branching into apparel as well. We see its shares down 21% this morning, Bonnie.
Yeah, an absolutely spectacular loss for On. Just looking, it looks like it's the lowest it's been, this share price. For more on David, we're joined now by Bloomberg Intelligence athleisure analyst Abigail Gilmartin. Investors really punishing this stock, Abigail. One of the reasons for the miss and the disappointment is that On doesn't ever want a discount, right? But if I'm buying 2-year-old designs, it's obvious they're 2 years old, so why wouldn't On discount? I'm not going to pay full price for them.
Right, correct. That's a really great question. And I think what it kind of speaks to is more so pulling back on the inventory that's in the marketplace right now. So we saw this happen with Hoka, where they had too much old inventory, like you're saying, where they did have to discount because consumers wouldn't want to pay full price for it. I think On is just trying to get ahead of it. I think you will find the 2-year styles are on discount out there. It's more the styles that have been launched in the last year that are getting a refresh coming up. They're just pulling back so that there's not too much inventory in the marketplace that will lead to greater discounts going forward. And this was something we saw Hoka kind of struggle with and have to completely change their product launch cadence to make sure it didn't happen again. So in that sense, it is the right way that they're going about it, but we'll have to keep an eye on if this continues to be deliberate or if it's an underlying issue.
Last season shoes, Bonnie, I doubt that you.
That was a little bit too emotional.
No, I understand.
I will say.
But Abigail, let me say in full disclosure, I've never worn these shoes. I've seen the brand everywhere, of course. Until today, I didn't know that clouds are engineered holes in the shoes soles. What makes these so popular? What gives this company the confidence that they're able to charge as much as they are for these shoes and have the outlook that they do?
Yeah, they're definitely a premium shoe, and I do think that's where the stock price and everything comes into play. I think the quality, and they're also kind of stylish. I think compared to Hoka, we see more people wearing them to work, especially men to work. They have some more dressy shoes as well. But the performance, they have had some top marathon runners running in their shoes and breaking records as well. But they've also really gotten in touch with the everyday running communities. And I think during a time when Nike maybe fell back from that, On and Hoka both kind of got really a part of these running communities, and runners really love them. They really have been building loyalty since.
You know, is there something about being a victim of your own success here too, Abigail? Because they weren't known a few years ago, right? Then Zendaya, Roger Federer, and it felt like everybody all at once was wearing them. And that puts some people off, right? They don't want to be wearing the same thing that everybody in the street or the subway is wearing.
Definitely. And I think we've seen that kind of evolve. We've seen their shoes evolve from just being the whole shoes that everyone sees and thinks of. When they think of On, they think of the whole bottoms. We've seen them kind of go diversify and try to get out of that. And I think they have a good amount of SKU counts where maybe not everyone is wearing the same shoe. But yeah, I think it's something that their own success. But at the same time, brand awareness is only at 30% globally.
Wow.
So I think we think of them as such a bigger company than they actually are. They're still young.
Still young. Abigail Gilmartin, thank you very much. 56% growth in the apparel part of the business. She's with Bloomberg Intelligence. Appreciate that. Coming up in the next hour, Barclays economist Pooja Sriram discusses her inflation outlook ahead of those CPI data tomorrow. Plus, Rocket Lab CEO Peter Beck joins us to give his outlook on the space economy and his company's earnings that reported yesterday. This is Bloomberg Open Interest. Stay with us.
is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Iranian-backed Houthi rebels firing on a vessel in a key Middle Eastern waterway. 4 people killed, according to officials in Yemen. The violence raising fears over new threats to regional shipping lanes. The Iranians are still demanding the U.S. pay reparations for damage caused during the war as a part of any ceasefire plan. New details emerging about how President Trump was spirited out of Turkey following the NATO summit last month and Iranian death threats. ABC's Martha Raddatz says the old Air Force One, the new Air Force One, and a third plane were involved, and that President Trump was taken off one and put on to another.
All 3 planes, the Qatari gifted jet, the Legacy Air Force One carrying staff and press, and the military craft reportedly carrying the president, landed in Britain. It's there that the president is reportedly secreted back on to the Legacy aircraft, where he was seen by cameras again deplaning and boarding the Qatari gifted jet.
No confirmation or denial from the White House. Accused CEO killer Luigi Mangione in a New York courtroom this hour for what might be the final time before jury selection in his state trial begins next month. Here's ABC's Matt Rivers.
His lawyers had actually argued that they would pursue a psychiatric defense, only to then abruptly pull that argument when the judge said that they would need to provide psychiatric records in order to do that kind of argument. Now, Mangione is facing both state and federal charges. He's pleaded not guilty to both, but earlier ABC had reported that both sides had been talking about a potential plea deal in the federal trial that ultimately didn't amount to anything. It's not clear how close they got to actually coming to some sort of an agreement there.
As of now, Mangione's federal trial will be held after the state trial. In Colombia, heavy equipment is being used to pull away parts of destroyed buildings, the rubble likely hiding trapped people following the earthquake Monday that has claimed at least 130 lives. This is ABC News. nation's law enforcement agencies have been echoing what the FBI has been saying for months. Crime is down in major U.S. cities.
According to the Major Cities Chiefs Association, murders alone were down more than 17% in the first half of 2026 compared to the same period the previous year. Robberies, rapes, and aggravated assaults likewise were lower. The declines continue a trend that reversed the crime surge that came during the pandemic.
That's ABC's Jim Ryan. President Trump getting pushback from doctors who say his executive order cutting the number of recommended childhood vaccines from 18 to 11 is reckless. They're also speaking out against another plan, splitting the measles, mumps, and rubella vaccine, the MMR, into 3 separate shots. Here's ABC's Mary Bruce.
The president and HHS Secretary Kennedy, a longtime vaccine skeptic, continue to claim without scientific evidence that vaccines are tied to autism and are arguing that breaking up these vaccines will somehow make them safer, even though decades of scientific studies show there is no link between vaccines and autism.
Primary elections are taking place in 6 states today. In the Minnesota governor's race, the MyPillow guy, Mike Lindell, who's being sued for repeating unfounded theories about President Trump's 2020 election loss, leads a crowded Republican primary for governor. And in Wisconsin, Democratic Socialist Francesca Hong is ahead in most polls in the Democratic race for governor there. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube as well. Scarlett Fu is out today, not to worry. Alexis Christophers is in for the next couple hours. Alexis, thanks for joining us here.
I just moved over one seat to the left. Here I am.
That's how we do it here, from surveillance right into Bloomberg Intelligence program. A lot coming up today. Ethan Braun, our Bloomberg Israel Bureau Chief, he's going to give us the latest reporting out of the Middle East. There are some reports that there may be some positive movement as it relates to some type of ceasefire or opening of the Strait of Hormuz. We'll see how that progresses. Ed Ludlow, Bloomberg Tech co-anchor, millions of tech stories out there. I want to talk to him about this $500 billion funding commitment NVIDIA is getting from some of the big players on global Wall Street. Sarah Ponchek, she's a senior VP at UBS Private Wealth Management down there in Boca Raton. We're going to get her thoughts on these markets. And Michael McKee, Bloomberg's international economics and policy correspondent, will come and give us the latest preview. Some of this inflation data we're going to get tomorrow and Thursday. CPI, PPI, we'll be all over that. Mike's got some thoughts there. So a lot going on. Bloomberg.com subscribers, guess what? You can now shape the conversation on Bloomberg Radio. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join the conversation. Right now, let's go to Charlie Pellet and get a Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on this Tuesday morning. We have got the Dow, the S&P, NASDAQ higher, NASDAQ barely up by 0.01%, up 1 point there. Little changed. S&P up 8. That is a gain right now. Just about 0.1%, with the Dow up 99, higher by about 0.2%. Traders driving bonds higher. Most stocks higher as hopes for a deal to revive the Strait of Hormuz spurs a drop in oil prices. WTI, West Texas Intermediate still above 81, 81.90 right now, down 0.3%. Barrel of Brent, 87.40, down 0.4%. NASDAQ 100 index higher by 0.2%. Composite index just turning lower right now. The SOX, the Philadelphia Semiconductor Index, up now by 1.6%. The VIX holding right around 15. Year 2-year 4.21%. The 10-year 4.68%, and the 30-year 5.23%. Gold down 0.2%, 43.84 the ounce. West Texas Intermediate again right now trading lower by just about 0.3%. Wall Street is looking ahead to tomorrow morning's CPI report as they also keep an eye on what's going on with oil. Karen Mena is fixed income investment director at Federated Hermes. She was a guest this morning on Bloomberg Daybreak.
We also know that we have less inventory now, right? We're in a less stable position now than we were in the spring. So again, an enduring price pressure on oil with all that it fades into the rest of the economy would put pressure on prices, inflation, and yields up, price down for the bond market.
Karen Manna of Federated. Again, we do have the 10-year right now, 4.68%. Intel raising $20 billion in an upsized share sale, a third more than it was targeting when it announced the deal Monday morning. Intel right now up by 0.5%. Alexis and Paul, you guys on any of the dating apps?
Oh, no. My husband wouldn't like that.
Fair enough. Paul Sweeney?
No, sir.
All right. The reason I asked, we got Bumble now allowing men to make the first move in messaging on its dating app, marking a major reversal from the company's signature Women Go First model. Bumble shares, they're up now by 1.1%. That, my friends, is a Bloomberg business.
In real life, lots of guys make the first move, do they not? Am I old-fashioned?
Bumble, its selling point, its distinction was that women make the first
call the
move.
shots.
And I can understand the advantages there. I get the business model. Little surprised at the reversal.
Very good.
See if it works.
Yep. Try the pellet. Thank you so much. Appreciate that. With the Bloomberg Business Flash. Looking here at these markets, as Charlie was just reporting, not a whole lot going on out there. Feels like certainly a Tuesday in August. I'm looking at volume, trading volume on the S&P 500, off about 14% below kind of where it
It's called the summer lull.
Yep, very
Paul.
good.
Although I must say, even though it's up just 7 points, the S&P is at a record high.
Yep, there you go. Always, record high after record high. We're getting used to it. Let's take a look at some of the stocks that are on the move today. We can do that with Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, I want to start with one of the biggest movers this morning, one of the worst performing stocks in the U.S. market, none other than On Holding, ticker ONON. You may know them as the shoemaker backed by Roger Federer. Biggest drop in the company's history. It did go public back in 2021, so not too long of a life cycle. But a 19% sell-off does come after the Swiss sneaker maker basically said, hey, we're not going to lower the price of our shoes. We're going to maintain a premium strategy. Well,
how's that working out for them?
Not too well.
I don't know about that one.
In a market where we're seeing consumers shifting towards some of the more discounted products, obviously, I'm a big fan of the sale rack. So on sneakers, I do have a pair.
Oh, you do?
Down about 19%.
Okay. We were talking, Tom Keene and I, we don't have any. Paul, do you have on?
Nope, Nike. I'm a
Oh, you're a Nike guy. I switch between Nike. Oh, I love Brooks.
Okay.
Owned by
Those
Berkshire
are the
Hathaway.
best. Those are the best.
Very good.
Shoes,
And you don't have to be a runner to wear the Brooks.
Better support though.
Yeah. All right. And this is Roger Federer is a partner, I think, or an investor in On Holdings. All right.
Hims and Hers, is that it?
Hims and Hers, the company that is known for selling discounter knockoff GLP-1s, now only down 1.5%, was down as much as 7.4%, ticker HIMS. This comes after the telehealth company reduced the lower end of its adjusted EBITDA forecast for the year, but sticking to things that are in vogue, saying they plan to enter the peptide market before the end of the year. Paul Sweeney, are you a peptide user?
No, I don't even know what they are. I'm good.
I'm reading. Are short chains of 2 to 50 amino acids. I don't what? No, Tell me more.
I'm good. It's all the rage with kind of the youth generation. Gosh, words are hard today. But basically, Hims is one of the companies that was very much kind of riding the GLP-1 wave up. But now as there's kind of this noise around compound to branded debate, not really working.
It sounds like they're just looking for new ways, new revenue streams at this point, Hims and Hers, because they keep getting stepped on when it comes to the GLP-1s.
And they're the company that initially was kind of the whole brand was if you want to buy male or female products discreetly, they can mail them directly to your doorstep. Now you have a number of competitors.
All right, real quick, Venture Global.
Ticker VG down 4.4%. This is a company that moves liquefied natural gas. Keep in mind, stock still has doubled so far this year. But second quarter adjusted EBITDA missed average analyst estimates. Obviously, really kind of one of those companies that just moves where oil and LNG is trading.
Yep, very good. All right, Bloomberg's Bailey Lipschultz, thanks so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen to 4 or 5 minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We want to get back to the geopolitics. That is a big part of this market mosaic. We can do that with Ethan Brommer, Bloomberg Israel Bureau Chief. Ethan, I guess there's some rhetoric that maybe on the margin there's being some progress made about the Strait of Hormuz. Can you give us the latest? Because, boy, these goalposts are shifting.
They are, and I can only give you the latest as reported. And, you know, it's very, very hard to know. I mean, yesterday the president was talking big guns about how he's going to demand 30 things from the Iranians. The day before, the Iranians were demanding 30 things from the Americans. Today, the Pakistani defense minister is saying that the U.S. and Iran are close to some sort of arrangement over the Strait of Hormuz. So it's hard to know. I mean, obviously, there's some effort to get this thing done. But it's also clear, as I think we've talked about in the past, that each side suspects that it can outweight the other, and we'll see who's right.
Ethan, there's also news today about a drone attack on an oil refinery in Libya. It destroyed a storage tank. What do we know about this?
I don't know much more than that. I know that, I mean, Libya has been, of course, in dispute between two governments in the east and the west since a good 12 years, since the middle of the Arab Spring. And there's a lot of unrest. There was the head of intelligence of one of the sides of the government was killed on Monday. This refinery, I think this oil attack that you're talking about, a drone attack, we don't know what it's from, but we know that the blaze was pretty intense, yes.
So, Ethan, you're in Tel Aviv right now.
Yes.
The folks on the street, I mean, are they concerned that President Trump may just literally walk away from this thing, if for no other reason than he's tired of it? It's not good domestic politics, and they may be left with maybe a less than ideal situation?
They are very worried about that in Israel. You're right, Paul. I mean, there's been a sense, you know, there was a sense until a month or two ago that this was the best friend this country ever had, and then suddenly he seemed to be losing interest and pulling away from the things they cared about most, which was ending Iran's ability to make a nuclear weapon and its ballistic missile program and its support of the proxies like Hezbollah and Hamas and the Houthis. So a lot of sense here of concern, of worry. It is also true that every time it looks like Trump's walking away from it, he doesn't quite walk away from it, and so it's hard to know. But yes, there is, and of course the other thing is that the Israelis feel that their only option is to go with the Americans. So it's not, it's a time of insecurity in this country about that, that's for sure.
I'd have to think that the midterm elections, of course, are top of mind for the president. Oil continues to hover near $90 a barrel for Brent. I was driving this past weekend in Pennsylvania, and it was hard to find gas under $4 a gallon. So that continues to be top of mind. Is that the thing that you think is driving a lot of this for President Trump right now when it comes to taking a hard line with the Strait of Hormuz?
I think you're right. I mean, it's clear that you know, whether you consider craven or appropriate. I mean, if he can't keep his party in power in November, it's a problem for him. And high gas prices are a classic issue in the United States. And as we know, this war was never popular in the United States. Nobody quite felt that it was a war that made any difference to the United States. It was something they thought was being fought for a foreign country. So yeah, at the same time, as we've said to one another before, I think that President Trump does also worry about Iran as a power that's an enemy of the United States, opponent of the United States, and so he does kind of wants to win this fight. So he's torn. And of course, Prime Minister Netanyahu is torn between trying to keep Trump happy and keep his base happy here, which is very worried about the United States walking away from the war. So there are all of these factors in a kind of complex mosaic, as you said earlier, and it's very hard to know where it's going, to be honest.
All right, Ethan, thank you so much. We do appreciate your time. As always, Ethan Bronner, he is Israel Bureau Chief for Bloomberg News. He is based in Tel Aviv. Talk about having boots on the ground there for War, Bloomberg News, having some people right there, give you a sense. I always like asking the folks that we have on the ground, kind of, what are the people on the street? What are they thinking? What are they saying? You know,
that's really
is it
what
something
matters.
Different? Is it something different than what the government's saying?
And oftentimes it is, right?
Oftentimes it is, and so we'll keep on top of that. Again, I'm just kind of looking at crude oil, absolutely unchanged on the day.
It was above 90 earlier in the session, though, so it has really pulled back.
Yep, absolutely. So we've got WTI crude oil, $82, Brent, 87, almost $88 per gallon, per barrel. So we'll keep an eye on that. The markets are mixed here today. Coming up, we're going to check in with Ed Ludlow. There are a million technology headlines out there, so we're just going to, go right at it with Bloomberg Tech co-anchor Ed Ludlow with the latest on all things Silicon Valley. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. S&P 500 index holding on to gains, higher now by 6 points at 7760. Potentially on track for a record close today, up now by about 0.1%. Dow Industrial is up likewise by 0.1%, higher by 58 points right now. NASDAQ Composite Index lower by 4, little change there, down under 0.1%, but the NASDAQ 100 Index up now by 0.1%. We've got the SOX, the Philadelphia Semiconductor Stock Exchange Index, right now up 1.5%. The VIX holding above 15, the 2-year 4.22%, 10-year 4.68%, and your 30-year 5.23%. Gold down $5.50 the ounce to $43.85, down 0.1%. Crude WTI right now, little changed, 82.17 a barrel, up by under 0.1%. Barrel of Brent, 87.76, up also by under 0.1%. The oil super majors pushing higher. ExxonMobil up 7/10, Chevron up 0.5%, ConocoPhillips right now up by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Alexis and Paul. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlett Fu here today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker studio in New York and live on YouTube and Bloomberg.com here. Let's get right to Ed Ludlow. He's a Bloomberg Tech co-host. He's out there in Silicon Valley. We don't know what the heck he's doing out there. We have great offices out there in San Francisco, by the way. Ed, there are literally countless number of tech-related headlines that we could talk to you about today, but I'm just going to go to the biggest number I can find, and that is U.S. investment giants, including Apollo, Blackstone, BlackRock, Brookfield Asset Management, are partnering with NVIDIA Corp., another name drop, to source $500 billion in financing for artificial intelligence infrastructure. Can you explain what's going on? I don't know what it means to source $500 billion in financing.
Well, to source $500 billion is to go to those big Wall Street firms, investment managers, and say, find us the capital, find the investors. And we don't know the profile of the investors yet. But the pitch for NVIDIA is to take NVIDIA's compute platform, literally rows and rows of servers, and make them an investable infrastructure asset class of their own. So those 6 groups from Wall Street go out, find the funds or the investors. Then what Bloomberg's reporting is you take a special purpose vehicle, some kind of entity. That entity is the one that raises the money, pays for the NVIDIA compute. The compute acts as collateral, and then you rent it out to an NVIDIA customer. And it literally greases the wheels. There's no barrier to somebody being able to finance the project.
You know what? I have to admit, from a banker's perspective, that's genius, I think. It's kind of interesting. Ed, just to you and to others out there, does that raise the old circular financing interest kind of concern out there?
Well, what NVIDIA would say is that in the first instance, this is third-party capital. Again, the 6 Wall Street firms go out and source the capital from investors, and we don't have a good sense of whether that's pension funds or sovereign wealth funds, but the money does not come from NVIDIA. And so there's a degree of separation from the idea that NVIDIA is literally financing its own customers' purchases of the gear. But it is one of a multifaceted concern, right? Which is there are loads of other examples where NVIDIA is on the hook to either backstop or finance the purchase of its own technology. This would just be a separate mechanism.
Yeah, shares of NVIDIA, I'm just taking a look, up a little more than 1% right now. But I want to move over to Intel. Ed, because if you're looking for confirmation of investor demand for stocks sort of along the AI supply chain, you don't need to look further than Intel. Raised $20 billion in an upside share sale. Tell us more about this.
Yeah, initially it offered to go to market for $15 billion. So $20 billion is also kind of a response to the outsized demand. You know, Bloomberg's reporting that there was $100 billion of demand on this deal. $95 a share is where it seems to have priced, which is a bit of a discount. 6% or so from Friday's close. They offered this Monday morning. So, you know, this is a stock that's more than tripled year to date, and is finding its feet in the world of AI. They sell CPUs for data center. And like on the Intel side, the corporate side, the company side, it's not that much new of a story. It is the first time they've done a public share sale since they listed in 1971. Can you believe that? Wow. Yeah. But the whole point for them has been to sort the balance sheet out. Get their house in order.
Just to underscore, you said that Intel stock has tripled, more than tripled so far this year.
Yeah. Incredible. And so, like, you know, why would they go to market? Opportunistic, right? You know, if the stock goes up 160%, then you say, well, what can we do with our stock here? And, you know, already people are asking, you know, who's next? So I would just go on the NASDAQ 100 or the S&P 500 and look at the biggest percentage gainers so far year to date. They also happen to be those in the AI game. It's kind of interesting.
Ed, I know you're out there ground zero in Silicon Valley for a number of years. My question is, do the folks in the Valley recognize that this is truly a unique time and space? I've been schlepping out the Sand Hill Road in Silicon Valley for 40 years, including the dot-com bubble. This is nowhere near anything I've ever seen before. The dollar amounts are just extraordinary. It's affecting all parts of the economy. Do people out there know that they are in a very unique time and place?
They do. You know, it is a tectonic shift, and it's happening right now. You know, 2026 is the moment, and I say that based on so many discussions with venture capitalists, CEOs on the infrastructure side, those that are like at the coalface of developing next gen technologies. And the only thing I would reflect on is, like, when I moved here in 2018, I kind of felt I'd missed the boat a little bit. Think about like the social media wave, the kind of obsession with iPhones. I was so wrong. You know, AI is just completely different. It's next level. And it's astonishing the numbers involved. As you know, the big difference this time around is the balance sheets of these companies are just eons away from where they were in 2000, right? So that's why everyone's kind of chill about it.
Yep, you're absolutely right.
We're chill about it.
Yeah, we're chill about it. No, you are so right. The profitability for these companies, the capital structure for these companies, the sources of capital for these companies is just extraordinary and so vast. And you just got to really ride the wave, I guess, and try to participate as an investor. Ed, thanks so much for joining us there. Ed Ludlow, Bloomberg Tech anchor. He's out there in San Francisco. It's such a resource for us to have so many talented folks out there in San Francisco, in the Valley, giving us
making sense
the latest.
of it all.
Yep, and we've got a huge Bloomberg News bureau out there, so we've got a lot of folks out there getting you the good information firsthand, and we appreciate getting some of Ed's time. Let's get back to these markets. Not a lot going on out there, and that's okay. It's August. You know, it's a Tuesday in August. We don't have to go.
We're hanging out near record highs for the Dow and the S&P.
Yep. Let's check in with Sarah Ponczek. She's a senior vice president at UBS Private Wealth Management. She's down there in Boca Raton. Sarah, what's the conversation you're having with your clients these days? Is it one of, do I stay in the market? Do I take some profits? How long can this profit engine continue to go from corporate America? What are you chatting about?
All of the above. I would say, namely, right now, it is, can this rally continue, and what should I be doing with my portfolio right now? And you mentioned, you know, it's a Tuesday in August down here in Florida, if you can believe it or not. School has started, so back to school, back in full swing. I know, it's crazy. I can't believe summer is over just about. But what we did was we put together a little bit of a summer checklist for our clients so that they can think about and make sure that we are approaching their portfolios in the correct manner. And at the very top of that list is just asking yourself, and this can be for anyone, is your equity portfolio not only too concentrated in a handful of stocks, but has your strategic asset allocation just gotten way out of balance? There's no secret that this year the market has performed very well. We see double-digit gains yet again in the stock market. You just mentioned, Alexis, you have the S&P and the Dow right now hanging on to record highs. But if you look at over the last 3.5 years, the stock market is up, north of 75%. So what that likely means is if you haven't taken profit since then, you haven't rebalanced, probably a little bit out of whack. So for any clients who don't feel comfortable with the risk, for any clients who might have debt against their portfolios, we are now asking the question, is now a good time to take those profits, reassess your risk, and just bring everything back in line with comfort levels and risk tolerance? And that doesn't mean that we don't believe the market continue to run. We're still optimistic on the market from here. It's just making sure that you're not getting over your skis.
Nearly 90% of S&P 500 companies have reported, and many of them are out with really strong numbers here, justifying, I think, a lot of the evaluations that we're seeing. But it's not just here in the U.S., Sarah, right? I mean, Europe is also producing some really impressive numbers. Are clients looking to Europe to diversify the portfolio?
Yeah, you're absolutely right. It is a great point. The earnings season in the second quarter was absolutely phenomenal. I know you guys have covered this, endlessly, and we've been discussing it as well. This rally that we've been seeing in the stock market, it's really not a hope rally. It's been an earnings rally. Earnings have been the driver of this rally that we've seen in the market back to record highs after the volatility that we did see in July. But it's not only in the U.S., it is abroad as well. And we have, since early last year, been encouraging our clients to look to diversify away from the United States. Well, not away. We're still big believers in the U.S. stock market, but supplement your U.S. exposure with some international exposure, both looking to Europe and then also Asia as well. And then I would also add, it's not just a broadening from a regional or geographic perspective, it's also a broadening from a sector perspective. We just came through years in which Earnings growth was strong, but tech was really the sole driver of that. And a major difference that we're seeing this year is that it's no longer just tech. We're seeing cyclical sectors. We're seeing other sectors of the market join in on this earnings rally, which is really supporting the market.
What are you guys doing in fixed income here? I can clip coupons here. Boy, a 10-year treasury for almost 470, 420 on a 2-year. That's not a bad way to make a living.
It's not bad at all. We're still fans of fixed income and bonds, looking to high quality, short to medium duration bonds, not really looking too far out on the curve. It's a difficult conversation to have, Paul, because this is the conversation that so many of us have been having with clients now for the last few years, and bond returns haven't been all that great. Yes, you can clip coupons, but we have seen price volatility and interest rate risk in the bond space. But we are still believers that if you are someone who is sitting on a pile of cash, I mentioned that summer checklist earlier on, another item on our checklist is, are you sitting on idle cash, and should you be doing something with it? Should you be getting invested? And if you are more conservative and you're nervous about, market risk and equity risk, then yes, looking to lock in yields, looking to buy short, medium duration bonds and lock in those coupons. You're right. It's not a bad way to live, Paul.
Very good. Sarah, always great chatting with you. Sarah Ponzik, Senior Vice President now. Wow, she's moving up in the world big time. UBS Private Wealth Management down there in Boca Raton, Florida. A former Bloomberg News employee. Now she's down there in Florida doing it. So good stuff for her clients. Boy, there's just nothing going on in the market. I'm not going to sugarcoat it, try to make it something that it's not. Not much going on. The S&P's up 6 points.
Volumes are so weak.
Yep,
Everybody's
Dow's up
away.
30. Sure, good for them. Good for them. They're down the beach. They're having fun. The NASDAQ down 17 points. I understand some people go to lakes as well.
I'm a big fan of the lake.
I know people that like the
Take
lakes.
the kayak out, go on a lake, take the paddle board. Yeah.
I want to go down to the Ozarks sometime because those people know how to have a good time.
Let's
on
take
the
the
lakes.
show on the road.
Yeah, I mean those people down there, they're lake people and they know how to have a good time. I'm going to try that out sometime. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline right now on the Bloomberg: Russia has freed a former U.S. Marine jailed in that country since 2022. That according to Reuters. But again, just getting word that Russia has freed a former American Marine jailed there since 2022. The Dow, the S&P higher, NASDAQ now moving lower. Stocks are wavering as investors keep an eye on what is happening with crude. All of this ahead of the CPI report tomorrow morning. Right now we got the S&P at 77.56, potentially on track for a record close today, up 3 points right now, up under 0.1%. The key, though, green on the screen, at least for the S&P. The Dow up 18 right now, up by about 0.1%. NASDAQ lower, little change, down 0.1%. NASDAQ Composite down 28 right now, 26,577. The Bloomberg Mag 7 Index lower, little change, down under 0.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.3%. The VIX right around 15. The 2-year 4.22%, with the 10-year 4.68%. Gold, little change, flat on the day right now, 43.91 the ounce. West Texas Intermediate crude up 0.2%. 82.31 a barrel on WTI, bouncing around. Brent 87.94, up now by about 0.3%. So again, we've got the CPI report coming out tomorrow morning. David Rosenberg is president and founder of Rosenberg and Associates, and this morning on Surveillance, he questioned the strength of the U.S. economy.
That's all Kevin Warsh talked about at the podium a few weeks ago when he talked about the solid U.S. economy. He only mentioned AI. It's 7% of GDP. It's a growing 7% of GDP, but the other 93% of GDP, that ain't going so well right now.
David Rosenberg of Rosenberg and Associates interviewed this morning on surveillance. And we'll have a whole lot more on the economy, specifically the CPI, with our Michael McKee coming up in just a moment. Apollo Global Management is providing $2.6 billion in financing to the owners of the Yankees. It'll consist of debt and equity. Right now we got Apollo up by 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Alexis and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Looking at the existing home sales, came in at 4.06 million.
Yeah.
Seems like we've been there forever. And I'm wondering, is that like low, really low? So if you go GP function on this thing on the Bloomberg terminal, I went back as far as you can go, like 25 years. I don't know, the average is kind of 5.5 million seasonally adjusted rate.
Okay.
So we've been bopping along down here at 4. It's like, that's morbid.
You know what? The median sale price is over $434,000. So that's a deterrent for a lot of folks. And then at the same time, you've got mortgage rates at their highest level in about a year.
That's affordability issue. Michael McKee joins us, international economics and policy correspondent for Bloomberg News. Can you fix the Fed? I mean, the Fed looks at the housing market, they can lower rates, but the data is not there to lower rates for them, is it?
No, it's not. And so the housing market is sort of collateral damage in all this. It's an unusual situation because for years, housing was the industry that reacted most to the Fed because mortgage rates go up and down based on what the Fed basically is setting the rates at. And then we went through this extremely long period of zero interest rates, and people got very low interest rates, and they're sort of locked in. They don't want to spend the money to go from a 3% rate to a 5% rate. So there doesn't seem to be an easy solution to this.
All right, so this July CPI report out tomorrow, highly anticipated, going to be coming on the heels of that softer than expected jobs report last week. I'm wondering, though, are we in for a head fake? Could we have a negative month-over-month headline inflation report tomorrow?
Well, I suppose in the sense that we're only expecting, according to economists, 0.1% for the headline. And so it wouldn't take much to move it negative, but economists are pretty good at the inflation indicators forecasts. And so I don't think it's going to happen, but it is certainly possible. Now, either way, you're going to see a year-over-year decline because of base effects. The July report from last year will fall out of the statistics, and so we're expecting to see year-over-year rate tick down to 3.4%. But the thing to remember is that is still too high. It's still way above the Fed's 2% target, and absent oil and tariffs, we've been in that range for quite some time. And that's why you have the hawks on the Fed saying we need to do more, because even if we get rid of the war, we are going to have inflation above target.
Do you ascribe to the rule of thought? I don't think it's consensus at all, but it's just, I hear it out there occasionally, which is maybe just in the U.S. our inflation is structurally higher than 2%. Maybe it's because we live in a world with tariffs or lower immigration, so wages are higher, and it's Build America, which is more expensive than building in a low-cost jurisdiction. Is that just structurally, maybe our inflation in this country is higher than it?
And should we get rid of the 2%? Should the Fed get rid of that 2% target?
It is a subject of discussion in the economics profession and the central banking profession, and what it comes down to is the neutral rate, the rate of interest that neither stimulates nor holds back the economy. And the feeling among a lot of people is that it has risen because of productivity and because of some of the supply shortages. So at this point, there's talk of, should we abandon 2%? And there is certainly an argument to be made for, instead of a 2% exactly target, make a range, so that you don't, it's impossible to hit on a month-over-month basis an exact number. But then what they're talking about is changing the goalposts, or changing the goal in the middle of it all. And so nobody wants to do that, which is why they haven't even publicly discussed it or discussed it in their meetings, is they think that that would send a very bad signal to Wall Street.
As we get used to Kevin Warsh speak, what would the report need to show tomorrow, the CPI report, to change the equation for the Fed when it comes to the path of interest rates?
We don't know, because Kevin Warsh isn't telling us, and that's one of the reasons that people have been criticizing him. He doesn't give a reaction function, doesn't give a kind of what I'm looking for out there in inflation. Not forward guidance, we're going to do this
if
at
that,
this date,
right,
that, but this is what I'm looking for. So, and you see Bill Dudley, the former New York Fed president, has a Bloomberg column out today on that.
That was pretty.
He was tough
harsh,
on him. Yeah, he's tough on him. But, well, I guess Bill knows wherever he speaks, since having been an insider for many years there. But at this point, it's probably not going to change the dynamics a lot, because we have another CPI, PPI, and PCE report
before the next meeting.
So what they'll look at this as part of a trend, and if it goes down, that's good, but it doesn't definitively put them on the track to hold rates, because they'll have to wait and see what happens with the August numbers.
I mean, a lot of folks are saying we saw peak inflation. Was it last month? And you know that, but that was before we kind of got the war, or energy kind of popping back up. I can't say
4.2%, I want to say.
Well, you're not going to have any confidence at this point in any kind of decision you make, because you don't know what's going to happen with the war and with energy prices. And it goes beyond energy, obviously, because diesel prices are at their highest, and that gets into all kinds of transportation of all products and things like that. So it broadens inflation out. The petroleum byproducts that are used in chemicals manufacturing, plastics manufacturing, all that can have an effect. So you can't have a whole lot of confidence in what you're going to do. But if they do see continued movement lower, that would keep them on hold. We're nowhere near cutting rates yet.
Yep. All right. I guess we'll pay attention tomorrow. And then, of course, 30 seconds, you guys go out to Idaho, Wyoming. Where do you guys go?
Yeah, we go to Jackson Lake Lodge.
Okay, Jackson
Grand Teton National Park, north of Jackson, Wyoming.
You always have that beautiful backdrop behind you. I'm so jealous.
Everybody always says that, oh, that's fake, and then they go out there and their jaw drops, and they go, oh, it's real.
30 seconds. Is he going to take this opportunity, Fed Chair Warsh, to maybe stir the pot a little bit, or no?
I don't think he wants to stir the pot. He doesn't want to move markets, but he may take the opportunity to explain more of his thinking and what he wants to do at the Fed.
Clarity would be nice. Maybe we'll get a little bit of that.
Maybe a little bit. I tell you, I did go out there, that Jackson Hole area in the summer. Spectacular. One of the best trips we ever took. That whole old faithful thing, worth seeing.
The geyser.
The geyser.
All
I mean, awesome. Mike McKee, thanks for joining us, international economics and policy correspondent for Bloomberg News. Breaking down preview a little bit here on the CPI data tomorrow, PPI data on Thursday. We'll stay in touch with all of that stuff here. Slight green on the screen here today. Not a lot going on. Enjoy time off if you're enjoying it. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, here we go. Alexis Christopher sitting in for Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. And this is a protein-free studio, folks. If you want to talk chicken or shrimp, say chicken or shrimp. Don't say protein.
All right. So, I know we really riled him up.
And if you're
said protein.
thirsty, go get something to drink. Don't walk around with these huge bottles of water.
Oh.
That's another thing.
The Yetis are still in vogue.
Yeah.
That's
but the kids are just...
They're all about it.
Different thing. Yeah. All right. Very good. Speaking thereof, let's go to a really cool story on the Bloomberg terminal here. And just this lead, which is what if you're a journalist, you talk about the lead. This one's a good one. Leveraged ETFs account for 2% of assets, but roughly a fifth of trading volume in a $17 trillion ETF.
I mean, that says it all.
Unbelievable. These people are nuts out there. Denitza Sokova, she's a cross-asset reporter for Bloomberg News. She's here with the studio, in the studio with this story. Talk to us about leverage ETFs, because there's a 2x NVIDIA, 3x that, 4x this. People are really trading these things, aren't they?
Yeah, it's a really fascinating trend. We've been writing about them for like 5 years. Currently, the industry is 250 billion. That's very small for the massive ETF industry, but they're traded a lot. They're traded like crazy. You can look at all the charts, and that trading has grown over time. So interestingly enough, a few years ago, those products were primarily a retail thing. All the retail traders loved buying 3x NVIDIA, 2x NVIDIA, and they're very excited about that. Now we see more institutions stepping in, especially around the close. In the last 30 minutes of trading, you're going to see a massive spike in trading of those, and you're going to see a lot of the banks looking at those flows. Some banks say that for every 1% of move in the index, those ETFs rebalance 10 billion, so that's a lot. And obviously that's become a lot of topics when we see a big sell-off or a big rally. Everyone's asking, are those ETFs exacerbating the moves?
Well, that's what was happening in South Korea with the Kospi, right? And SK Hynix, and I think was it Samsung as well?
Yeah, Samsung and SK Hynix. I feel so that's the latest episode that makes us talking about it all over again. The interesting case here is those stocks are obviously less liquid compared to like a lot of the concentrations, and that's what we have in the story. Currently, 58% of the concentrations of leverage ETFs is just in a handful of AI names. SK Hynix and Samsung became a big thing. There was a product that launched in Hong Kong that became an instant favorite among retail traders. There was a few other ones in South Korea. So at some point we saw so much volume in those products that we saw leverage ETFs indeed adding volatility
I'm wondering,
to those stocks.
When are regulators going to step in?
They actually did in South Korea, interestingly enough. So we've seen from the top, which is around the end of June, we've definitely seen those ETFs seeing less trading, but this is very South Korea specific. In the US, we've actually had some regulation in the past. We no longer have new ETFs that are launched with 3 times leverage. Okay. And even some issuers tried to do 5 times leverage a few months back. And this is one of the few times when the SEC stepped in and said, hey, no, we're holding this, no 5 times. But, you can still get 2 times, and if it's a very leveraged name that already has a lot of retail frenzy, it can get pretty volatile, and that's what's happening with SK Hynix.
Folks, I way undersold this story. Now I get it. This is a big take story, which means it's one of our top stories on the terminal of the day. These big take stories take weeks and months to report and source and do all that kind of stuff and get checked, and they got really cool graphics to make the story really cool. So go to Bloomberg.com, or if you're on the terminal, check it out. And it's a green B, which means that's important to you guys. It's exclusive.
It is.
So my question here is, there's enough volatility, it seems like, in the underlying names, whether it's an NVIDIA or any of these AI-dominated kind of stories. That's enough, I would think, risk for anybody, but no, 2x, 3x, both on the upside and the downside. If you want to bet something's going to go down, you buy a 2x NVIDIA on the downside, right?
Exactly. Well, a few years back, leverage ETF was kind of the wildest thing in retail investor toolkits. Now you can argue that perpetual futures add even more of that.
What's perpetual futures?
Perpetual futures give leverage up to 100. They're mostly in crypto now, but we see them spreading in equities. So, maybe 3x is nothing when you can do 100x.
You were talking about retail investor interest in these leveraged ETFs. What's the risk here, the underlying risk to the retail investor? What should they know?
Actually, for the retail investors is the biggest, because there is a volatility drag. So if you're holding this, the advertised holding period is 1 day. Many people are holding them for longer. And no matter if it's short or long, the volatility of decay, the massive moves we see day to day, can really impact your gains and exacerbate your losses. So for an average retail trader holding this for a long time, no matter if you're right or wrong, you may actually end up either getting a big part of your gains disappear or getting your losses
Even if the
exacerbated.
stock ends up where it started.
Exactly, yeah. So definitely a big thing. A trend we've seen, retail traders are holding them for a little bit shorter period. But like, for example, a year ago, they were holding them for quite a few days. So definitely a lot of retail traders were losing money on that. That said, just last week when we saw that big sell-off in semiconductors, ETF retail traders go all in on those leveraged ETF, and they won big. So, sometimes it's a good thing. People make money out of it.
All right, the headline is AI-dominated leveraged ETFs are rattling markets. What could go wrong with a leveraged ETF on AI? Denitsa Sokova, fantastic effort there. Let me give some credit to your peeps on that team, because it wasn't just you had a team, which is what we usually get on these big take stories. Jin Wu, Denitsa Sokova, and Denise Liu. Some great reporting there. Again, check it out on the terminal. It's the big take story. It gets read. It's important internally. It's important for our readers. And you can read more of this story on the Bloomberg and at Bloomberg.com/big take. So some good stuff there. Again, leveraged AI ETFs. What could go wrong?
It's all the rage.
Exactly. That's what the folks are doing. S&P up 6 points, the Dow up 10, and the NASDAQ up 3. That screams a Tuesday morning in August. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. This is hour 2 of the Bloomberg Intelligence program. We're going to check out Nathan Dean. He's down there in Washington, D.C. He's a senior policy analyst for Bloomberg Intelligence. Is anything going on in D.C.? Is Congress doing anything? If so, Nathan Dean will know. Randall Williams, Bloomberg Business of Sports reporter, going to come back to us with this really cool story. Apollo Inc.'s $2.6 billion financing deal with the New York Yankees. So that's pretty cool there. We'll break that down. Danielle Saturi, Bloomberg restaurant reporter on Guac Signal, sparked Chipotle's frantic bid to recall jalapenos. No idea what's going on there, but when you talk about guac, jalapenos, I'm all in. Adam Phillips, Managing Director of Investments at EP Wealth Advisors, will give us his thoughts on these markets. So a lot coming up in the next hour for a very quiet trading day. But let's kick it all off. Charlie Pellet.
Hi, thank you very much, Paul and Alexis. We have got the Dow, the S&P, NASDAQ. We're in the green right now. Potentially could see a record close today on the S&P. This Bloomberg Business Flash is brought to you by Franklin Templeton. 75 years ago, Franklin Templeton helped open capital markets to individual investors. Today, they're opening access to private markets. Learn more at ftprivatemarkets.com. As mentioned, stocks joining bonds higher. The Dow, the S&P, NASDAQ all advancing a 0.1% gain right now on the S&P, up 7 to 77.60. Again, underscoring could see a record close there. We got the Dow at 53,990 right now, up 15. That is a gain of under 0.1%. Little change there. NASDAQ up 9, also little changed, with the SOXO surging 1.4%. Philadelphia Stock Exchange Semiconductor Index, the VIX right around 15, the 2-year 4.22%, the 10-year 4.67%. Gold up $5 the ounce, little change there, 43.96. And West Texas Intermediate Crude. Everybody's watching oil today, specifically the Strait of Hormuz. WTI gaining now by 0.5%. Everybody hoping for a deal. WTI 82.51 a barrel. Brent 88.28, gain there of 0.6%. As for the overall market, backdrop and the gains that we have seen in recent years, Sarah Ponzik is Senior VP for Wealth Management at UBS Private Wealth Management. She was a guest right here on Bloomberg Intelligence.
There's no secret that this year the market has performed very well. You know, we see double-digit gains yet again in the stock market. You have the S&P and the Dow right now hanging on to record highs. But if you look at over the last 3.5 years, the stock market is up, north of 75%. So what that likely means is if you haven't taken profits since then, you haven't rebalanced, probably a little bit out of whack.
Sarah Ponzik of UBS, right here on Bloomberg Intelligence. Again, oil is advancing right now. The oil super majors also advancing. ExxonMobil up by 0.8%. Chevron now up 0.7. ConocoPhillips up by 1.4%. Alexis and Paul, that, my friends, is a Bloomberg Business Flash.
All right, Charlie Paul, thank you so much. We appreciate that. Alexis Christopher, she's sitting in for Scarlet Food today. Scarlet, I'm told by your people, will be back on Friday. We'll see if that happens with this nice weather. We're here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie was just reporting, not a whole lot going on out there in the marketplace. Certainly a Tuesday in August, that's for sure. It has that kind of feel. Let's take a look at some of the stocks on the move today, and we can do that with Bloomberg's Vildana Heinrich. Vildana, thanks for joining us here in studio. What are you looking at?
Yeah, thanks so much for having me. I'm looking at shares of Him and Hers Health. That's ticker HIMS. Very good ticker for the company. But shares are down. Not a great day. And that's after the telehealth firm posted a second quarter loss on Monday that fell short of Wall Street estimates. But it's actually other headlines that are catching people's attention, which is that the company said that it's going to be focusing on selling, on getting into the peptides business.
Yeah, the peptides.
Exactly. Okay. Peptides are the big thing now. It's going to enter the peptides market before the end of the year. It will look to sell peptides that are already allowed popular compounds. I'm not even going to attempt
Well, what I'm doing right now is I'm typing into the Google search bar, what are peptides?
I did that earlier. I
So
know, and I
keep
still
going.
didn't get any clarity.
I'll catch up to you.
Yeah, they're highly popular. There isn't a lot of clinical evidence for some of them.
A lot of young folks like the peptides. Yeah.
Young folks and, people who are looking to live longer, people who are looking to lose weight, people who want beautiful skin. This is
sign me up for all of the above.
Yeah, I wanted to, but
but I point out Hims and Hers. I mean, I remember looking at pre-market; it was down a lot. Now it's down 0.8%, so it has come back,
leveling off a bit. Yes,
yeah.
But this really caught my attention because peptides are such a big thing, and we've recently also on my team looked into how people are using cryptocurrencies to pay for peptides. So it really is something that
thickens.
Okay.
What else have you got?
I'm taking a look at On Holdings, another great ticker, ON. That shares of that company are down some 20% right now. The sneaker maker. Second quarter sales were lower than expected. The Swiss brand is holding off from discounting some of its older shoe models ahead of some product updates that they're rolling out in the U.S. market. But the U.S. market, we know, is so competitive, and so
it's an interesting sort of move to say we're not going to meet the consumer where they're at. We're just going to keep our prices where they are and not cut prices.
And some of their most popular sneakers, which I don't have a pair. I'm a big runner, but I don't have. But again, this is why I want to take a look at shares of this one, because it is so popular with a lot of runners and with a lot of people.
What do you wear now? That I'm curious. You're a runner. What
Brooks.
I was
Always.
talking up the Brooks last.
All right, I'll have to ask the runner in my family what she
Always
wears.
Brooks, but I've tried the On sneakers are quite
Supposed
comfortable.
to be very good. Okay.
Some of their pairs are $190, and so
it's no joke. It's an investment in your feet. It's an investment in your feet. All right, and your third stock for us today?
Riot Platforms, ticker RIOT. Shares are up this morning. This one is close to home because I've covered crypto for so long, and this is a Bitcoin mining company that has recently sort of started to sell AI data center capacity. So it's the crypto to AI pivot story. And Bloomberg reported that it will be striking a $9.1 billion deal with Anthropic. And so as soon as that news came out,
we saw a nice pop in the stock.
Right,
Riot Platforms. Okay.
All right, Vildana, thank you so much. Appreciate that. Vildana Heinrich, cross-asset reporter, and I guess a runner. I don't know. I don't understand the whole running thing.
She does it all.
Yep. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I want to get down to Nathan Dean. He's down there in Washington, D.C., Bloomberg Intelligence. He is our policy analyst. He knows what's going on in Congress and in D.C. Quite frankly, not a lot's happening in Congress. I don't know what he's doing every day because I have not seen much legislation come out of Congress.
And it is August, so.
Nathan, thanks for joining us here. Does Congress know that we've attacked Iran and we're kind of out of war there? Are they doing anything? Do they care? What's going on?
So they know about it, but there's not much they can actually do about it. I mean, when it comes specifically to President Trump's strategy, it is President Trump's strategy. And you're going to continue to see war resolution votes between now through the elections, but they're not really going to do anything other than serve as political fodder. I mean, the Democrats want these votes to happen because it's going to put moderate Republicans who are at risk of potentially losing their seats in the midterms on the record saying that they are either in support of this war or they are against this war. Now, you are going to see a little bit more debates later when Congress comes back in September about funding the war. President Trump is pursuing this reconciliation bill. The Senate failed to unlock this before they left through August recess, but it's about $75 billion. And if you're looking at it from an investment point of view, it's mostly tied up to anti-missile counter-drone technology. So think RTX, Raytheon, Northrop Grumman, et cetera. But again, I don't really have high hopes for that. I actually think there's going to be a significant challenge. I'm giving you about 30% chance that bill goes through by the end of the year.
So Nathan, what other ways can lawmakers pressure President Trump to end this war, especially with the midterm elections on the horizon?
So it's through the perception of public pressure. I mean, Paul, you had a guest on Surveillance this morning who said, look, President Trump essentially has two choices here. He either has to accept that the Iran is going to have control of the Hormuz, or you're going to have a situation where the economic situation determines that President Trump has to leave the Gulf. Now, I think what happens here is that President Trump is essentially just waiting and seeing how this plays out. But in the interim, the Democrats are going to continue to push this message back at home because, as you mentioned, they're on August recess. And as a reminder, because it's an election year, they're gone through the entire month of October. So for every day that President Trump's not addressing affordability and he's stuck on Iran, that's Democrats really saying, look, he's not addressing affordability, he's addressing Iran. And with President Trump's approval numbers quite low at the moment, this is a situation where President Trump really needs a resolution fast, but it's just not going to come unless he decides to.
Nathan, so talk to us about the calendar for the remainder of the year. And is there anything that we or the markets should be looking for in terms of legislation coming out of D.C.?
Yeah, so Congress has 14 days in September. The Senate has 14 days in September before September 30th. Now, we aren't going to have a government shutdown. I'm at a 20% chance because right before the Senate left, they actually passed a continuing resolution until December 11th, puts it in the lame duck period. Like I said before, this idea of a reconciliation bill, you're going to see some chatter about this. I don't think it actually can get done. Same thing with clarity. You know, my hope on clarity was that it was going to pass before August recess. I think the schedule's going to be a little bit tight. The one thing to keep in mind, though, is there is this Russia sanctions bill. It's the Lindsey Graham Act of 2026. They got a 90-6 vote in the Senate. It's overwhelmingly bipartisan, which would allow President Trump a tool to put new tariffs on Russia up to 500%, and the top 5 countries that purchase Russian oil, so think India, China, and Turkey, up to 100%. Now, it's a tool. It's not meaning that tariffs are coming. But if you look at tariffs from a headline risk volatility perspective, you know, that bill in particular could lead to a scenario where on Monday morning, people wake up and they see it on Truth Social that President Trump's announcing new tariffs only to either walk them back or subsequently change them 2 to 3 days later. That's probably the more important bill that's going to come in the September timeframe.
Is this beard new, Nathan?
You know, it's hot in D.C., but, you know, it's maybe I've seen The Odyssey too many times. I don't know.
All right, very
Going
good.
for the Odyssey look. I like it, though.
Yeah, all right.
It's working for you.
My suggestion was stand a little closer to the razor next time. But that's Nathan Dean. He is our expert, senior policy analyst for Bloomberg Intelligence. If anybody knows what's going on down in D.C., it's Nathan Dean. He follows that stuff very closely, so we appreciate getting a few minutes of his time. Really cool story today out in the business of sports. This is another example of private equity or institutional capital in general investing in a professional sports. In this one, it's Apollo, inks a $2.6 billion financing deal with the New York Yankees. How about that? Randall Williams, Bloomberg Business of Sports reporter, joins us here. Seems like a big number. What do we know about this investment?
Well, the money is going to go, it's a mix of debt and equity. Now, the exact split isn't known, but you have to wonder what the valuation of this is because of the fact that MLB rules permit private equity firms to own up to 15%. Okay. So if this is let's say that it's half of equity, so $1.3 billion, and it's 10%, that's a $13 billion valuation. Now, of course, I'm just doing that math off the top of my head.
Nice math for a reporter. I like that for a journalist. That's like banker math.
But we don't know. We don't know. This could be 15 billion, it could be 16, it could be lower. We don't know.
But at the end of the day, the Steinbrenner family still in control here of the New York Yankees.
Very much in control. Private equity across sports is not, they're not decision makers. They are cash providers for liquidity, for debt, for stadium financing, for all of those issues. That's what private equity is in sports for now.
I guess what I've learned over my career, just looking at the business of sports, it's a great vehicle, investment vehicle to create value over time. You buy your franchise today at X, you sell it in 20 years for 2X, 3X, 4X, whatever. It's a great return. It's not a good cash flowing investment. So, so these types of deals, they give some liquidity to the family or whoever owns it.
Well, you have to wonder, the timing of this deal is somewhat interesting because of the fact that the MLB CBA negotiations are currently ongoing. They're not expected to.
A lot of people are saying there's going to be a strike, right?
Exactly. A strike or a lockout. Probably a lockout more so than a strike. But in all likelihood, if that happens come March, there won't be a season. Teams won't be getting that revenue. And so maybe this money goes towards that. All of those possibilities come to mind. But in terms of what you're saying about, this being low cash flow, the real question that remains to be seen across sports is how private equity exits these sports teams, because the valuations, as we've all said dozens and dozens of times, they continue to rise. So who buys this stake if it's a $2.6 billion deal? What happens when this is $6 billion value? Who's the person that raises their hand?
To the New York Knicks, right, and the New York Rangers. Where do things stand with those spinoffs from MSG?
I think they're still in progress based on what we've last heard. But of course, James Dolan has said these franchises are continuing to rise in value. This would potentially unlock some of that. You have to wonder what either one of these things would sell for, and what billionaire is going to raise their hand to buy something that could potentially be worth $15 billion.
And you were explaining to me just earlier during the surveillance show. This isn't the first time private equity. I mean, we're starting to see this more and more, aren't we? Where private equity or just institutional money is out there.
And I think the reason for that is because there's just not a lot of people who want to. It's just not a lot of people who want to own 10% of something, but put $1 billion into it, and the only thing that they get is to raise their hand and say, "I'm an owner," and they might get a sweet.
The cool factor, right?
And they might get a sweet ticket from time to time that they can already afford. A billionaire who gets equity, the perks that come with that just aren't that great. Whereas private equity, generally speaking, is not going to be concerned with flying on the team plane and being in the locker room and all the things that may be.
And I think I read that this is the largest investment Apollo has made in terms of a sports team.
I would say it's one of the largest investments across private equity in sports that I've seen. The number $2.6 billion is humongous.
What about just the fan hearing this? A New York Yankees fan goes, "Oh boy, now private equity digging their heels in deeper with the New York Yankees." I mean, what might they expect? Any changes at all? I highly doubt ticket prices are going to come down.
Oh no, Yankees prices are never going to come down. Especially you take something away, a potential lockout, games away. As soon as it comes back, the prices are going to rise. I wonder from a free agency standpoint. A lot of times these things are put in escrow and then they're paid out over time. And so I wonder if that affects how they're managing their payroll, not only within the team and salary, but also owners and executives and all those sorts of things. So it's all top of mind.
And Randall, there's no indication that the Yankees and the Steinbrenners need this money, is there?
They're the most valuable team in baseball. Nobody needs any money until you need it the way that they're saying it. They're saying it's going to debt. But these are not public deals, so we don't know how much they're in debt.
It's so funny, though, because it sounds like they want to be a leaner machine. It makes you wonder if they're setting themselves up to go public. Dare we say it?
I think sports teams could. There's a future for that, but we're not. I don't know that any league is looking at that and formatting it right now.
Yeah, I think it's probably what's happening is obviously many of the leagues you mentioned have allowed institutional money to come into these, so like private equity, because there's not many. It used to be a toy for millionaires.
Right.
And then it became a toy for billionaires, Steve Cohen.
Yes.
And now a lot of these major sports leagues, you got to be institutional.
Last thing I say is what I expect to happen is the private equity cap across leagues to increase per firm. So individually in the NBA, it's 20%, in baseball, it's 15%, in the NFL, it's 10%. I expect the NFL to maybe move to 15%, and so on and so forth.
All right, very good. Randall Williams, U.S. sports business reporter for Bloomberg News, joining us here. I'm going to listen to a sports podcast on the ride home, and all they're going to be talking about is, Yankee tickets prices are going up. That's all they're going to be talking about. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg Stocks Lower, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Tuesday in August, stocks little changed right now. The Dow, the S&P, Nasdaq, NASDAQ all in the red. S&P, however, holding very close to our record, 77.51 where we stand right now. We're down by 2 points. That is a drop of under 0.1%. Dow Industrials down 23, also down by 0.1%. We got NASDAQ down 40 for the NASDAQ Composite Index, drop there of 0.1%. NASDAQ 100 Index just about flat on the day, down by under 0.1%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, up now by 1.3%. Meanwhile, we have got the Bloomberg Mag 7 Index. It is down by 0.1%. Your 2-year, 4.22% with the 10-year, 4.68% now. The 30-year, 5.23%. Spot gold flat on the day, down under 0.1%, 43.88 the ounce, while West Texas Intermediate crude keeping an eye on the Strait of Hormuz, 82.61 a barrel, up by 0.6%. Barrel of Brent, 88.26. That is a gain of 0.6%. Bottom line here, we got stocks moving between gains and losses. Intel raising $20 billion in an upsized share sale, a third more than it was targeting when it announced the deal yesterday morning. Intel shares little changed, up under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and Alexis and Paul, that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. Appreciate that. Alexis Christopher sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we are streaming live on that internet thing. Try, I don't know, Bloomberg.com. We're there. We're also on YouTube, right?
We're everywhere.
Everywhere. Okay, so check us out.
Can't get rid of us.
There. Here's a story that gets you. Chipotle. I'm a huge fan of Chipotle. 3rd Avenue, 62nd Street.
Oh, I know that one.
They know me. They know me.
Yeah.
Apparently, they had some issues with salmonella. Not good. No bueno. Daniela Sartori joins us here, restaurant reporter for Bloomberg News, joins us from our Chicago bureau via that Zoom technology. Daniela, thanks so much for joining us. Talk to us about Chipotle and what's going on with our jalapenos.
So the jalapenos had been linked by public health authorities to some salmonella cases. I should say, you know, right off the bat for yours and everyone's sort of peace of mind that Chipotle pulled the jalapenos pretty quickly. And health authorities have said that they don't have ongoing concerns about people eating at the restaurants. But I think what really stands out here, and I can share more if you want, is just basically how quickly the company was able to really zero in on jalapenos as the culprit here.
Did that result in positivity for the stock? Because I'm looking here year to date down 14%, 1 year return down about 24%.
Look, like some of this information has come out very, slowly over the past week. It's still pretty recent. And so basically last week, we, were first to report that Chipotle had pulled the jalapenos because of the salmonella outbreak. By then, they had already done it a few days ago, and public health authorities were like, yeah, we don't have ongoing concerns. But of course, when headlines like that come out, people do get spooked. And when we published that story, the stock dropped as much as 9.7% that day. I mean, it's recovered a little bit, but sometimes this information takes a little bit to sort of spread in terms of people and health authorities feeling comfortable saying we don't have any more concerns. Go back to the restaurant, basically.
Daniela, this is a big topic, big issue, big risk for restaurants in general, chains, particularly publicly owned chains, that being food safety systems, protocols. Talk to us about what Chipotle does there.
Of course. So, you might all remember that, between 2015, 2018, Chipotle had a series of issues mostly with food handling. And so really they've stepped up their game, and they've invested a lot of money basically into technology that acts as almost like a digital map of their supply chain. So basically the company can go into this system and really look up where every ingredient has been, where it moved from the distributor to a distribution center to the restaurant. And so, what the company was able to do in this case is they heard from the state of Minnesota, hey, we think that something in your guacamole is making people sick. And based on the pattern of where the illnesses were happening and the restaurants that were affected, the company was able to say, we think that the problem is the jalapenos in the guacamole. And then they were able to pull them. And so, it's an example of, many large restaurant chains have invested in these types of systems because, as we were discussing, it's a big issue. The second that an outbreak comes out, people just get spooked and just don't go to the restaurant. And that has huge revenue and profitability implications.
All right, Danielle, thank you so much. Really appreciate it. Daniela Sartori, Bloomberg restaurant reporter on Chipotle. This is Bloomberg.
Now on Bloomberg Intelligence, private markets in focus.
All right, folks, this private market segment is brought to you by Franklin Templeton. 75 years ago, Franklin Templeton helped open capital markets to individual investors. Today, they're opening access to private markets. Learn more at ftprivatemarkets.com. We welcome to our studio Elizabeth Weymouth, founder and managing partner at Graphene Partners. Elizabeth, thanks so much for joining us here. How do you guys play in the private equity space at Graphene? How do you approach it?
Well, first of all, great to see you both, Paul and Alexis. Thank you so much for having me. We are doing things differently at Graphene. So the way that we established the firm was really to provide a source of private markets and private equity in particular, alpha, to investors who have otherwise had exposure to the large cap or the big firms getting bigger and providing wonderful beta exposure in private equity. So we focus on the other, the unique, the off-market, the niche, high alpha deal flow.
And we were talking during the break about how that sometimes takes some courage to go out there and find those and then pitch them to your clients. We know AI is all the rage. Give me an idea outside of AI for private equity, please.
We have many ideas outside of AI. In fact, I don't think you can have a conversation about investing without using AI. However, when we are finding extra returns for our investors, it's really thinking through the middle market segment, the lower middle market segment of private equity. And if you wanted to incorporate AI just as a theme, the way that we play that, the way that we see that in our pipeline is actually the infrastructure of AI. So if you think about the power grid and all that is required to establish more power for AI to use, there are many players around that are middle market and lower middle market companies that can provide services there. Industrial services, the last two investments that we've made in teams have been those that focused on the industrial sector. So there's many things to talk about. We are not at a shortage of opportunity.
It's easy to put money to work. It's harder to monetize it, to exit. And I saw an article in the Times or the Journal or both in the last few days about how the number of private equity owned companies in their portfolio, it's like bigger than it's ever been. That's not a good thing. They need liquidity events, whether it's a sale or an IPO. What's going on out there?
Such a good point. In fact, that segment, which is called zombie funds, is the fastest growing segment of private equity right now. So what that means is that there are companies that have been held more than 7 years, on average 10 years, that haven't been sold yet. Buyer has not met seller. The conditions have not been right for the managers to achieve greater than their marks. But I would say this is an incredible opportunity for Graphene. So we make our entire investment thesis and portfolio on following niches, opportunities that others aren't really looking for. So looking at these companies, that's 34,000 roughly, as per the article, that they need to be sold. So there are diamonds in the rough there. But where we really look for alpha and our main thrust of how we invest in private markets to provide the alpha is to take advantage, interestingly, of another theme that's happening, that's growing within private equity, which is experienced individuals or teams spinning out of the larger private equity funds and starting new funds. These new funds have been shown to outperform. You can imagine grit, determination. They're throwing everything on the line. They're sourcing unique deal flow from their cohort. We back them with around $100 million in their first fund, de-risk that startup, and then co-invest with them. So it's not only these new teams, but also independent sponsors that are another theme, independent sponsors staying independent longer.
Interesting.
So between the new firms, the independent sponsors, and the zombie funds, we are finding a host of opportunities to invest.
And having said all this, there are still large firms, a large number of firms that are sitting on a bunch of cash. Yes. I'm wondering, though, what the interest rate environment and sort of the uncertainty about the path of interest rates means for these firms in terms of putting money to work and the high financing costs that they might encounter.
Exactly. So I think, higher rates didn't kill private equity. They killed one version of private equity, perhaps, which is that version that depended on, perfect financing or low financing and then multiple expansion to create value. I think the pendulum has shifted now back to operational improvement for the value creation lever. But you're right, the big firms are garnering most of the capital, even today in the fundraising market. More than half of the capital the first quarter, went to the top 10 by AUM funds, which means that there's so much opportunity down below that is not being exercised by the capital or accessed by the capital.
Who's a typical LP for your fund, for example?
We work on behalf of, and we are thrilled to have sovereign wealth funds, state pension funds, endowments, foundations. So we have become a solution for the investor who cannot access this niche element of new teams, new funds, independent sponsors, and unique deal flow that we have in our direct opportunities fund efficiently. So they can put money
in terms of like a trend, are you seeing less or more foreign investment or foreign interest? I'm just, given the geopolitical landscape, I'm just curious.
Yes, interestingly, we have not seen a slowdown in international investors accessing the U.S. market. I think despite all the global activity and things that are going on right now, the U.S. is still a great place to invest, and many of the sovereign wealth funds that are in far abroad are investing in the U.S. as well and investing through us.
What's your view, given your experience in your career, of this kind of new thing called private credit? People used to come to me at the Chase Manhattan Bank, and I did give them a leveraged loan. I make a lot of money off of that. I guess I don't do that anymore. So talk to us about private credit.
Interesting. It's not a sector that we focused on uniquely at Graphene, but certainly it has grown, and there is a room for alternative sources of capital to be provided to the companies when the banks are looking away or doing different things. But it's here to stay, and I think it's an interesting asset class.
What are some things investors should be looking out for? I mean, I know it's not really like your sweet spot with the private credit, but what are some things that you think investors should think about in 30 seconds?
I think investors should look to complement their exposure in private equity, the teams that are spinning out, the next generation of private equity leaders. There's so much innovation occurring in the market today. There's so much opportunity. So sector-specific, mission-driven, to create alpha managers, I think is where there's a lot of exciting opportunity to complement the large cap exposure.
Elizabeth, thank you so much for joining us. Really appreciate you coming in studio. Elizabeth Wymuth, founder and managing partner at Graphene Partners, joining us live here in studio. So that's a good thing. Small and mid-market private equity, we have heard about that from a lot of folks and a lot of opportunity there. So it's cool to hear the story firsthand. Looking at the markets here, S&P down 8, NASDAQ down 73 points, about 0.3%. Tom Keene asking for a VIX quote. We're still at 15 and change, so no problem there. 10-year yields come in a couple of basis points, 4.68%. Oil up another buck here, 83 and change for our friends down in the oil patch in Texas. Brent, 88, let's call it $89 there. So again, a little bit of angst coming out of that part of the world again today. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day right now on the S&P 500 index, pulling back from being close to a record. Down 11 right now, down by about 0.1%. S&P currently at 77.41. Stocks had been trading between gains and losses. Oil swinging back and forth. Traders are awaiting key inflation data tomorrow morning, 8:30 a.m. Wall Street time, in the form of the CPI report. Indeed, that update could shape the Fed's interest rate policy. So the S&P now down 11, again to underscore worst level of the morning, down 0.1%. Dow Industrials also down by 0.1% right now, down 42 points. NASDAQ lower by 90 for the NASDAQ Composite Index, a drop right now of 0.3%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, up today by 0.9%, 2-year 4.22%, the 10-year 4.68%. Gold is down $19 the ounce. Spot gold at $43.71, down 0.4%. West Texas Intermediate crude now advancing by 1.3%. Been a volatile day for crude. 83.20 where we stand now on WTI barrel of Brent. 88.84 up by 1.3%. So as I mentioned, we got the CPI report coming up tomorrow morning. Anastasia Amoroso is Chief Investment Strategist at Partners Group, and on surveillance this morning, she told us she'll be focused on housing inflation.
Here's where I think Fed Chair Warsh's focus on real-time, real-world data may actually pan out and pay off. If you think about the Zillow estimates of rent inflation, for example, they're running on 1 or 2%. In some cases, if you look at CoStar, they may be negative. If you would use that as a proxy for OER, the equivalent shelter inflation in core CPI, you actually come out with a number of 1.6%.
Anastasia Amoroso of Partners Group interviewed on surveillance. We're keeping an eye on shares of On Holdings. That stock is plunging now by 19%. It posted disappointing second quarter sales as the Swiss brand held off from discounting older shoe models ahead of product updates in the highly promotional U.S. market. On Holdings, by the way, is backed by Roger Federer. Recapping here, the Dow, the S&P, NASDAQ, all in the red. S&P down by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Alexis and Paul, that is a Bloomberg Business Flash.
All right, Jen Tucker, thank you so much. We appreciate that. Alexis Christopher sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Let's check in with our next guest. Adam Phillips, Managing Director, EP Wealth Advisors, Torrance, California. I don't think I've ever been to Torrance, California, but I've been to Redondo Beach and Manhattan Beach, so that's close enough in my world. Adam, I love your note here. 3 things that could disrupt the narrative. These are things that you think could go wrong here. Oil, AI, and yields. Are you a little nervous about this market here?
Yeah, hi, Paul. You know, we are acknowledging the risks that are out there. I think when you're in the midst of a correction, you start to think about what could go right. Now, what we've seen over the last several weeks here, especially with last week's rebound, is that we know what's going right. We know it's all about fundamentals. It's about that earnings growth that has come in so strong. So what we're focused on is what could go wrong, what can derail the rally and the momentum that we have seen. And so we identified 3 primary themes, one of them being oil and geopolitics, the other being some kind of disappointment around the artificial intelligence trade. You can name a handful of things that could actually happen within that space. And then finally, we're really keeping an eye on yields. As we've seen the market rebound here, what we're not seeing is any let up in yields. Yields are still trending higher, and we think that that could eventually come into focus.
And Adam, can that steal some of the thunder away from equities? I mean, hard to do that when you've got a market up by this much, but what do rising bond yields mean for the equity market when investors are looking to sort of, balance the portfolio?
Yeah, Alexis, I think that certainly is the case, and we don't know what that magic number is. Sometimes we talk about is it 5%, is it 4.8? I think we'll know when we get there, but I think that the higher that yields go, it does start to provide some healthy competition for dollars and for equities. So as we look at it from our standpoint of being a balanced investor on behalf of our clients across our strategies, we're looking at this and saying, you know what, a 4 handle on inflation in various areas, and north of that, if you focus on the credit side and still stay in the high grade space, is starting to look pretty appealing. If you start to compare that to the broad market and saying, yeah, we know some of these high flying areas of the market, like artificial intelligence, they could have higher return expectations going forward. But if you focus on that non-AI part of the market, where we are looking at higher valuations and saying that the forward return expectations could be more mid-single digits, maybe a little bit higher than that, then you start to really compete with these bond yields that are looking quite attractive. And we know that starting yields in bonds really help to explain your long-run returns on that investment. And so we are looking at this as an opportunity that could eventually start to pressure equities.
So here in the fixed income market, how much credit risk do you think we should be taking here, Adam?
Yeah, we are. I'd say we're really still focused on higher quality here. You know, we are not too concerned about the economic outlook, and so I think you can take some credit risk there, slip down into the below investment grade space, but we're really focused on spreads here and saying, you know what, if we're getting a pretty reasonable yield in the high grade space in investment grade credit and really outside of treasuries, which we are underweight, then we don't feel like we need to stretch too much. I mean, several years ago, we certainly did, and we had a large portion of our portfolio in below investment grade, whether it was in floating rate debt or in high yield bonds. But we just don't think that we need to stretch these days, and so we have a relative underweight to the below investment grade space.
I want to jump back to equities here for a moment, talking to Adam Phillips, Managing Director at EP Wealth Advisors. You say in your note that you are overweight industrials, healthcare, and energy. What are you underweight?
Yeah, so we are underweight technology, specifically the Mag 7, but even technology as a sector. I think when I was in there with you, Paul, and Scarlett about a month ago, I think we were talking about the fact that within our portfolios and when we manage money on behalf of our clients, we're really focused on, we are not beholden to the index like some fund managers are. And so we are okay with looking a little bit different than the index, and we don't want to be bullied by these sector allocations that are where something like technology is continuing to drift higher in terms of its representation within the S&P 500 because it has been leadership for so long. And so we think that if you look at the S&P 500, depending on how you slice it, more than half of the index is now associated with artificial intelligence. So we don't think that we actually need to take that much. We certainly have a healthy allocation to it, but when we start to think about where do you go if you are not fully invested in artificial intelligence, where can you go? That is energy, that is industrials, that is healthcare. Things that healthcare and energy specifically tend to have lower correlations with information technology. We've certainly seen that over the last 12 months. And then obviously the other catalyst around energy with what's going on in the Middle East. And then industrials, that is a way for us to play the artificial intelligence theme, but do so outside of information technology. So really for us, it's really all about diversification on behalf of our clients.
So what's your concern? We got about 30 seconds left. What's your concern just overall about AI? What could go wrong here? What's probably top of your list?
Yeah, well, look, I think that even though we've made it through earnings season for the most part, we've heard from a lot of those hyperscalers, and for the most part, we got through it pretty well. We saw the numbers were still very good, but what we know is that the artificial intelligence expenses, that CapEx, it is not slowing down. It is full steam ahead, and so I do think that we are going to remain in this period where I was just watching the Field of Dreams with my son a couple weeks ago, and it reminded me of CapEx when they said, if you build it, they will come. I think that we are now moving from that stage to more of the Jerry Maguire, show me the money. I think that it is really going to be on these companies to show some payoff from their investment. And if we don't see it, there will be that disappointment that starts to bring some doubt into this AI trade.
Adam, thanks so much. Really appreciate it. Adam Phillips, Managing Director, EP Wealth Advisors, out there in Torrance, California, a little bit south of LAX.
It's the third time we've talked about Field of Dreams this morning.
Yeah,
we talked about it on surveillance,
exactly right. It's a classic, I guess. It
1989, Kevin
is that
Costner.
Right? Okay,
yeah.
Very good. All right. Looking at the markets here, again, kind of quiet here today. That's kind of been the theme of the morning. S&P down about 10 points. The Dow down about 40, and the NASDAQ down about 95 points. So there you go. That sounds like a summer trading day to me. WTI crude oil is now up $1. $83.20. So going in the wrong direction here. A little bit of angst, perhaps, in that part of the world today. This is Bloomberg. All right, folks. Bloomberg is now in your dashboard with Apple CarPlay and Android Auto. Want access to every Bloomberg podcast, live audio feeds, and headlines. Have to click the button. Download the latest version.
I'm Mala San, founder and CEO.
Looking at the yield space, we've got yields coming in just a couple of ticks here. 2 basis points on the 10-year, 4.68%. I think that's kind of the new normal. That 4 to 4.5% range we've been in. I'm not sure if that still holds. This is Bloomberg.
Imagine managing a rental.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alexis Christophers sitting in for Scarlett Fu here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming on YouTube as well, and I think at Bloomberg.com. That's where you also can find us here. Supermicro Computer. They're going to report some numbers here. They're in the computer hardware and storage space. So we're going to pay attention to that. So you want to get smart about the storage and all that hardware stuff. You talk to Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence. Wooch, thanks so much for joining us here. Just give us, for our listeners and viewers that don't really know Supermicro that well, what's the call on this company right now in the street?
Yeah, so it's pretty straightforward, Paul. It's I think your last guest has shown me the money. Let's see if Supermicro is going to show me the money with their 2027 guidance. Streets at around $54 billion in sales. Given how they positively pre-announced on the booking side, there's upside to those numbers.
So also, Woojin, just talk to us about what Supermicro does. I was reading up, it builds these high-density AI servers, and I guess this is what the hyperscalers are sort of all about right now. So is the bar sort of high for Supermicro with these numbers later today?
Yeah, hey, apologies for not giving you a description of Supermicro. They're one of the leading AI server providers in the United States. They actually compete very well against someone like Dell. The customers that they serve too are the neoclouds. Think about the CoreWeaves, the XAIs, and such, right? And what's happening is as they start building out these scale-out computes, these deals have gotten bigger and bigger. And we're starting to talk about deals that are in the $2 to $3 billion range, and Supermicro's winning proportionate amount of deals relative to Dell.
So, looking at Dell stock over the trailing 12 months, let's do year to date. Year to date, Dell up 250%, Samsung up 100%, but Supermicro down about 7%. What's going on there in that competitive landscape?
Yeah, so part of it is it's less competition, but it's more along the lines of they're heavily tilted to the AI server business, and that is going to weigh on margins. But also, Supermicro just can't get out of its own way in the sense that they've been in the middle of controversy after controversy. One of the former founders was charged and indicted for smuggling NVIDIA GPUs into China, which is a definite no-no for the Department of Justice and the United States, especially given the export bans. There's been headline after headline that's been actually contracting the valuation of the shares.
So, any surprises that we should expect? Maybe, I mean, what would this company have to say to sort of really move the stock in after hours?
Yeah, so it's fairly straightforward. Look, the guidance has to come above consensus expectations. Number one, I think they can do $60 billion, especially given the amount of backlog that they have going into the first quarter. But two, and just as important, Alexis, is going to be the gross margin commentary. I know that they had record gross margins for the fourth. They're coming in with record gross margins for the fourth quarter. Let's see what they say about fiscal 27, right? It's at 10.4% in the fourth quarter. I think it's going to come down in the first quarter. But if they can get to the 9s and the 10s, that's really going to boost earnings and probably prop up the stock.
So is what's been holding the stock back, has it been that governance issue, the management issue? Because, boy, their peers have just been ripping. And if I feel like management and the board kind of got their act together, I think I'd be looking at this thing.
Yeah, look, I've been imprinted on the record multiple times that I think that we need more diversification on the board. But at the same time, quite frankly, I think the CEO needs to take a different role within the company, and the CFO has to go, right? They've already had some filing issues in the past, and there's still some weaknesses in financial controls. So that needs to get resolved before you can get investor confidence in there.
Gotcha. All right, just kind of stepping back, Wooj, when I look at a Dell, I look at a Samsung, Dell up 250% year to date. And so, of course, I go to Rich Go and see Michael Dell's net worth of $238 billion, up $98 billion this year.
Gosh.
What's the story on Dell? Do investors feel like there's just a more runway here?
Yeah, look, at the end of the day, right, it's a margin story that's been more resilient than people had thought, right? I know that the AI story has taken the headlines here, but just the same, the traditional servers, corporate IT server business has been booming for a couple of reasons. Number one, Dell has been passing through all of that pricing to their customers, and the customers have been absorbing it. And also, I do think there might be a structural change in corporate IT where they need more compute to do AI inside the corporations, and that might be a multi-year runway, which has been driving more confidence into the margin structure story going forward.
All right, Wooj, good stuff as always. Your sector's on fuego, as they say. Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence. Boy, that Supermicro, again, as Woo Jin was just saying, and he has been in print with his research about there still needs to be further changes there. But
we'll see if there are changes in the C-suite, as he was talking about. Yeah, maybe they make that announcement today. I don't know.
Yeah, when you see a stock lag like that, you're like, oh, is that an opportunity? But you never know. There's lots of hair on that one, I guess. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research, your top stories and global business headlines are coming up in just a moment. Alexis, thank you so much for sitting in.
Always a pleasure to share the microphone with you, Paul.
Absolutely. Lots of news out there, but not a lot of movement in the stock market, but that's okay. It's August. We're all taking a little bit of a break here and monitoring the news. We got the S&P down 9 points, the Dow down 33 points, and the NASDAQ down 93 points. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. The death toll in Western Colombia jumping again. More than 220 people confirmed dead following yesterday's major earthquake. Hundreds more are missing. The country's newly elected president declaring a national disaster, rubble and damage stretching across multiple cities and communities. ABC's Faith Abube is in Medellin.
American Alyssa Aroyavi was at the gym in Medellin when it hit.
There was like this sudden commotion and everybody was yelling, and the staff then was like really pushing everybody to get outside as quickly as possible because it was quite strong.
The damage widespread, impacting health and community centers as well as roads, making it difficult to assess damage in rural areas.
Hostilities between the U.S. and Iran expanding to a possible Iranian plot against President Trump and an elaborate deception to protect the president. The Washington Post reports when the president departed the NATO summit in Turkey last month, he was secretly taken off Air Force One and put on a military jet using a catering truck. ABC's Martha Raddatz has more from Washington.
The White House neither confirmed nor denied the Post reporting, saying in a statement, the new Air Force One is a state-of-the-art aircraft that has been fitted with high-level security protocols that ensure the safety of the president and his staff. As the president has said recently, there are many enemies of America who have their sights on him, and we use every tool at our disposal to address those threats.
In New York City, Luigi Mangione back in court today for the last scheduled pretrial conference hearing in his state murder case for the fatal shooting of United Healthcare CEO. The judge set jury selection for September 8th, but is still weighing a request to allow cameras at the trial. Listening to ABC News. Women are being forced to drive longer distances to deliver their babies. That according to a new March of Dimes study, and small towns are being hit the hardest. Here's ABC's Jim Ryan.
Of the nearly 100 labor and delivery units forced to close in the past 2.5 years, more than half were the sole birthing facility in that county. While it's the smallest communities being hit, those communities are often in the most populous states. The result, according to March of Dimes, 1 in 4 American women aren't receiving prenatal care during the first trimester of pregnancy.
March of Dimes says 2.5 million women of childbearing age live in counties considered maternity care deserts. Data centers are driving a massive construction boom, but some communities are not happy about it. There are complaints of noise, pollution, and massive spikes in energy bills. There are also concerns about how much water data centers use to cool all of the equipment. Frank Welly is Assistant Director of the Global Energy Center at the Atlantic Council.
The models that the hyperscalers are running right now
use a tremendous amount of power to run the calculations and algorithms that are advancing the U.S. ability to advance AI.
Willie said companies building data centers must be more transparent with communities and local leaders. The Powerball jackpot now up to $975 million. No one matched the 6 numbers again last night. The next drawing tomorrow night. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Markets pause as Pakistan signals peace. Welcome to the Tuesday edition as Pakistan's defense minister declares the U.S. and Iran are close to some sort of arrangement over the Strait of Hormuz. What the arrangement is remains unclear, but the U.S. did fire on a ship this morning that tried to run the blockade. We're going to bring you the latest on all of this when we speak with defense analyst Becca Wasser at Bloomberg Economics. Hey, it's primary day in about 6 states around the country with another Democratic socialist on the ballot, this time in Wisconsin. We'll get the latest on midterm polling from Cliff Young at Ipsos. And as Americans wake up to the image today of Donald Trump hiding in an airport catering truck, we will talk with our political panel about the clandestine operation used to whisk him out of Turkey. It's all after a look at Wall Street. Let's get to the markets right now with Charlie Pellet, high atop World Headquarters in New York. Hey, Charlie.
All right. I thank you very much, Joe Matthew. And I'm looking at a market right now, trading lower, little change, light volume. The S&P down 7 right now. Hey, middle of August, S&P at 77.45, close to a record. We have bounced off the bottom. It's still down 0.1%. Essentially, everybody's on hold, awaiting that CPI report. Tomorrow morning, 8:30 a.m. Wall Street time, an invitation now to keep it locked into Bloomberg for complete coverage of this all-important report. Dow Industrials down now by 16, also trading below 54,000, down by under 0.1%. The key theme here, little change. We've got NASDAQ, the composite index, down 0.4%. NASDAQ 100 index down 0.2%. The Bloomberg Mag 7 index down 0.4%. Interestingly, though, we've got some tech advancing. The SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 0.8%. The 2-year 4.22% with the 10-year 4.68%. We have got the 30-year 5.23%. Still, right now, gold is down $10 the ounce, down 0.2%. We almost mentioned silver, 64.86 an ounce there. Silver down 1.3%. West Texas Intermediate crude, some skepticism about prospects for Middle East peace. We've got oil traders keeping an eye on fast-moving developments there with WTI 83.05 a barrel, up now by 1.1%. Barrel of Brent 88.52, up by 0.9%. Bottom line, though, we are awaiting the CPI report. Sophia Carney-Letterman is senior economist at FHN Financial, and on surveillance this morning, she said the Fed will be watching lots of economic incoming data.
And the bigger risk is not just oil, but it's the longer we're in this sustained level of volatile higher prices, what's the risk to pass through the core, right? And that's the big question on that June number. June was surprisingly good, right? Broad-based declines outside of just energy. So good that we're waiting to see, was that a 1-month fluke?
Sophia Carney-Letterman of FHN Financial, interviewed on Bloomberg Surveillance. I mentioned the higher oil prices. Oil super majors also gaining today. ExxonMobil up 0.6%. Chevron up by 1%. ConocoPhillips up by 2.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
All right, my friend. Thank you, Charlie. We're off the launch pad for a Tuesday here in our dear friend Charlie Pellet. Hey, I'll be up there this week, Charlie. I'll see you later in the week. I will be high atop the Gilded Tower myself.
Joe Matthew, I'll take the bait. What brings you to New York next week?
Well, if you want to go there, I mean, I'm not just coming to see you. I'm coming to World Headquarters to be a part of the weekend show, which I'll be leaving my family for the weekend to do my best David Gura impression. And I don't know if they're talking about this openly, but Carol Masser is going to join me.
And they've got you on both Saturday and Sunday?
Yeah, I think that's true. Yeah, I wouldn't have it any other way, Charlie. When they ask me, I get on the Amtrak, and I am Charlie Pellet bound.
I love it. We welcome you with open arms to World Headquarters. And I got to ask, does that mean we're going to see a ton of political guests on Saturday and Sunday?
You know what? But it's funny you ask that. Our senior Washington booker, Matt Shirley, was promising exactly that. So I'll see you up there with a cavalcade of guests. Charlie Pellet will be back coming up in about, 15 minutes with more on the markets here. Oh, yeah, Matt, I'm looking at you. Markets right now, interesting. We're in this weird state of limbo without the sell-off that comes with threats of all-out war or the euphoric rally that comes when Iran's neighbors asks us to call things off. But we're somewhere in between today because now Pakistan is talking about peace. Hey, thanks for coming along here on the Tuesday edition. We're live on Bloomberg Radio across the country and around the world on YouTube. If you want to find us, search Bloomberg Business News Live. I know you already subscribe to the podcast. We've got a lot to figure out this hour. Didn't look like Iran would be at the top of the news. We were so consumed with the catering truck in Turkey. We'll get to that, this wild operation that the Secret Service pulled off to get the president onto another airplane when he was getting out of Turkey. It's insane. The press used as a decoy, apparently, on the real Air Force One. Pakistan's defense minister says the U.S. and Iran are, quote, close to some sort of arrangement, unquote. Far from definitive, but enough to make us all pause. Things are shaping up in favor of peace, said the minister in Islamabad. This is, of course, after we heard from President Trump himself in the Oval Office yesterday. Our own Josh Wingrove, who later braved the elements on the North Lawn. It was a hell of a lightning storm yesterday. Before he joined us on the late edition of Balance of Power, he was asking the president about the Strait of Hormuz directly, the state of negotiations in the Oval. Here's the latest from the president.
Back to the subject of Iran, sir. Can you give us any estimate of when you think the Strait of Hormuz will be part of the deal?
Well, it's open now. We're taking a lot of ships. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. People in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now.
There you have it from the President of the United States. Before we get to Becca Wasser, I have to mention a breaking news story. The president's just now announcing on Truth Social, Robert Gilman, referred to by the president as American citizen Robert Gilman, a former U.S. Marine, even though there's no such thing as a former Marine, is coming home, he writes. In a well-known media story, Robert was imprisoned in Russia in 2022 during the Biden administration after my discussions with Vladimir Putin, he writes. Russia has agreed to release him, very much on a humanitarian basis. We'll have more on this as we learn it. And he may be speaking about this later on. Robert Gilman is on his way home. He says Russia asked for no one in return. Vladimir Putin could use some good PR right about now. Then again, so could Iran. And so we get back to where we were here with the idea of a Strait of Hormuz potentially being reopened in some sort of new order involving Iran and Oman. I'll add that we fired on a ship since we last spoke. This was apparently a Panamanian boat that made a run at the blockade, the U.S. blockade. We stopped them. As we learned today on the terminal, that the cost of hiring a supertanker to carry oil on the benchmark Middle East to China route now is approaching $500,000 a day. That is more than twice what they were paying before the war. Not just the cost of oil, it's going up. Becca Wasser leads our defense analysis at Bloomberg Economics and joins us now on our set here in Washington, D.C. It's great to see you. What did we do to this boat? We fire into the engine room again, or that's our playbook now?
Most likely. That seems to be the playbook. It's usually firing either a Hellfire missile or sometimes even from deck guns into the engine room or the control room in order to essentially disable the vessel. Just make it so that it's not going to sink, but it's just floating there and it can no longer move through the blockade. So we've seen that before, and we're probably going to see that again. As right now, what we heard from the president is they're going to be reinforcing the blockade and reinforcing any opportunity to try and squeeze Iran economically, and that's part of what the blockade is.
Can you imagine what it's like to be on the bridge of a ship that's making a run at the blockade when they're like, you know what, we're going for it tonight. They turn the lights off, the transponder off. They gun the boat, and, you know, I guess we're waiting for them when this happens. Somebody's going to make this movie eventually, right?
Eventually they will, but you know what? I wouldn't want to be that person on the bridge. I would not want to come up against the U.S. Navy.
No, thanks. Not at all. So the Energy Secretary, as you're talking, Becca, just posting on Twitter, thanks to the coordinated efforts of the U.S. military and our Gulf allies, the 7-day average for oil leaving the Strait of Hormuz is currently up to almost 9 million barrels per day. We know that some other oil is being rerouted, but when you see a number like that, this is U.S. ships protecting vessels in the middle of the night. You tell me.
Absolutely. So the U.S. has not wanted to call it an escort mission, but that's essentially what they are doing. They are using drones, aircraft, ships to essentially protect other commercial vessels trying to make it out of the strait. For the most part, that has been what they refer to as guidance through the air. But there is, you know, some quiet noise, including some of the statements that we heard from, you know, Secretary Wright here at Bloomberg about how the U.S. is escorting ships and trying to make it so that there is the free flow of energy through the Strait of Hormuz.
This will all be part of the movie. The straits at night. I can't imagine.
They need you as a producer.
I guess so, if only I had the AI to make it. Pakistan, as a mediator, we should know, this is why we're hearing from Pakistan, a mediator, much like Oman, says we're close to something. What was the language? Close to some sort of arrangement. Do we think this is another 3-lane exercise that had been discussed in talks between Iran and Oman, or could we be, if they say shaping up in favor of peace, something more comprehensive?
I would read it as Pakistan, as the mediator, trying to have some positive momentum going into talks. So it might be overly optimistic, but sometimes you have to message what you want the outcome to be. And I think
we're projecting now.
A little bit of projection, but I think if anything, it would be some of this, you know, 3-lane highway, if you will, where there is this U.S.-Oman southern route that is taken. And, you know what, frankly, that comports with the president's statements, maybe not his vision, but his statements that, you know, the U.S. Navy controls the strait, because essentially what you could have is Iran de facto controlling one part of the strait and the U.S. and Oman controlling another part of the strait.
Which apparently allows about 9 million barrels to get through a night. I mean, if this is the new normal for the energy market, you're a geoeconomics analyst. Is this the market that we get for the foreseeable future? $80-something a barrel. We'll see how much we get through tonight.
I think that is the case, particularly as we are in this purgatory of no war, no peace, this in-between. We've been here before during the ceasefire period. And, you know, markets haven't really, you know, we haven't seen Brent go sky high. And so I think the president is comfortable with it being where it is right now and is willing to wait this out, particularly as he tries to put the squeeze on Iran economically rather than dropping bombs every night.
You wonder if he asks Zelensky to stop shooting at Russian refineries to keep the price in check.
I would think that maybe that is an ask, but I would hope not at this juncture in time, particularly as Ukraine has its own asks, largely for air defense interceptors to protect some of those civilian areas that are under siege from Russia.
Maybe we have a little deal in the making here once again. Becca, thank you so much. Becca Wasser, Bloomberg Economics defense lead. She's our top defense analyst at BE, and always a pleasure to have her with us here on the program. We're going to turn our attention to polling, not just around the war, but around the economy impacted by the war and what it means on the other end for midterms. It's primary day. We'll look at the states voting as well when Cliff Young joins us next, right here on Bloomberg.
1%. The Bloomberg Mag 7 Index falling along with other tech names, down 5. Spot gold currently trading lower by 0.2%, down $8, $43.82 the ounce, while West Texas Intermediate crude up 0.9%, $82.90 for a barrel of WTI, barrel of Brent, $88.39, Brent crude up by about 0.8%. Bitcoin, meanwhile, 63,584 on Bitcoin, down by 0.8%. Bottom line here, we got traders refraining from making big bets on stocks and bonds ahead of the CPI report tomorrow morning, 8:30 a.m. Wall Street time. Oil resuming its advance again. WTI now at 82.86 a barrel, up by 0.9%. Company news: Apollo Global Management providing $2.6 billion of financing to the owners of the Yankees. It'll consist of debt and equity. No ownership change. Steinbrenner family retaining full control. Hal Steinbrenner says the partnership will allow the team to explore pursuing strategic opportunities. Apollo shares are up by 6%. On holding stock plunging after it posted disappointing second quarter sales as the Swiss brand held off from discounting older shoe models ahead of product updates in the highly promotional U.S. market. On Holding is backed by the tennis legend Roger Federer. On Holding today, ONON on the ticker right now. .3%. And again, recapping here, S&P down 10, drop there of 0.1%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Keeping our eyes on SpaceX tipping lower today, down 5% or $7. It's back below its debut price, if you remember, 135 being the sweet spot. It's at 131.80 right now, and we mention that because having just survived the last unlocking with aplomb, the stock rallied following the unlocking of some 900 million shares. There's another one in the offing. It's like next week, August 20th. So this is a price that could be under pressure here once again as more shares, another 7%, are dropped on the market. But yeah, it's an interesting session here. We like energy. We like financials. We like some healthcare. We do not love tech today. Despite the gains that we were seeing earlier in NVIDIA with this massive $500 million fundraise, including the 6 big fundraising houses, shares had a nice pop this morning, but are up just a fraction of 1% at this point, less than $1. So it doesn't look like we're getting a lot better as the session goes here. As Charlie mentions, the S&P 500 down about 14 points on what is a primary day. We don't have that many big ones like this left. 6 states are voting today, which is interesting because we've been hearing mainly about Wisconsin, and we're going to talk about Wisconsin with Cliff Young in a moment. But you've got Minnesota, Connecticut, Vermont, Alabama, and then you've got the special in South Carolina, which is not so much the same deal here as the other states, because this is the seat that was held, of course, by Lindsey Graham, and his sister is going to be involved, having been endorsed by President Trump. Senator Darlene Graham, she's already in town here, will test the value of this endorsement in what is expected to likely turn into a runoff. Remember Ralph Norman, Freedom Caucus, Republican, South Carolina, has been on the program a number of times, and it's expected that he might be the other one to finish with less than 50%. Then this will go to a runoff, and we'll have to decide this in a couple of weeks from now. The other states that we're talking about, though, are going to be important. And yes, beginning with Wisconsin, with another Democratic socialist on the ballot, Republicans looking to connect the dots on this narrative across the country. They may well have their opportunity. This is Francesca Hong, the woman who wanted to cancel Thanksgiving. She has since recanted that idea, but this is just jogging your memory here because you can't keep track of them all. Wisconsin Democratic gubernatorial primary, the moderate Democrat in this race here, Milwaukee County Executive David Crowley. Park that where you are, because we want to set the baseline with some important polling. And I mentioned to you that Cliff Young was coming in. And when I look at the headline on his newest deck here that he brought to us at Balance of Power, it's difficult electoral season for party in power. And we're going to get into the whole inter-party fight in the Democratic Party as well. But let's remember what we're talking about here. In August of 2026, he's of course pollster and chair at Ipsos Public Affairs and visiting professor at Texas A&M's Bush School. Great to see you back, sir. Welcome, as always, to Bloomberg.
It's great to be here.
When you look at the baseline on a night like this and you consider, to your point, the context around these numbers, context and approval ratings, this is still, according to many, and you put odds on it, and I want to talk about some of the modeling that you've been doing. This is Democrats' House to lose in November, yes?
Yes, this will be a difficult year for the president and his party, Republicans. Lots of headwinds. And it's a Democratic year. And you know, as the mood goes, typically goes the House. And we're putting fairly high likelihood for the Democrats taking the House this year. Obviously, the Senate's a little bit different, more idiosyncratic, brands matter, and we'll go into more detail there. But yes, this is a blue year. The question really is, by how much?
82% odds, I think you're throwing on this?
Yeah, that's what we're putting there. Yeah, for taking the House, yes. It's pretty high, even with redistricting.
Sure is. Yeah.
You know, obviously, the distance, the gap could be small, it could be large. That's the critical question today. But moving enough seats the other way, that is from red to blue, we think there's enough there given the mood of the country today.
And a lot of that is because of the economy. Economic uncertainty declines, but remains elevated, as you write, with your news-based policy uncertainty index spiking at the top of the second Trump administration with the tariff regime, volatile at best since then. But it also speaks to what's happening inside the Democratic primary, right, in a state like Wisconsin, where you've got someone, a once again labeled Democratic socialist, being seen as a front runner in a campaign that many couldn't have imagined a couple of years ago. This is all based on the same number here, isn't it?
Yeah, exactly. So overall, the mood is very blue, right? It favors the Democrats. But like the Republicans, the Democrats, too, have issues with their base. There's a fracturing going on. It's very clear, the polling, at least a third to 40% of Democrats identify as social Democrats. Now, the devil's in the details, because it doesn't mean the same thing to everyone, to all people. It varies there. But there is a degree of exposure. The Democrats are exposing themselves. I would include Michigan as well, obviously, with Syed winning as well. We even reduced the odds of Democrats keeping that seat because of that. But definitely, like let's say, you know, the mega MAGA base, the far right, which exposes the Republicans, social Democrats in certain states exposes them.
Doesn't matter what color are your stripes. Cost of living, the top issue for Americans, period, overall, 48%. For Democrats, 43%. For Republicans, 46%. And it keeps getting higher. For independents, 53%. This is fascinating, taken at the end of July into the beginning of August. This is fresh data here, and it speaks very loudly to the point you're making.
Yeah, and you see it everywhere. In other words, in national polls, it's about making ends meet. It's about the cost of things. You go into the states, you do state polls, it's the same thing. It doesn't matter if you're red or blue or purple. It's a general concern for Americans. And the party that's sitting in the seat today is the Republicans. They are in the seat, and they'll be punished for it. And that's one of the biggest reasons why this is really a blue year, a Democratic year in our minds.
You know what's really interesting? Which party has a better approach to cost of living? Democrats win here, and it's not actually very close. 35% go with D's, 27% go with R's. This is turning upside down what most polls have shown over the last decade. Do Democrats deserve this, or is this more a statement on the way the administration's handling the economy?
Well, that's a very interesting question. So yes, over the decades, not just the last decades, but we're talking the last 50 years, Republicans have been always seen as being stronger on the economy and economic issues. Sometimes that shifts a bit depending on a given moment, but for the most part, Republicans are stronger than Democrats on the issue. Democrats need to be opportunistic, and this is an opportunity for them. We don't know if it's long-term, if there's a structural shift, probably not. That said, in other words, taking advantage of the moment for them. But that said, Democratic Socialists have an interesting message of redistribution, of worried about the average little guy, the average American little guy. This dovetails or is linked to this issue of affordability, and we'll see. Could they be reframing reframing at least in part the Democratic Party and its issues? We will only see over time, but I think it's an interesting moment.
I love that you ran numbers on data centers because I feel like we're hearing more about it than any specific issue under the affordability umbrella. And I realize there's a NIMBY side to this as well. Percent that strongly or somewhat support construction of new data centers or one being built within their community. It's really interesting the way you frame this. For all Democrats, 21% new data center, 14% in their own community. When you start splitting this up by party, Republicans are clearly more in favor of this trend, but we are seeing some bipartisan concern.
Yeah, they're more in favor, but you still only have a minority of them in favor. I don't see this necessarily as just a NIMBY issue. If it were, there wouldn't be really a problem probably long term. You just kind of invest in the community
This
as
is
a
about
hand.
your electricity.
Yeah,
bill, right?
exactly. No, but it's linked to a broader worry about the system. There's a broad-based belief, widespread belief that the system is broken. Partisan politicians no longer care about the average person. The elites are rigging it. And this is bipartisan. It doesn't matter if you're red, blue, or purple. You believe that in the United States today. And this issue is increasingly becoming the poster child, in my mind, of this belief that the system is broken.
But that's fascinating. We're going to talk about this, I suspect, for the rest of this campaign and straight through 28. Only 9% of Democrats favor a data center being built within their community, and only 21% of Republicans. That's, I guess, speaking directly to NIMBY, but also your water bill, your electric bill. 31% of Republicans support construction of new data centers across the country, 10% less in their backyard. Cliff, it's great to see you.
It's great to be here.
Thank you, as always. Cliff Young, Ipsos, and as we mentioned, Texas A&M University's Bush School of Government and Public Service. I'm Joe Matthew in Washington. We'll assemble our political panel next. Rick and Jeannie are on the way in. Only on Balance of Power, right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. A little change for the U.S. equity market. Right now, we have got traders refraining from making big bets ahead of the CPI report tomorrow morning. Complete coverage, by the way, as that number drops. 8:30 a.m. Wall Street time. We got the S&P right now down 12, close to session lows at 77.40, down by about 0.2%. Still holding close to our record. We've got the Dow down 88, drop there of 0.2%. NASDAQ Composite down 110 for NASDAQ, a drop there of 0.4%. NASDAQ 100 index also down by 0.3%. The SOX, the Philadelphia Stock Exchange's semiconductor index, up by about 0.7%. 2-year 4.22% with a 10-year 4.68%. The 30-year 5.23%. Gold down 0.2%. 43.83 the ounce on the precious metal. West Texas Intermediate crude up 1%, 82.94 a barrel, as oil traders keep an eye on developments out of the Middle East. Brent 88.44, up by about 0.8%. Kristen Bitterly is global head of wealth at work at Citigroup Global Markets. On surveillance this morning, she told us why she is sticking with U.S. stocks.
Sell America, I think, was really born out of, obviously, tariffs, very politically motivated. So good reason in terms of diversifying and diversification on a global basis. But I think when you're looking at, like, where is the innovation coming from? Where are we seeing this level of earnings growth? It is an exclusive U.S. large cap story right now. And so if we continue to drive the innovation, we continue to drive the earnings growth, you need to be within the U.S. market, which is why we're comfortable with that overweight.
Kristen Bitterly of Citigroup Global Markets. Intel has raised $20 billion in an upsized share sale, a third more than it was targeting when it announced the deal Monday morning. Intel shares now trading higher. Intel up by about 0.2%. Joe Matthew, let's talk dating apps. Bumble going to be allowing men to make the first move in messaging on its dating app, marking a major reversal from the company's signature women go first model. Investors like this announcement. Right now, we got Bumble shares. They are trading higher. Bumble up today by 5.5%. That, Joe Matthew, is a Bloomberg Business Flash.
You seem pretty familiar with that. Is that your preferred dating platform?
Oh, yes. You can find me on the site Unhinged, which would be appropriate.
Wow. I mean, this is the news we showed up for, Charlie. I learn stuff all the time from Charlie Pellet.
Joe Matthew, I'll take the bait. Yeah. Are you on the dating apps as a married man?
Well, no, I'm not, Charlie. I'm an old married guy. I didn't even know Bumble. I'll have to ask producer James.
It's a brilliant. The whole concept is that women make the first move, which makes it theoretically easier for a lot of people there. But
listen to this. Is
just
right?
Imagine
Wow.
that. What a Washington scandal that would be. Married Joe Matthew winds up on the dating apps with Charlie Pellet.
Oh my God. I just want to let him go. This is fantastic. Yes, that would be news down here, Charlie. I can't wait to see it later in the week. We'll do the show from the Fishbowl up in New York at World Headquarters a couple of days from now.
Oh, there you go.
By the way, Charlie will be back in, no time. Top of the hour, 1 p.m. Eastern, with more on Bumble.
And dating apps in general. By the way, you can find me on Carbon Dating. Okay. That's my age. All right, Joe Matthew, back to the program.
Thank you, Charlie. Yeah, I'll give you the mic. Always, it's yours. This is fantastic. They had the Grinder guy on the close yesterday, right? What's going on around here? It was Business Week? Wow. I got to get up with the times. I didn't even know they had canoeing in the Olympics until this David Hearn thing happened. Have you been watching canoeing in the Olympics? They're coming after David Hearn again. White House officials, the Wall Street Journal just came up with this, asked the Justice Department to consider a new prosecution now that I guess Todd Blanche has the job for real as Attorney General. A new prosecution of the man accused of vandalizing the reflecting pool. Yes, David Hearn, the former Olympic canoeist. A new prosecution would be highly unusual, as the paper points out, especially after Judge Janine herself told a judge in surprising detail the government's decision to indict this man on a felony charge was ill-informed. Pirro said a botched renovation, not vandalism, was responsible for the reflecting pool's problems. The president did not like that. Remember, they had the very tense meeting, they say, in the Oval Office. Voices were raised. Judge Janine showed up with a box full of evidence and somehow still has a job. After the White House outreach, Justice Department officials, the paper says, are exploring whether another type of case based on misdemeanor allegations this time is even possible. Discussions described as informal and preliminary. My question is, which reporter is getting a knock on the door right now at the Washington Post? After this Air Force One story, are you kidding me? That happened the first time around when it was exposed that the president had to switch off of the new Air Force One because of a threat from Iran when he was in Turkey, in Ankara recently. Taylor Page got a knock on the door and a subpoena. Now the Washington Post takes the baton with reporting that an Iranian assassination threat against the president prompted an extraordinary operation last month, in which he flew secretly from Turkey on an alternate military aircraft while the White House said he was on Air Force One. Now, don't picture Donald Trump in the back of a fighter jet looking like Maverick. The image we woke up to this morning in Washington and around the world was one of a suited president crouched in the cabin of a catering truck. This is incredible stuff. Forget the back door through the kitchen. Here's how this worked. He boarded the old Air Force One in view of the TV cameras, gave the wave, the whole thing. Then he walked to the waist area of the aircraft where the cargo doors open, you know, that the door toward the back where they bring the Sky Chef in. You know, the Sky Chef, where they have the hot rubber chicken and they put it in the galley in the back. Well, the president got on the Sky Chef catering truck. They have the hydraulics that lift it up. He got on that thing while the press was being loaded in the back of the plane. Hydraulics bring him down. Imagine this. Imagine being inside the cabin with Donald Trump, the hydraulics lowering him down. They drive across the tarmac to a waiting Air Force C-32A. That's basically a 757, painted white. It says United States of America on it. It would have been super cool if they put him, you know, in the back of an F-18. Didn't go like that. Then they took off. That made Air Force One the decoy jet with the press corps in the back and White House staff up front. It's really a pretty remarkable story. The president also was on that plane. Pete Hegseth got on the plane the president was on. Nobody knew at the time. Hegseth went up the front steps, and they flew off. Remembering that reporters who were in the back of the plane were told to lower their window shades when they got on the plane in Turkey. The president said, because you're probably on a dangerous flight, when he was asked about it, because of the sleaze bags we have to deal with. He said he had threats all the time against his life. Remember that? We talked about it. Number one, he said, on Iran's list. But then he suggested to reporters, but if I go, you go, right? I guess the answer was not right. The reporters were on the decoy plane. Now, I get back to the original premise of this conversation because this is a fascinating story, and you know they're going to make a movie out of this one. We got everything but Harrison Ford over here on Air Force One. Should this be in the paper today? There were questions about the veracity of the reporting and whether it was correct to report on the lack of defensive measures that this new Air Force One had, the fact that the president couldn't fly on that out of Turkey. This is another step when we start detailing the clandestine operation to hide him. He was hiding in a catering truck. Should we know that? Let's ask the panel. They woke up to this story as well. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, you know, I work in the media. I'm all about getting the news out there and supporting the First Amendment, and the way the administration has cracked down on reporters sometimes has not been good for our business or I think the discourse in this country. But should these details be made public today?
Yeah, look, obviously the administration didn't want these details to be made public. They went out of their way at the time to try and avoid any public record of him not being on that plane. And so it doesn't take a rocket scientist to figure out that this was a client team effort that really, was there to protect the president. You could talk all day long about what the consequences of flying a plane full of reporters as a decoy amount to, but you have to respect the security efforts around the president. They wouldn't have put him in this alternate vehicle if they didn't think they had actionable intelligence that a threat was on his life. I mean, they don't do this for practice. And so, I think that I'm assuming maybe news outlets have checked with the intelligence community before producing a report like this. And if not, I would recommend maybe they do in the future, because you may not like this president, but you may like the next one, and you don't want to have the same kind of thing happen to him.
So maybe not totally in favor of this. Jeannie, what are your thoughts today? Obviously, we support disclosure, but did this disclosure make the president safer or future presidents safer?
It is quite a story, to your point. I mean, it has all the hallmarks of James Bond kind of thing.
Yeah.
The reality is that we have long in the modern presidency had a press corps that travels either in larger numbers or in smaller numbers with the president. And that is not just because we all want to know everything the president does. It's because the president represents the United States. There is issues, or are issues, I should say, of government continuity. So Susan Page from USA Today, who I know you know well, Joe, she just put out an article about how she went on a decoy plane with Bill Clinton. I think it was either from India to Pakistan or the other way around. And she talks about the fact that, as in all cases when this has happened, and it has happened in the past, the American public and the press are let in on what happened and when immediately after the threat is over. And so you have real questions here. You have questions to the White House, to the Department of Defense, to the Secret Service. Are they telling us the president is still under threat? It was under such threat. He was under such threat. They let how many members of the press and how many members of the White House go on a decoy plane? What is the nature of that threat today? I mean, the list goes on and on. But I think we should be very careful too here, because what did the White House do when the New York Times sniffed pretty close to this story? They subpoenaed the private records of these reporters and their family members. That is not how we do business in a free democracy under the First Amendment. So I think there are enormous questions here. And what are we getting from the White House, the DOD, and the Secret Service? Complete and utter silence. And that is a problem. We do not live in a tyranny. We live in a democracy. When the threat is over, you tell us where our president was and why and how long.
Well, you make great points here, Jeannie. That's also why I am seriously asking whose door is getting the knock today. But, Rick, the way the White House has handled this posthumously is a whole different question about whether these should have been published to begin with. There were also references not only to the Bill Clinton event, but 9/11. Remember, they said George W. Bush that day, the president of the United States, was in an undisclosed location. They later told us that he was being sent out west on Air Force One. There was never a false story about where he was. As far as the White House has told the publications involved here, the Washington Post was the first to report it. The New York Times corroborated this reporting, it seems, overnight. They still have not clarified. Should the White House have to tell Americans where the president was that night?
Yeah, look, this is a typical problem in a transparent society that Jeannie just described, that there are cases where you need, confidentiality, and secrets are a norm in an organized government. And we have lots of them, and they're primarily used to protect people. people who risk their lives to do their jobs, and that includes the president. No matter how you feel about the guy, he is under constant threat from actors around the world.
Well, it's a pretty remarkable story, and I appreciate your two weighing in on it. It's never easy with stories like these, and we have a great panel to delve into the complexities. Rick Davis and Jeannie Shanzana will be back in our second hour. Kaylee Lyons back with us on the early side today. Stay with us right here, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
The U.S. fires on a ship in the Strait, but Pakistan signals peace. Welcome to the Tuesday edition as Pakistan's defense minister declares the U.S. and Iran are close to, quote, some sort of arrangement, unquote, over the Strait of Hormuz. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, they call it some sort of arrangement without any detail. All I know is the U.S. fired on a ship that tried to run the blockade today a Panamanian flagship that probably regrets doing so.
Yeah, that's after, of course, that the U.S. blockade has also turned dozens of vessels around, vessels that complied with the order to do so, unlike this Panamanian vessel. And to your point on the vague nature of this statement from Pakistan, we're not sure what kind of arrangement we're talking about, what form or details could be contained in it. All we know, according to Pakistan, is that things are shaping up. This is a direct quote in favor of peace.
That's an interesting take on things because it doesn't appear to be that way on the surface, although the markets seem to be giving everyone the benefit of the doubt today. It's a bit of a pause across the board, slightly higher for oil, slightly lower for stocks, but no big moves here as we wait for signals from overseas. Chris Wright, the energy secretary, taking to Twitter to say what he told us on Balance of Power just a couple of days ago. About 9 million barrels appear to be getting through at least overnight on a daily basis here.
And that's through seaborne transit. He also talked about the millions of barrels in addition to that are being rerouted through pipelines, which, as you say, he did tell us in our latest interview with him. He says altogether about 15 million barrels a day are getting out of the Middle Eastern region. But of course, that's not back up to pre-war capacity. And it's not clear when, if ever, we're going to return to those levels, which has implications for the direction of gas prices. Ultimately may not go down ahead of November with the speed at which Republicans would prefer they do so.
I haven't seen the president yet today. Tyler Kendall's going to join us, though, from the White House, tell us what we have on tap. And we'll spend some time later with Mark Short, the Republican strategist who was once the liaison between the Trump administration in the first term and Capitol Hill, with a lot more to discuss today in Washington.
Yep, looking forward to that conversation. But first, we'll spend some time with Charlie Pellet checking on the markets in New York. Charlie?
Hi, thank you very much, Kaylee and Joe. We've got the U.S. stock market trading lower. Oil is higher. Definitely mixed signals coming out of the Middle East. I do want to begin with hydrocarbons. West Texas Intermediate, 83 even a barrel now, up by just about 1%. Barrel of Brent, 88.53, up by 0.9%. Stocks lower right now. Traders, however, refraining from making big bets ahead of the CPI report tomorrow morning. Right now, the S&P 500 index, you're on the GIP screen on the Bloomberg, worst level of the day right now. We're down by just about 0.2%. We've got the Dow also down by 0.2%. NASDAQ, the composite index, down 0.5. NASDAQ 100 index down 0.4%. To be sure, though, yes, the S&P is down. Yes, it's at the worst level of the day, but still holding very close to a record. The Bloomberg Mag 7 index down 0.7%. The SOX, which is the Philadelphia Stock Exchange's semiconductor index, well off session highs, still holding on to a gain now of 0.4%. 2-year at 4.22%, with the 10-year 4.68%, the 30-year 5.22%. Gold down 0.1%, 43.84 the ounce. Crude, as we mentioned, WTI 83.05 a barrel now, up by just about 0.1%. The oil super majors, they're all pushing higher. ExxonMobil up 0.1%. Chevron up by 0.8%. ConocoPhillips rallying today by 2%. California Attorney General Rob Bonta, in a post on X, is accusing Paramount Skydance of, quote, trying to blackmail the state following a report that CEO David Ellison is threatening to pull the company out of the state of California. Paramount Skydance shares down by 1%. Warner Brothers Discovery, which Paramount is trying to acquire, WBD up by 1.1%. Recapping, S&P down 21, drop there of 0.3%. Joe and Kaylee, that is your Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. Keeping an eye on the markets for us using the power of the Bloomberg Terminal. You can use the power of the Bloomberg Terminal to do a lot of things. I right now am looking at headlines on the terminal. I typed in Strait to see what headlines have come up in and around the Strait of Hormuz. And doesn't this tell a story in just the last couple days? August 4th, President Trump says the Strait is going to be open, quote, very soon. August 6th, President Trump says the Strait is sort of open now. On the same day, you have the president saying that the Strait is moving along good. Then Iran says yesterday, August 10th, that the reopening of the Strait requires that the U.S. end its naval blockade as well as payment of reparations. The very same day, President Trump, in the Oval Office, when questioned by our colleague Josh Wingrove, said that the Strait isn't sort of open or opening soon. It, in fact, is open right now.
Back to the subject of Iran, sir. Can you give us any estimate of when you think the Strait of Hormuz will be part of it?
It's open now. We're taking a lot of ships. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. It's a steel wall. And we let people in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now.
Iran says differently that the Strait of Hormuz will remain shut until conditions are met, as we've heard before. But I'll point back to what Energy Secretary Chris Wright posted earlier. Thanks to the coordinated efforts of the military and our Gulf allies, the 7-day average for oil leaving the Strait of Hormuz is currently up to almost 9 million barrels a day. That's combined with the additional 5 to 7 million leaving the region by pipeline. Interesting sort of context for the comments that we're hearing from the President of the United States. Either way, as we were discussing earlier, mediator Pakistan says we could be on the verge of peace. That may be projecting. Let's go to the White House now with Tyler Kendall. Bloomberg's Washington correspondent is on the North Lawn, which looks a lot different than it did when Josh Wingrove joined us last evening in the throes of a lightning storm. Tyler, are we hearing anything new from the president today? Will he be before cameras at all before we're done?
Well, Joe, at this point, the president has a flurry of closed-door policy meetings on his schedule. The next one's set to start at 1:30 p.m. Eastern. But at this point, we haven't gotten indications that it will open up to the press. He is traveling to Ohio later tonight. We haven't gotten an update on exactly what time he will depart. That's for something known as the Patriot Games. He's going to this youth competition for the finale there. So maybe journalists will be able to catch him on camera as he gets on and off the plane. But at this point, we've gotten very little indication or detail on exactly what a potential breakthrough would look like. Because as you both went through, we've really got headline whiplash today. Some more optimistic, Pakistan, of course, a key mediator in this, saying that Pakistani officials will be in Iran today when it comes to negotiations. But then publicly, both sides have really been digging into their positions, including the fact that President Trump has now laid this new demand on the table that Iran should be accountable for compensation for families of Iranian protesters who have died over the last 50 years, as well as to take responsibility for any death or damage related to conflicts in areas where its proxies operate across the region, whether that be Lebanon, Syria, Yemen, or Gaza. And that came in response to Iran saying that it was demanding compensation when it comes to reopening the Strait of Hormuz. But Joe and Kaylee, as you both know, that's a significant development because there had been conversations on the table about how to allocate funds to allow Iran to rebuild post-conflict, but that was considered to be a precondition for talks about potential curbs on Iran's nuclear program, not for reopening the strait.
Well, as we look for a potential deal to reopen the strait, any kind of deal between the U.S. and Iran or other parties in the Middle East, it seems that there might be a deal in the works as well between the United States and Canada, Tyler. Some headlines just crossing from the CBC saying that Canadian and U.S. officials are aiming to present a new trade deal to President Trump as soon as next week. What do we know about this?
Well, Kaylee, this is the CBC's reporting, but it's not necessarily surprising, and I'll tell you why. About 3 weeks ago, we had that threat from the White House of a 50% tariff on nearly $20 billion worth of Canadian goods. And at the time, our own analysts at Bloomberg Economics said that they expected these tariffs to be part of a negotiating tactic. Now, they were supposed to be implemented after 30 days. That deadline is next week, so that would coincide here with this reporting that we could see some sort of potential breakthrough when it comes to a trade negotiation between the two countries, keeping in mind that tensions really had been brewing between President Trump and the Canadian Prime Minister Mark Carney. President Trump last month threatening that he would even impose further tariffs when it comes to the wildfire smoke that was coming down from Canada. And last month we also saw the U.S. decline to renew the USMCA trade pact, setting up potentially years of tough negotiations. We'll see what's ultimately included in this deal, but the timing makes it feel like this is a strategic move by the U.S. when it comes to the sort of leverage that they put on the table to get some concessions from Canada.
And timing, as they say, is everything. Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. And as we consider the timing here, we're approximately, what, Joe, 84 days until the midterm elections as we speak here in Washington? Yeah. Yes, that is exactly. I just wanted to make sure my number was correct before I acted as if that was definitive, but it is definitive. 84 days to go. And when we consider the timing left to get resolution to some of these very issues we were talking about with Tyler, whether it's questions of tariffs or questions of peace in the Middle East and a conflict that has driven gas prices higher, the clock is ticking for those to trend more in the way of the incumbents in power here in Washington.
Well, that's for sure. And what's the conventional wisdom as people start making up their minds on Labor Day? A lot of the folks we speak with, pollsters, including Cliff Young, who was with us earlier today on Bloomberg, say that it's actually now. We don't need to wait until Labor Day, particularly in the face of the higher prices that we've been talking about every day, never mind the geopolitical confusion, the data centers. People are making their decisions as we speak.
I wonder if Mark Short agrees with that. He of
already
course,
made his decision.
is the former director of legislative affairs in the first Trump White House, also former chief of staff to Vice President Mike Pence. He's now chair of Advancing American Freedom, and he's here with us in our Washington, D.C. studio.
Nice to see you.
How y'all doing?
Always good to have you here
Thanks
on
for having
Bloomberg TV and radio. As Joe says, our minds made up. Now, is it a question of Labor Day, or did things need to be resolved before everybody went on their final summer vacations?
I think that the traditional thought was around Labor Day, and by that point, the narrative gets set in. But I think it's earlier now. I don't think there's any mystery that the number one issue since Donald Trump was elected has been affordability, and that's still the number one issue. And I think that typically in modern American history, like last 50, 60 years, the party that is out of power gains about 21 seats in the midterm. But in the situations when you have one party in control of the White House, the House, and the Senate, it's typically about 40 in the last 50, 60 years, about 40-seat gain. And so certainly the Democrats right now have a lot of things going in their favor, and the affordability crisis remains the number one issue for American voters. The question will become, I think, how many trending socialist or near socialist candidates do the Democrats nominate that kind of curtail what could be an even bigger potentially win for them in November?
Is that your thought when you look at Wisconsin this evening? Francesca Hong, Thanksgiving, you're making it easier for us, is your thought?
I think absolutely, John. I think that, for her, I think that Tom Tiffany, if a Republican, will be a formidable candidate. And I think that she's just so far out the mainstream that they'll be giving the governor's mansion to Republicans in Wisconsin. But I think if you look in Congress, there's a continued push where there's been multiple Democratic socialists who've been nominated in the House. And you have some certainly outliers in the Senate, like El Said in Michigan, that I think create a narrative for Republicans that says, look at how far crazy the Democrats have become. And the Democrats are not really popular right now. And socialism is even less popular. So even though the president's numbers are down, it seems in many cases where Democrats are offering the alternative is not really what voters are looking for either.
Well, so I've been wondering here about the kind of pattern we are seeing, where you saw, for example, people who were Obama voters became Trump-Pence voters in 2016 after voting for Obama. Previously, maybe some of them swung back to Biden, maybe some stuck with President Trump on the economic grounds you were talking about. Could we not see that extreme swing once again if there is that kind of horseshoe theory of politics and the lines between socialism and populism maybe at sometimes blurred?
Kelly, I think it's odd that in a Republican administration just a couple weeks ago we had administration talking about price gouging and needing to go after Exxon and Chevron to lower gas prices.
And he wants to take stakes and say AI
You have
companies.
a record number of state-owned enterprises now in a Republican administration. You obviously have huge protectionist tariffs. And so to the horseshoe theory, I remember campaigning on the campaign trail in 2016, and there were a lot of signs of Bernie Sanders, yard signs, that became Trump signs. So when Hillary defeated Bernie, those voters came over to Trump. And there's no doubt that the president is flexing more of his populist economic message as opposed to the first administration conservative. And so you make a great point, is for a lot of voters who are looking for actually the government to get out of the economy, it's not as if Republicans are offering a clear contrast right now to Democrats.
When you consider the idea of 40 seats, though, going to Democrats, we talked to Susan Del Bene yesterday. The DCCC is just adding to the battleground map, and they added 12 more seats last week. French Hill, the chairman of the House Financial Services Committee, Mike Flood was on there. Do we get to the point where, I know history matters, but Mark Short rolls his eyes at some of these?
I do, and in some cases, when you have that much momentum and you have a lot of resources to play, you begin placing seats that just are for news stories. So people begin thinking, oh, the map could even be larger. I don't anticipate it being 40 because I think there's new challenges right now. For one, there's been so much redistricting that has favored Republicans mid-cycle right now that should gain Republicans a net of about 10 seats. But two, our districts are more there's fewer competitive districts today than there used to be. And so I do think that there's a lot of momentum Democrats have currently, but I think those headwinds are not going to, they're going to be shaving off some of that cap that they can have.
Well, as we consider the kind of notion of some of those districts that have been redistricting, you've been on this program before, Mark, talking about how that could actually backfire in some instances against Republicans because you're watering down districts that aren't as far deep red as they would have been otherwise. If this is even districts that are Trump plus 10, is this a safe year to assume that a Trump plus 10 district is going to go?
No, Kelly, you're right. It's about, I think it's about a plus 10 is where you actually have the cutoff line. And you're right that, in many cases, some of those lines are redrawn were in states like Texas. In Texas, it doesn't look as strong for Republicans right now because certainly the Paxton drama is weighing down a lot of Republicans across the state. So you're exactly right. You could see some of those redrawn seats that actually end up flipping for Democrats. Having said that, I still think that the redrawing districts will be a net gain for Republicans, but potentially not as significant as they thought it would be.
I'd love to ask you about what's happening or will happen on Capitol Hill when lawmakers come back. Senate went home last weekend. Everyone's gone through August. We know the deal here, but not a lot got done. In fact, a lot of things were left on the side of the road, including the Clarity Act, which we've talked about a lot. There are questions about what the House will do with the CR when it comes back around. How much order or disorder will we see after 5 weeks on the lam?
I would encourage you to continue to think not much will get done.
Okay, then.
Just as
Low
the
expectations.
past will be the future as well.
No shutdown, though.
I think particularly when you're in an election year, members are really anxious to get home and go back to campaigning. So I would anticipate you will see a CR completed at this point, which I think was a question because I think that the shutdown actually in some ways benefited Democrats before. So I think there's a lot of question of would they pursue that same political strategy. It appears not this time. It appears that we will keep the government open, which is a positive. But I don't know how much more is really going to get done. You might see the Senate pass the Clarity Act, but actually getting to reconcile the two bills and get anything past that. And I think if you're looking at a bigger reconciliation 3.0, maybe a slim chance of that in a lame duck session, but I don't anticipate you seeing that in September either.
Wow, incredible.
What about? Be great news for the Pentagon.
Yeah, certainly so. What about the Russia sanctions bill that the Senate passed? Huge bipartisan margin, but is that necessarily a mandate for this House?
I think that the House will support it as well, Kay. I do think you've seen Democrats who want to curtail some of the tariff authority that's provided to the president under that bill. It feels to me that's kind of specific to Russia, but I do think you'll see the House change some of the bill, but I still think you're going to see it get to the president's desk.
It's great to have you back with us, as always. I hope your summer's going well.
Thanks for having me,
it's
guys.
Almost over,
good to see
by the
you.
way.
I
still
know.
Can't get over that.
Yeah.
Mark Short, chairman, Advancing American Freedom, and of course, in his time at the White House in the first Trump administration, he was chief of staff to Vice President Mike Pence and was the director of legislative affairs, connecting both ends of Pennsylvania Avenue for us. I'm Joe Matthew alongside Kaylee Lines in Washington. It is primary day. Happy primary day. We'll assemble our political panel next. Rick Davis and Jeannie Shanzano. With voting underway today in 6 states, we have to remember the special in South Carolina, what that might mean for the future of the late Lindsey Graham's Senate seat. It's all straight ahead on Balance of Power, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at the S&P 500 index trading at just about the low of the day right now. Very slight bounce off the bottom, now lower by 0.3%. To be sure, S&P holding close to a record right now, though people reluctant to make big bets until we find out tomorrow morning what that CPI report will bring. It drops 8:30 a.m. and you can have complete details as the number breaks and reaction right here on Bloomberg. S&P again down 21. Right now a drop of 0.3%. Dow Industrials lower by 0.2%. Nasdaq down 0.6%. Nasdaq 100 index down 0.4. And to be sure, S&P holding close to a record. 2-year yield at 4.22% with the 10-year 4.68%. We do have the 30-year 5.23%. Gold down $9 the ounce, little change there, down 0.2%, 43.81 the ounce. Crude up 1.4% right now, 83.28 a barrel on WTI. Brent 88.80 up by 1.2%. Oil resuming its advance again today as traders assess the latest developments from the Middle East. Intel is raising $20 billion in an upsized share sale. That's a third more than it was targeting when it announced the deal yesterday morning. Today, Intel shares down by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that's a Bloomberg Business Flash.
All right.
All right, Charlie Pellet, thank you very much. Checking the markets for us on this Tuesday. And not just any Tuesday. Once again, it is a primary Tuesday here in the U.S. across 6 different states, with a few races in particular in focus as we look for signals on the future direction of the Democratic Party. Could we see echoes of what we saw in Michigan last week with the victory of progressive Abdul Al-Sayed in the Wisconsin gubernatorial primary, where Democratic Socialist Francesca Hong does look like she could ultimately come out victorious in the vote today. There's questions as well in the Democratic Senate primary in Minnesota, trying to vie for the seat being vacated by Democratic Senator Tina Smith. You have a more progressive candidate in Lieutenant Governor Peggy Flanagan up against a moderate in Congresswoman Angie Craig. There are other races we're watching as well. The My Pillow guy is running for governor in Minnesota. President Trump is backing him. I'm not sure how far his endorsement could go ultimately in that race, or how far, frankly, it will go in the race happening in South Carolina today, the Republican primary to fill the seat permanently vacated by the late Senator Lindsey Graham. Of course, currently his sister Darlene Graham is in that seat, and she is running for it on a long-term basis.
Is Lindell TV covering the campaign of the My Pillow guy?
Conflict of interest, but I don't know how much that matters.
I haven't seen. We want to get to our political panel because there's a lot to talk about here. You just framed the 2 states most important for primaries with regard to this whole Democratic Socialist narrative, Minnesota and Wisconsin. We're also deeply curious, though, about this special in South Carolina, because it does look like it's going to a runoff. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis join us now. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy Center's Ash School, and Rick is our Republican strategist partner at Stone Court Capital. Jeannie, I know you're looking at these states as well, and we've heard a heck of a lot over the past couple of weeks about Francesca Hong. She's become a household name because of her commentary on Thanksgiving, which, by the way, she has recanted. I guess she's going to keep the holiday in place here. But she's up against a moderate Democrat, Milwaukee County Executive David Crowley, and this is the latest example of what we've been talking about so much. What will it mean for Democrats if she wins?
You know, I think, first of all, we have to be very cautious, as we all talked about, looking at the Michigan polls and how El-Sayed pulled it out by a much narrower margin. So while some of these primary polls have her winning with double digits, I don't know if we can trust those primary polls. Very hard to poll these things. And of course, this has been a really tough election season for the establishment in the Badger State. I mean, David Crowley was in the race, got out of the race, jumped back in the race with the of urging of the governor, Tony Evers. Hong has stayed in it. Hong has been on the cutting edge of many issues, including data centers, which we talk a lot about. She's been out front there. And interestingly, she has spent so much less money than any of her competitors. Like Tom Tiffany on advertising is at like over $7 million. She's under $400,000. And David Crowley just in July doubled her spending. And why can she do that and still be number one? because number one, she's getting support from the Republicans who want to see her win this primary. Number two, because she's going outside of a traditional sort of television spending. So it's been a fascinating race. I think it's going to be tough for her to pull it through. She hasn't even had the endorsement of Bernie Sanders, Alexandria Ocasio-Cortez, Hassan Piker, and all of those other sort of well-known socialists, if you will. So it's going to be a tough race for her. I would not be surprised whoever won, but both sides have issues in the Democratic side.
Yeah, Rick, I wanted to ask you about that. Do you read into the lack of endorsement from those key progressive players like Senator Bernie Sanders? Because Francesca Hong's campaign is writing it off as this isn't a race for a seat in Congress or the Senate. This is a state race.
No, I mean, Bernie Sanders would be all over this race if he thought she has a credible candidate. And I don't know if it's about her views around Thanksgiving. There are some years where the deep fried turkey that I made kind of put a spoil on Thanksgiving, and there are probably people who felt the same way she did. But that's just me. The reality of it is she's not a great candidate. She hasn't really committed herself to the race in a way that serious candidates do. And I would remind everybody, the only reason Crowley was in and out was because Sarah Ferguson, who was lieutenant governor, totally screwed up her own campaign and malfeasance around the funding of it. And so, yeah, this is a campaign that's had a lot of stumbles. But look, what's not stumbling? The Republican nominee, Tom Tiffany, assuming after today he's the nominee, $13 million in the bank. It's only been 6 years since Scott Walker left the governorship. And Trump, won Wisconsin by 49%. I mean, like, this is a state a Republican can win. So I know there's a lot of focus on, another DSA candidate running, that could win in the primary. And I agree with Jeannie. These polls have all been more wrong than right on these, especially statewide primaries. And I wouldn't be surprised if, we're talking about Republican governor in Wisconsin, even in one of the worst years for Republicans that we're going to have seen in a long time.
Well, that's saying a lot, Rick. I'm curious your thoughts on South Carolina. We talked a lot about Lindsey Graham when he passed away and the choice that the president made to put his sister in place. Now Senator Darlene Graham is going to find out what a Trump endorsement is worth in South Carolina. She's up against some pretty well-known folks, including Ralph Norman, the Freedom Caucus Republican congressman, been on this program many times and is well known in the state. Rick, the conventional wisdom is this goes to a runoff. Do you believe that's the case? And is it a name recognition issue for Darlene Graham?
Yeah, I mean, this is a race where you really don't have any polling data to speculate on whether it's right or wrong. And so the reality is, it's exactly what you said, Joe. Does Donald Trump's endorsement put somebody over the top? I think in the Emerson poll that was taken before everybody really got in the race, 46% said they would go with a Trump endorsement. That's still not 51%, which you need to avoid a runoff. So I think that puts Darlene in the runoff. It's just who's going to go with her. Ralph Norman, he's been in the news a lot over the last couple of years. A once and future politician, Mark Sanford is in this race. He could overperform. I mean, there are a lot of people in that down ticket who could surprise folks. But the bottom line is, then what does the state look like when you got a one-on-one in 2 weeks to run an election? And I'd still say advantage Darlene Graham at that point with the weight of the administration and the governor behind her.
Does the weight of the administration and the president go as far if you're the former CEO and founder of MyPillow, Jeannie? Mike Lindell is running for governor in Minnesota. The president is backing him. He took to True Social to reiterate again this morning that he hopes Mike Lindell wins big in Minnesota this evening. A big win, he said, he deserves, even if he is able to pull it off in the primary, which polling doesn't necessarily suggest he will. Would he stand a chance against Senator Amy Klobuchar, the Democratic nominee, presumptively?
Yeah, that would be a very tough race for Republicans win. To your point, Kaylee, even if the Pillow Man, as I like to call him, does indeed win, Minnesota, very tough for the GOP. In the same way, I would say that South Carolina, which Rick can correct me, I think Lindsey Graham used to say could also be called Trumpistan, is very tough for Democrats, regardless of who wins. But both of these races are really testing Donald Trump's endorsement power. And to your point, he's gone all in. But South Carolina is fascinating because don't forget, last time around, he endorsed 2 candidates. So if this goes to a runoff, I wouldn't be surprised if he does the same.
All right, I'll take this seriously for a minute. Rick, Mike Lindell at the Minnesota Farm Fest told the crowd in the big barn set up there that he has the edge on the rest of the field. Quote, "I can call up and work with the president of the United States," unquote. Is that actually worth something?
Yeah, I mean, a relationship with Donald Trump's gotten a lot of Republicans through primaries, usually through an endorsement. And I think that has to go here, too, right? I mean, we have to assume that, his relationship with the president, which is notorious, is got to be an advantage. That being said, most of the polling in the state shows he's the weakest Republican candidate against Amy Klobuchar. Like, if you actually thought about, gee, we'd like a Republican to win, he'd be your last choice. I think there'll be a lot of head scratching on election night tonight when if he wins, and a lot of a rolling of eyes on the Democratic side if he doesn't.
I think you were saying earlier, Kelly, imagine the debate between Lindell and Klobuchar. Surely he'd show up with graphs and an easel of some sort.
And a pillow?
Maybe a pillow.
Maybe. Although we should note he is no longer the CEO, still on the board, but he's no longer the chief executive because he wanted to focus on the campaign. The campaign could end tonight. It maybe will not. Jeannie, the other race we're watching in that same state, Minnesota, is the race to be the next senator replacing the Democrat Tina Smith. You have the Lieutenant Governor Peggy Flanagan, who's backed by the likes of Elizabeth Warren. She's the more progressive candidate. Then you have the moderate in Congresswoman Angie Craig. How much of a tell could this also be on the trajectory of your party?
I do think it is going to be interesting because Angie Craig, of course, when she won, she was more of a centrist. She had to be at the time she ran and won. And now she's being, called to the mat by Flanagan about things like the Lincoln Riley Act, her vote for that. She's trying to walk that back. And a lot of discussion, obviously, in this race about issues of immigration. So I do think this will be fascinating to see if Flanagan can pull this off. But like in so many of these races, I think for voters on the ground, the more the establishment Democrats try to say, we should be selected because we are electable in November, because Flanagan, or if you look at Hong, 5 years ago, they said something that was, quite bizarre about Thanksgiving. That really falls flat for many people on the ground in a Donald Trump's era, when it seems like people are saying all kinds of things on social media with no repercussions, and the Democratic establishment can't even get their own candidates over the line. And so that's where I think they have to really do a better job, this establishment, speaking to this progressive wing of the party.
All right, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors in our political panel today. Thanks for joining us on Balance of Power right here on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word from Colombia's finance ministry that Colombia's government plans to declare an economic emergency to bolster its response to that massive earthquake. Death toll over 180 right now. An emergency order would give Colombia's president, who began his 4-year term last Friday, temporary authority to issue economic and tax decrees without the need for congressional approval. Stocks are trading lower. S&P 500 index, very slight bounce off the bottom, but still down 20 points. Right now, the S&P is at 7732, down by about 0.3%. We do have the CPI report tomorrow morning. A lot of people holding off bets until that number drops at 8:30 a.m. Wall Street time. Bottom line here, S&P 500 index, again, is trading close to a record, a loss right now of just about 0.2%. The Dow down 92, Dow Industrials down 0.2%. NASDAQ is down 147 for the NASDAQ Composite Index, a drop now of 0.5%. The 10-year 4.22%, the 10-year 4.68%, the 2-year 4.22%, the 30-year 5.23%. Gold down $14 the ounce, $43.77, down by about 0.3%. West Texas Intermediate crude, as oil traders keep an eye on developments in and around the Strait of Hormuz. 83.17, we're up 1.3% on WTI. Barrel of Brent, 88.74, up by about 1.2%. On holding shares are plunging after it posted disappointing second quarter sales as the Swiss brand held off from discounting older shoe models ahead of product updates in the highly promotional U.S. market. On holding, backed by tennis legend Roger Federer, On is down now by 20%. Recapping, S&P down 18 points, drop there of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Kelly and Joe, that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet will be back from World Headquarters in New York at the top of the hour with another check on the markets, 2 p.m. Eastern, as we kick off Bloomberg Business Week Daily. Here on Balance of Power, we've got our eyes on the Middle East with the phrase close to some sort of arrangement making news today from Pakistan, where the defense minister said things are shaping up in favor of peace. Of course, Pakistan is a mediator in talks, sometimes indirect talks, with Iran, Kaylee, but we're accentuating the positive here today, even though the United States fired on a ship in the Strait. It was a Panamanian flag vessel that made a run at the blockade. Unclear if that was tied to anything else that we're looking at here. But some oil is getting through. The president said yesterday the Strait is open, and that appears to still not be the case.
Yeah, of course, the blockade is still in effect, as evidenced by that vessel being fired on and the dozens of vessels CENTCOM says it has turned around in enforcement of this. And of course, Iran has also suggested repeatedly that that blockade needs to end and perhaps even war reparations need to be paid by the United States for the Strait to reopen fully. So it's not exactly clear where we go from here. But let's try to figure out as much as we can with Ian Marlowe, who's joining us now in studio. He's our national security editor here at Bloomberg. So, Ian, if things are going in the direction of peace, I guess we read that as a positive, but do we know the kind of velocity with which we're heading in that direction?
No, we don't. And this was not necessarily on the bingo card for today. We saw a lot of harsh words flying back and forth yesterday between Trump and some Iranian officials after there were some appointments over the weekend in Iran where they were kind of signaling that they were taking a harder line on their control of Hormuz, and on their insistence on compensation for the war, which Trump on Monday said was the first time it's ever been brought up, but was actually in the MOU that the two sides agreed to in June, where there was that $300 billion fund. So that kicked off this huge thing yesterday where it was, you know, you pay reparations for this, and then Trump started saying you have to pay reparations to everyone who's been killed in attacks from Iran over the years. You have to pay reparations to people in Lebanon and Syria, all these things that were obviously non-starters for Iran. And so to have a Pakistani mediator come out today and say that we're getting close to some kind of deal is a bit strange, especially since Qatar has been more recently the sort of more involved mediator, where obviously Pakistan hosted some talks earlier on in the process that didn't end up going anywhere. So it's not clear how much we need to invest in the Pakistani defense minister's words today, but they have moved oil markets because everyone is still sensitive to some deal kind of coming forward.
We know that we cannot often believe what we're hearing from Iran, particularly when it comes to the status of talks. What motivates Pakistan in this case to project this kind of optimism?
Yeah, I think for Pakistan and for Qatar more, people actually just do want stability in the region. They want this sort of low-lying, low level of conflict that just doesn't end. They want that over. For Pakistan, I think Pakistan has in some ways parlayed it has played the Trump administration very well in the sense of, I don't mean play us in kind of getting a fast one over on them, but they have, they've been very complimentary towards the president. They have inserted themselves into this process and gotten a lot of prestige. There were a lot of, hot takes earlier on during the war about, Pakistan's growing role in international affairs, which is not something, you would have thought you would see. So I think Pakistan has some actual benefit to get from inserting itself into the process. But in general, I think the mediators are trying to push this along. And anytime you see Iran and the U.S. getting, drifting further into this irreconcilable, just red lines all over the place sort of situation, the mediators kind of crop up and say, oh, there's a diplomatic process going on, we're moving towards, talks are still ongoing, they're not over. And it gets everyone sort of back on track again. It's also not clear how much some of this is posturing, either on the U.S. side or the Iranian side. There's the U.S. has constantly referred to fragmentation within the Iranian government about hardliners and moderates and who wants what. And in the U.S., Trump has gone from threats of escalation to talks are happening to a deal is close within a matter of hours sometimes. So it's not clear exactly, which is a situation we've been in now for several months, I think.
Yeah, frequently more questions than answers when we talk. Ian, thank you so much for joining us. Ian Marlowe, Bloomberg News National Security Editor. As we prepare to spend some time with Morgan Ortagus, we recall the comments last evening from Heather Conley, joined us on the late edition of Balance of Power. Of course, with the American Enterprise Institute, she's a senior fellow, talking about the list of options facing the president right now, dwindling to none. Listen.
The president does not have good options. So right now, I think the message is, I'm not messaging to the Iranians that they have the leverage now. I am not going to make a decision yet. I'm going to hope that something pressures Iran to take a different step. But this was really downplaying. And you heard that with Secretary Bessent as well, saying, the Strait of Hormuz is really not that important. They'll have other ways to get energy out of the region. So no decision is a decision in a strategy. And we're in a holding pattern right now until something gives.
Let's hear from a voice of experience in Morgan Ortagus. Was Steve Witkoff's deputy U.S. special envoy, left the administration in March, former State Department spokesperson, and we should note currently enlisted in the U.S. Naval Reserves. Morgan, it's great to see you. Thank you as ever for your service, and I'm curious your thoughts today with Iranian state media reporting that Iran has closed the strait. On one hand, Pakistan is telling us on the other that once again we're on the verge of peace. Which do you see as more realistic?
Maybe all of the above. Listen, going into these negotiations, I can tell you, being a part of Steve's team, last year, before we ended up doing the bombing in June of 25, there were negotiations that were started. And so what you often see, we must have had 20 different countries reaching out to us, asking us to be a part of the negotiations to help facilitate. So I'm not sure what's going on with the Pakistanis today. It may be a cry for relevance so far in the negotiations.
Interesting.
I actually, though, I think I disagree with the woman that you had on from AEI that said the president is sort of out of options or in a holding pattern. I actually see it from an entirely different perspective. I was nervous about the war over the summer. I'm in a much more peaceful state now because I think the president is doing what he did in his first term that actually worked really well against Iran. And that was in the first term, we had the maximum economic pressure campaign against Iran. We have that now, plus a naval blockade. So while the IRGC likes to make these large and loud protestations about the strait and what they're doing and not doing, the undisputable fact is nothing is going into Iranian ports or from Iranian ports. That blockade is incredibly effective. It works. It's important. We're still seeing Axios, I believe, reported about 8 million barrels per day that are going through the straits. Plus, you have 8.5 and some of the overland methods. As you just reported earlier, the price of oil, I think, is in the lower 80s. I mean, when we were looking at the Biden midterms, for example, in 22, the price of oil was higher than this. So I actually think that the president is in the best spot that he's been in this entire year. Inflation is through the roof in Iran. Young people don't have jobs. People can't buy basic needs. And what is this regime most scared of? They're scared of their own people and their protests.
Well, so if maximum economic pressure is ultimately the answer here in your mind, Morgan, it begs the question of why we launched a hot war in the first place. Why didn't we just do this from the very beginning if it's enough?
So I don't think it's enough, and I don't think it's our only option. And I think military force is incredibly important. Why is that? What were the headlines that we heard for the last 4 years leading up to the Trump administration for the 4 years of Biden? I was constantly reading that Iran was weeks away from obtaining a nuclear weapon. They were charging forward. I mean, the world, and by the way, the people that were the most aggressive in that time, especially when we entered office last year, were the E3. France, Germany, UK. It was our European partners. When I came in, I swore in 15 minutes after the president on January 20th, 2025. And it was our European allies that were sounding the alarm to us about the seriousness of how close Iran was from obtaining a nuclear weapon. And we knew that we were going to have to quickly negotiate. And if that didn't work, take kinetic action, which the president took in June. So there's never one sure thing that works. Like I know you and your listeners, you're used to, a company that says, here's how we're going to get to our projected revenue goal, our earnings goal, and here's the plan. Foreign policy and national security can be very opaque. It can be very gray. And you normally have to look at a series of options and judge it by the day and the week. So I think that the president's military campaign was important. We no longer see the headlines that Iran is close to a nuclear weapon. President Trump was the first president to say that Iran would never get a nuclear weapon on his watch, and he was the first president to actually take serious action for that to happen. So I guess, this whole narrative that the administration is sort of on its back heels with Iran, for me as an analyst and as someone who's been a part of these negotiations, I don't see it at all. I think the president is actually in the catbird seat, not the Iranian regime. I mean, they can't even establish proof of life of the supreme leader. It's like weekend at Mushabah's.
So when does Steve Witkoff get back at a table? Actually just saw that movie last weekend. When does Steve Witkoff get back at a table, or does this indirect negotiation through the likes of Pakistan and Qatar continue indefinitely?
It could continue indefinitely. I think that the administration is exhibiting and the president is exhibiting a lot of patience right now. And I do think strategic patience is on our side. The president has been clear that all military options are still on the table. CENTCOM is still aggressive. It's still there. It's still enforcing the naval blockade. The U.S. Treasury is still enforcing the sanctions. And every day that goes by that Iran doesn't have a deal, they are hurt economically. Now, an important and crucial point, economic pain will not necessarily change the behavior of the people that Steve Witkoff is negotiating with. Economic pain probably won't even change the behavior of the IRGC. However, economic pain does change the behavior of what I mentioned earlier, of what the IRGC is most scared of, is most fearful of. It's not any foreign military. It's not America or Israel. They're most scared of their own people. And the economy today is, of course, much
but Morgan,
worse
if I could
than
jump in there, wasn't that the narrative at the beginning when the president announced the launch of major combat operations? He said it was the time of the Iranian people to rise up. That didn't happen. Why would it happen now? What has changed?
Well, it did happen in January, which is why we actually started.
Right, I'm talking post the launch of Epic Fury.
Because you can't really predict this stuff in foreign policy. I mean, listen, I actually said on Bloomberg a few days after Assad fell, and none of us were predicting that. Thank you. I've been going on your network for a while, and I remember that very vividly, that was just not a day that we were all predicting. So these things happen in foreign policy. You can't really predict when the people are going to rise up and take on a regime. But what you can ensure is that the people who terrorize, the IRGC who terrorizes the Iranian people, you can make sure that they don't have extra money in their quivers in order to continue to terrorize their own people. And that's one of the goals of this economic campaign.
All right, we'll leave it there. Morgan Ortagus, thank you so much for joining us once again on Balance of Power, the former Deputy U.S. Special Envoy to the Middle East alongside Steve Witkoff. We appreciate you joining us on this early edition, and we'll be back for more on the late edition at 5 p.m. Eastern. In the meantime, Bloomberg Business Week Daily is just ahead right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everyone. Welcome to Bloomberg Business Week Daily on this Tuesday, August 11th, 2026. I'm Tim Stenivek. Carol Vassar is out today. We've got Christina Kino here in her place. She's managing editor of the Markets Live blog on the Terminal. Christine, it is a perfect day for you to be joining us because there's a lot that's on our radar.
There is a lot, Tim. I mean, talk about NVIDIA financing and a question about circular funding. And then, of course, the latest developments on the U.S.-Iran deal. Is there a deal? Is there no deal? What is happening? And lots of stories, of course, what retail investors are doing with ETFs. I mean, so much to talk about.
Yeah, this is exactly what we're doing over the next hour. As far as markets look, stocks are under a little bit of pressure ahead of that key inflation report tomorrow. We've got oil higher as traders parse the latest commentary coming from Iran. Christine mentioned that we're digging in there a little bit. Josh Wingrove is going to be joining us in just a few minutes. He's going to help us make sense of what exactly is happening in the Strait of Hormuz. This as President Trump says it's 100% open, while Iran says it's shut. Also, Christine mentioned that huge $500 billion in funding that NVIDIA spoke about yesterday. We're learning more about what that funding actually looks like and also what it's doing for shares of alternative asset managers. We're going to be speaking about alternatives with JP Morgan's Aaron Mulvihill. He's going to be joining us in just a few minutes. Also, the CEO of eToro is going to stop by just after reporting earnings, get a check on what exactly retail investors are doing on the platform right now. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Charlie Pellet is standing by. Hey, Charlie.
Well, hello there, Tim and Christine. We are kind of in a holding pattern ahead of the CPI report tomorrow morning. It drops 8:30 a.m., and we'll have the number for you, special coverage, lots of reaction. Everybody's going to be talking about that tomorrow morning. Right now, the S&P trading lower, little change, still close to a record, but yes, lower, down 18 now, 77.34 on the S&P, down by about 0.2%. Investors refraining from making big bets. The Dow now down by 100, even drop there of 0.2%. NASDAQ Composite down 146 for NASDAQ, a decline of 0.5%. NASDAQ 100 Index down 0.3%. The Bloomberg Mag 7 Index down now by 0.7%. However, the SOX, the Philadelphia Stock Exchange's Semiconductor Index, holding on to a gain of 0.4%. The 2-year 4.22%, the 10-year ahead of CPI 4.68%, the 30-year 5.23%. Gold, $43.67 the ounce, down 0.5%. West Texas Intermediate crude oil up 1.3%, $83.18 a barrel. Brent, the global benchmark, pushing higher as well, $88.78 for Brent, up by 1.2%. California's Attorney General Rob Bonta is calling reports that Paramount Skydance plans to leave the state if its top lawyer does not settle a lawsuit challenging the company's planned merger with Warner Brothers Discovery is a blackmail. That in a post on social media. Now, a source says Paramount's board has approved a possible move from California as early as October 1st. Today, we're seeing Paramount Skydance shares down 0.6%. Warner Brothers Discovery up by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. And that, Tim and Christine, is a Bloomberg Business Flash.
Charlie Pellet, thank you for that update. We're, of course, going to be checking in with Charlie throughout the next hour for the latest coming from the markets and business news. On that, if you want to talk to Charlie, if you want to talk to us, if you have questions for any of us, you can ask us questions. Our guests, too. Shape the interview. Just go to Bloomberg.com/AskRadio. This is exclusively available to subscribers of Bloomberg.com and the Bloomberg Terminal. We got a great special coming up on rare earth and critical minerals in the 4 p.m. hour. Great group of folks joining us. Ask questions about that. Bloomberg.com/AskRadio. Well, I think traders, I think it's fair to say, are asking questions about what's happening in the Strait of Hormuz. We're getting conflicting signals. Pakistan's defense minister said the U.S. and Iran are, quote, close to some sort of arrangement over the Strait of Hormuz, even after both sides appeared to harden their positions in the long deadlock negotiations. Meantime, Iran says the Strait of Hormuz will remain shut until Iran's conditions are met. And a reminder, just yesterday from the Oval Office, the president said the strait is, quote, open now, quote, the U.S. is the only one that has control of Hormuz, and, quote, we control the strait 100%. Josh Wingrove is going to help us make sense of this for us. He's Bloomberg News White House reporter. He joins us from the White House. So, Josh, clearly very different things are happening based on what the president, given what the president is saying and what the oil markets are telling us. What is happening in the Strait right now?
I mean, you guys say that I can help you make sense of it. I like to underpromise and overdeliver. Okay. So let's just maybe dial that back here. I don't think anyone really knows. I mean, clearly the risk factor for a lot of shippers is just simply too high, whether the president insists that the strait is open or not. And so that's why we continue to see sort of these weather vane type statements from the administration and the president on a day-to-day basis. And so as I stand here today, we really have not heard more from the administration since yesterday, when the president both was downplaying the current standoff, saying he's comfortable with the status quo in the strait, and moving the goalposts and saying that, hey, now I want sort of compensation too, or reparations of some kind, after reports that Iran was seeking the same. And so we have this sort of dueling goalpost shifting, the president backing off his threats from a week ago to sort of, hover his finger over the button of some massive new offensive by American military forces. And so we seem like we're in the status quo for a little bit, and that's why people are reading into the Pakistani government statement so much, that, is that sort of rose-colored glasses on their part as one of the sort of intermediary nations here, or is it the straight goods that's sort of cutting through the posturing and positioning of the two sides? We simply don't know. But for President Trump, of course, the stakes continue to be high, right? His polling remains very low. Gasoline prices are high and have been sort of trending upwards. Remember, Treasury Secretary Scott Bessent was talking about $3 gasoline by sort of middle of September. We are a long way from that. And so the risk, of course, for the president is the Republicans will pay a political price come November in those midterm elections if things don't come to some sort of normalization soon. But of course, as you say, Trump is insisting it's already there. So
yeah, very interesting, Josh. I mean, yeah, again, you mentioned that's such a good point, right? There's a lot of domestic pressure for the president to really get a deal done before those midterms. How much pressure is he under, and what could be the risk if there is no concrete deal by the time we get to November?
It's a lot of pressure, and I think there's some notable comments. President Trump talks a lot. It's my job to try to keep up with it. I don't always succeed. I don't know how anyone really does. But one thing he said to Punchbowl, I believe, a day or two ago was, downplaying kind of the role that he will play in the midterm elections at a time when the White House has been sort of teasing that he would get out on the road more and start campaigning for folks. And Trump saying, look, I won my election, and these congressional colleagues, it's up to them to win theirs. Now, that could be, Trump. That could be an offhand comment, but it could also be a sign that he's starting to distance himself from the results. Remember, when Republicans got their clocks cleaned in 2018 in those midterm elections, at least in the House, Trump chalked that up afterwards, saying, hey, I wasn't on the ballot. My voters only show up when my name is on the ballot. And of course, that is not the case in midterm elections. So I think we'll be watching to see if that continues to be the case. Is that just an offhand comment from the president, or is he starting to sort of back away a little bit, not wanting to own what may or may not be the electoral results for the Republican Party in a few months, given where these things are going? We should note, president continues to have high polling within his party. Republicans are generally satisfied with him, but nationally, including, of course, with Democrats, but also independents, his polling is very low, generally at or near all-time lows, including as compared to after the January 6th situation. So I think that is sometimes lost in the shuffle here. This is a president who looks like he's on politically choppy waters, but is trying sort of to happy talk up the situation both in the strait and with the American economy generally.
What's the narrative, Josh, that's emerging from different members of the president's administration around this? There has been reporting from the New York Times in recent months about the way that Vice President Vance felt about the U.S. Going to war with Iran alongside Israel. And I'm just curious if the administration and members of the administration are sort of staying on a consistent message about the timeline of this, or is it all being deferred to the president?
I think he is increasingly the public voice on this. And I think one way to read that is sort of a hesitance on the part of others. They don't want to seem like they're disloyal to the president, of course. Vice President Vance has been loyal to the president on it, but of course was a strong voice against sort of interventionism abroad. And so we have not heard a lot from the vice president on this war. He said over the weekend that we're sort of still in the middle of the game on this. And others, haven't really been leaning in on it, including the Secretary of State. And so we'll see where it goes. This is not to say that any sort of, showdown at the OK Corral is coming up in this administration. I mean, they remain behind the president, but they are in the middle of the game, as the vice president said, and we just simply don't have any indication as to what the next steps or path from here will be. The president has been de-emphasizing it in his remarks. So, it seems like something he doesn't really want to talk about. That's where we're at. But everyone's been talking today in Washington about that plane story from overnight. That's from the Washington Post, our friends over there. That's been one of the crazy things, and of course an Iran link to that as well.
Okay, so let's end there, Josh, because that is something that, I saw this cross late yesterday, and it's completely wild. What can you share with us about that trip from Turkey and the threat that at least the Secret Service felt was viable coming from Iran to force such an invasive maneuver and really keep us and keep you in the dark for a month about this.
Yeah, and let me just also note, Tim, it's not your question making me sweat, it's this DC swamp, so forgive me.
August in DC, it's all good.
Sweat over here, so I hope, it's live television. We're doing
it's all good.
The president his public story was that he was switching, well, not even public story, but the story, at least until 24 hours ago, was that he switched planes in part over the defensive capabilities of the new gifted Qatari jet, which the New York Times reported did not have the same kind of defensive capabilities of the sort of outgoing legacy Air Force One jet. But then this report, of course, was that there was a third plane entirely, that the president got on the legacy Air Force One and then was snuck off in a catering cart to another plane, and that the main Air Force One went on unbeknownst to people on it, including his staff and, of course, Air Force staff that staffed it and the press that were on board, while the president was actually on another plane. Now, the administration has not confirmed this publicly. They've not really commented on it either. But I guess you would say that the argument is there that there was some kind of threat. The criticism, of course, is that threat was not relayed to the people who were on that plane, who now look to have been sort of more squarely in harm's way. And so a lot of questions swirling about how this was, came to be, but the president has not commented on it. I want to see a photo of this catering cart, Tim.
Yeah, I do too.
There's a lot of elements to this.
Yeah, well, maybe we'll have to hopefully, fingers crossed, we can get that. Josh Wingrove, get into some air conditioning. We appreciate you hanging out in the swamp to join us here on Bloomberg Business Week Daily. Investors squarely focused on the latest out of Washington, D.C. They're also focused on this idea of what's with the circular funding and circular financing, and where do alternative assets fit into this? We've got Aaron Mulvihill with us, global alternative strategist at JP Morgan Asset Management. He joins us here in the Bloomberg Business Week studio. Perfect timing. You've got this new report out, but it comes the day that we're learning more about this $500 billion commitment that NVIDIA is getting from some of the largest alternative asset managers. It fits kind of squarely into what you have in this guide to alternatives. How does it fit in there?
It does, Tim. One of the biggest themes we have right now with clients that's coming up in every discussion is the amount of AI and technology exposure that's in every asset class, right? Not just the public markets. We're well aware the S&P 500, you've got 40+% in the Mag 7. You add up all the utility companies, everything else, you're getting to 60% of the S&P moving on this AI theme. But now also private markets, we're seeing that ramp up in private credit and private equity with a lot of data center investment as well as other parts of the AI cycle.
Yeah, well, Aaron, it seems like everything's going well and dandy, right? Everyone's making money off of this based on the latest financing deal that we're seeing. But, the fear over circular funding was a big theme over the last couple of weeks or months or so. That seems to have petered off now that tech stocks are back. But when does that risk come back to fore again, especially in the private markets where it's a little bit more esoteric in terms of the valuations of assets in that sector?
I think the broader risk, Christine, is this concentration in a singular theme. So everything is AI wherever you look, whether it's the public markets, the stock markets, increasingly the bond markets. A report from JP Morgan's investment bank is expecting $2.1 trillion of issuance in investment-grade bonds to fund the AI build-out over the next couple of years. And so it's increasingly important for investors to be active, to work with active investment managers and asset managers who can diligence these increasingly complex bond issuances, stock issuances, as well as choose how much they want to be allocated to this particular theme across public or private markets.
Are there alternatives that are not exposed to AI right now?
Nobody wants.
They're few and far between. Like you don't want to be in the private credits that's exposed to software. It seems like.
Software has definitely had a pullback in the last couple of quarters. I would say in software, even in private credit, we're not really seeing a deterioration in performance. It's more concerns about what the future might hold for software as AI starts to maybe eat into the ability to create code, create competitors to software companies. But we're not really actually seeing this in performance today. When we think about alternatives, people don't want that sort of broccoli diversification of low returns. So where do we look for higher returns? We like the real estate market right now, commercial real estate. I would say it's important to be mindful of an increasing amount of digital infrastructure in the real estate space, the data centers. So that's a question you can ask. But I think what's important to keep in mind when you're investing in private markets, private funds, is portfolio managers have an incredible amount of discretion into how they build those funds up. They don't need to follow a benchmark. They're not following the S&P 500. So they can deviate and they can choose how much data center exposure they want to have, if they want to completely avoid data centers in a real estate fund. And there's plenty parts of the real estate market that we see as being very attractive without having to add to exposure in digital.
Yeah, well, speaking of kind of preferences between this theme, I know that your group in particular actually prefers the electricity layer over the data center story at the moment. What is kind of the appealing aspect of that narrative that is perhaps underpriced by investors at the moment?
There's a strong case to be made for the electricity layer of data center investing, and I think it comes back to that theme of investors wanting some exposure, but not necessarily the volatility that comes with direct investment into AI theme. And so when you look at the power layer, we expect that electricity prices are going to continue to increase. We expect more consumption of power by the data centers. They're going to be 12 to 13% of the total US power supply within 3 years. So a lot more power, a lot more consumption, but it's not the only thing driving the performance of infrastructure funds or private infrastructure funds, because you've also got electric vehicles, you've got the electrification of the economy, you've got moving towards renewable energy, the need to replace the grid. All of these things can benefit the funds and their performance without having to be completely reliant just on the AI theme.
Can you talk a little bit about shipping? Because this is a really interesting theme that comes up in your report.
It is, and it kind of, we're talking a lot today, of course, about Iran and the Strait of Hormuz, and shipping's an interesting one. To me, it's a little bit like surge pricing. If you're trying to come from downtown to here, the FDR is blocked off, then you've got to take a long way around. That's what we see in shipping, and so transportation companies are actually benefiting from these geopolitical issues, from what we're seeing.
And you think
in
that's
Iran.
sustainable?
In the sense
of like, this is going to be ongoing for a significant period of time.
One, it comes down to how long the war is going to continue, but we've had an increased incidence of geopolitical issues over the last several years. If we close this war, there's going to be another issue before long. That's just sort of the nature of the world we live in. But another factor that's beneficial to the shipping industry, if we put that aside, is the fact that there's not a lot of idle capacity out there. There's less than 2% of the global shipping fleet today is idle. And so kind of back to the taxi analogies, not enough taxis to go around. And again, we have this issue of surge pricing, higher transportation costs, and that's benefiting the transportation operators.
We even spent some time yesterday talking about the Jones Act, given the news from the White House there. Aaron, it's always good to see you. Thanks so much for joining us on Bloomberg Business Week Daily. Aaron Mulvihill is Global Alternative Strategist at JP Morgan Asset Management. That new report, a Q3 guide to alternatives, it's sent out to 250,000 financial advisors. Well, coming up next, from alternatives to what retail investors are doing, the CEO and co-founder of eToro joins us next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all trading lower. S&P right now down 26 points, down 0.3%. When you run the GIP screen on the Bloomberg, right now just about the lows of the day on the S&P 500 index. Traders, however, are refraining from making big bets on stocks and bonds ahead of the CPI report. That drops 8:30 a.m. tomorrow morning, Wall Street time. Again, the S&P down 0.3%. We've got the Dow also down by roughly 0.3%. Should point out that the S&P 500 index does remain very close to a record. NASDAQ right now down 189 for the NASDAQ Composite Index, down 0.7%. NASDAQ 100 Index down 0.5%. The SOX, the Philadelphia Semiconductor Index, it is up 0.3%, well off session highs. All of this with the VIX coming in just above 15. The 2-year 4.22%, 10-year 4.68%, and the 30-year 5.23%. Gold, meanwhile, down $27 the ounce, 43.63 the ounce. It is down 0.6%. WTI 83.01 a barrel, up 1.1%. Brent, as traders keep an eye on developments out of the Strait of Hormuz, 88.70 for a barrel of Brent, the global benchmark, up now by 1.1%. A sign of the times, with Spotify saying it will soon begin identifying artist profiles created by artificial intelligence with a new AI personas label in an effort to bring more transparency to listeners about who is behind the music. The world's largest music streaming service says it wants customers to know which artists are real humans and which ones are artificial. Shares of Spotify trading down now by 2.2%. Christine and Tim, that's a Bloomberg Business Flash.
Thank you, Charlie. Appreciate that. I'm looking at shares of eToro Group. They're lower today, actually having the biggest decline ever, down about 13%. This after the fintech company reported revenue from crypto assets for the second quarter that missed the average analyst estimate. Also, big news, it announced to buy TradeZero, based in Brooklyn, for up to $231 million. We've got with us Yoni Assia, the CEO of eToro. He's back with us here in the Bloomberg Business Week studio. So the numbers, you were saying you had a good quarter, and this is an acquisition that you think is the right move, obviously, at the time. What's the market getting wrong about this?
Well, I can't control the markets. I can control the business. Q2 was another beat quarter. Great 9% growth year over year of both top line and bottom line. 18% exceeding actually market expectations of funded accounts. Huge roadmap coming in across AI in the company. We actually released a new app, which is taking the old app and rewritten 100% with AI focus and center around Torier AI agent, which is the Grok frontier model. And we were talking now about Dan Pipitone from TradeZero and the team, a great team joining us here in the U.S. to lead eToro in the U.S. with the TradeZero acquisition.
Yeah, let's talk about the TradeZero acquisition.
Yeah.
Dan's been on our program. I used to speak to him all the time just a few years ago. So certainly a familiar name to our audience. Why buy TradeZero rather than build something internally? Like, what does bringing on TradeZero do for eToro that you couldn't offer U.S. customers before?
Sure. So when you look at our business, the vast majority of our business is outside the U.S. We have a huge franchise, Europe, UK, Australia, Singapore, Abu Dhabi, and the U.S. a bit got left behind, sort of the rest of the world for us, where the big part of the business is. What this brings is, one, a great team based here in Brooklyn, in the U.S., with a significant also franchise, $80 million revenues, and a lot of knowledge and experience in U.S. capital markets infrastructure. So a lot of the great products that we actually have outside the U.S., which include leveraged stock trading, long-short. On top of long-short trading, we actually created quantitative smart portfolios, which create hedge fund-like strategies, market-neutral strategies outside the U.S. So all of these products operate and work for eToro outside the U.S. And we believe that together with TradeZero, we can actually bring all of these products, including futures trading, which is a lot of our customers were trading oil, gold, silver during Q4, Q1. So all of these products will now be enabled to our customers through the integration with TradeZero.
Yeah, how are you planning to kind of differ your approach when it comes to dealing with your international clients? Because, I lived in London for almost 10 years, and the average retail investor there tends to be more conservative. They tend to prefer physical assets, whereas U.S. investors are really just very much into this. And so, yeah, how would you kind of differ the approach now that we're looking at a broader base of international clients?
So I think this actually shows the huge opportunity that we have, right? So eToro has been hugely successful outside the U.S. in places like Germany, Spanish, France, Italy, the UK, across multiple, by the way, both geographies and products, 24/7 trading of both stocks from 26 different capital markets, of commodities, indices, currencies, as well as investing, copying the top traders all around the world. We actually feel our products have a huge untapped market here in the US, but until 2025, until the IPO, basically, we just took a step back, waited actually for also the crypto environment to be the right environment here in the US, and together with the Trade Zero acquisition, we were going to double down on the US market, introducing our US customers and US customers to basically the global community and the collective intelligence in eToro.
You mentioned AI, and one thing that we're increasingly hearing more about is agentic trading. There was a great piece in Bloomberg just last week. Big take. Everybody should check it out if they haven't already, about the way that some retail traders are harnessing this technology. eToro is allowing customers to use AI agents to trade autonomously, but that's within certain defined parameters. Give us an update on adoption and activity that you're seeing thus far.
So first of all, just yesterday, we launched an official connector to Grok. So we have a great partnership with SpaceX. You can actually go now to Grok and click search for eToro, connect your eToro account, click. It opens basically an eToro single sign-on, and then Grok suddenly has visibility into your entire portfolio, into the portfolio of all of the rest of the traders in eToro, and into the X feed. So you can ask something like, look at my portfolio, look at my X post, tell me what I'm missing in my portfolio. Now we've launched Tori, our own AI agent, a while back, which is also based on Grok. We launched also now Claude MCPs, and we are seeing more and more users are actually connecting AI. There was one missing piece which we launched about 2 months ago, which is sub-accounts, or we called it agent portfolios. A lot of people, including myself, were afraid to connect their entire account into AI. Now you can actually connect it just to a sub-account, to an agent portfolio, and say, let's say I have $100,000 in my portfolio. I want $5,000 invested, and I want this now AI agent to manage my portfolio autonomously. Now, the beautiful thing about AI agent is they never sleep. You can train them basically on everything. By the way, AI agent goes every day to universities across the globe, downloads research papers on behavioral economics, connects the data in eToro, and runs back tests on actual proprietary data of eToro. So we're seeing things that up until 2 years ago, only people in places like, Renaissance and Millennium could do. Suddenly we're doing it with our own quants, and we're building those tools for our customers to run basically quantitative trading and agentic trading as well. I believe this is just the beginning of that, and that is going to actually surpass the amount of trading activity of people on eToro by the end of next year.
Wow, okay.
Yeah. All right. Well, let's talk about prediction markets as well, because that's another growth area for a lot of companies like eToro. It's surging in popularity. What sort of opportunity does that present for your company moving forward?
So we announced another acquisition in Q2, which is Zengo. It's a non-custodial wallet. In the US, it's a great opportunity. It's a regulated market. Outside the US, a lot of the prediction markets actually operate in the DeFi world in non-custodial wallets. Zengo is a firm actually run by a great founder that was actually a VC that I pitched eToro to 20 years ago. and now sort of working together, we've launched prediction markets in a DeFi model in a non-custodial wallet. It took us, by the way, 2 weeks from closing the acquisition to actually launch the SSO connector to basically the non-custodial wallet, so you can transfer money seamlessly from basically your eToro account into a non-custodial wallet, and then actually trade tens of thousands of crypto assets through DeFi swaps versus only 200 on eToro. But 200 is actually a lot. And of course, new markets such as prediction markets and coming soon perpetuals as well.
How do you distinguish, at least in the U.S., between what maybe Kalshi and Poly market are doing with prediction markets? And I mean, this is a really crowded space.
First of all, nothing is really crowded when you think of the entire TAM, right? So the entire TAM, we're still very, very early stages of the largest transformation of wealth in history.
You think that
we're talking about $100 trillion moving from older generations to younger generations?
Yeah, that's outside of not just prediction market. I mean, that's the whole great wealth transfer.
I think it's appetite, it's risk appetite and type of new products. And one of the reasons we did Zengo is we noticed we have Gen Zers who are actually very interested in living on chain and doing a transaction on chain. I think that's where a lot of the ecosystem is. And when you look at the different products that we've been launching in eToro, it's about making sure that customers on eToro can stay on eToro, whether they want to trade stocks or commodities, or whether they want to actually trade crypto or actually copy somebody else or invest in alpha portfolios on eToro or spend their money with a Visa that's connected to the account. So what we're building is a financial super app that provides you access to any type of financial product that you want within the eToro ecosystem.
All right. Well, speaking of crypto, Yon, we got to talk about that since that seems to be a little bit of a weak spot for your most recent earnings. But I mean, what's the outlook in terms of the revenue from that market, and really just outlook for the market directionally moving forward?
I think we're seeing crypto yet in another super cycle. Everybody's talking about the 4-year cycles of crypto. We launched it in 2013. Boom, crashed 85% in 14. We had huge amount of revenues in 2017 coming from crypto, a huge crypto rally, boom, a crash in 2018, 2021, 2022, now 2025 and 2026. So it does seem it works on a clock of a cycle, maybe a self-fulfilling prophecy. And I have no doubt, I'm a very big believer in Bitcoin as digital gold, that we are going to see Bitcoin going way beyond the all-time highs that we've seen in October. But it might take time and people to adopt to these technologies.
Well, real time, what are you seeing as a result of the cold card wallet hack made by Canada-based CoinKite, the crypto that was stolen?
It doesn't have any impact on eToro.
Are you seeing more people invest in Bitcoin ETFs?
We're seeing actually more people moving to non-custodial. So we actually have seen people coming into eToro, depositing crypto in eToro, into Zengo, and then from Zengo into eToro. We actually are one of the unique firms that are now introducing crypto buying power as well. So you can actually come to eToro, bring in your crypto from basically, either non-custody or custodial wallet, and then get from us a margin or buying power to buy stocks as well.
Are a lot of people doing that? It's kind of, could be risky.
Risk return, we believe in educating people about the markets.
Yoni, always good to see you. Appreciate the update on what the retail investor is doing. Yoni Asia, co-founder and global CEO of eToro, joining us here in the Bloomberg Business Week studio. Once again, shares of eToro under a little bit of pressure today, down right now by about 13% after the company reported its latest results and that acquisition of Trade Zero. Taking a look at markets in general, though, the S&P 500 moving lower, down by about 0.4%. The NASDAQ Composite down 0.8%. The Dow down 0.2%. Coming up next, we speak to Vice President of the Americas over at Wärtsilä. We're talking industrials next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all in the red right now. A lot of people refraining from making big bets ahead of tomorrow morning's CPR report. But bottom line here, stocks are lower. Worst level of the day right now on the S&P, down 31 points or so from a record, down 0.4%. Now it's 77.22. We've got the Dow down 142 on the industrials, down 0.3%. NASDAQ down 218, drop there of 0.8%. The Russell 2000 index, though, of small cap shares, it is advancing up now by about 0.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, also higher today, up by about 0.3%. The 2-year, 4.21%, with the 10-year, 4.68%, the 30-year, 5.23%. Gold down $21 the ounce, 43.69, drop there of 0.5%. West Texas Intermediate crude, 83.24 an ounce. A barrel, 83.24 a barrel on WTI, up by 1.3%. Brent, 88.85, up by 1.3%. This is investors keep a close eye on developments out of the Strait of Hormuz. Company news, Bumble shares, let's talk dating apps, up by 0.5%. Bumble will allow men to make the first move in messaging on its dating app, marking a major reversal from the company's signature Women Go First model as it seeks to court younger users and deliver on a long-promised turnaround. Again, recapping here, we got Bumble up by 0.5%. Tim and Christine, that's a Bloomberg Business Flash.
All right, Charlie, with the updates for Bumble. Appreciate that, Charlie. Okay, Bumble getting some attention. Industrials getting a lot of attention, thanks to the CapEx supercycle that we're seeing as a result of what many are calling a revolution in AI. Wärtsilä is one of the global companies operating in the space. It's based in Finland. It provides tech for the marine and energy markets. Think power to data centers and more. The company is traded on the NASDAQ Helsinki Stock Exchange. If we were to convert the euros to dollars, it would be about a $20 billion market cap. We've got with us Risto Paldanis, Vice President of Americas for Wärtsilä. He joins us from Finland. Risto, good to have you on the program. We wanted to talk to you because you've got this new analysis out that talks about a disconnect between what we're hearing from data centers on the planning side and the realities of the grid. You argue that the Americas are speeding to powerless, building data centers faster than the infrastructure needed to run them. How serious is that mismatch today, and when does it become a real constraint on AI growth?
Hi, thanks, Kirsten and Tim. Thanks for having me. Absolutely. We're seeing a lot of developers developing AI data centers across the country. However, right now, we strongly believe that it's not just a data center technology story. It's truly a power story. And the companies who can actually manage the power side, they will have actually a real advantage and actually are able to hit the ground and the deadlines they need for the data centers to be operational.
Now, Risto, I am very interesting, right? So it sounds like what you're saying is basically who can control the power will be the haves in this trade moving forward, and those who can't will be the have-nots. But, you know, what at this point will set these companies and the players in this space apart? Like, who has the best advantage when it comes to being able to maximize control over the power at this point?
I think it's the companies who can have done before already power plants and understand the power business. We are looking at two very different businesses here. We're looking at the data side and data side on hyperscaler, one of the fastest moving businesses in the world. And then you're looking at the traditional power generation, utility transmission side of the business, which traditionally is very slowly moving. And people who can combine these two worlds, they are probably going to be the winners. And right now, people who understand the power are certainly having an upper hand.
Yeah, that's a very interesting model, the macro grids combined with on-site power generation. Is that something that you expect to be a permanent part of the power mix for large AI campuses, or could an alternative be found eventually?
I think right now, only very small percentage, maybe a few percentages of the data center operational today are actually off-grid, behind the meter, as we call them. But in the future, and if we look at some of the data available on the projects that are being developed by 2030. We strongly believe that number can flip to half of the project actually will be behind the meter, where the data centers are having their own power plants and power sources.
Is anyone getting this right today when you look across the landscape of the US, Latin America, Europe, Asia? You have this global view. Which markets have the best combo of data center demand, power availability, and regulation? Where do you see that?
I think by far the US is the leading country in this perspective. The data center size is a tenfold in US compared to any other places in the world. So we're talking about hundreds or gigawatt size of projects and data centers, and that's not really happening anywhere else yet. So the challenges that we're seeing here first faced here, and I hope also the other countries are able to learn some of the learnings from US when they start to be on the same level of the sizes.
Yeah, well, very interesting. What can you tell us about what we're seeing in terms of the pace of data center construction in the U.S.? If it is indeed the model for the rest of the world, what are they doing right? What are they still kind of maybe getting not so right at this stage of the game?
Yeah, I think the ones that are truly coming early and data centers, of course, you need a land, you need a gas, and you need a fiber. And there's a good examples of states where these are plenty available. But then the ones who are really talking to the OEMs and thermal power plant suppliers early enough to secure this capacity for their project, they will certainly be the winners.
Risto, we've spent a lot of time talking about some of the constraints that we're seeing when it comes to power generation technologies on site. A lot has been focused on gas turbines and the challenges in that market. Like if you want one of those, you're going to have to get in line and wait many, many years. What share of the opportunity do you think reciprocating engines can capture versus those gas turbines?
Yeah, I think, the reciprocating engines RISE, as we call them, they have become more and more known as one of the key elements in a power system and power generation. Earlier times, there have been a backup on smaller power plants, but right now, for example, the largest plant we sold today in the US is 790 megawatts. So it's a massive power plant, and we would like to call that, the engine power plants are like a Swiss Army knife. They are very modular. As you saw in the pictures, they can be built in 100 megawatts blocks. Over the years, then data centers are being built and scaled up. It uses natural gas as a fuel, and it has incredible technical flexibility characteristics, which the other technologies don't really have. And of course, in the debate, there's a lot of debate on utilization or usage of water. Our technology uses closed loop cooling water system and therefore doesn't consume water at all.
Now, Risto, tell us about what you're gleaning from your energy orders, because that seems to suggest demand is already very much ahead of production capacity. How would you as a company decide how quickly to expand without overbuilding the infrastructure if, the cycle does eventually catch up?
Thanks for that. And yeah, just like some of the others, we have announced already a few times this year that we're expanding our manufacturing facility in Finland. So we're certainly trying to catch the boom here. We're looking at the global markets, of course, from our side. We're not only serving U.S. market, but globally. Thermal generation wasn't that popular. Maybe it's more renewables than it was energy storage. But now people are starting to realize that you actually need dispatchable, firm, flexible power in the power systems. And in U.S. alone, if you take the retirements of the different power plants, you need to replace those. Then on top of that, you have increase of demand. And already these two together are decent market size for all of the players. On top of that, then you have this incredible AI boom and data center boom. So I think there's plenty of market for years to come for a lot of players.
Risto Paldanis, Vice President Americas over at Wärtsilä, based in Finland, but I believe Risto is in the opposite of Finland, which is Florida, and that's where he is joining us from today. Risto, appreciate your time and sharing with us everything regarding data center power generation. Coming up next on Bloomberg Business Week Daily, stocks on the move on a day when the S&P 500 under some pressure, down 0.4%.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. That is not Carol Masser. That's Christina Aquino from the Markets Live team over at Bloomberg News. She's filling in for Carol today. And what a good day to be filling in. Thanks for jumping in.
Thank you for having me.
Oh, yeah.
Great day in
We're
markets.
happy to have you.
Yeah.
Great day for markets. Well, great day to be in markets, I guess, is every day.
Yes.
But I wouldn't say great day if you're long.